I think is a really fascinating one because, of course, we do have that AI potential premium that we saw in the previous days, or I should say in yesterday's trading session. So do we see some sort of retracement when it comes to that story? And of course, ASM International is one that we've got our eye on as well. It looks like TradeGate already expecting a drop after their orders missed estimates, Anna.
Yeah, absolutely. So the banking sector firmly in focus. All of the things you've got on that board there, GSK, Next in the UK, both of those businesses upgrading their guidance this morning. We'll see whether that has much of an impact. This is the picture then at the start of trade here for Europe. We're going higher on the FTSE 100. That was widely anticipated that we would see a little bit of outperformance on the London market. Other markets in Europe taking a little bit of time to give us their trades. And part of that possibly to do with the fact that we do have some real heavyweights in the banking sector reporting. We'll be keeping an eye on that SMI. I know we've got that in there today. We've got UBS reporting, of course, and so we'll see whether that one pops much higher at the start of trade. Also, Deutsche Bank will be in focus. Will that pop much higher? But more broadly, Kriti, we are expecting to see that some of these markets are a little on the back foot, and we certainly see that with the CAC 40. The tech story this morning seems a little more mixed than the banking story. The tech story plays well for the US, a bit more mixed here in Europe. The banking story here in Europe has had at least 3 heavyweight banking businesses with strong numbers, better than anticipated net profits, for example, from the likes of UBS, Deutsche Bank and Santander. So we'll see how all of those play out. Take us into some of the detail as we wait for some of these markets to open up here in Europe. Europe.
Yeah, it's a fascinating one here because I'm just kind of looking at how some of this is shaking out. I'm not able to see a clear read-through in terms of what is actually moving this market. No clear theme. Right on your screen, you can see that it is a little bit of a mixed picture. When it comes to the outperformer, though, this morning, I think we're going to give that trophy over to the financial services and the banking sector. No surprise there. UBS, Santander, all kind of coming, and Deutsche Bank, excuse me, all coming in pretty hot. And UBS seems to be the biggest index contributor to the upside. But when you look at the downside, I think what's really crucial here is that you are actually seeing some of the travel and leisure stocks down by about 0.4%. I'm waiting for some of the miners to maybe pull some of their weight, given that copper record. But remember, Anna, we've had a good couple of days in the equity market, so maybe today is a little bit of a breather.
Right. I mean, to your point, you were suggesting in the break that basic resources could be a standout for London, and often when you see London go its own way, that is partly to do with either basic resources or banking or metals or oil, sorry. And we are seeing that basic resources, even though they're all not open yet, is the best performing sector across the Stoxx 600, and that is playing well then for the London market, it would seem, where we're just keeping our head above water. Interesting that we've got the auto sector not doing too badly as well. Mercedes does not seem to be open yet, but BMW is open. I certainly was looking at the Mercedes numbers earlier on today, and that seemed to be an area where we had some news flow. So I'll wait for the Mercedes numbers to work their way through, if you like. But we have had some numbers from there as well.
Yeah, absolutely. Mercedes, we got Adidas as well, so maybe that German kind of underperformance, plus SAP, of course, not having a great day as well. Looks like some of the unwind in the tech story is kind of interesting, given that we thought the AI story was now finally taking over Europe with the likes of Nokia, with the likes of Deutsche Telekom. Maybe there is still a little bit more to be seen. We're going to do plenty of market checks, of course, as we start to see this market shake out. But in the meantime, let's get some expert analysis. Monica Defend, head of the Amundi Investment Institute, joins us this morning. Monica, pleasure to have you on the show as always. Thank you for your time. We're trying to work out where maybe today's market feels a little bit slower than previously. In your opinion, what is driving European equities? Is it the trade conversation spearheaded by Donald Trump in Asia right now, or is there more of an earnings tilt to what you're seeing? What do you think?
Well, I think that the earnings story is definitely something relevant for Europe, and in particular in the banking sector. That definitely is probably one of the shiny sector across Europe. Trade will be important, and it will be important to Europe to position versus China and versus the US and diversify. And we are seeing some nice movements and tangible movements out of Germany, trying to diversify on critical minerals. So there are some seeds that can really come up into flower in the coming months, I think.
Well, talk to us a little about that earnings story. It feels like 6 months ago, we were really keeping an eye out for margin compression. We were keeping an eye out for liquidity. If we did get some sort of bigger tariff hit, is that something that would get priced into this market? We're now seeing a tariff rate that's higher, or at least is higher, came down a little bit from what we were previously told, but is still higher than the initial numbers that came out on April 2nd. And yet this market is still rallying. Explain that logic when it comes to the corporate sphere. Margin compression and yet a rally on our hands.
Well, I think we are really living a transition towards an innovation-led regime that maybe in Asia and in the US is really AI-driven, while in Europe is more oriented to defense, to industrial policy changes that are aiming at strategic autonomy. And this goes, for example, in line what we were saying before, in diversifying our exports, diversifying where we are getting critical minerals. So all this, plus the push that we are seeing towards a unified market, the endorsement by President Lagarde on the SIU, I think that this is all making a little bit of more optimism in terms of the European market. Having said that, usually markets are not really good in pricing regime shifts, which is what we are living today. And this is how I might see these different performances across sectors we are observing today and in the latest weeks.
Monica, good morning. You talked there about strategic autonomy of nations, and onshoring or reshoring of certain manufacturing activities is one of the things that I know that you're watching. We talked earlier on this, in the last hour of the program, in fact, about whether we should be more focused in markets on inflation than we are. How do you look at the inflation story and how that's going to play out in your investment strategy?
I think there are two stories on the macro front. One is inflation that is going to be higher than the central bank's target. But as long as inflation expectations remain anchored, this is not an issue. At least for the market, this is not what they are pricing as an issue. And the rationale for higher inflation is really linked to this transition towards an innovation-led regime, whether he's onshoring, climate, and the energy transition. So I think we're really going to live, in particular in the United States, with higher inflation rates. We project 3% on average for the next year. And the second story is productivity. Productivity is going to be central because it will define eventually the fiscal space, the inflation partner, the inflation patterns, and the monetary policy.
I can ask you, Monica, how much upside do you think there'll be for stocks if we get a trade deal of some kind signed between the US and China this week? If it is limited in nature, if it talks very much about fentanyl and it opens opportunities maybe for NVIDIA to sell more advanced chips into China, is that going to be something that lifts broadly sentiment? Is the absence of a fight over trade, is that enough? Or do we need to see more structural imbalances in the global economy being addressed in these trade conversations?
I think that in terms of trade conversation, what we are going to see is not a major change, a structural resolution on the key issues, but it will remain on the surface, just trying to get what the easy games there, the easy play. So we do expect a positive lift on the risk asset, but I think that you really need to control this order and to manage accordingly, which means, by the way, to be very selective in the way you position on risk asset, whether it's equity or credit.
Well, Monica, speaking of those risk assets, is this market just getting lucky? Are investors getting lucky here, given that we haven't seen as much volatility in the commodity prices? I mean, a little bit of some of the fund flow coming out of gold, but again, not enough to really shake this market. We have a range-bound bond market as well. Is this market immune or vulnerable to some of the cross-asset volatility that may be on the horizon?
I think the market remains vulnerable, and what is not pricing is the possibility of liquidity tightening that in case can happen very, very fast. And what we've seen last week with the Fed operating on the short end was really trying to address the potential on liquidity to dry up, and the announcement that we do expect of the end of the QT by the Fed is really addressing this issue. Second, on inflation, this is not really pricing by the market the potential for higher inflation in a context where central banks have a very difficult job because they are facing higher inflation and high debt, and this is not really the comfortable place for a central bank to operate. So some pocket of vulnerability are there. If you look at the concentration of the market, in particular in the US, it is really, really huge. And this is why we remain cautious, exposed to risk asset and diversify.
Monica, thank you very much. Monica Defend, head of the Amundi Investment Institute. Thank you very much for that. So this sort of mixed market session that we're seeing ahead of a US session, critic that looks as if it'll go higher on tech stocks and NVIDIA. What does that mean for the core six?
Yeah, the heavyweights in the States certainly driving the market. Are they doing the same on this side of the Atlantic? It takes us nicely to your point, to the core six. Green on the screen with some of those tech-exposed names. ASML, for example, even Rheinmetall, although it has had a rough couple of days. You are also seeing a little bit of love in luxury and healthcare. Again, these are all stocks that have been underperforming the last couple of days. I wonder how much of this is a rotation. I want to get a check on some of the other individual stocks on the move. Chloe Melly has that for us. Chloe.
Good morning, Kriti. So we've got Deutsche Bank up quite strongly this morning. We're up 3% for the bank after it beat estimates thanks to really strong fixed income trading. So this is quite a boost for the CEO just a couple of weeks before he unveils a new strategy that will be focusing a lot on growing and focusing on that investment banking division. So quite strong performance for Deutsche Bank today. Moving on to GSK, which is also up this morning after upgrading its sales and profit guidance. That was thanks to really strong sales of its HIV and immunology drugs. There's a few challenges going forward for GSK. There's been quite a lot of investor pressure in terms of the pipeline for new drugs, and it hasn't struck a deal with the Trump administration the same way that AstraZeneca has. But it seems that the market is really focusing this morning on the upgraded guidance and this beat on EPS as well. So we are up 3.7% for GSK. Moving on to Mercedes, which is also up this morning quite strongly, 6.5%. It confirmed its outlook and unveiled a 2 billion euro buyback. So that seems to be reassuring investors that maybe the worst is behind for that car maker, despite some continued weakness in China, which is one of its key markets. Moving on to ASM, which reported a miss in quarterly orders, and it is down as a result of that. It was actually up originally at the open, but it seems to be down now. The CEO did try to strike an optimistic tone, saying that those quarterly orders should be picking up again in 2026, but it seems that for now the market is really focusing on that miss in the quarterly orders for the third quarter because of that weakness in China in particular. And finally, Moncler is also down quite a lot this morning, 2.6%. The third quarter revenue actually did beat estimates, but what the investors are focusing on is that fourth quarter expectation seems to be a little bit too ambitious, and that means that there might be more turnaround efforts that are needed for Moncler. So we are down this morning for that company.
Chloe, thank you. Chloe Melly from our equities team then with a rundown of those stocks that are on the move. 12 minutes into our European equity session this morning. Fairly mixed, actually. Overall, the stock 600 not really going anywhere in a hurry. The London market outperforming. Some banking stocks across Europe doing really well as well. Coming up then on the programme, we will check back in on the European bank earnings stories. We've had a number of beats from Santander, UBS, Deutsche Bank. That conversation's next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it on Bloomberg Tech Asia.
I'm in a Nissan Aria with the latest ProPilot system developed with Wave's AI technology.
Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi Zahran, and this is Bloomberg.
Welcome back. This is the opening trade. We're 16 minutes into a session that's trying its hardest to turn green before our eyes. The Stock 600 just about getting there. The FTSE 100 pulling things a little higher this morning. The mining sector doing pretty well. Glencore results certainly one of the factors in the mix. Plus, the mood music coming through from South Korea, where we have President Trump getting ready to meet President Xi tomorrow. That is sounding more positive and pushing some of those metals prices higher. Let's talk about the banking sector. We've had numbers that have beaten on many fronts. Let's talk about Deutsche Bank. Numbers there looking for the third quarter down the P&L. You see all of the numbers looking better than have been anticipated. In particular, I focus in my conversation with the CFO, James von Moltke, on what was going well in the credit space. So you'll certainly hear in our conversation a little more about that. But we started the conversation with what had pleased him most about this strong set of numbers.
It's a record quarter for Deutsche Bank, and really the pleasing thing is two things. All businesses are showing momentum and have been doing so for the 9 months and the 3 months. And we're on track to achieve our targets that we set out for 2025 all the way back in 2022, which is a return on tangible equity above 10% and a cost-income ratio below 65%. And as you say, all the numbers are pointing in the right direction this quarter.
And can I home in a little on how you're performing in FICC? Because it does seem as if you've done better than some of the Wall Street averages, in particular around rates trading. I wanted to ask you about where you've managed to get some strength in that business.
Yes, so macro has been strong all year, up altogether in the FICC complex this quarter, 19%. And on an FX adjusted basis, that's, I think, in line with the best of our competitors. As I say, macro products have been strong all year, but in this quarter, credit trading also came through with very strong results. And so we like what we're seeing in terms of both sort of the market tone, but also our capabilities, our ability to gain market share in this environment.
And the September Fed rate cut, has that helped to drive volumes, hedging, rethinking of strategies in that area?
Well, certainly investors and also, if you like, real money, so duration managers are looking to position ahead of the Fed moves. We're expecting a move today, and I think the market is pricing one in for later this year as well. There's also been a fair amount of volatility. It hasn't been by any stretch of the imagination at record levels, but there's been a fair amount of volatility all year. That's obviously been conducive to the businesses.
You've also seen some strong performance in your asset-backed finance business and then the securitization of those assets as well, James. How sustainable is the growth in that area?
Well, let me start with, we've been in that business for a very long time, over 20 years, in what we call FICC financing. And it is essentially secured financing, as you say. The spreads have no doubt been under pressure as more money comes into that market. But at Deutsche Bank, we've been able to innovate and be in sort of new structures, new underlying asset classes, and that's served us very well in terms of the front book pricing. So we're confident about that business going forward, but obviously very aware that there's more competition both from the other banks as well as the private credit industry.
And talking about private credit, we've seen a lot of focus on that area, of course. I don't see any mention of any specific provisions for losses around some pretty high-profile collapses recently. I'm thinking of Tricolor and First Brands over in the United States. Ambipar in Brazil got a lot of headlines as well. Have I just missed those, or has your business been successful in avoiding those pitfalls?
We have, Anna. So you haven't missed anything. We weren't directly or indirectly exposed to any of the high-profile credit cases recently. without chest beating, we think it speaks to the underwriting and monitoring of the portfolio. That portfolio is highly secured, low LTV. As I say, we've been in the business for a long time, so we know our sponsors and have good capabilities to sort of monitor the exposures and the underlying assets. So we're pleased to have been able to avoid in this instance those recent high-profile cases you mentioned.
Yeah, even if there's been no direct or indirect exposure, as you say, it's caused a lot of people to just check again at their exposures, in particular in the United States, perhaps, and other areas. Have you been doing that? Have you been taking another look at some of the exposures just to make sure that you're happy with everything?
We have. In an environment like the one we've seen, where a lot of capital is coming into the market, obviously you worry that has resulted in, call it, over-exuberance and lax underwriting standards. First of all, we are strict and disciplined about our risk appetite and maintaining underwriting standards. But secondly, you get to learn from the experiences and naturally conduct a read across in your portfolio. We've done that exercise. We're comfortable with the portfolio. But obviously, we're vigilant as well to make sure that there's nothing that looks or smells like those recent events in our books.
That was the Deutsche Bank CFO, James van Moltke, speaking to me earlier. European banks are posting a flurry of positive results this morning. We heard there from Deutsche Bank. There's lots of others reporting as well. Let's get the take from Bloomberg's managing editor for EMEA Finance, Tom Metcalf, who has a roundup for us. Good morning to you, Tom. Let's start with Deutsche Bank then. Beating across the board, it seems, some strength in FIG. They are a bit concerned about credit mispricing, just like we've heard from some other quarters. But broadly, they've managed to avoid a lot of the pitfalls.
Yeah, exactly. A lot of very common messages coming out on the credit thing going. Obviously, we're looking at it closely, but as with other banks, not saying there's sort of huge risk there. So yeah, the standout for me really was that beat on the fixed income side. Decent set of trading for them this quarter. And yeah, it was interesting to hear the CFO kind of take it through just now in a bit more detail. But yeah, I think their shares, up 1-2%, and it's really perfect timing because mid-November they have a new sort of investor day. So off the back of these sets of results, it's kind of a great springboard for them to kind of set out their
Yes, because he was making the point to me that this leaves them in a position to meet their 3-year targets, and this is the end, isn't it, of this 3-year period of reinvention, if you like, for Deutsche Bank. And then there is an expectation, Tom, that we get another round of evolution, not revolution, at Deutsche Bank, and continue with something similar in the next 3 years?
I think evolution is a great way to point. So it shouldn't be, you'd expect, as drastic as the previous strategy change. But yeah, look, I think they'll probably make the argument it's working. Let's keep things going and obviously make those tweaks. And the phrase they use is we are the world's global house bank, HAUS bank, i.e. a German house bank. But every executive I've been meeting there has been fairly optimistic and positive, which does suggest, broadly speaking, behind the scenes things are going along as hopeful there.
So Deutsche Bank having a good day, UBS having maybe an even better day. Just walk us through the logic there. The expectations were very low going into this.
Yeah, no, I think it's been a good day for UBS. So, blowing through estimates, and, as I look at the investment banking side, I'm like, wow, look at that advisory jump, 52%, or I think 47% on the advisory side. Well, that is like, Wall Street top levels, obviously from a relatively small base, but no, been solid. And then I think the results at one point were up as much as 4%, the shares.
Yeah.
But now they're kind of hovering around 3%. But good inflows, and again a similar message from the executives, looking closely at credit. But there is nothing systemic as far as we can see. This is all very much a case of individual underwriting issues with individual firms. Don't kind of extrapolate too wildly.
Yeah, I mean, and on that private credit front, we just had a conversation with the CFO of Santander about the exact same thing. He reiterates that message. It's not systemic, but kind of stopped short of saying that this is not a problem that they are specifically addressing. Nevertheless, their results also pretty decent.
Yeah, no, exactly. Sort of, again, no nasty surprises, which I think for Q3 is pretty critical. Santander, one of Europe's largest banks by market cap, and, on the bread and butter side of NIM, that sort of standard bit of banking, they seem to be doing a good job. And again, it's just making sure they avoid those big outsides outsized surprises is really helpful at this point.
Tom, I thought it was really interesting. I was trying to get to the bottom of why we're seeing sort of consumer sentiment in the States really quite weak, but it's not showing up in the credit metrics, it seems. That seems to be the message that we're getting from some of the banks. And he was saying that that is the case for them. He said they are seeing some delays of more than 90 days increasing in their books, in their loan books, in the US specifically. But in terms of recovery rates, they're actually just as they normally would be. So maybe it's taking a little bit longer to get the money in, but nothing really to worry about. And I mean, a lot of people point to the K-shaped nature of the US economy as well as one of the reasons why perhaps we're seeing areas of concern around consumers, but that's not showing up on loan books.
Yeah, exactly. It's a similar story to most of the banks I talk about where, you know, there is this macro picture, whether in the States or in the UK, but every time it's like not an issue, at least as they see so far in their books. There isn't that many bits and indications of distress. So it is a bit of a disconnect, and, you know, it's one of those ones where, you know, which way is it going to go? Is it going to sort of suddenly all these troubles start to emerge, you know, as the pressure builds, time goes on? Or, you know, as the bankers are certainly saying at the moment, is no, you know, underwriting standards are very different these days. We are taking, you know, caution, and hence we can be pretty optimistic.
All right, Bloomberg's EMEA Managing Editor for Finance, Tom Metcalf, kind of playing double duty. He's our banking correspondent this week. We thank you so much. Let's go to check on some of the U.S. pre-market stocks. It's the most wonderful time of the year where that time difference is just 1 hour shorter. NVIDIA, of course, top of mind after another blockbuster deal. That's 2 big European deals in 2 days. First Deutsche Telekom, now Nokia. And we saw those, of course, show up in the price action yesterday, Anna. NVIDIA shares in the pre-market, another leg higher, almost 3%.
Now, if you're talking about cautious consumers, and I know this, I speak in jest because this isn't just about the U.S., but here's Mondelez trimming its outlook because cocoa prices have risen and consumers are therefore cautious. If you can't afford chocolate, it's a strange world we live in. But Mondelez down by 5.6% as a result of that pre-market in the States. Coming up, we speak to the Nordic Semiconductor CEO as the company misses third quarter earnings forecast. That conversation next. We'll dig into the detail. This is Bloomberg.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
In case you missed it on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all
Avoid
costs.
dancing.
Don't miss the opening trade live every weekday.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This is the opening trade about 30 minutes into today's session, and seeing some of the money kind of already move around. I think the highlight of this very boring board is at the very end here. The FTSE 100 higher by 0.4%, and that's a real game changer. Yes, we did start off the session with a little bit of outperformance, but it's really accelerated, and some of the momentum and some of the other indices have dropped. But it's really a micro day instead of a macro one. And I think that's where you need to really keep an eye on some of the individual movers, because we are in the midst, of course, of earnings season, drinking out of a fire hose. When you look at some of the membership here, 250 names higher, 334 lower. The volume, of course, also just slightly lower today, down about 15%. I think keep an eye on what some of the rotations actually look like. I want to start with some of the laggards here, given that's where the market is actually moving. I'll start with the gainers, I should say. AstraZeneca is, of course, the big one. This rotation in healthcare that you're seeing is really one you want to keep an eye on. But remember, AstraZeneca moving up the FTSE 100 in a very big way. ASML probably taking its tone from what you're seeing in the tech space over in the U.S. Globally, tech has been doing very well in the last 24 hours. And even Adyen having a very good day, higher by about 9%, of course, in the payment services business. Let's talk about the lows, though. This is where the negativity really prevails. I want to talk about the healthcare space here, because Novartis is a big one. We saw that move yesterday as well. It is taking another leg lower, down about 1%. SAP, of course, also dragging down the index, down about 1.5%. And some of the steam coming out of the momentum, Anna, that we saw in yesterday's session from the Nokia story, down about 5%. But again, put it in context, yesterday rallied 20% to the upside.
Yeah, absolutely. Let's get an update on some of the broader global news stories that we're tracking this morning then, Chrissy. Hurricane Melissa has made landfall in Cuba just hours after it became the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands of people without power on the island of Jamaica and forced hospitals to evacuate. Melissa crossed into Jamaica with sustained winds of almost 300 kilometers per hour, making it a rare Category 5 hurricane at landfall. The Israeli army says they have started reinforcing the Gaza ceasefire agreement. This comes after the government ordered, quote, forceful strikes against the militant group in response to attacks on Israeli soldiers in Gaza, which the country's defense minister called, quote, a crossing of a red line. The official Palestinian news agency said at least 20 people had been killed in the strikes, citing medical sources. Donald Trump said he expects to lower tariffs that the U.S. has posed on Chinese goods over the fentanyl crisis and speak with China's Xi Jinping about NVIDIA's flagship Blackwell AI chip in their meeting on Thursday. In another sign of easing tensions, China bought at least 2 cargoes of U.S. soybeans, its first purchase or known purchase this season. Pretty?
Lots to watch, of course, in the trade relationship between the world's 2 largest economies. And this might be a connected theme as we talk about the tech story that is, of course, permeating in those discussions. Results are out this morning from tech firm Nordic Semiconductor with third quarter EBITDA missing estimates. I'm pleased to say we are now joined by the CEO of the company. Wegard Wallen joins the program. Wegard, a pleasure to have you this morning. Thank you so much for joining us. We're seeing some weakness in your numbers this morning. Can you just walk us through where that pain point lies?
Well, I think, for us, if we look at 2025 as a combined, and if you look at our midpoint guidance now of Q4 and compare that to 2024, we will actually see a 30% growth in our revenues from 24 to 25. Obviously, taking into account that we did quite a lot of inventory corrections in Q1 2024, even with that taking into account, it is a substantial growth, and particularly if you compare us to the broad-based semiconductors. So given that this is predominantly based on relatively old products, which we have been talking about. There has been a phase from 2019 to 2024 where Nordic launched relatively few new products. We see that we actually are following our plan and an ambitious plan on this, because the key thing for us that we are in the midst of a product renewal cycle, which is happening now. We are a year into it, have launched great new products, and there is much more to come in the coming months and quarters. And it is the excitement and the energy we see from these products when we develop with our key customers, particularly, but also to the broad market with these products, where we see the coming growth. And of course, for us at Nordic, it's all about growing for the years and for the long time coming.
Vegard, I want to build on that. It's an ambitious plan, of course, to have a product renewal cycle, but I have to ask you about some of the kinks and some of the hurdles that may be coming as you pursue that cause, especially in the supply chain front, especially when it comes to the tech story. We're talking a lot about availability of rare earths and some of the raw materials, some of the supply chain issues, not just coming out of Asia, but of course permeating into the European ecosystem. Just walk us through how you're thinking about that. Is that a worry for you as you pursue that product renewal cycle?
Yeah, great question. I think overall, of course, we depend, as a fabless semiconductor, we depend strongly on our key partners, and they securing materials and the basic substrates and substitutes which are required for our manufacturing. And for Nordic Semiconductor, that means that we are depending on TSMC in Taiwan, and global foundries on the wafer manufacturing side as our largest foundries. Having said that, we are also driving a diversification in our manufacturing to become even more resilient than what we currently are. And we're seeing this happening. TSMC building their new fab in Dresden, Germany, which is planned to manufacture for us. We can manufacture at other TSMC fabs as well. And with GF having manufacturing facilities in Asia, obviously in Germany already, and in the US already. So we do see that we are building a strengthening diversification in the years coming on that.
Good to speak to you, Vegard. Thank you very much for joining us. Let me ask you, you mentioned the product renewal cycle, so let me ask you for more detail on that. You're pivoting towards a new series, NRF54L. Can you give us a bit more detail on the timing of when that starts to meaningfully contribute? When does that pivot really kick in for you?
Yeah, that's a great question. Our offering needs to be a broader offering, such that for, let's say, simpler, lower end, very cost constrained products, we have certain chips which are fitting into that category, while we at our high end has products which has multi CPUs, also usually can do the application processing and be a powerful compute system aside the wireless connectivity and the range in between. So we need to make sure we offer this full range to cover a broad range of applications and serviceable markets we are addressing. We started this 54 series renewal in November last year with the first products in that series, and after that we have been launching multiple new products, and there are quite a few more to come in the coming quarters. The way we do this is that we develop these products with our key customers, our large customers, and then we offer it to the broad market. And then there is a design in cycle at their end where they develop their software, complete their products, and move into manufacturing. And that does take some time, and it varies. The fastest ones can do this maybe in 6 or 8 months, whereas others are spending 2-3 years on their development. And then, of course, you have everything in between. And that's why we say that we are now going to see from 2026 onwards that it's going to be an accelerating and increasing contribution from the 54 series in our short-range business.
Okay, thank you for the detail there. Can I ask you about, you were talking about the supply chain with Kriti, she was talking about rare earths, and you gave us a bit of detail on securing supply chains. I just wanted to get a bit more detail from you on that, though. If we do see supplies of rare earths to Europe disrupted, and I appreciate you've talked about the various fabs and where they are, What kind of precautions can you take for a business like Nordic Semiconductor? What can you do now to stop the worst outcomes?
So for us, again, not having the manufacturing ourselves, it is predominantly what we can do is to diversify with multiple angles to get access to the base materials and to the silicon manufacturing, and that's really what we are doing. And by diversifying that, it means between multiple suppliers, but also having multiple suppliers with engagement in different countries and geographical regions. So that's really what we do, and I think most people in our sector are working this way.
Thank you very much. Thank you very much for joining us. Vegard Wollan, thank you for your contribution this morning. Good to speak to you. Nordic Semiconductor's CEO. Let's stick with the tech theme. NVIDIA shares extending their rally after US President Donald Trump said he'll discuss the chipmaker's Blackwell AI processors with the Chinese leader Xi Jinping. The company's CEO, Jensen Huang, told Bloomberg it would be a bonus if NVIDIA's business in China were to return.
We're currently assuming China is going to be 0% of our business. And if it comes back, if President Trump was able to negotiate, or if China would like us to come back to China, it's going to be a huge bonus for us.
Joining us now, Matt Bloxham from Bloomberg Intelligence. And this seems to be driving a lot of hope and expectation then this morning, Matt. We'll see whether it comes to pass. So President Trump and Xi Jinping, busy agenda, but one of the things on there might be Blackwell and the ability to sell that architecture into China. So it's interesting, isn't it? Because you think that it's been the US administration that stopped the sale of chips into China, and that might be to some degree on the security side. But actually, Jensen Huang was saying it's the Chinese not wanting the lower capacity chips that stopped us really doing the business here. So what kind of progress are you expecting them to make?
Yeah, I mean, this would be a real kind of U-turn, if you like, on US policy if they do allow Blackwell to be sold into China. This is their most advanced chip, which is in huge demand, as it is anyway, and would have significant positive ramifications for the whole chip value chain. So the likes of TSMC and ASML, for example, just add more demand out there. So we'll have to see whether this really comes to light, whether there's like going to be a big delay. And when they get this, obviously, NVIDIA's already moving on to its next generation chip. So maybe they're kind of a bit more comfortable with it, or maybe actually in the background the US can see that China's own domestic AI endeavors are actually accelerating at a faster pace. So actually holding Blackwell back isn't really going to do anything to stop China's own advancement. So we'll have to see. But it's a really kind of quite eye-opening change in policy stance from the US.
Yeah, it is fascinating. It started under Joe Biden initially on national security concerns and has, of course, fed over into Donald Trump. I think what's fascinating, though, is he said that we are at 0% sales of China. This was the Achilles heel for NVIDIA a couple of quarters ago. How much could that add in terms of their bottom line when you say yourself that they're kind of drowning in demand right now?
Yeah, exactly. Difficult to know, but I mean, when you look at other kind of similar technology firms, it kind of ends up being kind of 10, 20% of revenue. I mean, I wouldn't want to say that's exactly what they're going to get, but there's clearly a lot of demand there in the marketplace. There obviously is rivalry with the likes of Huawei in particular being a big competitor, and the Chinese government has been really pushing Chinese companies to spend more with Huawei on their AI technology. So hard to know, but yeah, you have to think that China would end up being a significant share of NVIDIA revenue.
So NVIDIA, it looks as if it's going to open up with a $5 trillion market cap this morning, because it is expected to get another pop. We've seen it pre-market trading higher, expected to get another pop higher on the back of these headlines around Blackwell. But it's not the only tech story we're watching today. We have so many tech stories. In fact, 5 out of 7 of the Mag 7 are reporting either today or tomorrow. That's around a quarter of the S&P's market cap, isn't it? So there's a huge amount of focus on tech. I don't know where to start. I'm going to go with Microsoft.
Okay.
Matt, let's start there. A big focus on cloud, and their tie-up with OpenAI, of course, as well.
That's right, yeah. So Microsoft's Azure platform, big leader in cloud and AI. So Azure, the market's looking for about 37% sales growth, which would be kind of sustaining the kind of strong growth they've seen. I think the big question there for analysts is, Microsoft's been talking about a constrained supply to meet the demand. And so there's a potential expectation that maybe they'll announce some more investment, if we don't have enough already, to kind of accelerate their ability to kind of meet that demand. Obviously, there's the OpenAI story. I think also that's been playing out for a long time. And I think what we saw yesterday in terms of the kind of finalization of this for-profit change and Microsoft getting a 27% stake in OpenAI is the kind of culmination. But it's been a great deal for Microsoft. They invested something like $14 billion in it. It's now, their stake's now worth $135 billion, at least on paper. They get access to the OpenAI technology stack until the 2030s. They still get a 20% share of OpenAI's future revenues, and OpenAI is still committed to spend something like $250 billion on Azure technology. So it seems like it's been a great, great trade for Microsoft.
That's Microsoft. Let's talk about Meta and Alphabet. We've gone into every tech earnings season saying that AWS and Azure have just the edge. Is that still true with Alphabet on their heels?
I think it is, but clearly Alphabet through their kind of Google Cloud Services is making inroads. Obviously, they kind of made some interesting deals of their own recently, like for example, I think Anthropic has kind of committed to do a lot of stuff with Google on both the cloud capability and their chips. I think the big question for both these companies is how their quote-unquote legacy advertising businesses are holding up in this kind of AI environment. You know, Google's search business, which is under pressure from ChatGPT, and Meta's kind of equivalent kind of social media businesses. Are advertisers still spending as much money on those platforms, or are they shifting it more to ChatGPT and other AI platforms? For both of them, that's a kind of high-stakes situation because they've both been pouring tens of billions of dollars into the AI revolution on the basis they can fund it with AI revenue, advertising revenue. And so I think people are going to be focused on the strength and resilience of those businesses with that competition rising.
All right, Matt Blockstrom from Bloomberg Intelligence setting us up nicely for some of the earnings we're going to get after the market close in the United States. We thank you so much. Speaking of what's coming up ahead on the program and, of course, in the day, the snap election in the Netherlands is underway, widely seen as a litmus test for the far right. Our very own Oliver Crook is live in The Hague next. Stick with us. This is Bloomberg.
Make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero, and I'm not seeing any giant signal around the world that is saying let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors that is still directionally where we're going.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
Welcome back to the opening trade. About 50 minutes into today's session, it looks like nothing's happening on the surface except for the FTSE 100 higher by 0.4%, but plenty of individual moves across the wire. Kind of a rotation trade in these markets. We're going to keep you apprised of all the market moves in the hours ahead. In the meantime, some headlines crossing the Bloomberg terminal just in our commercial break, this time coming out of Romania, confirming some suspicions that people have had for a while when it comes to U.S. troops in Europe. It looks like Romania is saying that the U.S. will stop their rotation to Bulgaria, Slovakia, and Hungary. This is according to the defense minister speaking in Bucharest. A crucial time, Anna, ahead of a meeting between Viktor Orban and Donald Trump next week, where it looks like he's going to be talking about some of the oil concessions that are being made as Donald Trump really gets very hard and very pressury on Russia, for lack of a better term.
Yeah. Okay, so that's part of the European conversation, everything around defense, certainly. Let's talk about European politics in the shape of a Netherlands election. Voting is now underway in the Netherlands after 2 years of political turmoil under the most right-wing administration in the country's recent history. Defense, immigration, the cost of living, all among issues that are top of voters' minds. Bloomberg's Oliver Crook is on the ground for us in The Hague. Good morning, Ollie.
Yeah, that's right, Anna. And you can see behind me just some of the posters of some of the parties that are going to be going up to the parliament here. And we should say there's some very peculiar sort of features to the Dutch system. For one thing, there are 15 parties that are represented within the parliament. So we talk about fragmentation in European politics. This is really ground zero for that. We should also say that going into this vote, about 50% of the voters were still undecided. So it's really for anybody to take. Going into the voters' day, also the last poll we got saw a three-way split between the three main parties. So there's a lot of questions about what we could get, what kind of constellation we can get in the government. So I'm very pleased to be joined by a guest to try to work through what some of these could look like and what the implications would be. That's Davis Ellison. He is at the Hague Center for Strategic Studies. Thanks so much for joining us this morning. I'd like to begin just kind of with your expectation for what we're going to get today out of the Netherlands.
Absolutely. Well, first of all, thanks for having me on. It's definitely an exciting day here in the Netherlands. There's a lot that could certainly happen. As you said, there's a three-way split with some of the largest parties right now. I think what some of the scenarios we see are most likely are some sort of centrist coalition, one that vaguely leans left, for example, with the GroenLinks PvdA, which is this sort of coalition itself of left parties, or a more centrist right-leaning one with the Christian Democratic Appeal leading.
And so with that sort of constellation, I think one of the things that we've heard from a lot of analysts is that this will mean a more constructive relationship between the Netherlands and the European Union. This could mean, for example, moving forward on the question of joint debt, where there has been an evolution in the traditionally frugal Netherlands. What is your expectation there? What a more constructive relationship looks like?
I think that's really going to open up as a discussion. I think that's going to be a priority for any cabinet that's coming in. A lot of the initiatives that they're talking about, defense being one of them, for example, trying to hit 3.5% of GDP on defense without accepting any sort of austerity measures at the same time, really opens up the discussion of debt and common debt, especially at the European level. So I think they're really going to have to embrace that discussion, and I think the three major parties are actually quite open to it.
And I think something that maybe hasn't featured so much in the domestic debate, but for our audience is certainly a big discussion, is what happened with Nexperia, the Dutch government really sort of coming out of the blue, taking control of this business that was owned by the Chinese. How do you see that sort of resolving itself? And do you think that there is sort of less naivete now dealing with China? And do you think you could see more action like that in the private sector?
Yeah, I think there definitely is. I think Chinese ownership in any way the subsidiary arrangement exists has been on the radar of different national security services across Europe for a while now, and especially when it comes to semiconductors. And I think this was almost more a matter of time than anything. Nexperia also has much less leverage as compared to other companies like ASML, which is much more of like a flagship, major commercial concern here in the Netherlands. Nexperia finds itself as kind of a smaller fish in the supply chain, and I think this is something that's going to continue. I think, you know, the topic of economic security as a theme has started to feature more broadly across most parties.
And also, economic security is also a sort of a euphemism for some sort of economic warfare, which we're certainly seeing waged by the United States. And the Netherlands seems very distinct because you have this company here, ASML, which is one of the very few European companies that really is, basically has no rival in the lithography machines and really has a lot of sway on the global markets. How do you see that as potentially being used as economic leverage? Is that more a conversation that we're going to have within Dutch politics and how to use ASML?
Yeah, I think that it's definitely been a growing point for Dutch policymakers and politicians in thinking about ASML that way. You know, commercial concerns were always very much on one side of the coin, and they were on another. But I think that started to shift with the realization of how central ASML is. It's a little bit with the way that, you know, the Taiwanese have placed themselves with TSMC, knowing how important they are and not diversifying some of that. So I think really keeping so much of that flagship work here and as a contained thing here in the Netherlands as ASML is going to continue to be very important for them. And I think they do see it as leverage for any outside pressure, for example, from the United States.
Davis Ellison, thank you so much for your time today over from the Hague Center of Strategic Studies, dealing with some of the main issues here that we've got in the Dutch election, many of them domestic, but of course also ways in which it plays on the global stage and critically on that issue of joint borrowing for the European Union.
Bloomberg's Oliver Crook joining us from The Hague, walking us through, of course, as he said, the global issues that are coming from this election. Speaking of what's coming up in the day ahead, of course, that snap election very much in focus, rate decisions in Canada and, of course, the United States, plus plenty of earnings.
Plenty of earnings. Shall we say Microsoft, Alphabet, Meta, all of those in focus. 5/7 of the Mag 7 will report today and tomorrow, so there's certainly a lot at stake when it comes to all the CapEx that we've seen put behind this AI growth story.
Yeah, the CapEx, there's a little bit of a geopolitical tilt to this as well. Does some of the conversation coming in between the United States and China that we're already seeing NVIDIA be a part of the conversation, does that affect the rest of those Mag 7?
Yeah, such a busy day for earnings. A lot of expectation around the Trump-Xi meeting tomorrow as well, so that will certainly be in focus, and that is adding to a little bit more risk on sentiment, certainly helping the mining sector, at least here in London, even if it's not lifting the rest of the European markets. That is it for the opening trade. A really busy earnings day. The brief is up next. This is Bloomberg.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In New York City, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Confirmed. President Trump will now meet with President Xi tomorrow as Trump floats lower tariffs and access to NVIDIA's Blackwell chips. China buys its first cargoes of U.S. soybeans. NVIDIA rising, shares already soaring after CEO Jensen Huang announced a flurry of new partnerships and dismissed concern about an AI bubble. And gearing up, markets laser focused today on big tech earnings, but also the Fed decision and any forward guidance in Fed Chair Powell's comments. So it is the busiest day for earnings ever, in fact, $11.6 trillion in market cap reporting. As you can see, we're pointed higher on the S&P and on the NASDAQ 100. Russell 2000, not so much, although we're off our lows of the morning. 4 hours to go, of course, until the opening trade here. The S&P was up just 0.25% yesterday. The NASDAQ 100 up 0.75%. So we did have a lot of that optimism flowing into the session. The NVIDIA comments, President Trump on his tour, positive signals out of China, and so on. Let's take a look at the bond universe, though, because in just a few hours, traders will turn their attention to what Fed Chair Jerome Powell will say. And how can a Fed that doesn't have any data be data dependent? We are seeing a little bit of flattening. The 10-year yield creeping up towards 4. The 30-year yield under 4.55 right now. The 2-year yield still at 3.50. So you'll see what lies in store for us this afternoon. First, though, let's get across to London. Some individual movers now with Kriti Gupta. Kriti.
Bonnie, good morning. We got to kick it off with the big one. NVIDIA poised to be the first $5 trillion market cap company in the world at the U.S. Cash Open. You can see the optimism around the stock already in the pre-market, higher by 3% after a blockbuster series of deals here in Europe. Deutsche Telekom earlier this week, Nokia yesterday, and now the idea that perhaps NVIDIA is part of the trade negotiations between the United States and China. It's not all positive, though, everywhere in the market. Mondelez is not having a great day. It is your biggest downside mover, down to the tune of, get this, almost 6%. Looks like some weakness when it comes to the biscuit-making business. Bonnie, not enough people are buying Oreos in North America. That seems to be one of the issues persisting in this consumer goods company. And lastly, it is a fantastic day for the banks here in Europe. UBS, Santander, Deutsche Bank, beats across the board, really blowing analysts away. UBS starting to see a little bit of weakness, though, down about 1.4%, Bonnie.
All right, we are in for a rocking session, I think, Kriti. Thank you so much. Later this hour, we're going to count down to the Fed decision with Andrew Hollenhorst of Citi. Plus, we'll speak to Sarah de Lange of Leiden University on the Dutch elections and Trond de Grande of the Norway Wealth Fund on their earnings. President Trump then touting his success during his trip to Asia.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan, and our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here. And we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So President Trump boosting optimism on trade and also expected to lower tariffs that the U.S. has imposed on Chinese opioid exports. In another positive sign, China has made its first known purchase this season of U.S. soybeans. Joining us now from Yongju is Bloomberg's Stephen Engels. So Stephen, bring us up to date. A lot happening in the last few hours.
Yeah, that's right. I mean, Donald Trump just pretty much said he characterized his first stop in Malaysia as pretty successful because he had a number of different deals, and then he also got that framework agreement with China. So it was a jubilant, if you will, Donald Trump today here in Korea after yesterday having a pretty successful, according to him, visit to Japan. Now in South Korea. We can talk a little bit later about the South Korean developments, but really his trip in Asia for almost a week culminates tomorrow. We don't know exactly when or exactly where, but it's going to be a meeting between Xi Jinping and Donald Trump that will, really from both sides, hopefully, shake the hand, sign some documents, and move that framework agreement to reality. Now, of course, there are stumbling blocks. Obviously, this is long in the works, and there are very contentious issues. You mentioned soybeans. That's a positive, obviously, for the United States. But there's also, of course, the fentanyl crisis. Donald Trump indicated here today in Korea that the Chinese perhaps are ready to tackle the issue of precursors of that drug that allegedly are going to the United States from China. So that would be very interesting. Will he lower that 20% added tariff? That's a possible development. Other sources have said it could be cut from 20% to 10%. So we'll have to see. Now, the U.S. is asking all these things, of course, but the top ask is for China to relax its export controls on rare earths, critical minerals, magnets, and the like. So that would be a big piece of news if Xi Jinping does go for that. Now, what's the big concession the United States is giving? Well, Donald Trump played his cards today saying we might just allow the most advanced AI accelerators, the Blackwell chips, which now have export controls to China by the White House. He could relax that and let China buy those. And that is something Jensen Huang, who is here as well, has said we need to be more strategic, more longer-term thinking in our chip and technology sales to China. They're in an awkward position. Sales to China right now are zero. So that's probably going to be one of the top stories if that does come to fruition tomorrow, if Donald Trump plays that card.
And the latest we're hearing is mid-morning local time. So by this time tomorrow, we should know a lot more, Stephen. Now, you mentioned South Korea. President Trump did express optimism that that deal will be finalized very soon. It had been pretty thorny.
Yeah, absolutely, because Donald Trump says we're that close, and it's probably going to happen. It's not going to be signed, sealed, and delivered like the Japanese equivalent was, because there are thorny issues with cars and steel and the like. And again, Donald Trump's portrayal of the negotiations far rosier than President Lee's assessments. Essentially, maybe it's just negotiating tactics, but saying they're far apart on a lot of the most contentious issues. So we'll have to see. I doubt heavily that they will sign a deal while Trump is in country right now, but Trump says they're getting close. Other things could be, we heard that President Lee asked the United States, asked Trump to relax the decades-old nuclear control act to essentially allow South Koreans to manage their own submarine fleet with nuclear capabilities, not nuclear weapons capabilities, but essentially asking Donald Trump to relax centuries-old law that would allow South Korea to operate its own military fleet of subs and not have the burden on the United States military.
Stephen, I've no doubt we'll have a lot more to discuss tomorrow morning as well, so thank you so much for that. That is Bloomberg's Stephen Engel there. Meanwhile, President Trump giving NVIDIA another boost.
Even semiconductor manufacturing is rapidly returning to the United States. NVIDIA and TSMC have just produced the first state-of-the-art Blackwell chip that was 100% made in the USA. In fact, Jensen, who's an incredible guy, they're all, building now. They're building tremendous plants in the United States, Arizona, Texas, all over. We're going to have a big portion of the chip market just in a very short period of time.
Shares of the chipmaker extending the rally after the president's comments that he will be discussing Blackwell chips with President Xi, up 3.25% in the pre-market today. Joining us now is Matt Bloxham of Bloomberg Intelligence. So talk about a double whammy yesterday, Matt. Shares just continuing to rise after comments from Jensen Huang and from Donald Trump. I mean, I guess you have to just believe that this valuation is appropriate now.
Well, I mean, I think it certainly kind of shows you the continued investor excitement about the potential of AI technology, and that kind of really is going to define the future of, humanity and corporate life. I mean, I think certainly these comments we heard yesterday from Donald Trump about potentially relaxing constraints on NVIDIA's shipments into China, including the Blackwell chip, which is their most advanced chip right now. It really would be a huge U-turn given the historic national security sensitivity that's been around selling technology into China. Difficult to know how big an opportunity that would be for NVIDIA, but historically, China has accounted for between 15 and 20% of NVIDIA sales. So it could really be a significant bump in forward revenue if the restrictions are fully lifted. So I think people will be watching closely to see the details of whatever is agreed on that.
He's such a politician, Wong. You know, even as he was enjoying this, he urged careful engagement with China. He's just very good at walking that fine line. Now, Bloomberg spoke to him yesterday on whether he thinks we're in an AI bubble. So let's have a listen to that.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So if he has to justify it that much, does it not give you concern, Matt?
You know, I think the jury's still out on whether it's an AI bubble or not, and you would expect Jensen to be very optimistic about the kind of future. You know, I think the reality is, like many technology cycles, at the beginning of that cycle, you see a huge investment, and then it calms down. And so I think the question mark is, you know, what is going to be the sustainable level of demand for AI technology? Lots of companies investing in and spending on AI right now, but I'd say most companies are in the kind of experimental kind of piloting phase, not many moving into kind of full implementation mode yet, and there's still a lot of outstanding questions about what the return on investment of a big AI technology adoption is. So I think, going to take a bit more than his kind of optimistic words to kind of really calm the fears about an AI bubble.
Yeah, for sure. Well, now we have Meta, Google, and Microsoft after the bell today, so a lot coming our way. Which are you looking out for most, and what's the thing that you'll be training your eyes on first?
Yeah, I think the kind of key thing for Microsoft is whether they are going to announce more spending on AI technology to help kind of unblock some of the supply constraints they've got, because their Azure cloud business, growing at between 35 and 40%, has been struggling to match demand. I think for Meta and Google, it's more about whether that AI trend is really eating into their legacy advertising businesses, because they are both spending a huge amount of money also on AI, and whether they can get a return on that.
Matt, thank you so much. That is Matthew Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. UBS CEO Sergio Ermotti defended his bank against criticism over the exposure to bankrupt auto parts supplier First Brands. Bloomberg's Guy Johnson spoke with Ermotti earlier.
First Brand was a broad and well-recognized issuers in the market, and as part of a high-yield diversified portfolio, this was something that was deemed to be correct. So I think that there is a little bit of witch hunting and trying to compare things between one bank or the other, and one strategy or the other is totally inappropriate.
Mercedes-Benz confirmed its annual outlook and plans to proceed with a $2.3 billion share buyback. The company's automaking margin climbed in the third quarter, and adjusted return on car sales rose to 4.8% in the period. And Israel says it has begun reinforcing a ceasefire in Gaza after the army conducted airstrikes overnight in retaliation for a lethal Palestinian attack against its troops. The flare-up was one of the most serious since the October 10th truce. Coming up, Dutch voters head to the polls. We speak to political analyst Sarah De Lang on what's at stake next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg.
In case you missed it, on Bloomberg Brief.
The French economy is resilient, as a euro area economy. We had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday. Bloomberg Brief. I'm Vonnie Quinn in New York. The Netherlands voting in a snap election today for the third vote in 5 years. And many experts say the result still remains highly unpredictable. Joining us now from The Hague is Bloomberg's Oliver Crook with a special guest. Ollie.
Yeah, that's right, Vonnie. I mean, listen, this is a landscape politically in the Netherlands that has been marked by basically a caretaker government for close to 50% of the last 5 years. As you can see behind me, there's about 15 different parties that are going to be represented in Parliament. And obviously, there's some big implications here for the EU, namely on the issue of sort of joint borrowing and joint debt. And we're very lucky to be joined now by Sarah de Lang from the Leiden University, who will be on call all day to give her analysis across what we're going to get from the Dutch elections. So just set out for us what the stakes are for this election and what your expectation is for the day.
So the stakes for this election are really whether or not a stable government can be formed that is willing to compromise and that is also able to stay in power for 4 years.
And the other question, of course, is a question of this is going to be slightly more centrist is the expectation. It's going to go away from the far right that we saw with Geert Wilders, was formerly the largest party. We'll see what happens today. What does a more constructive relationship with the European Union look like for the Netherlands?
So 3 out of the 4 parties that are topping in the polls right now are really pro-European Union, but also much more progressive on issues such as the nitrogen crisis here in the Netherlands. Than the previous government. So it would mean that the Netherlands would be far more willing to cooperate with the EU on combating climate change, for example, but also to go ahead with plans for agrarian policy to make it more sustainable.
And also I've seen a big shift within the politics. We were speaking to the Christian Democrats, who were traditionally very fiscally conservative party, are saying they're now open to joint debt at the European level. How active do you think that discussion will be in Dutch politics?
That discussion will be very active because a lot of parties want to ramp up their spending on defense policy, and only a few parties are willing to pay that out of extra taxes to the Dutch population, whereas other parties are willing to accept higher debt to achieve that end.
And I think it's also going to be represented not just in joint debt for the European Union, but higher deficits within the Netherlands. Is the government comfortable with that? Do you think the next government will be comfortable with expanding the deficit?
So a lot of parties feel that, they should have not ordinary citizens pay for what is currently needed, including not only investment in defense, but also investment in healthcare, and that it should partly be paid for by citizens with higher incomes, but also, for example, by corporations. That is especially a sentiment that is clear with the Green Labour Alliance, which is one of the 3 parties in the lead at the moment.
And really probably one of the most distinct figures in Dutch politics, probably known across the world, is is Geert Wilders, who is the leader of the far right, the longest-serving parliamentarian within the Dutch system, joining the government for the first time the last time around. What have we learned about him in the sort of Wilders experiment? Is that now over as far as Dutch politics are concerned, do you think?
Yes, the other parties in the Netherlands are no longer willing to govern with him. They find him irresponsible, but also unwilling to compromise. But the interesting thing is that his voters think differently. He is losing slightly in the polls, but not as much as you would expect for a party that toppled the government.
And something that also I think is quite interesting to observe within European politics is the impact that American politics has had on European politics and specifically on Dutch politics. How much has the election of Donald Trump and basically Trump's sort of way of operating, his opinions and many of the positions he's taken, how much has that had an impact on the Dutch domestic situation?
We clearly see an impact here, especially on the radical right parties in the Netherlands. For example, directly after Trump proposed the idea to ban Antifa, the Dutch far right put a motion to Parliament to do the same in the Netherlands. And that motion actually obtained a majority of both the mainstream right and the radical right.
And then just a sort of a final word. What for you is a sort of worst case outcome today in terms of what we see? Is it just basically hyper-fragmentation where you need 5, potentially 6 parties to form a government and you have continued paralysis in the Netherlands?
Yes, that would be a poor outcome. With 4 parties, it will already be very difficult to reach a compromise, and it might take anywhere between 6 months and a year. But with 5 or 6 parties, it would be nearly impossible to come to an agreement.
Well, Sarah de Lange, thank you so much for your time today from the Leiden University. And Vani there, sort of laying out some of the issues domestically within the Netherlands, but of course, the very sort of real impact this has of her policy, particularly at the EU level, and this question of joint debt, Vani, and how you're going to spend for all that, pay for all that defense spending is going to be very active. And now maybe one of the frugal nations getting on board with those Eurobonds.
Yeah, absolutely, Ollie. Thank you so much for that interview, and you'll be keeping us posted throughout the day. Much appreciated. Coming up, a look at what else is making headlines. We'll have your front page news next. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck. Stay tuned. You won't want to miss it.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, Cuba's president is now warning residents to brace for a, quote, very difficult night as Hurricane Melissa makes landfall. More than 735,000 people had evacuated before Melissa's arrival on the island of 11 million, already grappling with fragile infrastructure. Meanwhile, officials in Jamaica said Melissa caused catastrophic damage to infrastructure. Next, the Wall Street Journal reporting OpenAI's promise to stay in California helped clear the path for its IPO, which could come as soon as 2027. The Journal reporting CEO Sam Altman told California Attorney General Rob Bonta that he really wanted OpenAI to stay in the state, with a subtle hint, maybe even a threat, that the company would be willing to leave if Bonta blocked its path to convert to a simpler corporate structure. And on the front page of the Washington Post, the White House has fired all 6 members of the Commission of Fine Arts. That's as the White House prepares for some new projects. The Commission, of course, the independent federal agency that reviews construction projects in the capital region. Now, their termination coming as Trump prepares for a $300 million ballroom and a triumphal arch, among other projects. Let's take a quick look at markets as we set up for the trading day, a Fed day no less. Futures on the S&P higher again on NASDAQ 100. Bloomberg Dollar Index just a little stronger, and the 10-year yield there below 4. Coming up, Citi's Andrew Hollenhorst.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Confirmed, President Trump will meet with President Xi tomorrow as he floats lower tariffs and access to NVIDIA's Blackwell chip. China buying its first cargoes of U.S. soybeans this season. NVIDIA rising. Shares already soaring after CEO Jensen Huang announced a flurry of new partnerships and dismissing concern about an AI bubble. And gearing up. Markets laser focused for a big tech earnings day. Of course, the Fed decision and any forward guidance in Fed Chair Powell's comments. So right now, markets reflecting some optimism. We're off our highs for S&P futures. NASDAQ futures, though, as you can see, higher again. It's the busiest day ever, would you believe, for S&P 500 earnings. A landmark day with $11.6 trillion in market cap set to report. And NVIDIA, of course, being one of them. So many positive headlines out about NVIDIA. It's meeting a few milestones of its own today. Russell 2000 just off a little bit. We are, of course, waiting for that Fed rate cut, which is almost certain to come. What will Powell say, though, and how will he talk about this lack of data and how the Fed is navigating in this environment? That's what we'll be watching out for. Well, let's get to some individual stocks to watch now. Over to London and Kriti Gupta. Kriti.
Good morning, Vonnie. You said it. NVIDIA, of course, hitting some major milestones. Shares already higher by about 3% in the pre-market. If this price action continues, it is due to debut on the U.S. market open as the world's first $5 trillion market cap company. So again, momentum here on day 3 of what has been a blockbuster kind of deal spectrum that NVIDIA has been on. It is not all good news in the broader markets, though, Vonnie. I do have a downside for you in Mondelez, and this is one of the biggest contributors or movers to the downside in the pre-market. Shares really snowballing for Mondelez International, down almost 6%. Weakness when it comes to some of their earnings, specifically in the North American biscuit business. That's the analysis from Bloomberg Intelligence as well. Looks like not enough people buying Oreos over in the States, but of course something that is weighing on this consumer goods company. But again, good news when it comes to right here in Europe, especially when it comes to the banking sector. Earnings coming out of the likes of UBS, Santander, Deutsche Bank. We did start the session here in London, green on the screen from all of them. Starting to see a little bit of loss of momentum from UBS, Vonnie, down about 1.3%. But the actual numbers, very strong, and buybacks seem to be the theme across the board here.
Yeah, it's been a big week for European bank earnings. Kriti, thank you so much. Kriti Gupta there in London. So the team over at Citi expecting a rate cut by the Fed this afternoon, with, though, changes to the statement. Andrew Hollenhorst writing this. Powell may particularly highlight the pileup of jobs reports when the government reopens as critical to the outlook. As Governor Waller recently highlighted, either activity data will slow with jobs or jobs will accelerate. In his words, something's got to give. I'm pleased to say Andrew joins us now. He's chief economist at Citi. So a lot to parse there, Andrew, but let's start with the government shutdown, because your base case was for it to end in the first half of November. Well, we're in the beginning of November now, practically. Do you still have that as your base case?
Yeah, we're almost there. We're still hopeful, optimistic that the government can reopen in the next couple of weeks. You are starting to see some of that pain start to build. Some of what we're seeing with the Supplemental Nutrition Assistance Program. Military payments, which are still going out. They're still going to go out at the beginning of November, but I'm not clear that that can continue throughout the month and into December. Air traffic controllers, delays at airports, right? These things build over time, and hopefully that will put pressure on Congress and we'll get the government reopened.
So what happens if the Fed gets a pile of jobs reports all at once, 3 before, the next meeting in December?
Yeah, so that makes it really complicated for the Fed. The Fed is supposed to be data dependent. They're making policy based on the data, but what do you do when you don't have data? They are kind of in a wait and see mode now. A bunch of data could pile up before that December FOMC meeting. Maybe some of it could even get delayed after the FOMC meeting, depending on when the government reopens. I think they'll take a look at that data, and they're really going to try to assess, like we wrote about, is the job market slowing down more persistently? We've certainly seen big revisions downward to the jobs numbers in prior months. Is that continuing in the data that we're seeing? If they see that, then not only is that a December rate cut, they could think about cutting further next year. So this rate cut today, as well as the rate cut in December, probably a little less data dependent just because they haven't had that much data. Next year is probably going to be more data dependent.
You pointed to Governor Waller's comment about something's got to give, right? And Fed Chair Powell has talked about this labor market as being very strange because we're seeing, weakness, but also maybe stagnancy on the supply and on the demand side. What'll give then?
Yeah, low hiring, low firing job market. It's not a great place to be, especially if you're just coming into this job market. So we're seeing that with younger workers, people coming out of college, trying to get that first job, and seeing that the demand for workers is just not that strong. That's really been the concern for Fed officials over the last few months. That balance of risk between price stability and employment shifted for them as they saw those weaker jobs numbers, more concern about the job market. On the other hand, the GDP data has been holding up okay. We've actually had fairly resilient GDP activity data. So that's the question, and that's why we need data.
Yeah, exactly. And if you go beyond December, as you say, into next year, you know, over the next 8 to 10 months, markets are pricing pretty aggressive cuts. Will the Fed chair validate that today, or will he back off a bit?
I think he's going to be very careful about giving any guidance. He doesn't have the data, so there's really nothing to guide with. Now, at the September FOMC meeting, they put their dots down where they thought rates should be at the end of this year. The median dot did indicate that they would be cutting at the September FOMC meeting, which they did, October, today, December. So I think they can say, look, we haven't had any data. This is what we thought we were going to do back in September when we last met. With nothing to update the outlook, that's probably still the course that we're headed on. But I think he'll be very, very cautious about giving guidance because we don't have that data. We're going to get a bunch of data. And I think he'll emphasize we're waiting to see what that data is going to show and maybe even express a little bit of frustration that the government shut down and we don't have the data.
He's going to be careful about that too, though, for sure.
Yep.
This Treasury market, since we saw the move lower in yields, been pretty moribund. We've been around these levels. What could the Fed chair say that might wake this market up?
Yeah, so I think there are some things on the margin that he can say. One thing is, does he lean more on those dots that are fairly dovish, show cuts continuing through December? Or does he really say, look, we don't have data and everything could change between now and December? That would be more hawkish if he said that, more dovish if he emphasizes the dots. And then the other thing that's going on today is, what do they do on the balance sheet? Chair Powell did bring up the idea that they're getting close to a level of reserves where they would think about stopping balance sheet reduction. Do they stop balance sheet reduction at this meeting or announce an end to it? Do they wait until later? That's dovish on the margin if they do that.
Dovish on the margin. I want you to explain that in a little more detail, but also there were signs of a little bit of stress in money markets. Have those signs gone away, or what would make them be okay with stopping?
Yeah, so this is the very beginning stages of when you would see some movement in short-term interest rates. So we have Fed funds effective that moved a little bit higher. We had repo rates that moved a little bit higher. And that's actually a healthy, normal thing as you get back to a more normal level of reserves. When reserves are so oversupplied, liquidity is so oversupplied, all of those rates are kind of pushed down towards the floor. Now you're actually starting to see some life in those markets. So I don't think that there's urgency that they need to stop this at this meeting. But on the other hand, you don't want to go too far with balance sheet reduction. That reduces liquidity as you continue to reduce the balance sheet. If they go too far, and this is kind of what happened the last time they were reducing the balance sheet, then you can get more significant spikes upward in short-term borrowing rates. That becomes disruptive to the market, so they don't want to end up there. I think the question now is just really of sequencing. Do you announce that today? Do you wait until December? Is it an announcement to stop immediately or to wait longer before
And you
stopping?
say it's dovish at the margin because it would signal that all is clear if we stop today, right?
It would signal that they think that they've gotten the balance sheet down to the appropriate size, and as they're reducing the balance sheet, that is marginally tightening financial conditions, monetary policy, because you're reducing liquidity in the market. Once you stop balance sheet reduction, you're holding liquidity steady, and at some point they'll actually start buying treasury bills, increasing the size of the balance sheet, and they'll be adding liquidity to the market again. So we're moving from reducing liquidity to stabilizing to then eventually adding liquidity.
Does this market blink if we get a two-sided descent? So obviously, it's very likely that Myron will vote for a 50 basis point cut, right? But there might be somebody out there that would say, you know, we shouldn't do anything this time around because we don't have enough visibility, and let's just stay where we are.
I think we know that there are those divisions across the committee. That would be interesting if that happened. It's not my base case. I do think Myron dissents and wants a 50 basis point rate cut. I'm not sure that anyone is going to dissent and say, no, we shouldn't cut at all at this meeting. But they could, because we know that there are those differences. We know that inflation is still running above target, and the unemployment rate is not far from rates that you would consider full employment. So it's not really about where is inflation today, where is unemployment today. It's what's the balance of risks around those variables, and different Fed officials have different views.
All right, Andrew, thank you so much. Cannot wait for later on, and looking forward to reading your thoughts after this decision and a statement. I do want to bring some breaking news to you now, though. President Trump saying that he has reached a deal on trade with South Korea. That headline just crossing the Bloomberg now. President Trump saying he has reached a deal on trade with South Korea. Now to other top stories trending on the terminal this morning. President Trump saying he expects to lower tariffs the U.S. has imposed on Chinese goods over the fentanyl crisis, and also speak with President Xi about NVIDIA's flagship Blackwell artificial intelligence chip. The two leaders are expected to meet in Busan, South Korea on Thursday. NVIDIA shares are extending the rally, putting the stock on track to breach $5 trillion in market capitalization. That would make the semiconductor giant the first public company in history to hit that milestone. UBS CEO Sergio Armati defended his bank against criticism over the exposure to bankrupt auto parts supplier First Brands. Bloomberg's Guy Johnson spoke with Armati earlier.
First Brand was a broad and well-recognized issuers in the market, and as part of a high-yield diversified portfolio, this was something that was deemed to be correct. So I think that there is a little bit of witch hunting and trying to compare things between one bank or the other, and one strategy or the other is totally inappropriate.
Coming up, the world's largest sovereign wealth fund posts a return in its third quarter results of 5.8%. We'll speak to Deputy CEO Trond Grande next. This is Bloomberg.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
In case you missed it on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point. Avoid dancing at all costs.
Don't miss the opening trade live every weekday. This is Bloomberg Brief. I'm Bonnie Quinn in New York. You're looking live at pictures of a dinner that's being held now with Korea's President Lee Jae-myung and, of course, Donald Trump, the President of the United States.
Trump just saying that he has reached a deal on trade with South Korea. So a breakthrough there on that deal on trade with South Korea. We'll bring you details as we get them. He also just mentioned that he will have a 3-hour meeting with China's President Xi tomorrow, a 3-hour meeting, and then he will go home. So extra details on that meeting tomorrow and a breakthrough on that trade deal with South Korea.
I think we came to a conclusion.
Meantime, Norway's sovereign wealth fund posting a second consecutive quarter of gains, a 5.8% return in the third quarter. It did miss its benchmark by 6 basis points. I'm pleased to say Deputy CEO Trond Grande joins us now. So thank you very much for joining and congratulations. Talk to us a little bit about the specific asset classes or geographies that did well and those that helped you miss your benchmark by 6 basis points.
Yeah, sure. Thanks for having me on. So Q3 was a really good quarter for us. Let's admit it. 5.8%, as you said, returns. And that was driven by our equity portfolio, which makes up 70% of our allocation. So that returned 7.7%. And we saw the strongest returns in the sectors of financials. We saw technology also doing well, as well as basic materials. So those were the 3 winners for us. And in terms of geography, we saw Asian markets performing really well, South Korea, China, and Japan. So we don't really take a top-down view on most sectors or geographies. So our underperformance is the result of many different individual positions, and it mostly came from the fact that we are also investing in real estate, and we fund that by not investing in equities and bonds. And so with equities and bonds outperforming, we have a relative return that is below our benchmark.
Yes. Well, 40% of your equity investments are in the US now because you do track the MSCI Global All Cap Index. Your largest holdings, Apple, Microsoft, Alphabet, Amazon, and NVIDIA. Have you any concerns about some of these stocks now, particularly with NVIDIA potentially today topping $5 trillion in market cap?
Yeah, it's quite remarkable, right? So we see that in our equity portfolio, which is very broadly diversified, but even there, these magnificent seven companies, they make up almost 80% of our investments. So it's certainly a watch point. It's a sort of a concentration risk, very much focused around the theme of AI and the supply chain behind the AI. So it's something that we're watching out for. But on the other hand, you wouldn't want to miss out on this, this enthusiasm. So it's a difficult call.
It sure is. Now, your finance minister, Jens Stoltenberg, wants to review the fund's mandate and, of course, ethical guidelines as well. What would you hope would come out of that?
Well, we don't really, our role is to manage the fund based on the mandate that we're given. So it's up to, in Norway, the politicians and the Minister of Finance to determine, what they would see us invest in and what they would see us not invest in. So, we're kind of on the sidelines to that the discussion. But I think, things evolve, right? The world is changing and the fund has become very large. So I think, at certain junctures, it's wise to revisit, the setup that you have and see that it's appropriate.
But given the concentration risk that you talked about, would it be wise to maybe benchmark to more than one index or change your benchmark index so that you could maybe, include European stocks more?
Well, it's a difficult question, right? To a certain extent, actually, we do have not a full exposure to the US, as would be determined by a global market cap weighted index. We still have a little bit of an overweight in the European stocks. But I think, you want to choose the best benchmark possible. We don't use the MSCI, we use the FTSE, but they're pretty similar, right? So you would otherwise, or in any case, end up with a fairly big share in the US and in these big companies.
I want to ask you about your renewables and infrastructure plans, because those investments do still remain a fairly small share of your investments. But how high are they on your agenda, and how will you scale green investments this year?
Yeah, so they're pretty high on our agenda. So within our mandate, we can invest up to 2% of the fund into this asset class. We're currently at less than 1%, 0.5% or so. But we see very promising projects coming online, and with the capital base that we represent and with the long-term nature of our fund, we see that these investments are really attractive for us.
So tell us more a little about that. We're seeing AI change everything in the world at the moment. Is it changing how you're looking at green investments? Is it adding potential, energy investments into that bucket for you?
Yeah, well, certainly, right? So something, this AI, it needs massive data centers, it needs massive compute power, and that again needs a massive energy. So definitely, that's also a theme in our unlisted infrastructure investments into the energy space. That is probably going to give us some tailwind. So really excited about that.
Tell us more, though, about how you're factoring in climate change, because you do have a climate action plan, and it's. I'd be curious to know if you could tell us a little bit more about maybe what's not even so public about what you're doing on climate action.
I will only tell you the public things, but let me shed some light on that, because being a long-term investor, and truly long-term, I mean, we're talking about 30, 50, maybe 100 years. Our starting point is that if the world is on a sustainable path, then it's going to be good for the world, it's going to be good for businesses, and it's going to be good for us as investors. So this goes hand in hand with our long-term objective. So we're not there to push the companies to do anything that isn't financially sound, but we do want to make sure that they have proper risk management, that they look at this issue and how they would be affected, both from a potential or probable transition, and also from the physical potential risks that could come out of a changing climate. So this is very much a business proposition for us.
You do talk about a potential AI correction. You mentioned, the concentration risk and so on there. There's also in your outlook the risk of a fragmented global economy, which we could be seeing more and more. How does that affect your decisions going forward?
I think it's a watch point, right? So, I mean, let's be honest, it's a very much of a risk-on feeling in the market just now. The valuations in many companies are pretty elevated, and that's against the backdrop of quite a lot of uncertainty, geopolitical uncertainty with tariffs and conflicts, with, let's face it, very indebted countries, and then also a supply chain behind AI, which is quite concentrated again and vulnerable. So I think we need to watch out for this, because if one thing's break, and they could break all at one point, and then we would have a severe crisis on our hands.
So how do you deal with this at meetings of your investment committee, Trond? I mean, if you are mandated to have sort of 70% in stocks and 27% in bonds and so on, and reflecting particular indices, how can you hedge for some event that we're not sure will happen yet, or some kind of black swan event, or any of the list of risks that you just mentioned?
Yeah, it's a very good point. So we don't really try to hedge too much against that, right? So that goes back to the long-termness of this fund. But, it's very easy to say that you're long-term. What you're saying is that you can withstand short-term fluctuations. So the point of us, doing stress tests and communicating the risks is to make sure that we keep the governance and we keep the strategy also in stress times, so we don't change our minds when things look the bleakest. That's the essence of it.
All right, Trond, continued good luck. That is Trond Grande of Norges Bank Investment Management, Norway's sovereign wealth fund and the second biggest in the world. Coming up, we'll get you set up for your trading day with a Fed decision and the busiest day of earnings on deck. This is Bloomberg.
bringing you up-to-the-minute news,
geopolitical news,
economic news,
Up-to-the-minute global news.
whenever, and
wherever
it happens.
In Washington,
Buenos Aires, Argentina,
Sintra, Portugal,
Ottawa, Canada,
Bangkok,
Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sart in Le Mans.
and this.
and this.
and this is Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today. Boy, is it going to be a big day. The busiest ever for S&P 500 earnings. More than $11 trillion in market cap set to report. Before the bell, we'll hear from Boeing, Caterpillar, Kraft Heinz, among others. Then, of course, we have that Fed rate decision coming at 2 p.m. Eastern, followed by Fed Chair Powell's news conference at 2:30. And then big tech earnings continue to be on deck with Meta, Alphabet, and Microsoft reporting after the close. So let's look at those micro movers now, because before the bell, NVIDIA putting on more. It's set to become the first $5 trillion market capitalization firm as this AI rally extends, if these gains hold. Mondelez suffering a little bit. It cut its profit forecast due to high cocoa prices coming down the pike. And then weak results at Verona's revenue outlook miss as well, causing that stock to drop precipitously. This is the macro picture. We have futures pointed higher, particularly NASDAQ 100 futures, though they are off their session highs. The 10-year yield not really moving around too much. Gold, though, potentially some dip buyers emerging after it went below 4,000, or perhaps just a little nervousness. That's it for Bloomberg Brief. Surveillance is next.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
The Fed would be well served to be very cautious in this environment.
They're in almost an impossible position.
The vacuum of data is starting to cause some concerns.
Data or no data, you still have to make policy.
They have to be pretty careful about how much they signal more cuts going forward.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, adding to all-time highs. Chair Powell's Federal Reserve expected to cut rates for a second time just before more than $11 trillion of market cap reports earnings. And the president touches down in South Korea to meet with China's leader. The week begins right now.
And the table's set in South Korea for these two leaders to meet, President Trump and Xi Jinping, the leaders of the world's two biggest economies. And Jonathan, the president gave us some insight of what's going to be discussed to reporters. He told them on his way to South Korea, we're going to be speaking about Blackwell. Blackwell is one of the most advanced AI chips that the United States has. It comes from NVIDIA. Jensen Huang, who spoke to Ed Ludlow yesterday, talking about the fact that he's also going to go over to Asia to speak to the president. What's so interesting about this, the president calls it the super duper chip. Pardon the pun, but he's literally putting the U.S.'s most highly advanced chip on the table. And this would be a huge win for Beijing.
A massive win for NVIDIA as well. The stock is up in a pre-market by 3%. There's a dance to the one side. We'll buy some soybeans. We'll lower some tariffs regarding fentanyl. I'm right there with you. This is the main event. The president has been celebrated by the China hawks in Washington, D.C. for a long, long time, for the best part of the last 10 years. If he moves this in this direction, I think he's taken a big step to contradicting some of the work that he's been building up over the last 10 years.
Right. This is part of the reason why he was elected originally in 2016. It was taking on China, not just rebalance the unfair trade treatment that China has in the global market, but also they have made this a pivotal national security concern. And you have to ask, the president told reporters today, Jensen Huang was in the Oval Office 3 days ago. You have to ask, does he have more influence on the president when it comes to policy that affects national security in the United States than even some of his own advisors?
It's a question we'll ask throughout this morning. If you're just joining us, equities, all-time highs, adding some weight to the rally on the S&P 500. Earnings coming up later. Microsoft, Meta, Alphabet. We're talking about $9 trillion of market cap reporting after the closing bell across 5 names, including Amazon and Apple tomorrow. We're talking about almost a quarter of the S&P 500 reporting across just a handful of names.
For the next 48 hours is going to be intense on the earnings space. The so-called Magnificent Seven are projected to post a profit growth the third quarter, Jonathan, of 14%, nearly double the 8% that is expected for the S&P 500 on a whole. So this is going to be huge.
Coming up on the program, a big hour. Julian Emanuel of Evercore with stocks on a tear. Mary Lovely of the Peterson Institute as the U.S. turns down the temperature with China. And Greg Decker of EY looking ahead to the Fed meeting later on this afternoon. We begin this hour with stocks trading higher as traders await a key stretch of earnings, trade talks, and a Fed decision. Julian Emanuel of Evercore writing, it's a week where decades happen. Short term, we see the potential for a hypercharged S&P 500 move above 7K as equally probable to a setback to 65.50. Julian joins us now for more. Julian, good morning.
Good morning.
Julian, sir, help me. When you write something like that, what on earth am I meant to do? What do people do with that?
So you have to focus on the long term. Okay, the long term for us is 77.50 at the end of 2026. But I will say, over the last week, I have been getting sort of derisive jokes about that price target not being aggressive enough. And that, to us, signals maybe there's a little bit of too much exuberance. And then again, you step back and you see all this event risk coming, whether it's earnings, whether it's geopolitics, whether it's the Fed. There's a lot of positivity priced in the here and now.
Let's go through the event risk. So tech earnings later and again tomorrow. The trade conversation in South Korea between the US and China, and a Federal Reserve decision later on this afternoon. Out of those three, what's more fragile? What's going to be the source of that volatility potentially for you?
I would say it's going to be earnings, okay? Because step back again in your comments at the beginning, President Trump wants to have this meeting go very well with Xi. I think, if anything, he's got the memory of the two of them sort of hand in hand at Mar-a-Lago all those years ago, and thinking about that same kind of positivity. And look, there are a number of issues that, real honest-to-goodness wins can be scored in the here and now, although there's going to be, further negotiation that will certainly be going on. But again, for us, it is the same story that it has been, that was at the trough in April, is that earnings are going to be good. The question is how much in the here and now is priced into stocks.
You wrote the note this morning and published the calm before the Mag 7 storm. Let's talk about some of those names. Microsoft, Meta, Alphabet, Apple, Amazon. Different businesses then. I know you can't do single names, but what's the single metric you're focused on? What's the source of concern?
Well, it's basically going to be commentary rather than hard numbers, commentary about the AI revolution. And frankly, when you see stocks respond the way they did to the news that we had in AI yesterday, the news that we have this morning on AI, our belief is that the positivity is going to continue. And in some of our channel checks, what we're hearing now is what we hope to hear, is that some companies are saying, we see CapEx spend visibility now out to early 2027. And that's different. And that's been, if you look at the last year and a half, part of what continues to move things along is that CapEx peak that everyone's been concerned about continues to be moved out in time.
Julian, yesterday we had another story in terms of circular financing, what it feels like when it comes to NVIDIA and Nokia. Are you concerned about this when we get these results?
It is ultimately likely to be something that's concerning, particularly in some of these companies that have had to issue debt to make these deals happen. But by and large, at the moment, when you think about where the CapEx is coming from, it is from companies with huge, huge earning streams. And to us, that enables the story, particularly in an environment where, again, remember, we were worried at some point that the 10-year yield was going to go through 5%. And here we are below 4%, and credit spreads remain near their tights. So at some point that may be a concern, but that's off in the distance for us.
The president's tone on the Blackwell chip, does that set this tone for how potentially some of these other tech firms might be approaching doing business with China?
I think it's going to be much more of a case-by-case basis. And look, think about the tie-ups that the Trump administration has announced, the stakes, the deals. A lot of this is going through the Oval Office, and I think a lot of it is going to be a narrative that's crafted by the administration.
I understand, based on what you've said so far, constructive over the medium to long term on equities. Got that. You think there might be some vulnerabilities in the short term because people are getting so bullish. Let me share with you a really punchy call that was shared on this program yesterday. It came from Osun Kwon of Wells Fargo. We see a reasonable upside to 7,100 on the S&P by year end. Our call is to buy low quality, junk, high beta, AI CapEx beneficiaries, a full risk-on trade. When you think about maybe the source of volatility into year-end, we've discussed that. What do you think is the fragile part of the equity market right now that you'd be pulling back from?
Well, and again, we have to distinguish the short term from actually the medium and the long term. And part of the reason that we're not fully committed to this idea that stocks could pull back is because seasonality is so incredibly positive in general. That may be an offset to the extreme bullish sentiment that we're seeing. You know, years like 1999, you had a continued rip. But frankly, if the market is going to pull back, it will be because you'll see good earnings announcements and the stocks won't respond positively in the AI theme.
Does this feel like 99 to you?
Not yet. Not yet. And one of the two big differences, number one, the Fed was hiking in the second half of 1999. And number two, when you look at the internals of the market, right, the advanced declines day in and day out, they were moving lower. For 2 whole years prior to the bubble top in 2000, they're moving higher with the indexes.
Yesterday was a peculiar session. 398 decliners on the S&P 500. Hardly any of them index was in positive territory on a day when we finished higher. Explain what yesterday was. What's the takeaway for you?
Yesterday was one of those days that give us pause about the excessive bullishness right now and really concentrated in the AI theme, basically, you know, in the lead up to the news that we hear this morning, which is, you know, further upside.
How will you know when we're in 1999?
We will see. So here's the Evercore ISI take on it, is that in the morning meeting, we have a lot of research. We present fundamental, we present macro. When we start having morning meetings that are all about deals and there's no room to present research, that's part of when we'll know. And it happened before. We've seen it. It happened in the 2021 time. It happened in 2007. It will happen again.
Julian, a clinic. It's good to see you. Thank you, sir. Thank you very much. Julian Emmanuel of Evercore ISI. Equity futures this morning, positive by 0.1%. What a 24 hours we've got coming up for you. All-time highs heading into major tech earnings, a Federal Reserve decision, and a key trade meeting in South Korea between the US and China. With an update on stories worldwide with your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump is in South Korea, where he just reached a trade deal with the country ahead of tomorrow's meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis, and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chips. Meanwhile, UBS announced third-quarter earnings that beat analyst estimates as investment banking revenue and lower-than-forecast legal costs boosted its performance, though shares are down 1.3%. CEO Sergio Aramati defended the company's exposure to the bankrupt First Brands, calling the scrutiny a witch hunt, insisting investors were aware of the risks. And Uber plans to build a fleet of 100,000 autonomous vehicles powered by NVIDIA technology. NVIDIA says the companies expect the expansion to start in 2027. The move could help bring down the cost of offering hailable robo-taxis to consumers. Stellantis will be among the first automakers to deliver those NVIDIA-powered robo-taxis to Uber. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, hoping for a breakthrough.
Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
That conversation up next with Mary Lovely of the Peterson Institute, live from New York City this morning. Good morning.
crushing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Your day ahead looks like this. 2 p.m. Eastern Time, a Federal Reserve interest rate decision. 30 minutes later, Chairman Powell news conference. After the close, earnings from Meta, Google, and Microsoft. On to tomorrow, a conversation between the US and Chinese leader sitting down in South Korea to discuss trade. The president's priorities have been well articulated over the last weeks. We've been talking about soybeans, rare earths, all kind of things around what happens next. We weren't talking about this. This quote from the president on Air Force One. We'll be speaking about Blackwell. The stock is up on NVIDIA by more than 3%. Where did that come from?
This isn't just any chip. This is what NVIDIA has to offer in terms of their most high advanced processors. And potentially, the president is saying this is going to be discussed. Pardon the pun, literally putting the chip on the table. For Beijing, this would be a massive win. And you have to ask yourself, what for? What did we hear this morning? China's going to buy a few cargoes of soybeans. So the United States is willing to give their most advanced technology in exchange for some agricultural products. That is where this relationship stands right now. Stock is up by 3.3%. It's given a lift to this equity market, positive by 0.2 on the S&P 500. On the Nasdaq, up by 0.3. Under surveillance this morning, hoping for a breakthrough.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon. Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So here's the latest this morning. President Trump planning to lower tariffs on China over the fentanyl crisis as China buys its first U.S. soybeans in months ahead of tomorrow's face-to-face meeting with President Xi. Joining us now from South Korea is Bloomberg's Tyler Kendall. Tyler, is the president willing to go even one step further?
Well, John, at this point, we're going to have to wait and see, but it does appear that the contours of an apparent U.S.-China trade agreement is expanding beyond just a pullback in the recent tensions. President Trump telling reporters on Air Force One he's going to bring up NVIDIA's Blackwell chip. Now, President Trump months ago had suggested that he consider letting the company sell a downgraded version of its processor, but this would be considered to be a big win for the company, which has been trying to regain market access in China since at least 2022. Now, of course, nothing's been finalized, but I have to say, if you're a defense hawk waking up in Washington today, you might be in a tricky position if you've previously advocated against such sales over national security concerns. Now, you also were talking about fentanyl earlier, and that's another key part of this, and it continues the trend because this hasn't been a recent escalation. These tariffs have been in place since the beginning of this Trump administration. This very likely would look like China putting on export curbs when it comes to the so-called precursor chemicals that are used to make fentanyl in exchange for a tariff cut. Of course, as you well know, 20% of the tariff that's currently in place on China is tied over these concerns. And John, our analysts at Bloomberg Economics, of course, have already crunched the numbers. They say that if China sees their fentanyl tariffs cut in half, so to 10%, it would mean China loses 10% of its exports to the U.S. going forward. Compare that to 70% as the status quo stands now.
Tyler Kendall with the latest in South Korea, tracking events for us over the next 24 hours. Tyler, thank you. Let's stick with the US and China. Mary Lovely of the Peterson Institute writing, systemic issues will not be addressed in this round. We're unlikely to see much progress. Mary joins us now for more. Mary, welcome to the program. Just first question, what do you regard as a systemic issue with regards to the US and China?
Well, we see some of these systemic issues in Trump 1, treatment of U.S. intellectual property, but there's a whole host of issues having to do with what the U.S. perceives as bans or barriers that prevent U.S. exports into the country and contribute to the lopsided trade balance between the two. We have questions from businesses that American businesses operating in China in terms of export bans and other things that prevent them from having their own personnel in place. There's a whole variety of issues that have contributed to this tension, including older issues, which you'll remember from the first trade war, John. Things like industrial subsidies, China's support for firms through their state banking system, other things that make Chinese exports uber competitive in the West.
Mary, the president telling reporters that they're going to be speaking about Blackwell. This is one of the most advanced AI chips the United States has access to. Is the president, if he allows Beijing to buy these chips, is the president rewarding bad behavior?
Well, I guess it depends on how you look at it. I think there is a bigger issue here, which is how do we protect U.S. national security? And as you know, there is some contention within the Trump administration as to how best that can be done. There, of course, continue to be so-called China hawks who want the U.S. to do everything it can to prevent the most advanced technologies from falling into Chinese hands. There are others who believe that, and this has been said by the president, that one of the things we want to do is to get the Chinese addicted to U.S. chips, U.S. tech. So I think that we're seeing some difference in opinion. We always knew it was going to come down to President Trump's decision. President Trump is a deal maker. He would like to see an increase in U.S. commerce, U.S. sales to China. And of course, these chips are a primary way that can be done.
How much influence do you think someone like Jensen Huang has had on the president?
I think the tech community in general has had an outsized influence on the president, not only through this, but in terms of his behavior toward crypto and crypto regulation and other issues. For example, in these trade deals that he's signing with other countries, we're seeing a promise by other countries that they won't levy digital service taxes and other kinds of taxes that might impede U.S. tech rollout to other countries. So in general, I think he's been a very tech-friendly president.
We have the contours of some sort of agreement that they're going to reach tomorrow. What comes next? Where does this leave the relationship for 2026?
Well, it reduces the tensions and potentially restores some market access to China. For example, by rolling back those fentanyl taxes by 10 percentage points, China will get down closer to 45% or even 40% average tariff rate, which means that the pressure on Chinese companies to go out, build their factories in other countries will be lessened. So we're going to see a significant decrease in tensions. Then I think there's a hope on the U.S. side that we can turn to issues which have prevented U.S. exporters from gaining more of the Chinese market. So I think probably or surely Secretary Bessent, Trade Representative Greer have a whole host of issues that they want to discuss with the Chinese, including, as I mentioned before, industrial subsidies, subsidies that come through the Chinese state banking system included.
Do you think China is willing and ready to make those changes?
I think China is willing to make some changes, not all that the U.S. wants. China right now is, of course, struggling a little bit to revive its local demand. It does not want to be as dependent on net exports. Net exports from China grew by 36% in the year to date. That means that a lot of Chinese growth is dependent on the rest of the world accepting their exports. And for many countries, that means accepting that they'll be permanently in a trade deficit position. So China knows that this reliance on net exports is really not sustainable, and they're looking for alternatives to that. So I think some of these changes are within the realm of things that Chinese authorities want to do. But when it comes to putting their development first, relying on growth in their tech industry, the diffusion of AI throughout their manufacturing, and continued emphasis on industrial development, those are not going to change.
Mary, you know about these issues far better than I, but this is a conversation that you and I could have had 10 years ago. And back then we were talking about Chinese overcapacity, and people said the same thing, that it wasn't sustainable, they needed to change, they understand that, and here we are 10 years later, and they're on course to run a record surplus this year, even without substantial trade with the United States. Mary, in your mind at the moment, in the history that you've been following this, what makes this unsustainable? What would stop them from doing what they've been doing for such a long time?
Well, they are really struggling. Obviously, they need to buy more of the things they make domestically, yet Chinese domestic demand has really been moribund. People don't have a good outlook for the future. Firms' investment outside of the tech sector has been, lackluster as well. So they really need to revive their own economy if they're going to, continue to have moderate growth, so about 5%, and not sell all those products to the rest of the world. I think not only the U.S. trade barriers, but trade protection that's being imposed by other countries, including in more friendly areas like the Southeast Asia, who are beginning to see a flood of Chinese imports that are hurting their own domestic producers. I think this response does have the attention of the Chinese authorities. The question is just now, how can they revive domestic demand? I'm just back from Shanghai, John, and I think that this was a major topic of discussion. They're talking about new things. Obviously, investment in the real estate sector is out. They have a lot of infrastructure. They don't need more bridges and roads. They're talking about things like social infrastructure, helping local governments to build things that will help people's lives, including restoring old buildings that need refurbishing, things that will help with children and the elderly, the healthcare sector. These are areas where they're starting to look, and we hope we will see some action by the Chinese authorities to do some kind of fiscal stimulus in this area.
Mary, we hope. Been saying it for a while, haven't we? Mary Lovely of the Peterson Institute. I think many people share that hope as well. The Treasury Secretary has been so clear about this ever since he sat in this seat at the start of the year. The greatest imbalance in the global economy is Chinese overcapacity. All these flashy headlines around trade to support equity markets, I get it. It's important. Let's move on. But that big issue is not going anywhere. And it's an issue that needs to be tackled.
And it's really difficult to tackle this issue. Although I will say, China did signal they want to try. They pledged to, quote, significantly boost the share of their consumption in their own economy just this week.
Up next on the program, Greg Deco of EY as we count you down to a Federal Reserve decision.
issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Julian Emmanuel of Evercore on the program just moments ago, calling it the calm before the Mag 7 storm. Some big earnings after the closing bell. A big Federal Reserve interest rate decision later on this afternoon as well. Equity futures into that look like this. Positive by 0.2% on the S&P, up by a third on the NASDAQ. On the S&P 500, a 4-day winning streak. The longest run in about 3 weeks. Over that period, we've added an almost solid 3% to the benchmark here stateside. That's the equity story in the bond market, 2s, 10s, 30s. Last time the Fed met that morning, 2s around 350, 10s around 4%. Where are we this morning? 350 on 2s, around 4% on 10s. Yields high by just a single basis point on your 10-year, 398.90 this morning. That's the story in equities and bonds. Let's get you some single names. Here's Danny with more. Hey, Danny.
John, it's the $5 trillion elephant in the room, and it is the gains that continue for NVIDIA this morning, up 3.5%. You've been speaking about that this morning, that if we do open at this level, we'll open at a $5 trillion market cap. The latest boost comes from the conversations and the expectations that Presidents Trump and Xi will reach an agreement around fentanyl and other trade issues, and also that Blackwell chips are being discussed with China. So again, those shares up 3.5%. A lot of earnings to look forward to, but we've already had some released late yesterday and this morning. Centene, one of them. This is a health insurer provider. What a turn in fortune. Shares are up 11.5% in the pre-market. This is a company that had a historic plunge in July. The concern for them was the high prices for the medical insurance company weighing on them, but they beat on their earnings, so that's assuaging some of those fears. Finally, wrapping things up this morning with Mondelez, a big old decline of 5.4%. They cut their outlook. They see organic growth sales for 2025 at 4%. Previously, it was 5%. The executive saying that it is a cautious consumer, that there are issues with higher prices, specifically cocoa prices, and you're seeing buyers pull back because of that price sensitivity, John.
Danny, thank you. Appreciate it. One more number for you. It comes from Caterpillar. It's a beat on the top and bottom line. Revenue comes in at $17.64 billion. The estimate 16.71. EPS 495. The estimate 451. The story in the pre-market shaping up as follows. Caterpillar higher by 2.6% so far in early trading. That's the story with some of the earnings. More still to come, of course, with tech after the closing bell. On our radar this morning, we looked at the banks. UBS CEO Sergio Ermotti defending the company's exposure to the bankrupt First Brands Group, calling the scrutiny a witch hunt. Ermotti insisting investors were aware of the risks and won't change procedures moving forward. A second story from NVIDIA. Shares up, soaring on new optimism. President Donald Trump saying he plans to discuss the Blackwell chip with China's Xi Jinping on Thursday, potentially allowing sales of the AI processor in the country. The stock is up by 3.5%. And finally, on the agenda for tomorrow's meeting, President Trump expecting to cut U.S. tariffs on Chinese goods related to the fentanyl crisis. The Wall Street Journal reporting the president is considering cutting the 20% tariff to as low as 10%. Julian Emmanuel on the program from Evercore with us just moments ago, and I think he put it very well. Based on what we've heard so far, all indications point to a president who wants this meeting to go well.
He does want it to go well, and he says he thinks that it will be a significant meeting, that they're both going to walk away with something. Remember, when he talks about China, he also talks about this relationship he has with Xi Jinping, and that he doesn't want to hurt China, but he wants it to be fair. Very different in terms of what we are expecting now from this meeting when you introduce the fact that the president says they will talk about Blackwell. Now, we don't know if the United States is really going to open the floodgates and allow NVIDIA to sell these chips into China, especially in July. Remember, Howard Lutnick, his commerce secretary, was out and about talking about we're not going to give them our first best tech, second or third, maybe our fourth best chip. No. This is prime chip for China to get their hands on. So it's taking on a little bit more significance now than it did over the weekend. We heard from Treasury Secretary Scott Bessent and Ambassador Greer.
So two very different approaches to the AI story of the moment, the US versus China. They've been well discussed on this program. In the US, we're throwing tons of money at the situation. In China, are focused on hyper efficiency, necessary because they don't have the goods that the US companies have the access to. So what is the argument to give them this access? What is the argument that comes from NVIDIA, the NVIDIA boss, and other people down in Washington too?
Well, Mary Lovely, I think, really pointed to this friction within the Trump administration. There are still, although they're becoming less of a number, there are still national security China hawks within the administration and in Washington, D.C. But there is a new approach from some members of the Trump administration, especially those that come from the tech sector or influenced by the tech sector, or Jensen Huang himself, who the president said was in the Oval Office just 3 days ago, showing him some of these chips. They want China and the rest of the world to get addicted to U.S. tech. And the only way to do that, they say, is to get them addicted, is to sell them these chips.
NVIDIA in the pre-market higher by around 3% through most of this morning. Turning to the Federal Reserve, policymakers widely expected to continue their rate-cutting cycle later on this afternoon. Greg Decker of EY saying, we anticipate that the pace of rate cuts in 26 will be more measured than current market expectations suggest. Greg joins us now for more. Greg, good morning, sir. Let's just start with the meeting right in front of us and the decision later on this afternoon. What are you focused on?
Well, I think I'm focused on three things. One, how Fed policymakers approach this notion that the effect of tariffs on inflation is going to be transitory. That's an open question, but it seems like that is indeed the case given the latest CPI data, where we have a gradual and uneven pass-through of tariffs, but we have some offsetting effects from shelter cost disinflation. The second key question is really how weak the labor market is. And there, the evidence is a little bit more mixed. We have slower payroll growth. We have evidence of a slight rise in initial claims for unemployment, and we have downward pressure on wage growth. But it's not like there is any type of significant collapse in the labor market. And three, it's how restrictive monetary policy is. And there again, the evidence is quite mixed. For some consumers, we have restrictive monetary policy conditions that are limiting the ability of lower end and median income consumers to spend. And for some businesses outside of the AI space, we're not seeing much forward momentum, which again indicates that monetary policy is restrictive. So a very split committee likely over the course of the next few months and into 2026.
And Greg, we're doing this. We're conducting this meeting with limited access to a full data set, which makes it even more complicated. Reading the research, Bank of America, Deutsche Bank, Morgan Stanley, all suggesting it's difficult for the chairman to provide guidance beyond the October meeting. Does that limit the scope for a dovish twist in today's meeting this afternoon?
Yeah, I think Fed Chair Powell will want to preserve some optionality because, as you've been saying, the Fed is extremely data dependent. And in the absence of official statistics, it's going to be very difficult to really base anyone's view on the latest numbers. Outside of CPI, which proved to be a little bit lower than expected, we don't really have any strong economic data. So the Fed chair is likely to emphasize again that there is no risk-free path for monetary policy when the two mandates are moving in opposing directions. And as a result, he's going to essentially want to leave the door open to either maintaining the Fed funds rate unchanged by the end of the year, depending on how the data flows, or potentially suggesting that there is going to be some further easing, depending on, again, how soft the labor market is and how transitory the effect of tariffs on inflation is. I think one thing you just raised, which is very important, is the direction of travel of trade relations between the U.S. and China. One of the key potential upsides to the U.S. economy is essentially a lowering of tariffs vis-a-vis major trading partners. If we have more stability, more clarity, reduced policy uncertainty, and lower tariff rates, then that's going to be a net boost for the economy going into 2026 and it will lower inflationary pressures, which could open the door to the Fed easing more easily and having less difficulty in justifying any type of neutralizing of monetary policy.
Greg, tomorrow the tariff rate on China might be 45% if they cut the fentanyl tariff in half, which the president is signaling this is under discussion. Would that ease the concern of the hawks on the FOMC?
I think it certainly eases the fact that we have a potential for inflation to continue to accelerate. If we have the status quo environment where tariffs remain unchanged, our expectation is that the net lift to CPI inflation is going to be between about 3/4 of a percentage point and 1 percentage point. So that's a significant lift in terms of inflation. It's not comparable in any manner to what we experienced back in 2021 when inflation surged towards 9%, but it is still a movement away from the 2% target. If we have an easing of tariffs vis-a-vis China, a major trading partner, and potentially some stabilization or potentially some deals being cut out with South Korea, with Japan, with other trading partners, then that would essentially limit the upside to inflation, which, as we know, has been really gradual and uneven. So there is a potential for lower inflationary pressures, lower downward pressure on employment and labor demand. And as a result, this could essentially favor the Fed proceeding with a more easier neutralization of monetary policy. Because remember, we're not talking about easing monetary policy per se. We're really talking about moving from a restrictive monetary policy stance towards one that's closer to neutral.
To your point, Greg, this can cut both ways, and we're highly dependent on the policy decisions that may develop in the White House. There's a quote of yours that we brought up at the start of the conversation. I actually want to go back to it and deal with one thing in it. We anticipate that the rate cuts, the pace of rate cuts in 2026 will be more measured than current market expectations suggest. The piece of that I want to deal with, Greg, is the number 2026. How do you define the year? Is it from January to May? And then May to December, when we get a change in the Fed share? Or is it the whole year? When you talk about 2026, what are you talking about?
I think it's the whole year because we're going to see, John, a change in the leadership over the course of 2026. So we may have a more dovish lean towards the Fed leadership with Governor Waller, Governor Bowman, Governor Myron, and a new potential Fed chair that all lean towards a more dovish monetary policy stance. But at the same time, we'll also get a rotation of regional Fed presidents that may tilt more hawkish. So the split that we're currently seeing within the FOMC, and remember, in September, we had essentially 10 policymakers that were favoring 3 or more rate cuts and 9 policymakers that were favoring 2 or fewer rate cuts. So a great degree of polarization. That polarization is likely to get only worse over the course of 2026. And I think that markets, by just basing themselves on the median dot plot of rate expectations, may be misguided that there might not be as much easing of monetary policy. And remember, there are 2 key questions here. Are we seeing a transitory effect from tariffs? And what is going to be the state of tariffs in 2026? And are we seeing a significant labor market slowdown? Or is this more of a rebalancing, this curious balance that Fed Chair Powell has been talking about, where labor supply has been hit significantly to the downside because of immigration restrictions, and labor demand is only marginally weaker than what we've seen to the labor supply? Those are going to be the key questions for 2026.
Greg, this was great. Appreciate it, sir. Thank you. Greg Dacko of EY. Greg's point at the end there is so important. When we get the so-called dot plot in the summary of economic projections, and we talk about it on this program on Fed Decision Day, we always focus on a median. What Greg's talking about here is the focus on the dispersion, focus on the spread, the distance between the hawks and the doves, and just how wide and messy things are getting going into 26.
And how difficult it's going to be for that new Fed chair once Jay Powell does step aside, whether it's Waller, Bowman, Rick Reeder, who depends it's going to be, how difficult it's going to be for that individual to get them on board for potentially where they see this economy going.
Record highs in the stock market, up again this morning by 0.2% on the S&P 500. For an update of news worldwide, with your Bloomberg brief, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. President Trump defended Israel's new strikes against Hamas, saying he thinks the peace deal he brokered will hold. Speaking aboard Air Force One on his way to South Korea, Trump said the Israelis had the right to hit back after attacks on soldiers in Gaza. Hamas denies any involvement. Meanwhile, Hurricane Melissa made landfall in Cuba after becoming the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands without power in Jamaica and forced hospitals to evacuate. Melissa is forecast to remain a powerful hurricane as it moves toward the Bahamas, with heavy winds and rains expected to pick up across Bermuda late in the week. And President Trump conceded he can't run for president again. Trump said, quote, "It's pretty clear the Constitution doesn't allow him to seek a third term." Trump has frequently floated the idea of another run, including showing off Trump 2028 hats, despite the constitutional limit. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour, in about 30 minutes from now. Up next on the program, confidence in AI.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. It's now generating tokens and now generating intelligence that's worth paying for.
That was Jensen Huang of NVIDIA. Out of everybody we talked to and interviewed, he's the last guy I expect to tell me whether we're in an AI bubble or not.
Exactly. Because why would he? He is, if there is a so-called bubble, he is part of it. He is actually the ringleader of this bubble.
That stock is up by 3.6% this morning. Up next, Pierre Faragut of New Street Research joins us to break down this move this morning. From New York City, you're watching Bloomberg TV.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
In case you missed it, on Bloomberg Brief.
The French economy is resilient. As a euro area economy, we had good surprises and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds-treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/finds-treatment.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Later on this afternoon at about 1:30 p.m. Eastern Time, a Federal Reserve decision special coming right up. Full coverage. It looks a little something like this with Bob Michael of JP Morgan, the former Fed Vice Chair Richard Clarida, Kathy Jones of Charles Schwab, Torsten Slock of Apollo, and a whole lot more. TK will make it into the studio, I'm told. So we'll be covering the Federal Reserve decision a little bit later. 1:30 Eastern, coverage begins. 2 p.m. the decision. 30 minutes later, we'll take that news conference with Chairman Powell in full. Into that, equity futures, adding some weight to the recent rally. Equity futures this morning higher by 0.2% on the S&P, on the Nasdaq 100 up by 0.3. All-time highs in the equity market and a rally for NVIDIA. Under surveillance this morning, confidence in AI.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So here's the latest this morning. NVIDIA extending gains after President Trump said he will discuss the chip maker's Blackwell AI processors with the Chinese leader. Pierre Ferragu of New Street Research keeping a buy rating on the stock with a price target of $235. Pierre, that quote from the president overnight, and welcome to the program. Let me read it out for you. It's very basic, very simple. It's worth a few $100 billion apparently to this market cap. We'll be speaking about Blackwells. Pierre, how important is that we're opening the door to NVIDIA being able to sell the high-end chips into China?
Well, John, think about it in absolute terms. NVIDIA historically had like 20-25% of their revenues coming from China. So we are talking like a $50 billion annual revenue opportunity. So yes, as you say, easily worth a few $100 billion. Now, if you take a step back, the almost like the surprising perspective is that given the scale of the success of NVIDIA, it's actually a relatively small moving part. When you compare that to what Jensen said yesterday in Washington, he said he was expecting like a $500 billion of cumulated revenue for the Blackwell and Rubin product cycles this year and next year. We are talking here numbers that are like 50% above what consensus expectations are today. So it's a very, very nice comments from the president on the duper super chips is actually a small moving part this morning compared to what Jensen said yesterday. Yesterday, Jensen said the market is still accelerating, which is very, very impressive.
He also said that China has made it clear they don't want NVIDIA there right now, even though the president has allowed some licensing for some chips. If China can get their hands on Blackwell, will they then want NVIDIA in their marketplace?
Yes, of course. What you see in the market is that, and you know, we could talk about China this morning, we could talk about Microsoft, about OpenAI, about Amazon. Nobody wants NVIDIA. Everybody is worried about like the market power they have, but nobody can afford not to use NVIDIA if they can, because today being able to use NVIDIA chips gives you a decisive advantage in terms of time to market. You can get stuff going immediately at the highest possible performance. But everybody in the long term is working on alternatives to NVIDIA to keep NVIDIA's market power in check. And so you see OpenAI signing giant deals with AMD. You see everybody developing their own ASICs. And China is no different. They're developing their alternatives. But if tomorrow they can get a few Blackwells, they would take them immediately.
NVIDIA is clearly looking for an opportunity here, Pierre, and an opportunity that the president is offering them. But I just wonder to what extent China has been successful without access to the highest chips, the high-end chips. Pierre, it feels like DeepSeek was a moment that happened, we wrestled with it and just moved on. But from the people we speak to, Pierre, it looks like China's been hyper-focused on efficiency and the US is going in a different direction. Pierre, if you look at the strategies of either the US and China at the moment, who's got the lead? Even before discussing access to the highest-end NVIDIA chips, who's got the lead at the moment?
Well, the lead, it's a great question. The lead is definitely at the frontier. It's being first to market with the most advanced models. And on that front, there is absolutely no question the US is in a very strong leadership position. Then now, if you look at, so that's like the technological lead. So the technological lead is very clearly in the US. Now you have the industrial lead, you have like the efficiency lead. Players like DeepSeek are very good at making models more efficient, at distilling models, and so they play a very significant role. But when it comes to getting access to the largest clusters and running the most advanced models, all that is happening in the US for sure.
So clearly we're getting a move in the pre-market off the back of this story. Stock is up by close to 4%. Pierre, I need to talk about the earnings with you as well. So tech stories of today is going to be Microsoft, Meta and Alphabet. Tomorrow, Apple and Amazon. Pierre, looking across those names, any vulnerabilities for you and the team?
Well, I think the street is still digesting what Jensen said yesterday in terms of like the 2026 outlook in terms of AI infrastructure spending. So really what we're going to look at is all comments from hyperscalers. Do we see like a confirmation of Jensen's forecast in the way they talk about their capex and their spending plans? And then in terms of vulnerabilities, no, very difficult to see that. We're definitely like in a bull week where everything seems to be like accelerating. And even when you look at Apple, who is not like the best positioned player in the AI race, they have a lot of tailwind at the moment. The iPhone cycle is actually playing relatively well for them, which has generated some very positive vibes and should turn into a strong earnings report.
Yeah, I remember waiting for Apple to cross that $1 trillion line in the sand. Can we just reflect on your career, Pierre? $5 trillion market caps. Pierre, how do you sort of internalize that number? Just how big that is?
Yeah, it's like if you had asked me at the time, it's like unbelievable. And the thing is that it's part of a broader, of course, of a broader phenomenon. And like the number of multi-trillion-dollar market caps that we have now in technology, it's mind-blowing of growth and of like also concentration of economic value in tech names. It's like really mind-blowing. And specifically on Apple, Apple like is a very low growth, very like legacy type of franchise now in the AI world. It's difficult for them to find the right grip on AI, but it remains a very, very high multiple expensive stock because like the market is still valuing the quality of the franchise. So adding anything one on top of the other, yes, you end up like at almost $5 trillion of market cap.
Just amazing. Amazing. Pierre, thank you, sir. It's good to see you, as always. Pierre Ferragut there of New Street Research. $5 trillion. The UK market feels almost provincial. That's one single name, $5 trillion. The whole UK market, the FTSE 100, to be very specific here, is 2.5 trillion sterling.
And yet individuals keep coming on the show, like Pierre, almost everyone but one person has a buy rating on this stock, and they expect NVIDIA to continue growing. Yesterday, not just Jensen Huang was asked about an AI bubble, the President of the United States was also asked about, and he said, AI, what problem is that? He's like, it's the internet, everyone wants their hands on it, no bubble here.
If you're selling the US, what are you buying? Where's the pool of liquidity that can match that? A $5 trillion name at a 2.5 trillion sterling market. The FTSE 100 versus NVIDIA. It's just bonkers when you think about the people that come on this program and say, you know, I'm going to sell the US and I'm going to buy, say, Europe and the UK. Really? Like, how does that work? Coming up on the program, Gargi Chowdhury of BlackRock, Henrietta Trays of Veda Partners, Tony Wong of T. Rowe Price, and Blake Gwynn of RBC from New York City. You're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it on the opening trade.
Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all
Avoid
costs.
dancing.
Don't miss the opening trade live every weekday.
The Mag 7 can continue to deliver. That continues to drive a lot of upside.
The large cap stocks appear to be the most resilient.
It's really going to be driven by earnings. We think it ends up being potentially a bubble in earnings down the road.
It's really guidance that matters as you wind up working your way through.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P adding some weight to a record-breaking rally. 4-day winning streak on the S&P, up another 0.2% on the S&P 500. On the NASDAQ, up by 0.3. In the bond market, 2s, 10s, and 30s at the front end, almost exactly where we were when the Fed last met. 350 on 2s, 4% on 10s. 398 this morning, yields are higher by a single basis point on a 10-year maturity. The day ahead is absolutely stacked. As we said in the last hour, the week begins right now. The Federal Reserve meeting later on this afternoon, Chairman Powell presser as well, after the market earnings from Meta, Google, Microsoft, and then tomorrow, the president sitting down with China's Xi Jinping on the table. So rare earths, fentanyl, okay, soybeans, got that, well articulated, super well communicated over the last week. What did we miss? This apparently, President Trump on Air Force One will be speaking about Blackwells.
The super duper chips is how the president put it. And Julian Emanuel in the last hour talked about how this is the calm before the Mag 7 storm. Who needs the Mag 7 earnings? And the president is adding more juice to this market, talking about the fact that they're going to be discussing. Doesn't mean it's going to happen, but he's putting on the table the U.S.'s biggest chip that China wants. And that is literally the Blackwell AI processing chip that the president himself said, Jensen Huang came into my office 3 days ago to show me it. Guess where Jensen Huang is going to be traveling to? South Korea. He's going to be meeting the president, potentially the last executive to sit down and speak to the president before he goes and meets Xi Jinping.
Stock market likes it, and the pre-market stock is up by 3%. To the hawks, the China hawks in Washington, D.C., like what they're hearing this morning.
Absolutely not. You know, you remember in 2016, Jonathan, you articulated this very well in the last hour, the fact that the president wanted to take on China. This was something that was critical for his base, and the China hawks loved it. The China hawks are not going to like the idea that some of the highest advanced technology the United States has might be going into the Beijing market. But there's been this huge debate within the Trump administration. Those that are traditional China hawks and those that have been heavily influenced by the tech community. that want China and the rest of the world addicted to U.S. tech. And at the moment, it seems like that is the direction of travel that this administration is taking.
Fueling another leg higher in equities more broadly. Equity futures this morning positive after a 4-day winning run and another all-time high at the close in yesterday's session. Coming up this hour, we'll catch up with Gargi Chowdhury of BlackRock as AI makes more waves on Wall Street. Henrietta Trays of Vader Partners with President Trump predicting a good trade deal with China, and Blake Gwynn of RBC Capital Markets as investors eye today's Fed decision. We begin this hour with stocks hitting fresh records ahead of a Mag 7 earnings test. Gargi Chowdhury of BlackRock writing investors are looking for proof that cloud growth is re-accelerating and that massive AI capex is converting into real paying workloads. Gargi joins us now for more. Gargi, good morning.
Hi, good morning.
It's good to see you. So out of the three then this week, Fed decision, trade talks, earnings, does earnings take number one spot?
Well, the volatility markets seem to think so, and if you look at what's priced in terms of moves per day, it certainly seems like the earnings are what's going to be a bigger driver. But certainly with the Fed, I think we should pay particular attention to what happens with the balance sheet. I do think that the 25 basis point rate cut is very well advertised and very well priced, but it's really about if they do something with the balance sheet runoff, and if that gets announced today. Obviously, we heard from Chair Powell earlier in the month, which was about in the coming months, but the market is expecting for some sort of announcement today. So that would be important. And then, of course, for the rest of the week, it's earnings, and then finally the New York Marathon.
The New York Marathon for you. Do you want to share it up front? How many marathons have you run?
Many. The number is many.
We're in the 20s now?
We're in the 20s.
Okay. And what charity are you supporting?
It's called Shoe for Africa. It's a charity for children in Kenya, and it's building a hospital.
Very cool. So if anyone wants to donate, of course, reach out directly.
She's being modest. It's 26. That is insane.
26 is absolutely unreal. We're going to talk about that later. Okay. Let's focus on this market if we can. QT, what are the implications of backing off from QT?
Absolutely. So a couple of things. First, recognizing if that does happen, where do the reinvestments go? I think that's the main thing. Does it get reinvested back into bills only, or is it along all tenors of the curve? And obviously, if it is along all tenors of the curve, that's more demand coming in for treasury markets. And I do think if we look at what the long end, the very long end, 30 years or so have done over the past month, I think there is a little bit of expectation of that coming back into the market. So if we don't get anything at all, maybe at least in the very long end of the curve, we could get a little bit more of that steepening that we began to see earlier this year, and then it sort of stopped for the moment. But at the same time, we've talked about this for a while. This is a really good opportunity in the markets to clip coupon, especially if you're in that belly, maybe that 3 to 10 year part of the market. That still remains. We're still in a path for the Fed to cut now and again in December. So very clearly, that's going to be another boost to equity as well as income markets.
The Fed cutting in December, are they basically accepting that 3% as the new 2%?
I don't know that it's 3% per se. If you think about, especially with this last CPI print, what we saw was that very sharp and clear deceleration in OER, and where we saw the inflation was in much more of the temporary areas such as tariff-related goods, apparel, etc. If we continue to see that deceleration in OER, in shelter more broadly, I think you can reach a world by the end of 2026 when you're seeing sort of that 2.5% core CPI. And I think that is something that the Fed will accept and be able to, at least the Fed, the future Fed probably will be able to live with in a world where some of the inflation that is coming through is probably more transitory in nature. I think it's all about shelter and it's all about OER, and we've seen some very good numbers on that front.
We also have the trade talks happening. The possible lowering rate of the U.S. tariff level on China, is that helpful for the Federal Reserve?
I think it has to be. Again, when we talk about what is the transitory temporary drivers of inflation, some of those, as we have seen in the core goods data over the last 3 months, are very much related to those tariff inputs. So to the extent we now can live in a world where that tariff rate is severely higher than last year, but not as high as we had expected. It's not in the 20s, maybe in the mid-teens, and it's passing through slowly. I think that's another important point. How much is the consumer consumer bearing. And so far, we haven't seen as much as perhaps feared in Q1 and Q2. All of those, I think that rate coming lower, maybe settling in the mid-teens, as well as the transmission mechanism being lower than originally feared, are good for a Fed that wants to keep interest rates more moderate.
So that's the framework for thinking about this market. Let's talk about this market, how to express risk. So yesterday was an odd session. 398 decliners on the S&P 500, only 104 stocks advanced. This was very top-heavy, led by tech. Don't ask me why it doesn't add up to 500 on the S&P 500. Complain to someone else. This came from Deutsche Bank and Jim Reed, and he put up these numbers and said there were only 104 advances on the S&P, the fewest in over 2 weeks, and actually the fewest on an up day as far back as my data on advances and decliners goes, back to 1990. What's the takeaway from the last 24 hours?
I think the takeaway, maybe not just for the last 24 hours, I would say the last year, is that earnings growth is driving S&P performance, and you want to be where the earnings growth is. And where is that earnings growth? It is in those hyperscaler names. It is in AI, and frankly, it is broadening out a little bit to broad, large cap. And I think that's where you want to be. Could we get a few negative surprises over the course of the next 3 days? And could that maybe bring a little bit of volatility, some down days in the market? Absolutely. But is there a structural story here, especially around AI monetization? We think so. We've been talking about this from the start of the year with respect to our positive view around AI. And we think as long as we see that demand, as well as the monetization, as well as the user actually being able to benefit from AI, we might see that in ad revenues and such. I think this continues. I think it might broaden out to more of the larger cap names instead of just the 4 or 5 hyperscalers. I think that's something we're looking forward to and telling investors to focus on. But the point about yesterday and a very small percentage of the index being up is not a new story. It is a feature of this market, not a bug. That is where the earnings growth is.
So let's look at the BlackRock menu. You're familiar with it more than I am. Is this just a vanilla S&P 500 market cap weighted index story, express risk that way, or is there a more optimal way to express risk in this equity market?
It can be, depending on who the investor is. And again, some people just want, you're stepping into the market for the first time and you want something easy, and IVV will do the job for you. What we are telling investors, though, this is the time to focus on things like BAI, which is our actively managed AI ETF, which again gives you some of those very specific earnings story in the AI space. We think you should have that satellite allocation. The other thing that we're talking about is if you're thinking about the broadening out theme with respect to large caps, again, that is something you can do again with a BlackRock large cap value or a BlackRock large cap, it's called BLCR fund, which is sort of the rest of the market with a focus as well on a large cap tech. And then I think for many investors out there right now, especially, you're getting that 6.5, 7% income. You no longer have to wait till you're 85 years old for fixed income. I own fixed income. I hope you guys do. Again, focusing on something like Bink, earning that 6% coupon, it's a really great opportunity, especially with the Fed poised to cut more.
Gargi, this was great. Good luck on Sunday.
Thank you.
It's good to have you here ahead of all of that. Gargi Chaudhry there of BlackRock with a much busier week than you and I. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Caterpillar shares are rising 4.5% in the pre-market after the company reported better than expected top and bottom line beats in the third quarter. The heavy equipment maker's energy and transportation business provided a boost amid rising demand for equipment needed to fuel data centers for AI. Meanwhile, China has resumed purchases of U.S. soybeans. The country reportedly bought at least 2 cargoes, its first known purchases of the season. The news comes after China and the U.S. reached a broad framework agreement over the weekend, paving the way for President Trump and China's Xi Jinping to finalize a trade deal when they meet tomorrow. And Tesla is prepared to name a new CEO if Elon Musk steps down over a disagreement about his pay package. The chair of the company's board told Bloomberg Tesla would look internally for a new CEO. The board is set to vote on Musk's $1 trillion pay package next week. That's your Bloomberg Brief. John?
Yahara, thank you. Just learning about the marathon diet as we go. It's amazing. How many gels are we consuming over 3 hours? 6. And how many calories are in each gel?
100 to 160, depending on if they're caffeinated or not.
Okay, there we go. Thank you. I'm learning something all the time.
I'm ordering them right now.
You're ordering some gels? All right. Up next on the program, easing tensions with China.
Probably you know that the President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
That conversation up next with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning.
Policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news,
geopolitical news,
economic news,
up-to-the-minute global news, whenever, and wherever it happens.
In Washington,
Buenos Aires, Argentina, Sintra, Portugal,
Ottawa, Canada,
Bangkok,
Tehran,
Jackson Hole, Wyoming,
Windsor Castle, England,
the Circuit de la Sarthe in Le Mans,
and this
is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Big day coming up. Lots of earnings after the closing bell. Meta, Google, Microsoft, the Federal Reserve and Chairman Powell later on this afternoon. Look out for that. 2 p.m. decision, 2:30 news conference. The stock in the pre-market, we want to focus on NVIDIA, knocking the door for a look at a $5 trillion market cap. The stock is up by 3.7%. The president opening the door to selling high-end chips into China.
Whether or not the door remains open and those Blackwell chips make their way into China, that remains to be seen. But the president setting the table by putting that chip literally on the table, saying we're going to be discussing it, the super-duper chip. This was something no one was tracking this summer because his own Commerce Secretary said there's no way we're going to give them access to our most advanced chips, not our most or second or third, maybe our 4th most advanced. That's what they're going to get access to. That is not the case today.
That move in the pre-market adding to this move at the index level. On the S&P 500, higher by 0.25%. On the Nasdaq, up by 0.4. Under surveillance this morning, easing tensions with China.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon. Probably you know that the President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
So here's the latest this morning. President Donald Trump looking to trim China's fentanyl-related tariffs as Beijing buys its first U.S. soybeans of the season. The president said to meet face-to-face with Chinese leader Xi Jinping tomorrow. Tyler Kendall joins us now from South Korea. And Tyler, it goes beyond soybeans and beyond fentanyl. The focus this morning for this market is what's next for NVIDIA.
Right, exactly, John. It really feels like there is a lot more on the table here because coming out of the trade talks in Malaysia over the weekend, our general understanding was the framework that was going to be in front of the two leaders to finalize really had to do with a pullback in the recent escalations. But now you have President Trump suggesting that he's going to bring up NVIDIA's Blackwell chips with China in what would be a major win for the company as it's been trying to regain Chinese market access since 2022. I will point out that we heard from President Trump in recent months saying that he would consider allowing the company to sell a downgraded version of its Blackwell processor. So we'll see how this ultimately shakes out if a deal is made. But I have to quickly mention that this really reminded me of a letter that then Senator Marco Rubio sent to then Commerce Secretary Gina Raimondo in September of last year, where he called for the U.S. to presume a posture of what he called presumed deniability for export licenses that would send critical tech to China. He wanted the U.S. to not allow any sorts of these types of technology to ultimately go to Beijing. So while I may be in Korea, I'll give you the Washington angle here, which is that defense hawks might be waking up to a tricky position if they previously advocated for, John, any sort of national security concerns against such a sale like this.
Well, Tyler, are there any defense hawks when it comes to China hawks left in the Trump administration?
Well, we're going to have to see at this point, right? Because Marco Rubio was really considered to be one of the staunchest when it came to his position on China. He really took a bipartisan role when he was in the Senate, leading a lot of bipartisan legislation when it came to bolstering our own domestic chip supply chain. I will say I have my eye on members of Congress, including those that lead the China Select Committee, such as Congressman John Molinar. He just came out with a statement in the last week saying that he would be urging the Trump administration to have some caution when it comes to its dealings with China, particularly around advanced semiconductors. Of course, Congress could introduce some sort of legislation here if we did want to see a pullback, but it's hard to see how that would really get through, considering that, of course, Republicans hold both chambers. Even if there's some criticism here, it's hard to see that they would go against President Trump's policies.
Tyler, thank you. Tyler Kendall in South Korea, just ahead of that meeting between Xi Jinping and the President of the United States, Donald Trump. With us for more, Henrietta Trace of Vader Partners. Henrietta, we should highlight no decision has been made as far as we know on this issue, but certainly it's a conversation, so let's have it. Henrietta, how much influence does the NVIDIA boss have over American policy?
Plainly, quite a lot. I'm actually just recalling who was in the room with the president when he was being feted at Windsor Castle. It wasn't the soybean farmers or the ranchers that you usually would equate with the Republican Party. It was Meta. It was OpenAI. It was all of Silicon Valley. And this deal that they're telegraphing right now from Treasury Secretary Bessent and President Trump suggests that we might get 2 shipments of soy, which is less than 1% of what we sold to China in 2023, to actually exchange for tremendous amounts of sales of this incredible Blackwell chip from NVIDIA. So it's a real migration away from the traditional Republican base and into the Silicon Valley base for at least the president. Definitely not the members of Congress in the House and the Senate, though.
Henry, that's where I wanted to pick up with you. Tyler really set the stage. How much friction does this potentially mean between the Trump administration and traditional Republican hawks on China in Congress?
It's almost unfathomable. You have Marco Rubio, as you correctly point out, is a massive China hawk who has been for his entire time on Capitol Hill in the United States Senate as a presidential candidate himself, and now as the in the Trump cabinet, being clearly usurped or superseded by J.D. Vance, who is widely viewed in conversations I have with Republican staff as the next in line to the Trump lineage when it comes to who would be the Republican candidate in 2028. It's definitely Vance by a country mile. I think almost 50 points in data and polling. So certainly a major push away from the China hawk stance and into whatever Silicon Valley wants is where the administration is willing to go, even if it's at the expense of the cattle ranchers, for example, or the soybean farmers, which you see now telegraphed live and in prime time in Twitter wars and social media posts and things like that.
Can the president and this administration say they're de-risking from China, but even having the conversation about Blackwell with China?
You know, it's interesting. We really want to see the details here because are these licenses that they're going to threaten again in a couple of months? Do we even mean it when we put software on the table in the first place just a couple of weeks ago? How far is this administration really willing to go in verbiage versus in hard and fast reality of what's going to get sold and started to be exported? Those licenses, I think, are going to be a constant push and pull. We shouldn't expect China to ink any kind of comprehensive deal right now. They're going to want to drag this into 2026, 2027. That is their MO. That is certainly what we saw in the first Trump term and even in Biden's intervening term. So I wouldn't expect a finalized deal, which means risk around this is all sort of going to continue along with us. But certainly moves on NVIDIA speaks to what the Chinese are prioritizing and what Trump is willing to give away.
Even having this dialogue between Washington and Beijing on Blackwell, does it show that China actually didn't overplay their hand when it comes to the rare earths?
No, definitely not. And not that I can tell. I mean, they still have a pretty massive war chest that they can either use with us or not on soy. And that is a huge pressure point for the president of the United States, in theory, certainly from House and Senate Republican lawmakers. But when China threatens rare earths and they send envoys out to the EU, which they did earlier this week, and then speaks to the president and gets him to the negotiating table to the point where he's even taking off fentanyl tariffs for a deal that they reached over the summer. Now it's permissible to take those fentanyl tariffs off, and we don't know what the deals are on rare earths. So I don't think they overplayed their hand at all. I think they played all the hands that they had, and they're in a very winning position right now.
Anne-Marie, I'm pleased you brought this up because I think it's so important to what's developing in Asia this morning and possibly tomorrow as well. It risks being a strategic misstep because it risks bringing the Europeans closer to the United States on a policy of maybe cutting China off and de-risking. That was the ultimate risk here. But there's little evidence that it's influenced the negotiations in an adverse way for the Chinese, at least, based on the developments we've seen in the last 24 hours. Now, things can change in the next 24 hours. I don't know what's going to happen with these high-end chips, but the fact they're even up for discussion at this meeting, I think speaks to the fact that China's got some leverage here.
Absolutely. The Blackwells were never supposed to be on the table. At least that was the signaling from the administration from months. But there has been this debate behind closed doors. And Jensen Huang, obviously one of those individuals that's been frequently conversing with the president. There's been this debate on, do we want to be traditional hawks or do we want to get China addicted to our technology? If you want to get them addicted to our technology and not make their own, I guess maybe they could steal it, then sell them the high-end chips.
Henrietta, does it undermine the national security argument if the national security assessment changes every 6 months?
Yeah, and you know, honestly, Anne-Marie just makes the best point. The Section 301 investigation that launched this entire war in 2018 in the first place was over intellectual property theft, forced tech transfer, exactly the things that had nothing to do with the Phase 1 trade deal, which was exclusively about soybeans, that even that piece wasn't acknowledged, and we never started a Phase 2 negotiation. So to think that now here we are dealing with the potential for forced tech transfer, intellectual property theft, state subsidization, continued non-market factors, restricting rare earths, and holding the U.S. hostage with those things in major industries from defense to autos. It really speaks to the advantage that China has going into this and the way they've prepared for Trump's second term.
Henrietta, thank you. Appreciate it. Henrietta Trace there of Veda Partners with the latest down in Washington, D.C. It's one perspective. We'll see what happens tomorrow.
I mean, I remember in 2016 when the president famously talked about the fact that China was conducting the greatest theft in the history of the world when it comes to intellectual property with the United States. This would be a big change of direction, change of course for this administration, and it will deeply impact the Republican Party and how they decide how they want to move towards the future in conducting policy with China.
For the market at least, financial markets like what they hear. Equity futures up by 0.3, adding to yesterday's record high. Coming up on the program, Tony Wong of T. Rowe Price. As President Trump weighs Blackwell chip talks with China, plus Yohara has your morning movers. Shares of Bloom Energy soaring as third quarter earnings top estimates.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall, covering President Trump in Tokyo, and this is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Four-day rally on the S&P 500, heading into some serious event risk. The Federal Reserve later on this afternoon, lots of earnings after the closing bell, and then a meeting between the President of the United States and the Chinese leader Xi Jinping. Equity futures up by 0.3 this morning, on the Nasdaq high by 0.5. In the bond market, fixed income, the Treasury market, really well behaved between the last two Fed meetings back in September and the one that started yesterday. Yields this morning up by a single basis point, 350, basically where we were in the middle of September. 10s around 4%, basically where we were around the middle of September. Yields up a single basis point at 399. If you want a big move, it's been in gold. 3 days of gold trading lower. A 3-day losing streak, which amounted to a loss of more than 4% and a break briefly of 4K. Bouncing back this morning by 1.7%. Gold up by about $67 so far this morning. That's the cross-asset price story so far this morning. Let's get you an update on some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with NVIDIA on the brink of becoming the first $5 trillion company if this level holds at the open. Shares are up 4%, boosted by a flurry of deals announced yesterday at its GTC conference, but also, and more importantly, President Donald Trump planning to use NVIDIA's most sophisticated chips as a card in his meeting with Chinese President Xi Jinping. So one to watch at the open and into tomorrow during that highly consequential meeting. Meanwhile, Bloom Energy shares also soaring in the pre-market, up more than 18% now after another strong quarter. Its fourth in a row of record sales as the company rides the AI power boom, locking in deals with the likes of Oracle and Brookfield Asset Management. That's made it one of the best performing stocks of 2025. Shares are up 380% year to date. And moving on to the online retailer Etsy, shares are now down more than nearly 10%. It has been very volatile this morning. It was up about 6.3% when it reported results and also reported an executive shakeup. It handily beat estimates on the top and bottom lines. But as I mentioned, it also announced its former CEO is stepping down after 8 years, paving the way for its chief growth officer to take the helm. But investors obviously questioning that move. John?
Thank you very much, Yahara. More from Yahara in just a moment. At risk of sounding about 40 years older than I actually am, I never go on Etsy. I don't even know what's on Etsy. Well, I don't even really know what Etsy does.
There's some cool stuff on there. I'm not a huge Etsy user, but my sister is, and she's actually gotten some interesting stuff. You can even get like marble countertops and sinks on Etsy.
People will do stuff like bespoke for you.
Yes.
Like artists and designers.
Very cool.
Things like that. Okay. All right.
But you're on Pinterest.
I eventually got on Pinterest.
So I'm actually shocked that you're not on Etsy.
Mood boards for interior design, things like that. Anyway, different story. Okay. On our radar this morning, Boeing delivering a beat on free cash flow. The company also adding 737 production is not yet at the new FAA-approved rate of 42 jets per month. Elsewhere, President Donald Trump says he'll discuss NVIDIA's Blackwell AI processors with the Chinese leader tomorrow. Investors hoping the chipmaker will gain more access to the company's largest market for its products. And finally, China buying its first cargoes of U.S. soybeans this season as the two nations work to hammer out a trade deal. President Trump and the Chinese leader meeting tomorrow on the sidelines of the APEC summit in South Korea.
So last year, China bought $12 billion worth of U.S. soybeans. This year, it's been zero. So for the administration, especially when you're talking about farmers in the United States, that right now the U.S. government is shut. We haven't even talked about it 90 minutes into the show. For 29 days, they can't get a bailout right now to these farmers. So this is music to the ears of the administration. But the issue at hand is, and you just did these stories back to back, Jonathan, what do we have? We're giving away our highest technology, potentially with the president saying they will discuss Blackwell, the super duper chip, for what? Soybean purchases? That seems like an imbalance and an unfair arrangement.
What exactly is off the table tomorrow? Is Taiwan on the table tomorrow? That's got to be a question that we need to ask the administration.
The president has insinuated that nothing is changing with Taiwan, and Secretary Rubio a few days ago made it very clear to reporters when he was traveling to meet the president in Asia that anyone who thinks that there's going to be some sort of move on Taiwan in exchange for trade is completely wrong. That is not on the table and under for discussion right now.
NVIDIA up in a pre-market, giving a lift to this equity market more broadly on the S&P 500 higher by 0.3%. Let's stick with the US and China. Tech stocks pushing equities higher as President Trump opens the door to Blackwell chip discussions with China's Xi Jinping. The news comes as Mac 7 earnings kick off with Meta, Microsoft and Alphabet all reporting after the closing bell. Tony Wong of T. Rowe Price joins us now for more. Tony, welcome to the program. It's quite a statement from the President of the United States. How much of a game changer would that be if NVIDIA had that kind of access to sell into China?
Yeah, well, I think that's important from a scale and R&D manufacturing standpoint. To have China as a big growth market, I mean, they are huge consumers of chips. And I think when you take a step back, NVIDIA is becoming the backbone for, I think, America's AI century. And so I think it's exciting to see the announcement from GTC, very eventful, what's going on this week. And I think at the end of the day, you want, all countries to be developing on the U.S. tech stack. And at the end of the day, it is a full stack. It's not just a chip. And so whenever there's an innovation that goes on, in DeepSeek, there's a recent one, DeepSeek OCR. It's on NVIDIA, and it creates stickiness because you essentially have another kernel in that CUDA library.
If the administration, Tony, is moving towards this idea of let's get China addicted to our technology versus the China hawks who say let's make sure China gets zero access to our technology, who else can benefit from this?
Yeah, well, I think that at the end of the day, you're going to see a lot of China homegrown solutions, and they're not going to be up to par over the next few years. But over the long term, I think you're going to see more of a bifurcation of the computing ecosystems. And I think maybe the U.S. pulls ahead in the near term, but over the long term, I'm not sure if that's the best thing for kind of global relations and collaboration.
How much money do you think NVIDIA could be making alone in China if Blackwell is going to be allowed to have that sort of access?
Well, I think that overall China is about 25 to 30% of GDP, and when you think about that in rough numbers, historically China has been in that kind of area code, and so I think it's definitely a massive market and important for U.S. technology companies to be able to sell into that market and create this flywheel of scale R&D and revenue for innovation.
We've got to wait a month to get earnings from NVIDIA. Don't have to wait too long to get earnings from the others. Tony, let's talk about it. Microsoft, Meta, Alphabet after the close. Meta keeps coming up in our conversations, Tony, as maybe a risk for this market. How are you thinking about Meta later, and what are the risks around that story?
Well, I think Meta is probably uniquely positioned in that they have a ton of leverage in terms of attention and all their digital properties and being able to move fast and integrate AI. And if you look at advertising and return on advertising, that is like actually a really key area that has seen a lot of ROI. So I think that at the same time, they're spending a lot. So we're seeing a lot of depreciation and OpEx come through the P&L. And so I think it kind of acts like additional amplifier. So if they beat, the stock can move a lot more. And if they miss expectations, there could be a lot more downside because of, then people are saying like, oh, like you're investing a lot, but you're not getting the return. So I think it just adds more leverage to whatever earnings is going to come.
Tony, just to extend that thought, how reflexive is this moment? If we do get that kind of miss and they start to be punished for spend, do they pull back even more on spend? Is that what we're getting at here?
I think that I think AI is such a big opportunity and the potential is so vast. In addition, if you have the scale and the customer base, like the investment can be amortized over a lot of years. And so there probably is just more risk to underinvesting. And I don't think in this kind of market where there is like that huge potential that you get stronger by shrinking necessarily in your investments. So my sense is that, even if this quarter is a blip, like that the long term still is intact for the returns on AI.
Tony, though, do you think the market is potentially, if there is a blip, something, and Jonathan talked about this earlier in the week, something like their fourth quarter for 2022?
Yeah, well, I think that what I'm looking for is, agentic AI, robotics, like all these new drivers. I mean, you saw Sora announce, release their video product, 6G with Nokia, GTC. And so, I think that what matters most is that the token usage for AI continues to go up, and then the cost of delivering the tokens goes down with better algorithms, with a new generation of computing platforms, and that results in I think more sustainable investment. And so to me, it's like watching at the end demand. I think there's a lot of PowerPoints and estimates and what point in time, what is 2027, 2028 going to look like? But I think what matters is like the momentum of the progress and that expectations continue to get revised up.
Tony, if I ask this question, I just know people at home are going to scream bubble, bubble. These are only the questions that get asked in a bubble. But how easy is the next trillion of market cap in this market compared to the first trillion? Tony, I just remember sitting in front of a camera waiting for that first headline of the first $1 trillion company in the United States of America. And we've just gone from 1 to 5. And it feels like we've done that, Tony, in a heartbeat, in a blink of an eye.
Yeah, it's a great question. I think there might be a bubble in how many people are talking about a bubble, actually. And so it's an interesting framing right now. And I get this asked a lot by clients and internally. In terms of market cap, I started covering NVIDIA for our firm 8 years ago when NVIDIA was about a $150 billion, $200 billion market cap. And at that time, everyone thought that was like really big. How can NVIDIA grow, beyond a pretty sizable market cap? And I think that you've just seen that the market, the TAM continues to expand. And, in a way, it grows even more with better product introduction. And so I think that, the market continues to underestimate how big AI can be. And so I think that's what's exciting. I think that, the last $1 trillion of market cap actually came a lot faster than the first trillion, right? So I think part of it is, the compounding nature of just the innovation that's been going on.
Tony, I think there's something, though, in the worries that some people have. When you say things like, right now, the biggest risk is underinvesting, not overinvesting, and we've heard the same sentiment from Alphabet last summer. The CEO said almost precisely exactly the same thing on the earnings call. Tony, that feels like a commitment to a misallocation of resources, to overcapacity. Is that not a fair assessment of things?
Yeah, well, I think that a lot of people compare it with like the fiber build out, right, in 2000. I think there's a few differences. Like one, the utilization on fiber was roughly 20%, throughout that period of build. And right now, the utilization, I mean, we're sold out of cloud capacity. And so I think one is that the apps are real, they're here. there's a lot of, I think, high utilization, and then also like the cost of compute here is actually increasing. So it's an inflating cost curve. So it actually rationalizes supply in a pretty reasonable way, but doesn't mean that we're not going to have an oversupply, that it's not cyclical. But I do think that it is in a way that you're seeing like more unlocking of new demands. And when you look at the vastness of the demand drivers, I mean, they can be really pretty impressive. I mean, on Instagram the other day, there's a robotics company that is going to try to sell me a humanoid robot.
I saw the same thing.
I mean, that's a brand new driver, right? That we weren't talking about a year ago.
Tony, I'm not a market leader with those things. I'll let someone else do that first. Tony Wong of T. Rowe Price. Tony, thank you. Have you seen that humanoid?
Humanoid?
On social media?
No.
Okay, check it out. Creepy. I understand the commitment to over-investing because as far as they're concerned, this is existential risk. And the risk for them of missing out is greater than the risk of ending up with a massive misallocation of resources. But given the commitment to that, that's why people are a little bit nervous on the margin about how this story is going to play out.
And that's why you have reporters on Air Force One even asking the president if he's concerned about AI bubble, and he says no. Everyone is just trying to get their hands on it. He did point, though, one of the issues it's going to have is the electricity needed to run all of these data centers that the AI Caps X story is bringing on.
Nasdaq futures this morning up by 0.5 on the S&P, up by 0.3 with an update on stories worldwide with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump is in South Korea ahead of tomorrow's big meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis, and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chip. Meanwhile, Apple is making major changes to its MacBook Air, iPad Mini, and iPad Air lines. Sources telling us here at Bloomberg it's testing new versions of the products with OLED screens, replacing its current LCD screens. The new models could come as early as next year, but plans are not final and could still change or get postponed. And the World Series is all tied up at 2 games apiece. Following Monday's 18-inning thriller, the Toronto Blue Jays bounced back with a decisive 6-2 win over the Dodgers in Game 4. Vladimir Guerrero Jr. led the charge, blasting a 2-run homer off starting pitcher Shohei Ohtani in the 3rd inning to help even the series. Game 5 is later tonight in Los Angeles. That's your Bloomberg Brief. John?
Very cool, very cool. Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, traders expecting a rate cut.
The Fed, will cut rates, and then we'll see. I know the consensus is you'll get another cut before the end of the year. The Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly.
Up next, Blake Gwynn of RBC Capital Markets from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg. Special coverage of the Federal Reserve decision later on this afternoon, 1:30 Eastern Time. Our coverage begins on Bloomberg TV and on Bloomberg Radio. We'll kick things off with Bob Michael. We'll hear from the former Fed Vice Chair Richard Clowder, Kathy Jones and Charles Schwab on the bond market, Torsten Slock of Apollo with the post-game coverage. Of course, the decision at 2 p.m. Eastern Time, the news conference at 2:30. Equity futures into that, positive by 0.3% on the S&P 500, a 4-day winning run into Wednesday. All-time highs and more record highs on the cards later on this morning at the opening bell. Equity futures up by 0.3 on the Nasdaq, up by close to 0.5. Under surveillance this morning, traders expecting a rate cut.
The Fed, will cut rates, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward.
So here's the latest this morning. Investors pricing in a quarter-point cut from the FOMC at 2 p.m. Eastern Time. Blake Gwynn of RBC Capital Markets writing the following. The economic backdrop continues to provide the FOMC with a window for delivering interest rate cuts. They're going to take it. Blake joins us now for more. Blake, good morning. Good to see you.
Good to see you.
The last time the Fed made a decision, you made a very important point, that the outlook hadn't changed so much, but the risks around the outlook have. What are the risks around the outlook now, and have they developed since the Fed last met?
Exactly the same as they were in September. Part of that is obviously because we're not getting the official sector data, but even if you look at what we have received, so the CPI that they decided to release, the private sector data, and I would say also the Beige Book that they had. The Beige Book really kind of characterized things as largely in the same place as they were in September. So I don't think the Fed's really gotten any information that's really going to change their outlook. I would expect Powell, any comments he's going to make on the macroeconomic outlook, this afternoon are probably going to be largely what he made in September.
So cuts 25. Can he guide to December?
I don't think he does. And I think, if anything, the markets are going to be much more focused around some of the meta conversation about what are they looking at. I mean, if this continues for another 2 months, if this continues in the December meeting, I think what I'm most interested in are any questions around what data are you putting most importance on?
What are the metrics?
Yeah, we know their reaction function to some degree around the official sector data, and we know how they're thinking about, an unemployment rate or about NFP levels, but we don't really know how they're using the data that they do have right now. And I think it'll be interesting to hear how they're kind of thinking about things, what metrics they're looking at, and what's going to make that decision around December.
Well, isn't that a risk in itself, the fact that they don't have data and we have this data desert? How much can they lean on September going forward if you're a data-dependent Fed?
Well, it does make things interesting, and I'm a little bit torn about what the base case into December is if we don't get data. Because on the one hand, you kind of have this do no harm type of idea where I could see the hawks on the committee saying, hey, look, we cut the last 2 meetings. We did get inflation data, which shows the services side of things a little more pressure than we'd like to see. Maybe we should just play it safe and not do anything. But you can also make the case on the other side, which is that those labor market risks are still apparent. ADP is still showing this low hiring, slow firing mode. So I'm not even really sure what the base case is into December if we have no data, no new government data coming out.
Is it possible that dissent could cut both ways at this meeting?
Absolutely. I think that was true last meeting as well. I was actually curious to see if we got 2 dissents at the last meeting, because I think you have some members like, Hammack, Schmid, who have come out and now, not everybody can dissent, so we're just talking about the voting members.
No,
but Schmid could certainly dissent. And we have heard those members kind of take a harder stance on the inflation side and said, unlike Waller and I would say now Powell at this point, not so quick to kind of dismiss some of the inflation pressure we're seeing. They're not ready to write it off as only a tariff problem, something that's going to dissipate as that one-time price shock kind of moves through the system.
I believe that Hammack can dissent next year. And the mix next year maybe gets a little bit more interesting. So let's talk about that. We're going to get a change of leadership in May. How easy is it just to lead the committee and say, you know what, we're going in this direction, given the mix we might see in 26?
It really depends on the personnel. And I think this is, one conversation I've had a lot with clients who've kind of said, well, we're going to get a very dovish Fed chair from Trump, and they're going to come in and, they're going to slash rates 100 basis points
and do what they want.
Fed chair. Yeah, that's just not how things work. And I think we're kind of a product of this last 40 years where we've had very strong Fed chairs who I think have a very good give and take with the rest of the committee. They're respected by the committee. They're taking information from the committee, incorporating that into their own views. And so, yeah, the chair has spoken for the direction of policy. If we get somebody who is very outside of that consensus, who's to say the chair isn't a dissent at every meeting? I mean, it could be very interesting, but what if we have Mirren and the new chair dissenting at every meeting?
For the record, I saw this in the UK more than 10 years ago. I remember when Governor King wanted another round of QE and kept dissenting and voting for it. So we've seen that happen in the UK. Are you suggesting we might see a UK-type scenario in the United States?
It's just not what we're used to in the United States.
We're used to the Greenspans of this world.
Yeah, and I think if we're thinking about how dovish the Fed is next year, it's not just about how dovish the new chair is, it's also about how effective they're going to be at delivering on that dovishness.
Well, who's the most dovish then of this list? Would you say that's Kevin Hassett?
I would say you look at somebody who is closer to the administration, so Hassett or Warsh, but somebody...
He's a hawk.
He was. Let's be very clear. He was. Not anymore. So I think you'd look at somebody who was much closer to the administration is probably arguing for the most cuts, but also in the same, in the same respect, also maybe not being able to sway the rest of the committee.
But it'll be transparent. If it is someone like Kevin Hassett, it'll be transparent. It's not like Arthur Burns and Nixon, where the market didn't really understand how close that relationship is. It'll be very transparent to the market that, okay, this policy could be heavily influenced by Trump himself.
Well, I think it will be clear that that person could be heavily influenced, but then that's where the question of how much control over the rest of the committee they have comes in, because that's where I think somebody like a Waller, who may not be as close to the administration, who may kind of go off on their own, and he's leaning dovish now, but maybe that framework changes, he's going to be much more effective, and I think has that respect. He has a very understandable framework for where that dovishness is coming from, and so may actually deliver more cuts than somebody who you would expect to be a more dovish member.
Blake, this was great. It's good to see you. Blake Wynn there of RBC Capital Markets. That final point is a point shared by Neil Dutta of Renmac. I've heard that point made a few times. An important one. Who can really operate? Who can really maintain that institutional credibility and ultimately deliver what the president wants?
And we've already seen him successful. Member Jay Powell at Jackson Hole. The speech literally could have been written by Governor Christopher Waller.
It sounded like a speech. You've been consistent about this. The longer it goes on, the more likely it is that it's secretary best.
What did we hear from the president yesterday? He then took a straw poll, basically impromptu, from the executives sitting at that business meeting saying, what do you think? It should be Bessent, right? He doesn't want to do it. Come on. Basically trying to get the whole business community to rally behind his Treasury Secretary to move over to the Fed.
Equities this morning, record highs on the S&P. Up next, Alicia Levine of BNY Wealth, Shweta Kajuria of Wolfe Research, David Miracle of Goldman Sachs, plus Jay Goldberg of Seaport from New York City, the third hour of Bloomberg Surveillance. Up next.
Governments make the commitment for net zero. Companies have begun to do the work of looking down their supply chain. I'm not not sure. I think that while there isn't the intense activity around accelerating ESG, it is not a stop. In fact, I wouldn't even say that it's a pause. I think it is a, how do we do it in this current environment? I mean, it's only 3 short years that Thailand hosted APEC, and the thematic from that APEC to subsequent ASEANs to so many of the bilateral engagements that we've had is really how are we going to do this just transition? How are we going to transition our economies from energy systems to data systems in a way that's going to get us to a net neutral world, right? I mean, a net zero world. I don't think that that's going to change. I think that there are adjustments to this. All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going. And if you look at policies, like in Europe, they've got CBAM, right? I mean, the carbon border adjustment. Different governments have put forward commitments to getting to net zero. And I'm not seeing any giant signal around the world that is saying, let's stop doing this, right? I mean, so if that signal is still there, that is actually, I think, one area of predictability for businesses and investors that is still directionally where we're going.
In case you missed it, on Bloomberg Brief.
The French economy is resilient. As a euro economy, we had good surprises, and we had to revise up our growth forecast for this year to 0.7%. It's not brilliant, but it's resilient. Public opinion polls for the euro is at the highest level ever reached. It's not a debate about Europe, it's a debate about how to reduce the fiscal deficit.
Don't miss Bloomberg Brief, live every weekday.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power, live every weekday.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Up in Our Zone, Justin Tuck.
Stay tuned. You won't want to miss it.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Fed would be well served to be very cautious in this environment.
They're in almost an impossible position.
The vacuum of data is starting to cause some concerns.
Data or no data, you still have to make policy.
They have to be pretty careful about how much they signal more cuts going forward.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bout 90 minutes away, live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Adding some weight to the recent rally. All-time highs on the S&P 500, up another 0.25%. On the NASDAQ, up by 0.4. 4 days of gains. We're looking for day 5. In the bond market, 2s, 10s, and 30s. Heading into that Federal Reserve interest rate decision, 10s just short of 4% at 3.99, up 2 basis points today. 2s around 3.50. It's not just the Fed meeting. We get some earnings. We get trillions upon trillions of dollars of market cap reporting later. Meta, Google, Microsoft, and then it's a big one for trade talks. The president and Xi Jinping.
So I thought the trade talks, we were going in pretty much knowing exactly what we were going to get. Over the weekend, you've heard the Treasury Secretary, Ambassador Greer, even the Chinese talk about some of the consensus and the framework they've worked around. Then the president, on his way to South Korea, sprinkles a little bit of this on top of the market, talking about the fact that Blackwell, the U.S.'s most advanced, highest technology chip potentially is going to be on the table for discussion to enter back into China. To enter into China, this would be pretty much taking this relationship to a very different direction than we thought when it comes to de-risking. As Trump said himself, this is the super duper chip.
It's a significant story in this market. In the pre-market, Nvidia higher through most of the session by around 3%, supporting equities higher by 0.25%. Big hour coming up. We'll catch up with Alicia Levine of BNY Wealth. The stocks trade near record highs. David Miracle of Goldman Sachs with a key Fed rate decision on deck. And Jay Goldberg of Seaport as he remains the only Wall Street analyst with a sell rating on Nvidia. We begin this hour with stocks edging higher as investors gear up for a crucial day full of big tech earnings. Alicia Levine of BNY Wealth writes the following: the extent of the next leg of the rally depends on earnings season to deliver this week, particularly in the AI trade. Alicia joins us now for more. Alicia, good morning.
Good morning.
Don't lose the main point. Your words, the direction of travel is up. Is that still true?
That is still true. You could see it's true, right? So it's now taken on a life of its own as the Fed cuts into increased earnings estimates and an economy that is not just stabilizing, but growth estimates are ticking up higher for next year. And you're in this you're in a liquid situation. And so the direction of travel is up. You know, it's an everything rally here.
And China and the US getting out of the way as well.
And China and the US.
Your reaction to that development overnight?
Oh, it's what we expected. I mean, I think there was no way that this particular administration was going to leave Washington without providing something that was more positive than the fears from 3 weeks ago. And then just to point out that on the previous conversation, you know, Jensen Huang has been reminding Wall Street that the NVIDIA numbers, you know, contain no revenues from China. So, I mean, it was a setup for something actually to be announced here. There was no way the administration was going to go and not produce some positive news.
But they already had positive news. China was going to defer the rare earth export controls for a year. They were going to buy substantial, in the Treasury Secretary's words, purchases of soybeans. The fact that the president is saying they're even going to be willing to have this discussion on Blackwell, that is incredibly bullish.
That's very bullish. It's also a bit of a head fake in the sense that we expected something very different. I mean, I think in the end, the question really is, do you want your competitor to have access to your technology and be dependent on it, or create the need which creates then an internal industry for it and developing one's own? And I think that's a real debate. It's a real debate.
And it looks like at this moment, potentially they're leaning into this idea that they want China
to have dependency,
to get hooked on that technology.
Right, because otherwise you create the conditions for doing an internal.
So Tech Mag 7, is it even about earnings or is it more about policy right now?
I think you can't divorce it right now because the policy is the earnings, particularly for some of the companies. Look, right now it's the AI trade. I can't tell you where the market's going here, only because we know it's going up. Whether the year ends, you know, our official target on the S&P for this year is 6,700. So the market has far outpaced that for now, and it's likely to end higher. That's what markets do. They overshoot on the upside, they overshoot on the downside, and you get some sort of average in between. So, you know, for investors, yes, this year ends likely higher. Is this the Santa Claus rally? Maybe. But, you know, we're getting conditions quite well. I think the earnings today and tomorrow really will then tell you the extent of the next leg of the rally here, because it's very important. The earnings have to deliver, and the forward guidance, and you have to have guidance.
Particularly when we don't have any economic data. So there's additional focus on the earnings. But you know what? I've said this a few times, Alicia. I wonder if you agree. The payrolls data hasn't been very useful to this market anyway, because at the start of the year, if I gave you all straight up and just said, these are the job numbers for 2025, you would have been hopelessly bearish on this market.
Hopelessly bearish. And let's just point out that the jobs numbers for the last few years have all been revised downward each year by 1 million jobs. So the data weren't that good to begin with. Right. So, you know, the data were the data, the market traded off of it, but ultimately it was all revised downward. So in some ways, looking at the micro, hearing what companies are saying, what are your cost inputs? Are you passing it on to the consumer? What does the external environment look like? That is almost better than what we've got right now.
So let's talk about that divergence. I know you and the team are discussing it too, between the labour market and between earnings. Is that something that just sticks, that doesn't have to give, or does it have to give? Do we have to reconcile our differences over the next year?
So I think it doesn't have to give in the next year. I think it's a long-term issue. Like, can you have growth without job creation? That's the question. And the answer so far looks like yes. That's a bigger question than are new jobs created quickly or slowly. And so you're in something of a shifting situation where it looks like you are getting more productivity in the economy, corporates are getting more productive, but at the same time, jobs need to be created for this new world that we're going to.
Could you have growth and actually job layoffs because that growth is coming from AI that may end up meaning you don't need as many jobs?
It's a tricky question because, you know, the top 10% of the income scale owns about 60% of the assets, and the assets, as we know, have been moving higher. So I do think that if there are layoffs and no job creation, ultimately the lower end of the consumer will start to overwhelm the cushion that we've had in markets with consumer net worth moving so much higher because of house prices and financial assets. So you're in an equilibrium here. It's certainly not stable. It's not stable to not have job creation and prosperity at the top. That's not stable.
Can we finish on the narrow breadth in the equity market? Had tons of messages about it. We've been talking about it over the last 2 hours as well. On the S&P yesterday, 398 decliners, 104 advancing in an up market. Your takeaway? These are the kind of things we don't typically see, maybe have never seen over the past few decades.
So it's not that healthy. Let's just be clear. Earlier in the autumn, we did see a further broadening of the market. I think this is just the moment at the time that the hints about China might be coming through for the AI trade, and so I think in some ways the last week or so is really just skewed to that. But earnings are coming in better, and in fact, the 493 are contributing to earnings in a higher way than they have in other quarters. So there is some catch-up here between what the Mag 7 is producing in earnings and what the other 493 are. So the earnings are there. It is not so skewed as it was last year, for instance.
So if you wanted to
it's a better year for that.
To allocate to equities this morning and going through the rest of the next 6 months or so, what's the optimal way of doing that for you?
So we are overweight the U.S. We remain overweight the U.S. We do like going down the cap scale here because we do think that the one big beautiful bill actually is going to be very beneficial for industrials, which are really located in mid-cap here. So that's clearly the beneficiaries of some of the fiscal policy. But because the dollar is a little bit weaker, we do like emerging markets as well. I'd say emerging markets over developed international right now looks a little bit more interesting. Developed international really being pushed by Japan here. The growth in Europe is not that exciting, and so we would overweight the U.S. and you satellite emerging markets a little bit lower the cap scale, and you have to do international just because the dollar is a little bit weaker.
And we've seen banks in Europe particularly absolutely rip in particular. The divergence, you want to talk about divergence, never mind the US, payrolls and earnings in America. Growth in Europe compared to what the banks have done this year. Growth in Europe from the ECB, this is their forecast for 2025, 1.2%. For next year, 1%. And the banks have absolutely ripped in that environment.
Financials have been killing it in the first quarter, second quarter, even the defense sector in Europe. That was a huge story about reindustrializing and making sure you have a strong defense in Europe. Other than that, where is the growth story in Europe? There really is no growth in the European Union until they do what Mario Draghi is trying to push them to do.
It's another classic example. I could give you the data and you still get the trade wrong. You know, you've got to think about that when the data does come back. Alicia, thank you. It's good to see you.
Great to see you.
As always, thank you. Alicia Levine there of BNY Wealth. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. Boeing stock is down about 0.8% after the company reported weaker than expected third quarter earnings. The plane maker said earnings were hit by a $4.9 billion accounting charge related to the delayed debut of its 777X jetliner. The new jet is now running 7 years behind schedule, a reminder of the long recovery ahead for the U.S. plane maker. Meanwhile, a handful of Republican senators joined with Democrats to pass a measure aimed at canceling tariffs on Brazil. The measure still must pass the House, and while President Trump would likely veto it, Brazil's President Luiz Inácio Lula da Silva said he was optimistic that a solution would be reached. Key Brazilian exports include coffee and meat. And President Donald Trump conceded he can't run for president again. Trump said, quote, "It's pretty clear the Constitution doesn't allow him to seek a third term." Trump has frequently floated the idea of another run, including showing off those Trump 2028 hats despite the constitutional limit. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next, the Morning Calls Plus, Shweta Kajuria of Wolf Research, with what to expect from Meta earnings after the closing bell today. That's next from New York City this morning. Good morning.
Technology ecosystem.
Asia's biggest tech news and innovation.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Earnings are going to be good. The question is how much in the here and now is priced into stocks. It's basically going to be commentary rather than hard numbers, commentary about the AI revolution. Our belief is that the positivity is going to continue.
That was Julian Emmanuel of Evercore going into some important tech earnings after the closing bell. Meta, Microsoft, and Alphabet today. Tomorrow afternoon, we'll hear from Amazon and Apple. Yesterday on the program, we had Wells Fargo talking about an everything rally. Email just now. This is not an everything rally. It's a few things rally. That's exactly what we saw in the equity market yesterday. On the S&P 500 this morning, up again by 0.3%, up on the NASDAQ by 0.5%. Thank you, NVIDIA, and maybe thank you to the president as well. That's the price action. Here are your morning calls with one stock in focus, NVIDIA. First up, D.A. Davidson raising its price target on the tech giant to 250, believing the market is discounting upside to data center revenue. Finally, Bank of America raising its target to 275, highlighting a very positive meeting with management after NVIDIA's GTC event. Plus, Melius raising its target to 300, calling it the clear AI leader. Let's stick with tech. It's a make or break day for the US equity market. Earnings from Microsoft, Alphabet, Meta, all reporting earnings after the closing bell. Bloomberg's Ed Ludlow joins us now for more. Ed, before we get to those names, you spoke to Jensen. We need to talk about NVIDIA. What a change we might see in policy from the president. Just raising the question, no decision yet, but feels like that's the direction of travel, Ed.
Yeah, it does. I mean, to be very clear, NVIDIA's official position is they have not asked the United States officially for permission or a license to export Blackwell to China. And on those analyst calls that you were just going through, what is so interesting is that in a completely informal way, Jensen Huang had a slide behind him on stage that said over the next 5 fiscal quarters, they'll do $500 billion of revenue just on their 2 generations of data center chip. And that $500 billion figure strips out China completely. So their base case is still 0 revenues from China. I would say what I'm hearing from sources is there isn't actually certainty around a meeting between Jensen Huang and the president, but clearly the president of the United States is expecting one. And if the president of the United States says they're going to talk about Blackwell, I guess they're going to talk about Blackwell.
Well, he's saying that the president is saying he's going to talk about Blackwell with Xi Jinping, and then he said that Jensen Huang was in the Oval Office just 3 days ago. So, Ed, I don't really care who from NVIDIA is making asks to the United States. The fact of the matter is, it does sound like this administration is taking its cues on policy from the NVIDIA CEO. Would you not say that?
So what I would say is there's always been GTC conferences in DC. This moment was the first time that Jensen Huang has made a keynote at it. And when the date was announced all the way back at the beginning of the summer, there was an expectation that the President of the United States would be here for it. You know, at first we were saying that this week that we were inferring that this was something political in nature. It was planned that way. And, you know, Jensen spoke to the media for hours about what he expects the president to do, and that is do what's best for America. And, of course, to Jensen's mind, tying it to the market move of today, where NVIDIA potentially becomes the first $5 trillion market cap company, you know, to their mind, what's best for America is their ability to export chips to China, which once they had 80% of the market in.
Well, Ed, yesterday in your interview, I wrote this down. It's our national treasure. That's what Jensen was talking about to you in terms of these chips. Why would this administration think it's so good to give away our national treasure to China when the president ran in 2016 about the fact that China was raping the U.S. when it comes to intellectual property theft?
Yeah, what we don't know is the specification of a Blackwell architecture chip for China. Remember that the kind of consensus in the White House right now is that it is better to ship a deprecated chip, a depowered chip to China than none at all, because otherwise you leave a vacuum that Huawei can enter and then potentially export out of China to other markets. But what we're not saying, and we just don't know, is that the cutting or leading edge Blackwell chip is what's in discussion here. We just need more information about from NVIDIA about some kind of chip that they've designed with purpose for that market.
Ed, that final point, I think, is very important. Ed, thank you. Ed Ludlow there on NVIDIA after catching up with the NVIDIA boss, Jensen Huang, just yesterday. The optics of this and allowing China to save face, you brought up the comments from the Commerce Secretary, Howard Lutnick, which effectively embarrassed the Chinese, which is something that most people who have experience in these matters know that is something you don't do if you want to get the optimal deal. Basically telling the Chinese, we won't say the good stuff, this is just the crap, right?
Yep.
Now you're in a situation where you can basically say, we're going to say you some good stuff and publicly dress it up as something better than it actually is. And Ed's asking a question as to how this would be configured and whether the stuff they'd be selling into China would be precisely the same stuff that the U.S. has got access to.
It's a great question. I want to know the answer to it. Is this the full Blackwell, high advanced technology the U.S. has access to, or is it a chip that's watered down, basically? In essence, what Howard Lutnick came out and said in July, which was, we're not going to tell them our top tier or second tier or third tier. Maybe they'll get the fourth tier. Is that what this is, a fourth tier Blackwell chip?
With a more politically pleasing wrapper. Possibly. I don't know, because this is still a conversation and we'll see what happens tomorrow. All to play for. Let's turn back to tech earnings after the closing bell. Shweta Kajuria of Wolfe Research has an outperform on Meta with a price target of 900 heading into earnings, writing, we're constructive on Meta into third quarter results as we see a beat and raise on revenue with clarity, greater clarity on CapEx and OpEx. Shweta joins us now for more. Shweta, welcome. I know we don't have long with you, so I'll try and squeeze in a lot of questions if we can. Shweta, in your mind, of all the companies that you cover, is this the one that's under pressure?
Well, I think among the mega cap names, we put these into different buckets. I guess Meta, Google, and Amazon slightly different than some of the large and mid cap names. But among the mega cap names, I think that Amazon actually is most under pressure because they do need to prove out on the cloud front and on AWS. And CEO Jassy needs to comment on perhaps their relationship with NVIDIA, with Anthropic, as well as capacity constraints easing. So perhaps if I were to rank order them, Amazon falls under greater pressure. then Meta, and then Google.
Let's talk about Meta then. Putting up big numbers, Shweta. What we saw with Microsoft is they're able to say, look, we're spending all this money, but look at this revenue growth. It's fantastic. Can Meta repeat that act after the closing bell?
We certainly think so. We think that for the third quarter, the street's looking for, call it 22% or so growth rate, and we are actually expecting at least 25 to 26% growth rate because of all the changes that Meta is making on its platform, both for the advertisers as well as on its core platform itself that is driving relevance, that's penetrating more of the ad budgets. And then for the fourth quarter guide, we think that they'll guide to 22% growth rate at the high end of their guidance range. And if they do that, exit rate still calls for a 20% plus growth rate that implies perhaps durability of healthy growth in 2026.
Do you expect Meta to come out and give more guidance as well on all of the AI hires they're making and the advancement those individuals are making? Because they're spending tons of money on these people.
Oh, for sure. We don't expect an OPEX guide in terms of an official numbers guide this quarter for 2026, but we certainly expect CFO Susan Lee to comment on how they're thinking about, provide a little bit more color about how they're thinking about OPEX and not only compensation, but there are a lot of other costs in addition to D&A, lease expenses, energy, as well as cloud computing, because they signed different contracts that will be accounted for in that OPEX number. So to the degree they can comment on how much OPEX can accelerate in 2026, that'll be incredibly helpful.
Shweta, when can they actually put numbers around it, though? And at some point, does the market get frustrated?
Well, they used to guide in the third quarter for the upcoming year. They did not do that last year, so the expectation is that they'll likely provide more color this quarter, and then in the fourth quarter earnings call, they'll provide a little bit more of a definitive guidance on OPEX for 2026 as they have a little bit more visibility.
Shweta, Anne-Marie was talking about what happened 3 years ago. 3 years ago in the third quarter to Meta, when everything kind of fell out of bed. And that was really the foundation for the year of efficiency. Can we take a huge step back? How much has this company changed since the third quarter of 22?
Oh, it is remarkable how much when a founder-led company for a company this scale can turn around with certain decisions. And at the time, it was, they called it a year of operational efficiency or year of efficiency. And in a couple of weeks, and they changed their outlook on expenses. This is and since then, it is completely different. Why? Because we have seen so many dramatic changes, not only in the expense side, but more importantly, on AI side, as well as on the core AI platform that is allowing Meta to grow pretty much faster than any other ad platform out there. It is best in class growth. And as long as they can show those types of growth rate significantly faster than the overall digital advertising market, investors will likely give them a little bit of a pass on all the spend.
Shweta, appreciate it. Looking forward to the numbers a little bit later. I know you've got to run. Thanks for being here. Shweta Kajuri there of Wolf Research, looking ahead to the earnings. Maybe Amazon's the more vulnerable one, looking at the coverage over at Wolf. Meta in focus. Mark Zuckerberg's ability to make that company super agile. 3 years ago, we renamed the company to Meta. The focus was on the metaverse, doubling down on all of that, market pushback, and all of a sudden, a few years later, heading into a different direction, aggressively.
Absolutely, with AI. And they have been out front and center, which is why I'm so interested to know about behind the scenes, what is going on with these individuals they hired. They are signing $1 million contracts for the best in AI. And the problem is other companies cannot keep up. And that is why they're doubling down on this story. It's interesting, everyone we talk to, though, they says they have to keep the revenue spending going. They have to make sure that's where they are bringing in those advertisements. That's what's really keeping this story alive, at least chugging along until we can get some firm numbers on what's going on in AI.
That stock, 8-day winning run over the last 8 days. Meta higher by more than 5%, 5.53% to be precise, heading into the earnings print later on this afternoon. Coming up on the program, we'll catch up with David Miracle of Goldman Sachs. Before we get those earnings from Big Tech, we've got a Federal Reserve interest rate decision. That interest rate decision drops at 2 p.m. Eastern Time. A news conference with Chairman Powell 30 minutes later. David Miracle of Goldman up next. Plus, Danny has some morning movers. Fiserv plunging after slashing its profit forecast. That name is down by 36%. The story's up next.
case you missed it on the opening trade.
Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all
Avoid
costs.
dancing.
Don't miss the opening trade live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Bringing you up-to-the-minute news.
Geopolitical news.
Economic news.
Up-to-the-minute global news. Whenever, and wherever.
Wherever
it happens.
In Washington.
Buenos Aires, Argentina. Sintra, Portugal.
Ottawa, Canada.
Bangkok. Tehran.
Jackson Hole, Wyoming.
Windsor Castle, England.
The Circuit de la Sarthe in Le Mans.
And this.
And this.
And this is Bloomberg.
The up and bound just around the corner, 16 minutes away. Equity futures up by 0.2% on the S&P 500, higher on the Nasdaq by 0.4. Lots of tech earnings a little bit later. A serious amount of tech earnings later on today. We're going to hear from the likes of Meta, Alphabet, Microsoft, $9 trillion of market cap across just 3 names. Throw in Apple and Amazon, and we're talking about the quarter of the S&P 500 across 5 names. Switch up the board and get to the bottom market. 2s, 10s, 30s, pretty stable and well behaved on the session. Likewise, since the Fed last met, 2s around 350, 10s around 4%. That decision later on this afternoon. As we count you down to the opening bound, let's get you some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. One of the wild things with all of the big cap tech earnings in focus this morning, NVIDIA doesn't even have its earnings until November 19th, and it is the stock of the morning. That is because with a 3.4% gain, it will hit the $5 trillion market cap club, a club where it is the only member. The gain this time happening off the back of positive signals coming from President Trump ahead of his meeting with President Xi, a hope that better relations and lower tariffs will be the result. Trump also saying that Blackwell from NVIDIA will be discussed as part of the conversation. We do have some other earnings to get through, though. Verizon reporting this morning. They did report a loss in the quarter of 7,000 customers, but that's not what this market is concentrating on. Instead, it is a new CEO who's only been in the spot for a couple weeks. He laid out a very aggressive growth strategy. In fact, he straight up said this is not an incremental plan. So with that ramp up that they're expecting, shares are up of Verizon 4%. Now, the biggest loser by far for the S&P 500 pre-market is Fiserv. This is a fintech company. Shares are down 37%. This isn't a penny stock. This is a $68 billion company that cut its outlook for the entirety of the year. Some of its financial solutions products also lost on the quarter. They're completely changing up a lot of their C-suite, including co-presidents and CFOs, so a shakeup there at a 37, just under % decline. It is the biggest daily decline, at least we're headed that, since the company went public in the late 80s, John.
1/3 of the market cap gone, just like that. Danny, thank you. Looking forward to the program. Danny Berger alongside Matt Miller in about 30 minutes' time. Bloomberg, open interest going into the opening bound. The opening bound, 60 minutes away. As we count you down to the Federal Reserve decision later on this afternoon, we are expecting another interest rate reduction down in Washington, D.C. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, the theme of the day, according to Wall Street analysts, is going to be risk management. The question is, which risk is being managed? If you look at the alternative data, it suggests that hiring is very weak. We got a couple of reports over the week that suggested that that's the case, but there's not much change in unemployment. Actual data suggest inflation is still rising, but nobody knows where the tariffs are going to end up. So what does the Fed say about the danger of each side of its mandate today. We are going to get a 25 basis point cut. We'll be down to 3.75 to 4% for the target range. 150 basis points worth of cuts so far since they started. We expect Stephen Myron will dissent again for 50 basis points on Donald Trump's orders. Might have a no-cut dissent, but that's considered unlikely. It's still something to watch for. The question is really for people on Wall Street, what are they going to do in December? And Jay Powell is probably going to do his best to keep his options open. We're pricing in a December rate cut, but people don't really want, people on the Fed don't really want the markets to do that yet because they have no data. So the balance sheet is the one remaining thing to deal with, and we are considered likely, according to analysts on Wall Street, to get an announcement today that they're either going to stop it immediately or they'll put a near-term date on it. They could have a dissent on that from Mickey Bowman, who's suggested she wants a much smaller balance sheet. They will probably say they're going to reinvest the money in T-bills first, then across the curve from the maturing securities. And for the time being, maintain at least the $35 billion market mortgage bond cap as they try to work down to treasuries only, but that's going to take some time. It'd be an interesting question if they did suggest they might sell some mortgages to get there faster.
Mike, it might actually be an interesting news conference given the lack of economic data. Blake Gwynn of RBC was with us earlier on this morning. Raised an interesting question, Mike. How much of the news conference will spend asking them what they're looking at right now, how they're making these decisions, and how they'll make the next decision?
Well, I'm sure they're going to get that question. I'm sure Jay Powell is going to say the same as he always says. We're looking at everything we possibly can. One of the key things that a Fed official will tell you if you speak to them is that they are talking regularly with companies in their district, trying to get a read on what companies are doing, whether they're planning to expand, whether they're planning to cut back, are they going to let go of people. We've seen a lot of announcements of layoffs in the last week or so in earnings reports. The issue for the Fed is that companies don't know either because they don't know what Donald Trump is ultimately going to do. So they're all kind of flying blind at this point, and that makes decisions that much harder, which is, again, why Jay Powell probably doesn't want people to assume December's a done deal.
Mike, you're one of the best. Looking forward to your coverage later. Mike McKee helping us to lead our coverage of that Federal Reserve decision later on this afternoon. Our coverage on Bloomberg TV and radio starts at 1:30 Eastern Time. That decision, of course, 30 minutes later. News conference 30 minutes after that. A lot of questions about the lack of data and a government shutdown, which you mentioned once earlier and we've hardly talked about.
Yeah, 29 days, government shutdown. No one's blinking right now, so we're not going to get jobs reports. We're not going to get CPI, except for the only one we did get that showed a 3 handle, which makes you think that Washington at this moment is comfortable for that. What do they do at December with this in this data desert? But I think you've mentioned before, last year, wasn't it the University of Michigan survey that really spooked the Fed?
It was a few years ago, yeah.
And are they relying on things like that? Then
we got these leaks to the Wall Street Journal, and
it's concerning.
Yeah. I agree with that. That wasn't a good period for this Federal Reserve. Let's stick with the Fed. David Merrickle of Goldman Sachs, for Goldman's Take, writes the following. The September dot plot showed a baseline of 3 cuts this year, and with the official data paused by the government shutdown, there is no reason to deviate from that plan. David joins us now for more. David, welcome to the program, sir. Let's take that median dot. How deceiving, how misleading might that median dot be, given the division that's apparent on the committee right now?
I think it's likely that Chair Powell is part of that majority. I think that that does represent the default plan. And I do think with no official labor market data coming out, the most natural thing to do is to continue on that path. Even by the time of the December meeting, while prediction markets imply the government will have reopened, there will be challenges for the October and November data. They might not have all of the data. We might worry a little bit about data quality. And of course, the labor market data will show the effects of the DOGE layoffs as well. And so you take all of that together, and I think it's a pretty high bar for the labor market data to cause them to not deliver that December cut as well. So we're expecting one today, as everyone is, and we're expecting a cut in December as well.
David, how are you taking stock of what's happening in the labor market currently? Mike McKee was going through some of the announcements we've seen from corporate America, Amazon, Target. There's been others as well. How are you tracking things?
Sure. We use a few different labor market trackers where we try to aggregate many different alternative data series. One of those is trying to estimate job growth. Our impression is that job growth has picked up a little bit albeit from very, very low levels over the course of the summer. ADP started releasing their weekly data the other day, and you saw basically the same pattern, a bit of improvement, but from a very low starting point over the summer. We also look at a couple of different private sector measures of job openings, which replaced the missing JOLTS report, and our impression there is that job openings have continued to decline. And then we also have several different measures that get at the same thing as the unemployment rate. How tight is the labor market? How easy is it to find a worker? How easy is it to find a job? And there, too, the impression is that we've seen an ongoing deterioration since the August employment report, the last one that we have. So overall, I would say that the data are probably mixed to a little bit worse, certainly not a strong enough signal to deviate from the plan to deliver the series of cuts implied by the dots.
So, David, just to be clear, even if the government is shut down by the next time the Fed meets and we get no reports from the BLS, you think the Fed could be in a position to cut interest rates? Don't you think that's going to look a little political?
I think, the thought was that there's enough weakness in the labor market that was visible even by the time of the September meeting that they wanted to deliver a series of risk management or insurance cuts to push back against that. Historically, those have usually come in packages because I think no one would think that one 25 basis point cut in isolation would do enough to, push up demand, push up labor demand, hopefully, and address those labor market concerns. I think, those concerns are still very much with us. In the absence of the data, you fall back a bit on the alternative data, but I think it would be very difficult for the alternative data to send such a convincing signal that they alone push the Fed off course. By the time of the December meeting, if the government has reopened, we certainly should have the September employment report because that one was ready to go. In general, we think that the payrolls numbers that are collected late should be less problematic because, of course, we get late payroll submissions all the time, and for most months, they don't look systematically different from the on-time submissions. But something like the household survey, where past experience suggests it is really important to collect those data in real time, or similarly the CPI, where we should have been collecting those data in October and haven't been, and there just isn't a way to make up for that a month later. On those reports, while I assume something will come out, we do worry a little bit about data quality and about some missing data points. So I do think by the time of the December meeting, they'll still probably be a little bit reliant on some of these alternative indicators.
David, you've put out some research over the last year, tons of research on tariff pass-through. I remember a note that came from you guys maybe a month or two ago on taking stock of who was eating it at the moment, how the cost was being shared across America, the importer, basically the company, onto the end consumer. David, how are you taking stock of things now? And how do you and the team see things developing into year-end and into early 2026?
Sure. Only a little bit has changed since we last wrote our report, but we do now have September CPI data. We did think we saw some small effects in goods categories. So I would say that our estimate of the total tariff impact so far on core PCE prices or core CPI prices is about 0.5 percentage point. That's similar to what the St. Louis Fed's economists have recently found. It's similar to what some other alternative data providers have found, people who are tracking prices using methods other than the CPI and PCE. So I think that's the general sense. And I would view that as basically meaning that although we're still printing at 2.93% year on year, actually the underlying inflation trend looks quite a bit better than that to us, more like 2.4, 2.5% once you kind of account for those one-time price level increases from tariffs.
That's a better story to tell. David, thank you, sir. David Merrick there of Goldman Sachs on the outlook for the Federal Reserve, looking for an interest rate cut this afternoon, another one in December, and very few reasons to deviate from the dot plot produced the last time they met.
I just think it's going to maybe not even seem politically, but just how uncomfortable it is for the Fed, who says they're data dependent, to get up there maybe in December. I understand they can hang their hat on the recent data we just got in September, but in December, potentially still be in a government shutdown and say we're still cutting interest rates, and the last CPI print we have is CPI at 3%.
I'm right there with you. It's uncomfortable. You've got a 2% price target. You've not hit it for now for a number of years, and you've had this rolling aspirational view that in 3 years you'll get there. In 3 years we'll get there.
Mohamed El-Erian has been talking about this for years, and he's nailed it. Also, Mike McKee talking about the fact that the Fed governors are now relying on executives in in their district. Why didn't they rely on executives in their district when inflation was ticking up? When companies services saw that we were going to be adding to prices, they were just relying on the data and thinking this is just going to be one hit transitory because of the supply shocks of COVID. So I think actually this moment, it is important and prudent for the Federal Reserve to realize they really do need to do more than just the BLS data. They need to have a holistic approach of what is going on in the economy.
Chairman Powell's been very consistent on one thing. They've got a preference to supporting the labour market, which I think is what they're doing right now. You can debate as to whether that's the right thing to do or not, but ultimately that's where we are under the leadership of the Chairman of the Federal Reserve. Equity futures on the S&P 500 positive here by 0.2%. Let's give you an update on stories worldwide with your Bloomberg Brief. Here's Yahara.
Hi, John. President Donald Trump is in South Korea ahead of tomorrow's big meeting with Chinese President Xi Jinping. Speaking to reporters aboard Air Force One on his way to Korea, Trump said he expects to lower tariffs on Chinese goods over the fentanyl crisis and that he will speak with Xi about giving China access to NVIDIA's Blackwell AI chips. Meanwhile, CVS Health shares are rising 3.7% after it raised its 2025 profit guidance for a third time in less than 6 months. It's a sign that it's set a new foundation a year into CEO David Joyner's tenure, even as the company struggles with underperforming business units. The company said improved operations in its insurance unit was primarily responsible for the strong performance. And Tuesday marked the first full paycheck that air traffic controllers have missed since the start of the shutdown, raising concerns about the already understaffed aviation safety system. Transportation Secretary Sean Duffy warned that without enough controllers, flight delays and cancellations will only grow. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, don't miss this. Jay Goldberg of Seaport. He remains the lone analyst on Wall Street with a sell rating on NVIDIA. Jay joins us next.
Issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
I think there might be a bubble in how many people are talking about a bubble. NVIDIA is becoming the backbone for, I think, America's AI century. AI is such a big opportunity and the potential is so vast. In addition, if you have the scale and the customer base, like the investment can be amortized over a lot of years. And so there probably is just more risk to underinvesting. The long term still is intact for the returns on AI.
That was Tony Wong of T. Rowe Price on a bubble in Bubble Talk. Equities up again today. Record highs on the S&P, up by 0.2%, on the Nasdaq, up by a third. As we count you down to the opening bell, check it out. The week ahead, it starts later on this afternoon. A Federal Reserve interest rate decision at 2 p.m. 2:30. Chairman Powell's news conference after the close. Earnings from Microsoft, Meta, Alphabet. On Thursday, the President of the United States and the Chinese leader meeting in South Korea, plus more tech earnings, Apple and Amazon. Let's stick with tech. NVIDIA on track to become the first $5 trillion company as President Donald Trump fuels hopes of Blackwell chip sales in China. Jay Goldberg of Seaport Global holds the sole sell rating on NVIDIA with a $100 price target, saying there's a lot more that can go wrong with NVIDIA than can go right. Jay joins us now for more. Jay, welcome back to the program, sir. 73 buys, 6 holds. Your sell. Jay, what can go wrong?
Well, I think there's a lot that can go wrong. There's just not as much that can go right as well, right? For NVIDIA is the most scrutinized company on the planet. Investors track it down to every detail. Everyone looks at all the supply chain data coming out of Asia. We know what their capacity is. They say they're sold out this year. They say they're probably going to be sold out next year. Once you're sold out, how do you go up from there, right? There's some talk that maybe they got some more capacity, but there's not a lot of upside, right? And that's part of the reason China is such a topic of a focus topic, is because that's sort of the one swing factor quarter to quarter, as opposed to you start to look through the downside risks here is AI is. I maintain it's a bubble. No offense to Tony, who was just on, but I think there's a lot of, there's only really 6 companies driving all this spend. And you sort of look through the chain of what's going on in the data center construction, electricity, supply chain, the increasingly labored financial engineering that's going into putting these deals together. And I just think there's a lot of things that could sort of throw a wrench in the works.
Jay, what if, though, the President of the United States does strike a deal on Blackwell chips? Would that change your mind about NVIDIA and the price target?
No, I think that's the big swing factor quarter to quarter. They wrote those chips off 2 quarters ago. What's going to happen with their China parts? I think we all anticipate there's going to be some resumption of sales into China. So I don't think yes, it is some upside, but I don't think I don't think it changes the overall arc here.
So
China is 20% of sales, something like that. So
you have a sell on NVIDIA, and you think we're in a bubble. If you think back to the .com era, NVIDIA equals who?
NVIDIA equals Amazon. Right? Amazon went up a whole bunch, and then it fell a whole bunch, and then it came back. And I think that's what we're going to see here, too. Right? I agree AI has the potential to be immensely powerful, and NVIDIA is really well positioned for that. But I think that there are going to be growing pains. No technology this big has ever been adopted in a straight line. There are going to be hiccups. There are going to be pullbacks. I think it's just going to take us a few more years to figure out what AI is actually useful for, what it's good at, and what are the underlying business models. And there are going to be some pretty serious swings in share prices between now and then.
If it's reminiscent of Amazon, then at what level would you want to get in? Because I imagine everyone listening to this thinks, oh, Amazon, I wish I had bought that sometime in the past.
Well, buying Amazon in 1999 and then holding it probably took another 10 years for it to get back to that price. So I think there is going to be disruption in the whole AI chain. Right. And so I know that any sort of quarter-to-quarter dips, people will just buy into weakness. But I do think there are sort of more fundamental issues here around the adoption of AI, how long it's going to take, and how some of these deals, how some of these big data center things that are baked into numbers, how do those actually get built? Right? What happens if one of these major AI labs can't build their data center in time. They can't get the electricity, or they can't get the funding right. I think that slows things down. I think that, and then I think there's risks in consumer adoption. We still don't have a really good consumer AI app. And I think at some point, all of this spend has to be justified. And the return on that investment is not entirely clear in a lot of these cases.
Jay, could you just spend some time on describing what that moment of realization would look like when the other 70-plus names get what you're looking for? What does that actually look like? Because your price target right now at 100. I just wonder what the rest of the market would look like if we came down from 200 to 100.
So I probably have to review my price target. I'll give you that. But I do, like I said, I think what happens is over the next year or so, gravity just reasserts itself, right? I'm increasingly concerned by some of the financing that's taking place in some of these neocloud deals and some of these data centers. I think that's sort of almost a house of cards. In some cases, there are good companies there too, but there are just so many of these companies chasing this build. But when you get down to root demand, it's all coming from the same 6 companies, right? And I think if you push those companies on what their business case for all this massive spending on NVIDIA parts is, it's challenging for them to come up with a clear, coherent business case for it, right? And in that kind of situation where they're sort of investing heavily, spending huge amounts of money based on some form of fear of somebody else getting to some unspecified destination first, that's a very heavily psychologically driven spending wave.
Yeah.
And that can just as easily that came on, it can also turn off quickly too. And so I think what we'll see, probably not in this earnings season, but somewhere in next year, we'll start to see some easing back, some lowering of CapEx. And that sort of causes everything to reset.
Jay, people will have sympathy with that view. It feels like, and these companies are telling you, they're behaving like they're facing an existential risk, so they're willing to overinvest or risk that than risk underinvesting. Jay, but the market keeps going higher. And I wanted to finish on a more personal question, if I can. Jay, career risk and how you think about that when this market's still ripping and sell ratings on Wall Street is super rare. And I have tons of respect for you to come on and just offer your opinion, unvarnished, how you see things, regardless of what the market's doing. Jay, do you feel any of that career risk, being that sole sell rating on such a well-earned name?
No, I'll tell you, one of the most surprising things to me is when I came up with this rating in April. Right. What I told clients at the time is I'm not saying short NVIDIA. That's a little bit too much. But I was saying that it's going to underperform other stocks in the sector. Right. In my sector, especially. And I think that's borne out. If you look at what's happened with Astera Labs or with Credo or with even Broadcom, those have all outperformed NVIDIA in this over the last 6 months. And one of the most surprising things to me in all of this is how little pushback I've gotten from clients, from institutional investors, from the buy side, right? I thought I was going to have to fight them tooth and nail, but most of them sort of quietly agree with me, right? We'll disagree on timing. Some will say I'm a little early, a little late, but nobody's sort of pushing back on the core thesis. There's a lot of concerns about all this, but also the market just keeps going higher. And I can't fight the market, I can't forecast the market, but I can forecast my sector and see what's happening there.
We're seeing that again this morning. Jay, thank you for being so open and honest with us. Thank you, sir. Jay Goldberg there of Seaport. This market keeps going higher. Equities at all-time highs. Coming up at 1:30 Eastern Time, we'll have full coverage of that Federal Reserve decision. Bob Michael of JP Morgan, the former Fed Vice Chair, Richard Clarida, Kathy Jones of Charles Schwab, Torsten Slock of Apollo. Big day coming up right here on Bloomberg TV and on Bloomberg Radio from New York City this morning. Good morning. This was Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg. A rally on a record. I'm saying that again. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up is a big day on Wall Street. We've got a Fed decision on the way, tech giants taking the earnings spotlight, and trade deals.
And on those earnings, Microsoft, Alphabet, Meta, they kick off the Mag 7 parade with spending on AI firmly in focus for investors.
The trade breakthrough in China is what I was talking about. May help NVIDIA become the first public company in history to hit $5 trillion.
There's a landmark from NVIDIA, but it's not them in focus after the bell. It's going to be the tech giants because we have 3 Mag 7 stocks reporting after the bell. Microsoft, Alphabet, and Meta. They account for $9 trillion of the $11 trillion in stocks reporting earnings today. It is the busiest in S&P 500 history. You add in Amazon and Apple, Matt, and that's a quarter of the S&P 500 from the tech giants we're getting this week.
$9 trillion. Well, NVIDIA is half of that, and it's set to open actually at more than half, $5 trillion in market cap after President Trump said he'll discuss the sale of Blackwell chips, which he called super duper, with Chinese leader Xi Jinping. As a result, the shares are up almost 4% in the pre-market.
NVIDIA CEO Jensen Huang, Matt, also told Ed Ludlow that he hopes President Trump can make a deal with China.
We're currently assuming China is going to be 0% of our business. And if it comes back, if President Trump was able to negotiate, or if China would like us to come back to China, it's going to be a huge bonus for us.
Joining us now is Bloomberg Tech co-host Ed Ludlow in Washington, D.C. after that conversation. Ed, it seems like that's the way things are moving, given President Trump is saying that they'll talk about Blackwell chips. Is Jensen Huang the most influential CEO to the president in America?
Yes, although, whether the president meets with Xi and discusses Blackwell is completely separate from whether Jensen Huang meets with the president or any other Chinese officials and plays a role in it. The market, we're at a gain of almost 4% in the pre-market. NVIDIA will probably open as the first $5 trillion market cap company. But we aren't really trading on fundamentals here. as part of yesterday's event, the interview and also the presentation on stage, Jensen basically updated NVIDIA's near-term forecast by saying that they expect $500 billion of data center sales across the Blackwell-Rubin family of chips over the next 5 fiscal quarters. But he was completely clear that that strips out any China sales at all. Their base case scenario is zero China. And what we don't know in regards to what the president's talking about is there was never an idea that the full performance Blackwell generation chip was going to go to China. It was going to be based on a Blackwell architecture, but be deprecated and depowered in line with the strategy prior to today. And we just don't know what the status of that is.
But what we do know is if you get China sales in there, it could be trading at only 10x sales, which isn't massive for the most important growth company in the entire U.S. Stock market. What do you think about the valuations here, Ed? I noticed it was trading at about 44 times estimated earnings before the jump today.
Yeah, I think what's astonishing about the NVIDIA story, and I'm a little bit jelly, to be honest. You know, when the market opens, you'll probably break the red headline, first $5 trillion company in history. But people should remember that the jump from a $4 trillion valuation to a $5 trillion valuation has happened in just about a few months, a couple of months. And basically, the reason that the market traded higher, in part this morning, but also yesterday, is Jensen Huang giving enough evidence that the expansion has no end to it. You know, he still frames this as being an early innings situation, and that will carry on for some time. Look at NVIDIA's margins. You know, even with its commitments to onshore some of its supply through TSMC in Arizona, for example, you know, it's still also a highly profitable company in an industry where the economics are brutal.
Yeah, gross margins. I'm looking right now at the 2024 was 74, right? And 2025 estimate 75.5. So pretty fat margins. Bloomberg Tech co-host Ed Ludlow, he did get to break Apple, eclipsing $3 trillion in market cap. Yesterday we did $4 trillion. So we had that.
And now we've upped it with $5 trillion.
Now we'll do 5.
I feel why Ed is jealous. I understand.
A tale of two earnings stories on the industrials. Boeing shares are wavering after the company reminded investors of its long recovery ahead, while Caterpillar soared on strong equipment sales. Let's get a read on the industrials. A Bloomberg stocks reporter, Matthew Griffin. So Boeing, it's almost like a state-owned enterprise in that, you know, even with a loss of $7.47 a share, people still buy the stock. Caterpillar's a different story.
Yes, it's really interesting to watch the difference in the industrial companies today. There are actually two companies that have both had pretty strong year-to-date share rallies. Caterpillar's up about 45% through yesterday's close. Boeing's up more than 25%. So sentiment for the two has grown more positive this year, but I think the earnings reports also encapsulate how investors feel here. Caterpillar has become the latest AI darling. Investors are really optimistic about their sales of backup generators for data centers. You saw that this quarter. Revenue grew 17% in the energy and transportation business. That stock is rising pre-market. Now, Boeing, on the other hand, their shares are down about 0.5%, kind of wavering here. They took a $4.9 billion accounting charge on a delay for their 777X jet. That's not going to debut till 2027. And so, whereas with Caterpillar, there's this optimism, AI, a new story there. Boeing, investors are looking for a recovery, for a turnaround, and this delay with a charge that's maybe bigger than expected is a sign that we just aren't quite there yet.
Caterpillar, we usually talk about saying something about the broader economy. It's almost perfect because it's a broader economy that's trying to pivot towards AI. But what about the sale of other heavy machinery? What did that tell us at Caterpillar, and does that say anything about the wider economy?
Yes, I think that's really a correct point there, is Caterpillar exposure to construction, to mining, to power demand, and through that to interest rates, to the strength of the economy, really a company that says a lot here. Sales revenue did grow in their construction business, but they did flag some headwinds there. They're seeing negative price realization. They're not able to sell their equipment for as much as they want, and they're facing tariffs on the cost bucket there. They're going to see tariffs of north of $1.5 billion this year. So that business is still strong. Investors think they're managing through well, but I think it does encapsulate some of the headwinds facing the U.S. economy.
All right, Matt, thank you very much for that. That is Bloomberg's Matthew Griffin. And we're going to have more with Boeing coming up, speaking with Jefferies analyst Sheila Kahyaoglu. Now, turning to another big event today, traders are awaiting a Fed decision that will be at 2 p.m. Eastern. Then we'll get the press conference from Chairman Powell. Joining us now on what to expect, let's get straight to Michael McKee, Bloomberg's international economics and policy correspondent in Washington. Mike, what are we expecting?
Well, it sounds like we're expecting a very short window of opportunity for me to get on TV today between 2 and 4 p.m. when we get all the tech earnings. And Jay Powell would be very happy with that. The Fed wants to go into this making probably as little news as possible. They aren't going to do a whole lot. We know they'll cut 25 basis points. They pretty much told us they would do that, and we'll get the Stephen Myron Trump-ordered dissent as well. There might be a no-cut dissent, but that's kind of unlikely. But Jay Powell's news conference is going to get closely watched for any signal on what they might do in December, and the betting on Wall Street is that he's going to suggest, don't look here. We don't know what's going on with the government shutdown, so we're not going to promise anything going forward right now. We might get a balance sheet announcement. They're very close to ending QT, and they might do it this week, or they might say, we're going to do it next month, but it apparently is coming. Then they'll lay out their proposals for T-bills purchases in the short run and longer term, matching the duration of their portfolio to the overall curve. And they'll still have mortgage bond runoff in their portfolio because they do want to get down to treasuries only. Be interesting to see if they say anything about possibly selling mortgage holdings to try to get there faster. And so after 2 o'clock, when we get that decision, you can look at the chart for the expectations for what we're going to get for a December rate cut. Right now, about 84% view in terms of a rate cut, but if Jay Powell manages to be successful, that might come down even a little bit more as we await the government reopening, data, and an idea of exactly where the economy is.
Oh, you think the government's going to reopen? That's optimistic.
Well,
Michael McKee,
someday, we hope.
Thank you so much for joining us. I kid, of course. I think we all are optimistic that the government will eventually reopen. Don't miss our special coverage of the Fed decision kicking off at 1:30 p.m. New York time, aptly titled The Fed Decides. Check on what's going on in futures right now. It is really extraordinary what we're seeing in terms of the index levels. Futures are up another 0.25%. Yesterday we closed at 68.90, I believe. So we're very likely to eclipse 6,900 and get closer and closer to 7,000 today. You can see NASDAQ futures gaining even more than the S&P futures as those tech stocks are a heavier weight on the NASDAQ.
Yeah, I mean, we're close to having 3 companies in the S&P with market caps greater than $4 trillion, and one of them above $5 trillion. So that's remarkable. Some of the other movers that we are looking at, Verizon lost 7,000 phone subscribers in the quarter, a challenge for the firm's new CEO, Dan Schulman, who's only been on the job for a couple of weeks, but he laid out a very aggressive plan for Verizon going forward, hence the rally this morning.
CVS raised its 2025 profit guidance for a 3rd time this year as it sees improvement in its insurance business. It reported a $5.7 billion charge on one of its healthcare units.
And Booking Holdings reported a full-year travel outlook that topped estimates as average daily rates lure guests. Unchanged this morning, though, in the pre-market, but we will be speaking to the CEO of Booking Holdings, Glenn Fogel, in the next hour.
And we got some breaking news here on Morgan Stanley. The bank has agreed to buy Equity Zen, a trading platform for shares in private companies. It's the latest move by Wall Street to expand offerings for fast-growing startups, and the first deal under the Morgan Stanley CEO, I guess not new, but Ted Pick, is the newest. More on that deal next. This is Bloomberg Open Interest.
one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
At the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
All right, we have some breaking news on the Trump-Xi meeting. Apparently that will take place at 11 a.m. on Thursday in South Korea. Now, it's not clear to me if that's
I'm assuming that's South Korea time, which would be 10 p.m. tonight here in New York.
All right. So in any case, we're getting more on the TikTok of this meeting. And after, of course, President Trump mentioned Blackwell chips as possibly being in the trade talks, maybe for sale to the Chinese. This meeting is all that much more important.
That's already having its impact on markets, with NVIDIA now nearing $5 trillion. Let's turn back to one of the earnings this morning, though, Boeing. And the company announced a $4.9 billion accounting charge and delayed for the debut of its 77X jetliner. For more, we're joined by Sheila Kayalu, Jefferies Senior Equity Research Analyst. She has a buy rating on the stock with a $255 price target. Sheila, great to see you.
Thank you for having me.
And I know this charge was more than you and really the entirety of the street were expecting. So is this still a push forward, a path forward for Boeing, or is it more pain?
I thought these earnings were in line with what we expected. We had assumed about a $4 billion charge. They came in at 4.9, so about $900 million higher than we expected. And we had lowered our 26 free cash flow to around $3.5 billion. And the street's slowly come down over the last 45 days to that arena. So that's what we're anticipating. The 777X has an impact to free cash flow next year. But the results were in line, and I would say actually free cash flow core was about $400 million better. First positive free cash flow quarter in 2 years. So some momentum, but generally in line quarter.
So as you know, I often compare these shares to the shares in Airbus. And I always look at a 5-year window. It's just my default because the Bloomberg does that with the comp function. And I see over that period, Boeing has returned 50% and Airbus has returned 262%. Is this a situation where Boeing eventually catches up to Airbus? Are they, in this duopoly, always catching up to one another?
I think that means that Boeing has a lot of runway to go with its share price, right? Up to August this year, through August of this year, Boeing has delivered more planes than it did at all of 2024. They're stabilizing at 38 a month on the 737. They were only at 24 a month last year. On the 787, they're at 7, going to go up to 10. They were only at 3 to 5 last year. So they're improving on rates, and that's driving some of the positive momentum, which should help free cash flow. You deliver a plane on time, you receive, the funds for that, and you receive new orders, and the backlog continues to be strong.
By the way, ironic that their loss was 747, right? Which is their most iconic, in my opinion, their best commercial airliner, at least that I've flown on.
Maybe it was rounded intentionally.
I was going to say maybe the loss wasn't as bad, but they like tried to get it to 747 to.
I don't think you want to remind investors that you no longer make the greatest plane, commercial flyers have ever been on.
You are probably right.
I think it does go to show that President Trump has been a supporter of Boeing too, and so with that, with the trade deals, I think that's been supportive of Boeing's order book.
I was saying because also the FAA lifted its cap on 737 MAX production planes. How much of a difference is that?
During a shutdown, right? And that's the first. The cap was put in place in January 2024 with the Alaska incident. So now they're at 38, and they're allowed to go to 42 as of October. With that said, we do have 42 production a month in our estimates for next year, so that's in our numbers. But good news that the cap is lifted.
We were talking with Ed Ludlow about NVIDIA, and he pointed out that Jensen Huang has made his estimates without including China revenue, although President Trump is likely to talk about that with President Xi on Thursday at 11 a.m. South Korea local time. Kelly Ortberg, right now on CNBC, saying that he's very hopeful for China talks as well. What's at stake here for Boeing in these trade talks?
China at some point accounted for up to 20% of the order book. It's much lower than that now. So clearly, it's over the last 5-6 years, Airbus has been dominant in China. So that opens up a market. But again, Boeing's not relying on that with almost 6,000 aircraft in its order book. So they don't need China, but obviously it's incrementally positive.
Well, speaking of government relations and specifically defense for Boeing, they still have that contract dispute they haven't worked through yet with the workers in their St. Louis defense facility. How much of that is going to be a weigh on Boeing going forward if it doesn't get resolved soon?
It's 12 weeks into the strike, and the workers are about break even for what they're asking in wage increases. So we would assume that's resolved soon. And defense is finally turning a quarter. This is a business that was losing billions in free cash flow per year. So now we kind of estimate a net neutral starting in 2027. So the big watch items that turn the corner are still the 777X and defense, but 37 and 87 are going pretty well.
Cool. All right, Sheila, great having you here as usual. Really appreciate your time. Sheila Kailu of Jefferies. She covers the airlines there, and we call her whenever we need the intel. Breaking news now on Wall Street. Morgan Stanley is buying trading platform EquityZen as a part of its private markets push in the first big deal for the CEO, Ted Pick. Joining us now is Sridhar Natarajan, Bloomberg's chief Wall Street correspondent. And how important is this? I mean, especially at a time when there are fewer and fewer public assets for investors to buy.
Well, first off, welcome to the CEO deal-making club to Ted Pick. It is a deal where no real price has been announced. They haven't disclosed the terms of the deal, so fair to say it's probably a sub-$500 million deal. So it is a bit of a nibble for Morgan Stanley. This is not the main course. This is not the real deals that they want to pounce on. But it is strategically very important. When you look back at James Gorman's tenure at Morgan Stanley, that was bookended by two massive deal sprees. The first one, right before he became CEO, Smith Barney really launched the big Morgan Stanley wealth management juggernaut, and towards the end, the E-Trade and Eaton Vance deal. But the deal that often does not get talked about, but is extremely important inside Morgan Stanley, was the Solium deal. It was a stock plan administrator for for companies, where Morgan Stanley would go and make it their workplace channel to find employees who were getting these equity stock-based comp, bring them into their ecosystem. Similarly, you can look at the strategic importance of the deal. Do not look for the value and the size of the deal, but what it could do for Morgan Stanley in terms of entrenching itself in the private markets ecosystem, as you rightly pointed out, at a time when more and more companies are choosing to stay private for much longer. A lot of the deal making and a lot of the transactions are happening in their early stage before they hit the public markets, and that's where the banks have to find ways to make money, facilitate some of these transactions, at the same time also find people who can come into the Morgan Stanley system. A lot of the employees who want to trade on a marketplace like EquityZen will suddenly come into a lot of money. They need to invest that money, and that's where Morgan Stanley will show up with other arms of its business and say, you will stay within the Morgan Stanley sandpit. That's the goal here.
I would say, how much of this is just indicative of where wealth management, I guess for Morgan Stanley, but at all the banks is going, that they realize that they need offerings that look like something like private capital capital, whether it's bringing in this deal specifically with equities in or just having their own private capital offering.
Because you also have to see the read-through. Once you build these relationships with private companies at the early stage, you're also talking about follow-through activity in the investment banking pipeline. So it's the wealth management business that can also bring you a lot more investment banking business. And the wealth management business is a place where you're keen to grow assets. Investors are awarding consistent fee-based revenue making, and that comes from the wealth management business. So yes, it is extremely important. You can see that Jetfin, this head of the wealth management business at Morgan Stanley, is the one talking about this deal. And also down the road, several years later perhaps, but down the road, a possible CEO contender at Morgan Stanley because he's running a very important division.
Really interesting. Sri, thank you so much for bringing us this story. Excellent reporting from the team. That's Sri Natarajan. Thank you so much. All right, let's get a look at some of the movers that are on our radar this morning because we have had a lot of earnings already. Etsy sales topped estimates, but shares are down 6.4%. It's tapped its chief growth officer, Kruti Patel Goyal, as its next CEO.
And Kraft Heinz lowered its sales outlook as it prepares to split its business in two. It now expects 2025 organic net sales to be down 3% compared to last year, and the shares are taking a hit in an up market.
And Oreo maker, along with a lot of other goods like Ritz crackers, Mondelez cut its full-year outlook. It said that higher cocoa prices are squeezing margins and that it is a cautious consumer who will not pay up for chocolate. Shares are down nearly 5%.
Isn't chocolate recession-proof?
Apparently not.
Wow.
Maybe fancy chocolate is.
Maybe Oreos aren't recession-proof, but basic chocolate has to be.
I actually don't know what basic chocolate is if it's not like
well, I'm just
Oreos
saying, that's why, I mean, cocoa prices are going up,
right?
So, all right, let's talk about this right now with Bloomberg's managing editor for global business, Shelley Banjo. She joins us here on set, and obviously these are products that we all touch, eat, know, love, in some cases. So what's going on at Mondelez?
Yeah, I mean, both of them are facing, like you said,
Mondelez and Kraft Heinz.
Mondelez and Kraft Heinz are both facing, like what you said, which is higher input cost, coffee, food prices, all of those things. So taking those issues and having to address those, and then meanwhile a consumer that is stretched. So what's been interesting is that so far across other companies, industrials, transport, whatnot, we've been seeing a pretty positive outlook. You're starting to see some of that negativity drop in there with some of the consumer names now saying, well, maybe things aren't as good as we think they are.
But some of them have done okay. P&G had earnings the other week, and they said people are still paying up to get name brand razors. Insert, Matt comments about how sticky it is when you get the kind of razor you want. So what's the difference?
Same with Oreos, right? You're not going to buy the store brand Oreos.
I guess, maybe there are. Maybe in Oreos you'll buy a white label, but a razor you won't. I'm not really sure what does make the difference of these companies that are doing well in this environment and those that aren't.
Well, if you think about Kraft Heinz, for example, they have a sort of their own story to tell, which is they're splitting up into two companies. The name of the game right now is really, lowering investor expectations for what is happening at this company. They're going to break into two publicly traded companies in 2026. So they don't want to overpromise and underdeliver. They want to sort of reset everybody's expectations that, things aren't necessarily great, and then, bypass those expectations once they split off into two. Also, look at their customer base, the people who are buying things like Lunchables and Oreos and things like that. That is sometimes, can be, not always, but can be a lower end customer base. And that's the group of Americans right now that are suffering the worst.
That's not the problem isn't that Oreos are too fancy, it's that they're not fancy enough.
I see. Oh,
yes.
It's interesting also because these companies, Mondelez was created, Kraft Heinz was created during the wave of consolidation. As you've been coming on and talking to us about companies, we're in a cycle of deconsolidation. So both, I think, could be good examples. One is for sure. Shelley Banjo, great to have you on the program. Less than 4 minutes until the opening bell. Liz Ann Saunders of Charles Schwab joins us. She says the market may have gotten a bit ahead of itself in terms of forward rate cut assumptions. Remember, it's Fed Day.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
All right, rally on a record. We're headed towards S&P 7,000, moments away until the start of trading. I'm Matt Miller. This is Bloomberg Open Interest. Right now, futures on the S&P are up only 0.25%, but we continue to hit new record highs every day on pretty much every index. Yesterday, 68.90 was the close for the cash S&P settlement. The NASDAQ future is up 0.4%. Obviously, we have a ton of tech earnings today, plus very good news for NVIDIA. Down at the New York Stock Exchange, Israeli mapped in New York, ringing the opening bell. Not sure what they do, but I'm sure it's exciting and timely. And here, this is exciting. Garrett right now ringing the opening bell at the NASDAQ. GTX is the ticker. Over the last 5 years, the stock has almost quintupled. It's up 381%. Those investors have a reason to smile.
They certainly do. And will tech give us a reason to smile after the bell? How's that for a segue?
Good one, good one.
We're going to get a lot of the Mag 7 reporting in the next few days. Today, it is companies that account for $9 trillion worth of the $11 trillion that we're going to hear from today. So that's Microsoft, Alphabet, and Meta. All of them are up here at the start of trading. Can they hold on to that? And of course, you add on Apple and Amazon tomorrow, and that is a quarter of the market cap, Matt.
You're definitely happy if you own NVIDIA. You know, a question we ask all the time is, okay, you own NVIDIA, but would you buy it now, considering the run-up it's had? Well, it just continues to go higher. It is opening at a $5 trillion market cap. The share's trading for $207.88, up another 3.4%. This after President Trump said he'll discuss Blackwell chips, which he called super duper, with Chinese leader Xi Jinping. The CEO, Jensen Huang, expects sales now to top $500 billion in 2026. And as Ed Ludlow told us, that's without factoring in any Chinese sales at all. A big donut for China. So if those talks go well, the sky's the limit here. Wang also told Bloomberg he doesn't see artificial intelligence in a bubble.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
So Bloomberg Tech co-host Caroline Hyde joins us now, and that's really not news. I mean, that's NSS, right? Jensen Huang, obviously.
I have to explain NSS on your LinkedIn or on your X profiles later.
I mean, just check out NINSS on the Bloomberg terminal, and you'll understand. It would be news if he said they were in a bubble, but clearly Jensen Huang isn't going to say that.
And look, others have been saying maybe we're in a bubble. Look, Sam Altman himself has said he thinks we're in some sort of AI bubble. Bill Gates added to that chorus yesterday on other networks saying he thinks we're in an AI bubble. Some will be winners. Some will not be paying off for the amount that they're currently spending. But what we're seeing at the moment is that a few key companies are deemed the winners of this entire super cycle. NVIDIA, the main one, $5 trillion. It's up 50% year to date. It is therefore, thank you S&P 500 run, because it's making up a fifth of the entire gains of this year. $5 trillion is extraordinary considering it was only 4 months ago. It hit $4 trillion. But now we see the other players coming out, and the CapEx story is going to be so important. After the bell, you're going to hear from Alphabet. We know they raised last quarter to $85 billion per year in terms of capital expenditures. But that's going on things like NVIDIA chips. You're going to be hearing from Meta, which in itself is becoming a hyperscaler of choice in many ways. It's about compute, where is their capital expenditure going? And then you've got Microsoft, the juggernaut that Bloomberg Intelligence thinks is going to raise it all the way to $130 billion for their next fiscal year for capital expenditure. That's about the entire value of their OpenAI stake as well. But we're seeing just the amount of money flow in, because for now, the revenues are also rising. The money is being generated for these particular companies.
I mean, just looking at SPLC on NVIDIA, Microsoft
Supply
alone,
chain, folks, SPLC,
yes,
for those not lucky enough to have a terminal.
Okay, if you look at the supply chain for NVIDIA, a much better way to say it, Microsoft has 19% of NVIDIA's revenue. Wow. I mean, doesn't today also just underscores, yes, NVIDIA has all this promise, but it's concentrated. It's a few bets on just the hyperscalers that they'll keep spending.
And I think that is why what Jensen Huang on stage was really trying to show. The point is, he's doing deals everywhere. He's going into Europe. They're getting all these other neo clouds. Think of the Nebius deals that are being done. Well, Nebius gets its chips from NVIDIA, and they eventually then go to Microsoft, because Microsoft's buying extra cloud from other players because it just can't build enough itself. You're seeing that with Nscale in Europe. But think about the deals that have just been done with NVIDIA, trying to broaden its remit, showing that they're going to be in the world of 5G, 6G. They're going to be doing deals with Nokia. You've been hearing them do it with Deutsche Telekom in Germany for more data centers. He's really trying to show that, like, I am bigger than the sum of just these few hyperscalers. But you're right, at the moment, the revenue is super concentrated. But you can only build cloud with companies of certain scale and size, it feels like.
All right, it's a fascinating story that we'll continue to tell, I'm sure, for years, and we'll watch your program for it as well. Bloomberg Tech co-host Caroline Hyder, program kicks off at 11 a.m. Don't miss it, especially today. Let's bring in Charles Schwab, Chief Investment Strategist, Liz Ann Saunders. And Liz Ann, you know, we've been asking the question of people who already own these stocks, would you buy more today? Would you add to these stocks today? Do you think investors are?
I think recently, and maybe this is a good news, most of the speculative fervor and a lot of the buying interest actually had moved away from the Mag 7, the big mega cap leadership names, and gone into more, you know, esoteric micro cap, you know, quantum drones, the meme stocks. And that's where you really saw the speculative juices. That has rolled over a bit. You know, Goldman's quantum basket is down 25% from the October 15th high. And now only recently, I think you're seeing a shift of attention back into those mega cap names, maybe as a play on what look to be a series of fairly strong earnings to come. So I'd be a bit more worried if the aggressive buying had continued to be concentrated in those leadership names.
Liz, you and Kevin Gordon, the team, have been doing really excellent work about what's been performing. And it's a lot of the kind of junky stuff, like unprofitable tech, quantum computing. I know there was a little bit of the White House influence there. Retail, meme stocks. Is it troubling to you at all that some of these very low quality or speculative or risky type of equities are doing really well in this environment?
Well, it does suggest speculative froth. Troubling, not so much, because they don't represent large shares of the cap-weighted indexes. So, and given some of the rolling over we're seeing there, even in areas like gold, it suggests that you could see some rotations within those segments of the market by retail traders without it causing trouble for the overall market. So I think this market continues to be sort of two stories. You've got the market as measured by cap-weighted indexes, and you have everything else going on under the surface, not just within an index like the S&P, but more broadly. Even within the S&P, here's something fairly remarkable that's attests to just how much churn there is under the surface. First of all, yesterday was the weakest breadth for an up day in history. And that history only goes back to 1990, but in the history of having that statistics, the weakest breadth. Just since the April 8th closing low, when the S&P has obviously been on a tear at the index level, the average member within the S&P has had a 16% drawdown. In the NASDAQ, the average member just since April 8th has had a 35% drawdown. So the fuller story is told under the surface of these indexes in terms of leadership and rotations and where there's sort of speculative excess and maybe where there's opportunity.
Danny points out there were only 104 advancers on the S&P. To your point, Liz Ann, obviously that means there are 400 losers yesterday, and we still closed higher at 68.90. So it's frothy. So there's concentration risk. Still, financial conditions seem pretty loose. I mean, by that measure, and we have growth at around 3%, right? It was more last quarter. Plus inflation is more than 3%. Does this really seem like an environment into which the Fed should be cutting?
Well, I think that, it's a lock they cut today. That shouldn't come as a surprise. But I have to think that Powell is going to keep the door open to being in some version of pause mode. This time would be a bit different relative to a year ago when the Fed ultimately paused, in part because of the, mini riot in the bond market, where the 10-year yield was moving in the complete opposite direction of what the Fed was doing with Fed funds rate. So that was a message from the bond market last year. And then the results of the election, meaning the Fed wanted to just see what policy was going to look like. Now I think a pause, to your point, Matt, if they do it, or at least don't telegraph, hey, we're on a glide path here, expect more cuts to come, is driven, yes, of course, by uncertainty, but also the lack of government-issued data, which, a Fed in data dependency mode, to your point, inflation's still running above target. It's hard to make a case with broad financial conditions as loose as they are for a continuation of rate cuts on some sort of preset glide path.
Well, Liz, if that prior bond volatility was telling a certain story, what is the current lack of volatility saying? The MOVE index, the VIX index for the Treasury market is at a 4-year low, despite what you're saying, that we're flying blind, we don't have data, there's uncertainty. What do you make of that?
So I think, it's hard to judge exactly what is moving the 10-year, but I think the move down to sub 4% reflects maybe a bit of a cloudier economic outlook. I don't know that it reflects some sign that inflation is set to come down. I think there's much more uncertainty still on the inflation side of things, but I think it does reflect maybe what you were picking up when we were getting labor market data of weakness in labor and some concern of slowing growth, and I think that's reflected in bond yields. But it's that relative calm in the bond market, and this is often not discussed, that I think is a big part of the reason why the equity market, in a broad sense, has done well. There is still that connective tissue between what's going on from a volatility and where rates are, longer-term interest rates, the 10-year being the yield most closely aligned with what the equity market does. And that's kind of an under-discussed story, that the calm and sub 4% on the 10-year is part of the reason for the strength in the equity market.
Well, it's calm in the bond market, anything but for these tech stocks. Liz, thank you so much for joining us this morning. Charles Schwab, Chief Investment Strategist, Liz Ann Saunders. And let's just look at NVIDIA at the moment, because we are at $5.1 trillion in market cap for this behemoth, the first stock to top $5 trillion. I should point out, it is not just them. It is also an Apple that's trading above $4 trillion today. It's Microsoft trading above $4 trillion. So the first time we have 3 companies that have exceeded that benchmark, Matt.
All right, it's pretty jaw-dropping, the levels here, although maybe that's just because I've seen much lower levels in my lifetime. Maybe for the kids, this is the new normal. I hope so. Up next, energy equipment sales. Keep moving, keep the momentum moving for CAT. More on that stock next, which has been crushing it. You can see up 60% year to date. This is Bloomberg Open Interest.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall, covering President Trump in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Let's get you some top calls. Some of the analyst action that we are watching this morning. First up, Wayfair came out with a third quarter beat. Shares falling, though, down 1.4%. Gordon Haskett lifted its rating to a buy. Bank of America also upgraded the furniture retailer, saying it's outpacing a flat industry thanks to logistics and loyalty. Jefferies, though, flagged the company's heavy AI focus as a growth driver. Next up, Bloom Energy. They are gaining 12.6% after beating third quarter estimates. Analysts called it a solid beat. Evercore and JP Morgan both hiked price targets. They cited Bloom's manufacturing capacity and rising AI-driven power demand as major tailwinds. Finally, chip maker Teradyne hitting highs after reporting a strong third quarter beat and outlook well ahead of expectations. Those shares also up a lot of huge movers today. JP Morgan highlighting the highest revenue since 2021. Stifel says the outlook even topped their bullish estimates, Matt.
All right, so some upgrades there and big gains for Teradyne. Let's turn back to this morning's earnings, what we know so far. Caterpillar topping estimates as energy equipment sales soared in the third quarter. Revenue jumped by 10%, led by its energy and transportation unit, which is its fastest growing segment in the business. And joining us now is Chris Ciolino. He covers industrials for Bloomberg Intelligence. Chris, what do you make of CAT and what do you make of this sector? Is it getting expensive at this point?
Yeah, I mean, certainly valuations are creeping up there, but, despite pretty lofty expectations coming into the print and even a bigger tariff headwind, these results were really quite strong, really driven by better than expected volume across all three of their core businesses. But again, to your point, the strength continues to be in the energy and transportation unit. But I think what's even more encouraging here is that we saw orders accelerate in the quarter and backlog improved sequentially again to another record level. So we're at $40 billion here. That's going to provide above average earnings visibility as we think about next year.
One of the big strengths, Chris, was its power generation equipment, specifically because it's being used to power data centers. Is Caterpillar now an AI company, Chris?
I think a lot of people like to think so. I mean, at the end of the day, this is still going to be a cyclical company. But yes, energy and transportation, and particularly that power gen business, continues to be the fastest growing part of the portfolio, very margin accretive. And I think there's probably a very significant long runway here for them to continue to grow that business. Right now, power gen's really only, call it 12, 15% of the overall portfolio. I think there's significant opportunity here long term to expand that.
I mean, power, the grid, U.S. infrastructure, desperately in need of ever more investment. Is this entire sector really poised for continued growth?
I think so. I mean, at least in the near to intermediate term, I mean, the backlogs extend multiple years here. They're bringing on a lot of capacity, particularly with their large engines. That's going to increase by more than 125% through 2028. You'll see that come on incrementally next year, but I think 2027 is when you really see that step change. So I think you're looking at least the next, 3+ years of pretty good visibility in that business.
All right, Chris, thanks very much for joining us. Chris Giuliano there of Bloomberg Intelligence, talking about the gains we see on, for Caterpillar and on the S&P 500 Industrials Index, which is now trading at 28 times trailing earnings. Coming up, CVS boosts its full-year profit outlook despite taking a nearly $6 billion charge, and the shares rise more than 3%. More on that next with Katie Greifeld. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supplies. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in the stock market here. 20 minutes into the session, S&P 500 climbing to 69.14. So it just continues this upward march. I'm not going to say melt up, but I'm going to guess some people will use those words. NASDAQ 100 gaining 0.5% to 26,000. We do have the Dow Jones Industrial Average here. We're headed for Dow 50,000, kids, which is pretty amazing. Right now, NVIDIA up 4.6%, so well over that $5 trillion market cap. Microsoft going the other way after a rally yesterday. Microsoft yesterday passed through $4 trillion. Again, Alphabet shares right now up and Meta down of its value. And CVS, we're going to hear about right now from KG. DB?
What a great setup. Yes, indeed, CVS getting a boost thanks to its Aetna business. The company's CEO, David Joyner, telling Bloomberg, quote, the multi-year Aetna recovery is in full swing. And you said it, Matt, here with more on her interview is the co-host of Bloomberg's The Close, Katie Greifeld. Katie, great to have you on here, a homecoming, if you will. So, okay, a boost to the profit outlook, but they did have this big charge. I guess it's the boost that's showing through with the earnings.
Well, that was kind of the debate that you saw in the pre-market, because initially these headlines came out at 6:30 and shares sank as traders sort of digested that impairment charge. But as you really dig into the details here, probably the positives maybe outweigh the negatives a little bit. You take a look at them raising their 2025 profit guidance. That was actually the third time this year that they've actually raised their outlook. They also beat when it comes to the analyst expectations in the quarter that was. And again, we spoke to CEO David Joyner, who just passed his one-year mark as CEO, and he said, as you mentioned, that a big driver of that was what you were seeing with Aetna. You remember back to 2024, CVS shares were down by about 43%, and a lot of that was that Aetna and other insurers, they really struggled to price their plans properly. That was a big reason why Joyner was brought into this role. So one of his mandates was to basically get a grip on medical costs and other features there, other operational improvements in the Aetna business, and it looks like it's bearing fruit.
Yeah, cost cutting is one of the things. If I go through the street wrap on the Bloomberg and look at what a bunch of analysts are saying, almost all of whom are either outperform or overweight. So they're all buy on this stock. Cost cuts is one of the other things they mentioned in terms of, obviously the top line has been good. All three segments are doing well, but they're cutting costs at the same time.
Exactly, and they're making hard decisions too, and that's what where it really wraps into Oak Street. So for those who weren't familiar, Oak Street, that's their division that's basically primary care clinics for seniors, and they bought this business for more than $10 billion back in 2023, but they made the decision to basically write this down. CEO David Joyner said to me that as a result of the slowing clinic growth and the fact that we're closing 16 clinics, we had to right-size the value of the asset. So we took that $5.7 billion impairment charge. So it's going to close those 16 clinics by the end of February. It doesn't plan to open any in 2026. So again, there's that real focus on just right-sizing overall, cutting costs, and improving really important parts of CVS, which obviously include Aetna.
You can do this when you're a new CEO, right? You can come in and throw everything out, including the kitchen sink, and investors like that clean slate approach. So this could be a positive really too.
Yeah, I mean, take a look at the stock in 2025. It's really breathtaking. I had to double check this a few times. Up 95% in 2025. That comes off of 3 straight years of declines, and like I mentioned, down more than 40% in 2024. So the expectations for this company were so beaten down, and when you come in with a big mandate and you act upon it, you can see shareholders reacting to that.
All right, Katie, thank you very much. That is Bloomberg's Katie Greifeld. Of course, pay attention to The Close. She'll have more on her interview with the CVS CEO. Coming up in the next hour here on Open Interest, KKR's Henry McVeigh will be joining us at the top of the hour to talk markets, the Fed, and more. It is a Fed decision day alongside all those big tech earnings. We'll also get Booking Holdings CEO Glenn Fogel on the strength in the travel sector, though U.S. consumers are paying less on ticket prices. We'll also speak with Kanye Anderson's Al Rabel on his new acquisition of outpatient properties. You are watching Bloomberg Open Interest on a day when NVIDIA hits $5 trillion in market cap.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. One of the most powerful Atlantic hurricanes in history, Melissa, has been downgraded to a Category 2 after making landfall in Cuba this morning. Homes are reported flooded, streets littered with debris. The BBC's Will Vernon.
750,000 people have been evacuated to temporary shelters across the country, with entire provinces switched off from the power grid. Right in the path of the hurricane is Santiago de Cuba, the island's second biggest city.
Melissa was a Category 5 storm when it slammed into Jamaica yesterday. WNBA player Tina Charles is still sheltering in place there.
About 3/4 of the island is devastated, underwater, especially on the western side. Communications have been crippled. You know, there's families that lost their home, everything that they had.
Officials in Haiti say at least 10 people were killed there in flooding from the storm. In Gaza, they're cleaning up after Israel attacked multiple targets overnight. Linda Gradstein reports from Jerusalem.
The Israeli army issued a statement Wednesday that the ceasefire is once again in effect after a series of Israeli airstrikes Tuesday and early Wednesday. Those airstrikes came after what Israel called a series of Hamas violations of the ceasefire brokered by President Trump earlier this month. The president backed the Israeli response after an army reservist was killed in southern Gaza.
Hospital officials in Gaza say Israel's strikes killed 104 people. It's day 29 of the government shutdown. California is among more than half of U.S. states suing the Trump administration to try to stop SNAP benefits from running out this weekend. Governor Gavin Newsom finds it ironic.
The Senate's going to be having lunch today. Lunch to discuss cuts to food programs. Hope they enjoy their lunch.
A federal judge has disqualified the top federal prosecutor in Los Angeles.
The judge ruled the Trump administration unlawfully bent the rules when it named Bill Asaley acting U.S. attorney at the end of July. The judge says Asaley was not next in line to assume that position, so he can no longer participate in active prosecutions. Two other acting U.S. attorneys, Alina Habba of New Jersey and Sigal Chattah of Nevada, have been disqualified for similar reasons. The appointment of Lindsay Halligan as acting U.S. attorney of Virginia is also being challenged. Michael Wallace, CBS News.
Just in, dictionary.com's word of the year. It's that number kids have been using to torment their parents and teachers endlessly.
6, and then they all go 7.
Yep, it's that playfully absurd term, 6-7, slang for so-so or whatever else you'd like it to mean. Dow is up 242. This is CBS News. English drugstores can now dispense free emergency contraception.
The morning after pill is already available at no cost to women here, but until now they've had to book an appointment with their doctor to get it.
This is going to make it more doable.
Dr. Sue Mann of Britain's National Health Service. It's part of a wider program taking pressure off NHS doctors by giving pharmacists more responsibilities. Adults who've just been prescribed antidepressants will also be able to talk to pharmacists about their medication. Vicki Barker, CBS News, London.
Some rare items from the Titanic are expected to bring in a hefty sum when they hit the auction block next month. Among them, a tattered first-class passenger list. It names Frederick Sutton of New Jersey. After holding on to some of his recovered belongings for more than a century, surviving family members are selling them. They include a note from the White Star Line informing them they'd have to buy a first-class ticket for the transport of his corpse, which was never recovered. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Local Podcast, and that's where you'll find us. Scarlett Fu and Paul Sweeney with you here with the Bloomberg Intelligence program. We've got green on the screen. It is Fed Day, some big tech earnings after the close as well. We'll stay on top of that. Michael McKee, Bloomberg International Economics and Policy Correspondent. He's going to join us. He's down there in Washington, D.C. We'll get a preview of the Fed meeting this afternoon. Savaste Balafas, CEO at Goldvest Advisory. Get thoughts on the markets going forward. Chris Ciolino, Bloomberg Intelligence Analyst. He's going to join us. Caterpillar reported some results there. They had some good numbers there, so we'll break it down with Mr. Ciolino. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. He's going to break down some Boeing earnings. They took a big charge on the 777 plane, a problem there, but as George has always told us, it's all about the deliveries and the number of deliveries of the 737 MAX, so hopefully that continues to ramp up. So we got a lot going on in the next couple of hours. Let's kick it off. John Tucker in a Bloomberg Business Flash.
All right, guys, good morning. This Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Well, after the record close yesterday, stocks pushing higher once again. And we are data dependent. The data we are getting, pending home sales. This is on a month-over-month basis. The expectation for a gain of 1.2%, coming in dead flat, 0 Right now, the S&P 500, 20 points higher. That's up 0.3%, 69.11 on the index. The Dow, more records there, up 240 points. The NASDAQ 100, records again, up 128 points. The Fed widely expected to cut 25 basis points today. After the close, Meta, Microsoft, Alphabet reporting earnings. You know, it is hard to recall a miss of this degree, but Fiserv shares right now, this is a stunner, 43% lower right now. This is the payments processor company slashing their adjusted earnings per share guidance for the full year. Worst performing stock. No surprise there on the S&P 500. Meantime, Alicia Levine at BNY Mellon sees the stock market pushing higher still.
It's now taken on a life of its own as the Fed cuts into increased earnings estimates and an economy that is not just stabilizing, but growth estimates are ticking up higher for next year. And you're in this you're in a liquid situation. And so the direction of travel is up. You know, it's an everything rally here.
You know, Uncle Herschel may be back in the rocking chair. I didn't know the guy had a name, actually, but the damage was done at Cracker Barrel. Shares down again today, close to 3% lower, 2 months after they changed the logo and then reversed the move. I think like a week later, shares of the restaurant chain keep falling day after day. Total wipeout this year, about 32%. And some investors now are clamoring for the firing of the CEO.
Boy, in the Bloomberg News reporting, they have a chart of just kind of weekly traffic down high single digits, low double digits every week.
Do we attribute this to the logo change? Really?
And so the whole woke thing, the redesigning the stores, getting away from the roots, it is brutal.
And all because, and this is what we learned earlier this week, because they want to make the logo easier to read when you're driving on the highway.
I was hoping they'd put Stefan in the rocking chair, but I guess that wouldn't have done it. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett Ball.
Country boy breakfast. Get the country ham, the biscuits and gravy. Best thing ever.
That's definitely not
It's like
in
heart
Manhattan.
attack food.
No, you got to go out Route 78 to West Jersey to get that. So, which I've done, by the way. So make no mistake.
I'm thinking about that as I look at my egg whites.
Yes, as you look at your egg whites. All right, Market Drivers is brought to you by Van Eck. Van Eck marks its 70th anniversary this year with a legacy defined by forward-thinking strategies, reliance through market cycles, and an enduring commitment to clients. Visit vaneck.com. Stocks on the move. Let's go to Lisa Mateo. What do you got for us today?
All right, got to start with NVIDIA, right? Ticker NVDA. Their shares have been up more than 4%. Now the world's first $5 trillion public company. It has to do with their Blackwell chips, a big portion of it. If you remember, like there were months ago, President Trump said he'd consider allowing the company to export the downgraded version of them to China. Well, now this is just ahead of that meeting he has with Xi Jinping. He says, quote, we'll be speaking about Blackwell. So it hinted there. NVIDIA also has that GTC event in DC. It announced a few things like a number of new partnerships with companies like Uber, Palantir, CrowdStrike. It said it's taking a $1 billion equity stake in Nokia. And CEO Jensen Huang, he actually said something interesting. He said there's no AI bubble. He's not concerned about it because their AI models, they're powerful enough that customers are going to pay for them.
He says it.
Yeah, of course. Let's listen to the godfather of AI, as Dan Ives always says. Exactly. Let's talk about Fiserv. Just looking at the volume, 6,000% above what it usually trades at this time of the day.
Yeah, it's crazy. I mean, they tumbled more than 45% this morning. And so it's fintech company Pfizer, yeah. So payment processing, think digital banking solutions. They slashed their outlook for the full year. 3% decline in revenue in its financial solutions segment. Its CEO, Mike Lyons, even says he knows the performance is not where they want it to be and not where the stakeholders expect it to be. And they kind of shook things up. They said it's overhauling their top leadership committee. So they're promoting their chief operating officer to be co-president. They announced a few board changes as well, a few board additions, and the stock has fallen like 39% this year through Tuesday.
Wow, that's brutal. So I'm just looking at like a comp here, SoFi. That stock hitting a 52-week high earlier today. So just tale of two
Goes to show
fintechs.
you.
Yep. All right, one more.
All right, got to hit Caterpillar. CAT up more than 10%. Higher third quarter revenue. The interesting thing is that it really got a boost from its energy and transportation business, more so than the business that makes the heavy duty equipment for construction and mining. And that's because of rising demand for equipment that's needed to fuel AI data centers. So that division, their energy and transportation, they provide battery storage, backup generators for industries. It's been Caterpillar's fastest growing segment, so keep an eye on it. As far as tariffs, they did say they expect a record $650 million to $800 million in tariff costs in the fourth quarter.
And I feel like we need to give a shout out to Bloomberg News, which talked about this, about how Caterpillar is going to get a big boost from this AI tailwind. And it was maybe another way to play the AI story, the less obvious way.
Yeah, I didn't even see that coming. I mean, good for them. I mean, it seems like there's a lot of derivative plays on AI these days. Lisa Mateo, thank you so much. We appreciate that. Lisa Mateo does everything for Bloomberg. I'll just leave it at that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Michael McKee down in D.C. The Fed meeting today. We're going to get a 2 p.m. statement. 2:30 will be the press conference. Bloomberg's coverage, simulcast radio and TV with Tom Keene and John Farrell, starts at 1:30 p.m. Wall Street time. Mike, you're down there in D.C., 25 basis points. I think the market's kind of baking into the expectations for today. But as usual, it's kind of in the commentary and the tone we hear from Fed Chair Jay Powell. What are you going to be listening for?
Well, I'm going to be looking to see if he says anything that gives people a hint about December, because that's what's going to be on the mind of traders when we get to 2:01 p.m. this afternoon, since the Fed's not expected to do a whole lot, except perhaps announce the end of QT and the housekeeping that goes along with that. But I got to say, Paul, you guys in AI, Ed Ludlow's here in Washington, and he pointed out to me this morning that I get 2 hours of fame on TV this afternoon between 2 and 4 o'clock, and then all the big tech companies start reporting earnings at 4. And it used to be that the Fed mattered, but right now...
Maybe not so much, especially on a day like today where everyone knows that the 25 basis point rate cut is baked in. One thing that I keep reading about, Mike, is everyone saying that Powell will frame this rate cut of 25 basis points and the potential announcement of the end of QT as risk management moves. What does that mean?
Well, the Fed is looking at both sides of its mandate, and it is noting that inflation is still rising, and they think that unemployment is going to continue to rise, even though we're not getting data on that now that would confirm that. And so there are risks on both sides of the mandate, but they have to figure out which one is more likely to happen, and they're betting that they're managing the risk of unemployment shooting up instead of managing the risk of inflation, because they believe inflation caused by tariffs will go away fairly rapidly.
So, Michael, so what do we think the cadence is going to be here for the Fed in terms of additional rate cuts down the line?
Well, that's the unknown here, and in large part because of two things. One, we don't have any data to give us an idea of where the economy is, basically. And two, we don't know what the president is going to do in terms of tariffs and foreign policy, trade barriers and things like that. I mean, you just look at today, the president is going to be meeting at 10 o'clock tonight. It'll be tomorrow in Seoul, but 10 o'clock tonight, he's going to be meeting with Xi Jinping, and they'll be talking about China tariffs. And that could change the whole narrative in terms of what things might cost down the road. So it's very hard for the Fed at this point to put any kind of fine point on what their policies and their strategies are going to be, and without actually coming out and begging the markets not to pay attention to what they're doing. Essentially, Powell will say, you know, wait till we get close to the meetings, because we don't really have any basis to make judgments right now.
So we know that there's going to be dissents. Unanimous decisions are a thing of the past now. Stephen Myron probably wants 50 basis points, and we're hearing that Mickey Bowman, another Fed governor, wants to keep shrinking the balance sheet. So where is the tension then in today's decision and press conference if we know there's going to be dissents already?
Yeah, there's not going to be a whole lot of tension. We expect Myron will do as the president has demanded and dissent in favor of a 50 basis point cut. The Mickey Bowman question on the balance sheet's a little more complicated in that is there much point in a dissent unless you're still campaigning for Fed chair. I mean, it isn't the kind of issue that would make a big difference here. And also, we're seeing some evidence that maybe the Fed has gotten to the point where they could have market disruptions if they continue lowering the balance sheet. And so I'm not sure we get that from her. Maybe the one thing that you could look for is if there's a dissent in terms of the Fed funds rate on the other side. Yep. If somebody dissents because they don't want to cut, maybe Schmidt of Kansas City would suggest that, or even Alberto Musalem of St. Louis.
Mike, thanks so much for joining us. Really appreciate it. Michael McKee, International Economics and Policy Correspondent for Bloomberg Radio and Television. I'll tell you, a red headline just crossed the Bloomberg terminal that is huge in my world of media. John Malone to step down as Liberty Media, Liberty Global chair. He is 84 years old, and he is the original cable cowboy out there who wired this whole thing. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And this for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/ I'm going to guess that's /Bloomberg. Right now, the S&P 500, 21 points higher. That's up 0.3% at 6912 on the index. The Dow Jones Industrial Average of 235 points. That's up 0.5%. NASDAQ 100, 140 points higher. That is up 0.5%. So, yes, records all around. And if you're keeping score, it's now $5.145 trillion with a T dollars. Yeah. NVIDIA, first company on the planet to push through the $5 trillion mark. Also, I just wanted to check the rich go on the Bloomberg. Jensen Huang, the CEO.
Oh, yeah.
He's moving up. He's now the 9th richest human. We did get data at the top of the hour. Wasn't great. Pending sales of existing U.S. homes stalling in September. 0.0 on a month-over-month basis suggests maybe anxiety about the job market, keeping buyers sidelined. And also worth repeating, what did you call him? The cable cowboy.
Yep.
John Malone, 84 years old, stepping down as chair of Liberty Media and Liberty Global. So, I mean, 84, it's like, come on.
There may be, if I go back over the last 30, 40 years, there may not be anybody who's paid more fees to Wall Street than John Malone, and there's nobody who's paid less taxes.
But did he get his money's worth for those fees?
Yeah, good point.
5 of the 11 major industries in the S&P 500, they're higher right now, led by information technology as we get earnings after the close from Microsoft, Meta, and Alphabet. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you so much, John Tucker, Paul Sweeney, and Scarlett Fu here on Bloomberg Intelligence. We're streaming live on YouTube, and we have 3 Mag 7 names reporting today, 2 tomorrow. The outlier, of course, is NVIDIA, which doesn't report for another couple of weeks. It's on a different cycle entirely, it feels like. Nevertheless, you look at NVIDIA shares, record high, and also its market cap now topping $5 trillion. The CEO, Jensen Huang, swears that we are not in an AI bubble. Do we believe him? The market seems to. Let's bring in our next guest. She is Savasti Balafas. She is CEO of Goldvest Advisory, which has about $720 million of assets under management. Savasti, what is your concern when you look at the stock market? Because investors seem to be unfazed by any kind of bad news, whether it's the ongoing government shutdown, the lack of data, the signs that inflation is not going away. The list goes on.
It's true. All of those things are true, and I'm concerned about all of them as well. I think the main thing, though, that I think about is the narrowness of this market movement. Actually, yesterday, we saw the least breadth we've had with so many more stocks going down versus up. Of course, NVIDIA leading the way. But that's it. I see the market becoming more fragile, more concentrated to AI. So if we're in a bubble or not, I don't think we know just yet. Time will tell, but what we do know is that the market is becoming more fragile. So concentration risk is something that I worry about for my clients.
How about the earnings we're getting? As Scarlett said, we're going to get a lot of earnings. We're right smack in the middle of earnings season. Some tech earnings coming up over the next couple of days. Is the earnings growth we're seeing out there, is that enough to support this market, do you think?
It certainly has been. I mean, that plus reduction in interest rates, which we expect, I think absolutely is enough. I mean, at the same time, we always have to think about the consumer. And we've started hearing more about layoffs, Amazon layoffs, Target layoffs. We've seen that. So the consumer is in focus, but earnings have been improving or continuing to grow very impressively. And the interest rates are a tailwind. So I think that's enough to keep things moving.
Earnings are improving, except when you get a glaring example of a company that just misses in a big way. We were hearing about Fiserv a little bit earlier, the payments processor, slashing its full-year outlook. Analysts are saying things like, this was a complete reset. It was difficult to comprehend. When there is a miss of that magnitude, Savasti, what does that mean for investors who have, up until now, looked at everything as the glass half full?
So I think what's important, though, is in going back to that breadth that we were talking about, there's high expectations in the for companies, and there's high expectations in earnings. So when a company misses, and Fiserv, that was dramatic. I mean, it's a down 40% move now. So they have some trouble at the company going on, but I think that expectations are so high. So if we do have companies that miss for one reason or another, you're going to see a pullback in that stock. And frankly, if you start seeing misses, I don't expect this, but if you start seeing misses or less than expected positive growth in the tech earnings, that's going to have an impact on the whole market.
So we're going to hear from the Federal Reserve this afternoon. What do you expect? How important is it to kind of your thesis about being invested in these markets?
So what we expect, I think we're in line with everyone else, 25 basis points baked in at this point. Of course, we're going to be listening for commentary going into December, commentary on QT, and if that is ending or not, how much more liquidity will we see? But the other part of this is, frankly, we're going to have a new Fed chair coming up in May. And so I think that tailwind on interest rates will be there. Frankly, it's a concern. Like if that changes for one reason or another, because inflation is higher than expected, if there's a more cautious tone, that's where I think we see the market pull back on interest rates, but we don't expect that. Cut today, probably a cut in December, and then a few months later, we're going to have a new chair that I think is going to be more dovish as well.
Even if there is a more cautious tone, does that even matter at this point? We're going to get a makeover of the Fed board, the policymakers overall, regardless of what the data is showing now and how Jay Powell frames the tension between the dual mandates.
I agree with you. I think it will spook the markets, though. We're bound. We expect a correction, right? So even if we're not in an AI bubble right now and expect a market crash, a correction is absolutely expected, frankly. So I think any change in tone on rates could cause that pullback, that 10 to 20%, which would be normal, and we could see it. So that's one thing that could cause it.
Outside of the big tech stocks that have been leading the market, do you see value in other places in this market?
Yes, absolutely. I mean, and I mentioned concentration earlier. So yes, we have exposure to the big tech. We're going to continue with that exposure. At the same time, what are some areas of the market that maybe are unloved? Energy sector, MLPs, for example. There's one particular company that we're looking at that's a pipeline company. There's a lot of excitement, and even more so with some of the deals that were happening in South Korea, talking about nuclear and energy infrastructure build out. There's that happening at the same time. There are pipeline companies that I think will see volumes increase because of our energy usage. So there are a couple of names there that pay a very hefty dividend. We'll have lower volatility if we do have a market correction. So we get paid to be in some of those sectors. So we're diversifying our tech exposure for sure.
Okay, Sevesti, thank you so much. We really appreciate it. Sevesti Balafas, she's the Chief Executive Officer for Gold Vest Advisory, giving us some of these thoughts on these markets. And today we got a lot of earnings, and we've got a lot of Fed talk coming up this afternoon. One of the earnings is out there is Caterpillar. Our good friends at Cat. The stock's up 13% today, 52-week high. I think the market likes what they heard from Caterpillar. Let's bring in Chris Ciolino. He covers all those big industrial companies for Bloomberg Intelligence. Chris, talk to us about Cat. What did we hear from them today?
It was a great quarter. Despite pretty elevated expectations coming into the print, a bigger tariff headwind, Cat really delivered very solid 3Q results. It was really driven by higher volumes across all three of their core businesses, with particular strength in energy and transportation again. But I think, one of the more encouraging signs that we took away from the results this morning were that orders accelerated here in the quarter. And we also saw backlog improve sequentially to a record $40 billion. So we think we see, above average production and earnings visibility as we begin to think about next year.
Did the company say a lot about the power producing equipment, including turbines and generators, that have investors excited about it being kind of a derivative play to the AI story?
Absolutely. So, we continue to hear more and more about AI and data centers and Cat's exposure there. Today, power gen's probably, roughly 30% of the energy and transportation business, roughly, 15% of the overall enterprise. But it continues to be the fastest growing part of the portfolio. They're bringing on a lot of capacity here over these next 3 years. I think you'll really begin to see a step change as we move into 2027, particularly on the large engine side. So there is more of a focus and investment on the energy and transportation business, and it has become, the biggest part of their portfolio.
Wow. Are there other companies, or let me put it this way, who does CAT compete with in that segment of the business?
Yeah, so there's a number of different competitors, and it really breaks down on relative by size on some of the gen sets. Cummins is a big one, Siemens Energy, and then you also have a few other European and Asian players. But this is certainly a market that's growing pretty exponentially here. Backlogs extend several years, so we think we have pretty good visibility at least through the next 3 years.
Does this part of the business mean that Caterpillar will need to rely more on domestic market opportunities as opposed to global market opportunities?
So their footprint is the largest. Their energy and transportation footprint is the largest in North America. But I think the opportunity is global. They are a large global producer. That they serve essentially almost all markets around the world. I think even particularly within energy and transportation, it's like something like 100 different countries. So while I think the immediate near-term excitement is more focused here in North America, I do think longer term there's an opportunity international as well.
What's the company saying about the impact, if any, on tariffs on their business now and going forward?
Yeah, so tariffs were actually a much bigger headwind than we anticipated in the quarter, and even CAT. I think it kind of shook out somewhere around a $600 million headwind in 3Q, but margins were better than expected, really pretty remarkably resilient despite these price cost headwinds. 4Q will actually see a step up in the tariff costs. And then as we think about next year, CAT's really been kind of hesitant to pull the pricing lever on a lot of tariffs thus far. We think that's more of an opportunity for them here in the near term to gain some market share. So as we think about 2026, it'll be interesting to see, do they continue to offset through more cost and productivity efficiencies, or do they lean into pricing a little bit more? But tariffs will step up here in the near term. And then, 2026, it still remains to be seen, but I'd expect the demand backdrop to improve. So they certainly should have the opportunity to push pricing a little bit more aggressively next year.
Wow, $600 million is no small change when it comes to tariff impact.
These companies are finding margin improvement in other areas, I guess. It's really amazing.
All right. Thank you so much for speaking with us. Christopher Ciolino is Bloomberg Intelligence Senior U.S. Machinery Analyst on Caterpillar's earnings, and the stock right now up about 13%, trading at $593.50.
All-time high.
All-time high.
Yeah.
Who says there's no bubble in the stock market? There's no bubble in the stock market, right?
Well, here's a derivative AI play. Caterpillar. Yeah. Caterpillar. I mean, we saw that guy. First, the utilities. I'm like, okay, I get it, maybe.
The
you got to dig up the ground to make a data center.
The ground to make the data centers, and I mean, who makes shovels? Maybe I could buy a shovel company. I don't know. So, anyway, it's a good day for Caterpillar. Stock's up 13% today on the back of some solid earnings. All right, we're gonna have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when we are powering through more records. The S&P 500 is 20 points higher right now, 69.11 on the index, and that is up right now 0.3%. Dow Jones Industrial Average up 0.5%, 237 points higher, 47,942. NASDAQ 100, another record there of 145 points. That is a rise of 0.6% at 26,158 points right now. And in the S&P 500, you have 6 of the 11 major industry groups in the S&P 500. They are higher right now. As far as treasuries, ahead of the Fed meeting, the decision actually at 2 o'clock Eastern, the more policy reactive 2-year is up a basis point, 3.5%. The 10-year yield right now is 1 basis point higher at just under 4, 3.99. And after that disastrous results of Fiserv shares, down 41%. That is the worst performing stock right now in the S&P 500. You just touched on Cat's results. Caterpillar shares up 13.5%. And NVIDIA powering through the $5 trillion mark. Right now, those shares up 5.8%. I love this story. It was in the Washington Post. You know, several million people a day call the Social Security office and try to get a live person. The average wait time, 6 to 9 minutes.
I thought you were going to say hours.
You think that's good. Something weird is happening. According to the Post, people are posting online how they like the instrumental music that plays on hold. So they tracked down the musician behind the hold music, 54-year-old David Alessio of East Harlem. The song has a title, Throw Yourself in Front of It. He put it online, offered it to anybody who would pay the licensing fee, and now his music is heard by millions of people on hold. We check the markets for
now
you.
I want to hear it.
Yeah, well, when you go on Social Security, you have to call them, then, you know, you'll be set.
The fact that they have a telephone number is already impressive. It can be very difficult to find a telephone number.
It is. And we have an ad that I read occasionally that has a telephone number in the context. I'm like, really?
Yeah, we'll call it, and you can listen to the
People
music.
of a certain generation, present company included, do like calling as opposed to, you know, just tweeting at people or sending emails.
I had a conversation just recently with a dentist. I said, I'm not paying the bill because the only way I can pay it, the only payment he'll accept is check. I said, I'm not doing it. There's not.
Oh, okay. Well, there you go. Mr. Cash over there. We check the markets for you.
Exactly. I'll send
All
cash
day
in the mail.
long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. I thought you were going to flash that wad over there. Here it comes.
There it is.
Here it comes, people.
There's the wad.
Paul Sweeney believes in cash, ladies and gentlemen.
What time does he leave the office? He'll be on 58th Street at what time?
Exactly.
All right, John Tucker, thank you so much for that Bloomberg Business Flash. We're looking at markets that are rising. John mentioned that the Dow is at a record high. It's up 0.5%. But one of the laggards in the Dow Industrials is Boeing. It's taking 26 points off of the Dow Industrials' 230-point gain. And part of that is because of its latest earnings report. Let's bring in George Ferguson, who, of course, covers Boeing among other aerospace, defense, and airlines companies for Bloomberg Intelligence. And George, I thought Boeing was in turnaround mode. Did the latest earnings back that idea up?
Yeah, I think it did. So, you know, what I saw from earnings today is that the commercial airplane business had about a $430 million loss when you back out that about $5 billion charge for 777. I think that number was a bit better than consensus, a little bit better than what we were looking for. I think it's another sign that commercial airplane is getting closer to break even. And then in the cash flow statement, Boeing was cash flow positive at an operating level and free cash flow. It was about $1 billion in the operating level and free cash flow, I think, a couple $100 million. I think that, you know, that's above where consensus expected it. We saw $5 billion in inventory get unlocked during the quarter, meaning, you know, Boeing has been sitting on something like $90 billion in inventory. I think it's like 87, I think was the exact number. And that came down to $82 billion because they've been buying from suppliers, putting things on shelves as they try to keep the supply base healthy while they've been going through some of their challenges here. And now they're starting to take that, that inventory off the shelves, put it into airplanes. That's gonna hyperdrive some of the cash generation of Boeing as they bring that inventory, I think, down to probably a $60 or $50 billion level. So I think those are both big positives. The charge was largely non-cash for an airplane that I think is still very competitive, just gets delayed a bit.
All right, about the deliveries of the 737, what's the guidance there, George? Because we know that's the big cash driver.
Yeah, so Boeing's kind of out of the game of giving guidance right now, but they said, the FAA has allowed them to go to 42 a month build rate, which would be above what they've done in the last quarter. I think we've got them modeled at about 44 or 45 per month for the next 3 months. That's because there's still some inventory airplanes they'll deliver as well as what they're building. Just heard Kelly Ortberg say on the call that he would anticipate sort of cranking up those build rates from 42 in increments of 5 every 6 months, no sooner. But obviously won't break unless they feel like they've got things stabilized. So I think we've got a path here to higher build rates over, to the end of the decade. So, I would expect that as they get a year down the road here, we'll be probably break even in this business, or, maybe a little bit longer, but I think we'll be break even in that business. And again, that's, I think, all part of the turnaround is getting 737 to perform. That's going to be the financial driver.
So Kelly Ortberg has now been CEO for just over a year. He started in August of 2024. I can't believe it's been that long already.
I know.
And a lot has happened, clearly. And what I didn't realize is that Boeing is still facing some labor issues. St. Louis area machinists still on strike. They've been striking for more than 3 months. What does this say about Kelly Ortberg's leadership, and what kind of grade would you give him, George, for his leadership so far?
Yeah, I mean, I'd give him a very high grade, right? I think that, the biggest thing he needed to do was improve morale, improve quality, and it appears to be the case. I think, the proof is, again, build rates, the FAA returning some, giving Boeing the ability to go to 42 and returning some of their ability to certify some of the airplanes. So I think I'd give it all high. In St. Louis right now, St. Louis is where the defense business is centered out of. Right now, the defense business not performing great, but getting better. I think there's definitely more to come in the defense business as they start building the F-47, which is the 6th generation fighter that they won. But that's still some preliminary work. My guess is that the sides are still a little bit apart on where they want to be for an agreement, and it's not as critical to get those folks back to the production lines as it was to get commercial 737 machinists back to production lines. So he's probably doing the right thing for the business here, and making sure he can get an agreement he can live with, especially in defense where it's harder to bear increased costs. And again, I'd give him high grades. I think the company's at a turnaround right now and doing well.
George, about 30 seconds left. We don't talk about the 777 much. How does that kind of figure into their portfolio and into the economics of Boeing?
Yep, when it finally gets certified, it'll be the biggest airplane in production. So it kind of replaces 747 and A380 as the queen of the skies. A350-1000 is the closest competitor. It can't be as densified. It can't have as many seats inside it. So I think you'll find a seat cost advantage in the 777. It's got core customers in those, in those Middle East carriers, those Asian carriers that are the big sort of east-west connectors, and I think it'll be fine. I think the delay won't hurt its ability to be sold, and it's already got 500 in the backlog.
All right, I'll put my order in for the surveillance 777 for Tom.
My favorite.
He'll need one of those. George, thanks so much for joining us. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. If it flies, George covers it for Bloomberg Intelligence. That's kind of how I think about it. So looking at the market here, kind of holding on to some gains here, giving back a little bit. We're off the highs of the day, but still higher with the S&P up 15 points. That's 0.2%, and the NASDAQ up 130 points. So that is doing well as well. We've got the Fed this afternoon. Bloomberg coverage starts at 1:30 p.m. Wall Street time. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Soybeans. China purchases first cargoes of U.S. soybeans this season. Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. You want to talk soybeans? You want to talk pork bellies? You talk to Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, is this good news for U.S. farmers that I guess China's back buying some of our beans?
Yes, it is, Paul. It's just obviously more rational, expected news. About a month ago, the price of soybeans in Brazil reached about a 20% premium to U.S. soybeans. And for the first time in history, China wasn't buying any of our soybeans, the world's largest demand pull, importer. So this agreement is a win-win. Mr. Z looks good. U.S. farmers are happier, but soybeans have popped up to about $11 a bushel. I think that's a pretty good resistance, and I'm putting the final touches on my November outlook for commodities, and I'm going to put that level as the key inflection point. If soybeans can stay above 11, the whole commodity sector might be okay. And I think the risks are it goes lower because we're just starting planting in South America, and that's where the key source of pressure has been massive supply out of Brazil and Argentina.
So when China wasn't buying U.S. soybeans, what did that do to supply? Is there still an oversupply of soybeans in the U.S.?
Yes, hello, Scarlett. Well, there is now. Mostly there's an oversupply of corn because last year's farmers saw it coming, they saw the lower prices, and they tilted away from soybeans and planted the more corn. We had the best crop ever, so there's massive corn, so that price is still kind of hovering low. But soybeans have been the center of the geopolitics, partly because China's the world's largest importer, and U.S. used to be a large exporter. We used to export 50% of soybeans, but now it's down to 40% because all that supply came on in Brazil, and most notably it came on because of a big spike in prices in 2022. You see the elasticity there, and that's the problem with commodities is sometimes when prices go up, you just bring on more supply. Now we're heading towards a lower price cure. But soybeans are in the center of geopolitics, and the key thing is they've bounced. They're up about 10% in the year within broader bear markets. And it's the time of year you have to be very careful. If we just get another normal production season out of Brazil, pressure will continue as that supply just remains massive.
All right, here's the dumb farmer question of the day, my ignorance here. If I'm a farmer like corn, soybeans, wheat, am I reaping right now? Am I sowing right now? What am I doing in like October, November?
You're basically hurting. We're right near the end of harvest. And at this time of year, you're really active in the market. You're either marketing that corn, you're putting it into the market, as we say in Illinois, bringing it to the river to get down the Illinois River, or you're putting it in a bin and storing it. And so a lot of, generally, or you're putting it into someone else to pay for storage. And soybeans are the cheapest to store commodity, typically, among most commodities, except for gold. So a lot of those have been put in a bin. I think they're being put out of the market now. Of course, if there's exports, we haven't had those exports, at least not to China. Corn, still probably sticking in the bin, you hang on a little bit, but that's the key thing is prices are so low now. They're right near the cost of production, so the Corn Belt's in a bit of hurt right now.
All right, let's switch over away from soft commodities and look at metals. Copper prices in London climbing to a record high. I'm looking at London copper prices up 1.3%. In New York, they're up about 1.8%. What's going on there, Mike?
That's a big shift, Scarlett. I appreciate it. Switching over to the elastic commodities to the less elastic commodities and metals. And the key thing about copper is it's going up for kind of the wrong reasons. It's supply constraint. There's been some issues this year with production, most notably in Indonesia and South America. So it's curtailing supplies, and prices are going up on that. That's usually not enduring. Oftentimes it'll bring on that more supply and create incentive to reduce demand a little bit. So that's a bit of an issue, but it's also U.S. copper has been the center of the world universe. It popped to a new high early in the year and got to around $6 a pound. It's dropped down to $4. Now it's running just above $5 a pound. The key thing for copper is it's highly correlated to the stock market, and copper will be fine as long as the U.S. stock market keeps going up, and that to me is a key risk that this highly economically sensitive commodity might drop if the U.S. stock market drops, and so it's all kind of dependent on stocks now.
I have no idea what Mike McGlone does for a living. It's just what's tied to what, what's correlated to what. I don't know.
It's all straight in his head.
It trades all over. These things trade in London. They trade in Chicago. Different price. I don't know. All right, let's go to the easy one. I think I understand. Seems like gold is holding that 4,000 support level, Mike. Is that a real number? Or is that just a round number I picked out of the air?
Well, gold likes these round numbers. Remember, it bumped up to 2,000 for almost 4 years. McGlone was really bullish, but I had to eat that for 3-4 years, and finally it's popped up 3,000, now 4,000, but it's so extremely stretched versus most moving averages. People like Tom Keene would say like 3 or 4 standard deviations versus a 20, a 40, 50, or 60-month moving average. So the history here is I switched away from the fundamentals, and I switched to risk manager and saying it's so expensive here, you have to be very careful buying. So a time correction around 4,000 would be quite bullish. But typically from levels this high, you can easily get a 20 to 30% correction in a normal bull market. That's why I think gold is just so ahead of itself. And the key thing I'll end with is this disparity between gold being up almost 55% on the year and crude oil being down 15%. That disparity, about 70%, is the most ever, and it surpasses about 60% in 2008. That's not a good sign for the global economy.
All right, good stuff. Michael McGlone, and we covered a lot of ground there, right?
And we didn't even get to pork bellies. I needed his pork belly call.
You threaten that all the time.
All the time,
and
exactly.
One day we're going to get Mike McGlone on pork bellies. Mike McGlone, of course, joining us from Miami and giving us the lowdown on all the commodities. He is Bloomberg Intelligence's senior commodity strategist. So China's buying soybeans, and finally, some good news on the U.S.-China trade front. And, of course, the president and Xi Jinping will be meeting later on tonight, our time, and we'll see what this all shakes out to be.
All right. For our listeners in the U.S., a reminder, You can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning. This is the second hour of Bloomberg Intelligence, streaming live on YouTube. Paul Sweeney and Scarlett Fu here with you. We've got a lot coming up in this next hour, starting with Tyler Kendall. We're going to check in with our Bloomberg Washington correspondent who is traveling with the president through East Asia. She'll be reporting to us from South Korea. After that, we go to Ira Jersey, Bloomberg Intelligence's chief U.S. interest rate strategist, on this Fed day to preview the Fed decision, which will likely result in a 25 basis point rate cut. Jeffrey Cleveland will join us to give us his take on where the economy is headed now that the Fed is going to cut rates once again this month. And after that, we'll speak with Anurag Rana, Bloomberg Intelligence technology analyst, to give us his preview of 3 of the Mag 7 names that will be reporting earnings today. Microsoft, Alphabet among them. So a lot to cover. Meta as well. So 3 out of 5 this week. It's going to be big news for the big tech world. All right, in the meantime, let's bring in John Tucker for our Bloomberg Business Flash. John.
And right now, we are at records after yesterday's record close. S&P 500, 15 points higher. That is up 0.2% right now. And the Dow Jones Industrial Average up 241 points. That's a rise of 0.5%. NASDAQ 100 up 120 points. That is up 0.5%. And as you say, 2 o'clock we're to get the Fed decision. Ahead of that, more policy reacted. 2-year yield a basis point higher, 3.5%. The 10-year yield right now up just about 2 basis points, just shy of 4%. At 3.99 right now. And you have a tale of 2 stocks. NVIDIA achieving a historic $5 trillion market cap, up over 5% right now. And then the worst performing stock in the S&P 500, Pfizer shares, ticker symbol FI, they are down a whopping 41%, slashing the adjusted earnings per share guidance for the full year. Caterpillar shares, they are gaining right now close to 13%, reporting adjusted earnings per share for the third quarter that beat Wall Street expectations. Julian Emanuel says, you know what, stocks can go higher. He's got a lifted year-end target for next year for the S&P 500.
But I will say, over the last week, I have been getting sort of derisive jokes about that price target not being aggressive enough. And that to us signals maybe there's a little bit of too much exuberance.
He wouldn't say what those jokes were, by the way. John Malone is going to step down as chair of Formula One owner Liberty Media and Liberty Global. That's according to the Financial Times, citing people familiar with the matter. He is 84 years old. Today's an anniversary. You know what happened 13 years ago today?
No.
Not exactly a happy anniversary. Hurricane Sandy hitting the region. Yeah. And we are still dealing with the aftermath of that. You just have to go through one of the train tunnels to see the work continuing.
Or you just you go down to Manahawkin, New Jersey, the seashore, and monster houses, all 10, 15, $20 million homes, until you get to an empty lot where they chose for whatever reason not to rebuild.
Yeah,
so it's
absolutely
a strange situation down there.
But anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, John Tucker. Let's get some individual equity movers now and bring in for market drivers, Nora Melinda, Bloomberg Television Markets correspondent. Nora, get us started. NVIDIA, the big name here.
the big name of the day here, and almost feels like every day at this point. That's ticker NVDA. And we are seeing the company roaring up as much as 5.6%. This is the highest level on record. Of course, we know that the company topped the $5 trillion mark, the first company to do that in terms of market capitalization. But of course, we also know that this is a lot of this being really driven by a lot of the plans and partnerships that they've been rolling out. But additionally, Trump saying that he will discuss the company's Blackwell AI processors with Chinese leader Xi Jinping. And so this, of course, will really getting Wall Street really excited about what that could mean here for the company and just the broader landscape here. So you are seeing shares on a tear, up about 55% year to date.
Wow. All right. Very good. I'll tell you what used to be like a hot stock, a hot sector. Telecommunications. Verizon reported today as well.
They did report revenue. We saw a lot of different metrics that came through here, but they did report a loss in terms of wireless phone subscribers for the third quarter. But they do really have an aggressive strategy that they're really trying to roll out here to gain subscribers. So they're trying to focus away from emphasizing their network and towards improving more or less the customer experience here. So you're seeing shares of Verizon up for their best day since July here, up as much as 5.1%. On the year, not looking like there's too much going on here, up about 1% so far year to date.
Well, it's interesting. This is a new CEO, Dan Schulman, plans to, quote, aggressively transform Verizon's culture and cost structure to improve the customer experience and compete effectively. That's, I mean, when you think about, you know, Verizon, these big telecom companies, that might be a hard thing to do.
Absolutely.
These aircraft carriers of companies.
And I feel like people are kind of like locked into whatever company they work with. I mean, I feel like you have your one phone provider, unless some other hot new deal comes out, you pretty much stick with the legacy that you have.
But churn is a big thing in wireless.
That's also true.
Yep. So
when it's time to upgrade your phone, that's when you start looking at
right. You start shopping around.
You cast about
to see who gets you the best deal.
All right, let's take a look at Fiserv.
Fiserv, not a pretty day here. Actually, the worst day ever on record for the company. This is a fintech company that we're talking about, falling for its lowest level since 2018. This is after its results really confused Wall Street. They suffered a record plunge after slashing their outlook for full year earnings and third quarter results that really did not fall well in terms of Wall Street expectations here. So you really are seeing the stock taking a beating today in particular, but it hasn't really been a pretty picture this year totally here. I mean, shares have been down 64% so far this year. So clearly a troubled company right now.
Very good, Norma Linda. Thank you. Thank you so much, Norma Linda. We appreciate that. And you can get that Stock Movers podcast anywhere you get your podcast. You can hear Nora talk about what's moving in the stock market today. All right, what I learned today is Seoul's Korea is 11 hours ahead of us time-wise.
Yes.
So let's call it 11 a.m. here. It's midnight there.
And that means Tyler Kendall has been up for I don't even know how many hours.
I don't know. I mean, I'd be like, just time out. I don't know who your boss is. I'll put in a ticket, Tyler. We'll fix this. Tyler Kendall joins us, Bloomberg Washington correspondent. She is accompanying President Trump on his trip through Asia today in South Korea. And again, tomorrow, they will be meeting President Xi and President Trump. Tyler, what are the expectations going in to this, you know, relatively rare and exclusive meeting between President Trump and President Xi?
Yeah, hey, Paul, and I should just start by saying that it is an honor to stay up and talk to you guys. That's what makes this whole trip worth it. But ahead of this highly anticipated meeting, as you well know, we had thought that there was going to be basically this generic framework that would likely extend the trade truce that's currently in place and set to extend by November 10th. So there's been a pretty hard deadline here for leaders to meet and ultimately make that extension. We heard from the Treasury Secretary Scott Bessent going into this week, and he laid out what sort of deliverables we might be getting, including that China would resume its purchases, as people familiar tell us today here at Bloomberg News that they have so far purchased at least 2 cargo shipments when it comes to soybeans, but we are still waiting on some further details, including what this is going to look like going forward. We had also learned that China was going to back off its newly unveiled export curbs when it comes to critical and rare earth minerals. In exchange, the U.S. appeared to have effectively taken that threat of an additional 100% tariff off the table. But since then, we've learned that this isn't just about pulling back the recent escalation in tensions. We heard from President Trump earlier today telling reporters aboard Air Force One on, as you've been discussing, that he's going to bring up NVIDIA's Blackwell chip with Chinese President Xi Jinping. This would be a major win for Beijing, which would like the access to this advanced semiconductor. Also, the company, which has been trying to regain Chinese market access since 2022. Now, of course, this isn't a done deal. We're not quite sure exactly what this conversation would entail, but that's something to keep your eye on. And then, Paul and Scarlett, quickly, I'll add, also keep your eye on what happens when it comes to that tariff linked to fentanyl. This feels like one of those realistic, tangible deliverables that we might get that could actually move the tariff rate when it comes to Beijing. Both sides have said that they have made progress when it comes to the issue. 20% of the tariff currently in place on China is tied to fentanyl concerns. This would very likely look like Beijing putting forward some sort of solution like export curbs on so-called precursor chemicals that go into fentanyl. This has been a big priority for this White House, and we'll see if there's any sort of deliverable change here.
All right, thank you for that complete wrap-up of what we're likely to see. You mentioned NVIDIA, and we know that President Trump yesterday said that he would be meeting with Jensen Huang, the CEO of NVIDIA. The company yesterday, of course, holding its AI conference in Washington, D.C. The stock climbed to a record high. Jensen Huang talking about how there really isn't an AI bubble. Do we know if that conversation between the president and Jensen Huang took place? Because I'm curious what kind of leverage Jensen Huang has with the White House. He's also seen as kind of a go-between with Beijing as well.
Right, that's exactly right, Scarlett, particularly when you think at how some of President Trump's advisors in his actual administration have been a little bit more hawkish when it comes to China. I was speaking about this earlier this morning on Bloomberg Television, but this entire scenario reminded me of how then Senator Marco Rubio, almost a year ago today, sent a letter to then Secretary of Commerce Gina Raimondo to urge her to essentially put a halt, a blanket denial on any sort of U.S. export licenses when it comes to critical technology like semiconductors. So it is very clear that Jensen Huang has an influence with the president. In fact, he was not there yesterday at that Tokyo business leader reception. President Trump had called out Apple's Tim Cook, who was there, asked him if he was coming here to South Korea. He's not. So it's clear that there's been a push and pull here when it comes to President Trump and some of these leaders in the private sector, like how we saw Apple's Tim Cook really have that dominant role during Trump 1.0, the first Trump administration, and now we've really seen Jensen Huang and his relationship with President Trump develop.
Paying off for sure. Tyler, thank you so much for joining us. We really appreciate your reporting throughout this very long day for you. Again, it is midnight or past midnight over there in South Korea. Tyler Kendall, Bloomberg Washington correspondent. She is accompanying President Trump on his trip through Asia. And again, just timing-wise, President Trump and Xi are scheduled to speak at 10 p.m. East Coast time tonight. That's 11 a.m. local time in Korea tomorrow. So we'll have full reporting.
You used your IC2 function on the Bloomberg.
I did. Thank you very much. Exactly. So anyway, that's where we go. And, oh, by the way, if all the earnings and all the geopolitics isn't enough, it is Fed Day. That means at 2 p.m. we get a statement from the Fed. At 2:30 we get a press conference from Fed Chairman Jay Powell. And most importantly, at 1:30, focus on the Fed. Tom Keene, Jonathan Farrow will simulcast that with Bloomberg Television. They'll cover you all the way through the Fed Day. Ira Jersey joins us here. He does this interest rate stuff for a living. Somehow he gets paid. He's actually built a career on interest rates in the Treasury market. I have no idea how he's done it, but he's done it. He's the best on the street, and we appreciate getting a few minutes of his time. Ira, what's the challenge or what's the opportunity for Fed Chairman Jay Powell today, do you think?
Yeah, I think he has to be a little bit cautious, right? Because he doesn't have all of the data. So it's going to be difficult for him, I think, to significantly change any outlook or view of the members of the Federal Reserve. So it's going to be, basically saying, look, we're going to cut interest rates. We see some fragility in certain parts of the economy. So we're going to cut cautiously, right? And what does cautious mean? Some people think that means they're going to maybe skip December and then go January and the like. Now, it's not their normal operating procedure. When you remember Alan Greenspan and his measured pace comments, a couple of decades ago, that meant 25 basis points every meeting, right? So being cautious doesn't necessarily mean a skip, but it can, right? And I think that that's an important and something that he can convey is that, look, we're not necessarily going to continuously cut interest rates down to 2% or something like that. So he'll say that. And then importantly, it's the funding markets. That's really what we're looking at today, especially when you see what happened to the repo market yesterday, and you saw SOFR today printing at 4.31% above the upper bound of the Fed's policy rate, and I think that that's showing some stress, and that I would be surprised if he's asked a lot of questions about that, but I think for the Treasury market participants and the things that I look at, that's going to be the key today.
Why are there signs of stress in the funding markets?
Yeah, there's this thing called the lowest comfortable level of reserves, right? So banks have reserve balances, which are assets for them, they're liabilities for the Fed Reserve, and those go up and down because of different changes in the Fed's liability. And they've been consistently going down over the last couple of years as the Fed's run off its balance sheet, right? The so-called quantitative tightening. And we're reaching the point now, and it's pretty clear that we're close to this point where we no longer have abundant reserves. And the thing is, there's no such thing as ample. I don't like that word. I think the Fed thinks that there's something called ample. You either have enough reserves, you have the ample reserves, or you don't. And the problem is it's like a switch, right? So on a dime, you can go from having enough reserves in the system that everything's working properly, and then the next second, like we saw in September of 2019, you don't have enough reserves, and the market needs reserves added to the system.
And that's a dynamic number. We don't know where it is.
It changes all the time, right? And bank reserve balances and demand for reserves is much higher today than it was prior to the global financial crisis. So all these people who think we can go back to a $1 trillion Fed balance sheet, they're living in a fantasy land as far as I'm concerned. And part of the reason is because bank reserves are the easiest high-quality liquid assets to own. And so there's always going to be demand for these reserves by these large financial institutions. And unless you change regulations and change some of the capital rules, that's always going to be the case. And if there's not enough of them, then interest rates in the short end, so overnight interest rates, just shoot up. And that's what the Fed wants to avoid. So if nothing else, even if the Fed continues quantitative tightening, which we think they might for another 6 weeks, they will have to announce that they're going to do more repurchase agreement operations and what we call open market operations. And this is important because if the funding market breaks, there's no way that asset prices stay where they are. They are going down in a hurry.
But what's the risk level of that happening, do you think, at this stage?
I think the fact that the Fed is looking at it and the Fed understands that they have to do something, they need to do more TOMOs. If you read a lot of street research, our own research here at Bloomberg Intelligence, everyone knows that the Fed is going to need to step in and add reserves to the system. They were hoping that the standing repo facility would be enough, and that got tapped this morning for $10 billion. Mostly mortgage-backed securities, interestingly, was the collateral that was put there, suggesting that there's a bank or two that really does need some reserves. $10 billion is not a massive amount given the size of our economy and the financial markets, but if the Fed is not prepared to add even more reserves, right, another 20, 30, $40 billion of reserves, you could wind up seeing a significant uptick in the funding markets. And we have things like bond settlements. So treasuries we're settling about $80 billion of treasuries between tomorrow and Friday at bank month end. So we're going to see some more volatility in these front-end funding markets.
So we've seen yields kind of stuck in a range the last few days. There's been a data vacuum, but there's been a data vacuum all month, so that's not new. Is there going to be anything in this FOMC meeting or what Jay Powell says that could change where yields are?
Yeah, I don't think so much the 10-year. In fact, I think the 10-year is pretty close to fair value. A lot of our models suggest that just based on the economic data that we have. Yeah, plus or minus 20 basis points, right? Won't be a surprise. But the front end, the front end can move a lot if he shocks us, but I doubt that he will.
All right, Ira Jersey, thank you so much. He is, of course, Bloomberg Intelligence's rate strategy here at BI. And we're, of course, counting you down to that FOMC decision at 2 p.m. and Jay Powell speaking at 2:30. We'll have full coverage on Bloomberg Radio and Bloomberg Television starting at 1:30 p.m. Eastern Time. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. S&P 500, 17 points higher, up 0.25%, 69.08 on the index. That's record. Dow Jones Industrial Average up 247 points. That's a record. And the NASDAQ 100 up 115 points, up just about 0.5%. That's a record there. Jensen Huang's spree of deals, launching the AI frenzy to new heights. NVIDIA achieving an historic $5 trillion market cap. By the way, the next two biggest companies, Microsoft and Apple, with valuations of about $4 trillion each. And NVIDIA shares today up 3.9%. And again, after the record close yesterday, stocks are pushing higher. The Fed, of course, widely expected to cut 25 basis points today. After the close, Meta, Microsoft, and Alphabet reporting earnings. The payments processor, Fiserv, seeing shares plunge. They slashed their adjusted earnings per share guidance for the full year. Worst performing stock in the S&P 500 today. It is down a whopping 42% in today's market. You know, Starbucks has poured millions of dollars into rehabbing its stores and trying to get more people through the doors. Also trying to get them to stay longer, attracting and keeping customers, the key pillar of the turnaround for the new CEO. But neither one of those things is happening. The share of visits longer than 10 minutes has shrunk since Brian Niccol took over the helm in September of 2024. This is according to data from Placer AI. I guess, what do they, is there a special name for somebody who hangs out in Starbucks?
Yeah, I think it's these people that work from home that are just, you know.
He means slackers.
Slackers.
No, not slackers, but.
That's what Paul meant.
Well, yeah, I think this
you know,
is the thing.
people who hang out in malls are mall rats. If you hang out in Starbucks, is there a special name?
I think half the U.S. GDP is, you know, done in Starbucks. People just doing whatever they do, their side hustle gig.
My daughter loves to go there to study. So
that's another thing.
That's her thing. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, good stuff. Thank you so much, John Tucker. You know, we don't have any data anymore, Paul Sweeney, and the Fed is a data-dependent central bank.
That's what they tell us.
So what do they say about the state of the economy?
They're just like the rest of us. They're just kind of going, what's the alternative investment, WLT, Alt-E? Keep going. I'm just looking.
Okay, all right. Paul's going to give us some insight from that world. But in the meantime, let's go now to Jeffrey Cleveland. He is chief economist over at Payton & Regal to join us and talk a little bit about the U.S. economy here. And Jeffrey, do you think we're going to get anything actionable from the Fed chair when it comes to understanding how this week's layoffs, and you know, there's some big numbers here. Amazon, 14,000 workers to be shed. UPS, 34,000 workers to be shed, will lead to more aggressive cutting of rates in 2026.
Yeah, we'll see. I think, you know, he's in the same boat that we are. We're talking to all of our clients all over the U.S. and around the world, getting a sense of how they see the labor market. I think by and large, they see the labor market softening in through the September period and into October. So I think that's an interesting data point. I'm sure policymakers are doing the same thing, canvassing their contacts. I also think we have enough data to go on. I mean, the jobs data, whether it's from ADP or BLS that we had, shows the same trend, which was a slowdown. We had yet to see really layoff activity. You know, we've been looking at the state level unemployment insurance claims, and we haven't really seen that feed through. So the headlines, are worth paying attention to, and we'll just have to see how that plays out. But given that the Fed's over 4% on the funds rate, I think the safe thing, the easy thing to do is just cut rates today. I mean, we already had one rate cut earlier, Bank of Canada, getting back closer to 2%. They're probably at or below neutral on theirs. So I think the Fed should maybe follow their lead and move in that direction.
All right, WSL Space ALTE Go on the Bloomberg terminal. That'll get you to private and proprietary alternative U.S. economic indicators. There you go. If you think the Bloomberg should have it, it has it. That's how I.
You just got to dig around a little bit.
Exactly right. Jeffrey, let's assume that the Fed does cut today. What do you think would be a reasonable cadence of their future cuts?
From our perspective, we think that inflation is moderating. The tariff inflation that we are seeing is a little bit of noise. And if you try to look out over the next 12 months, we can build a plausible case to get back closer to 2% on core PCE by the end of next year, so the end of 2026. If we're right on that, even if we're in the ballpark, I think rates should be quite a bit lower. I think back to 3%. On the funds rate. So we have a cut today, we have another cut in December, and then we have 3 next year as well. So that's kind of how we're seeing things shake out. The only real interesting question is if we're going to have a much weaker economy signaled by the weakness in payrolls, or if things can pick back up. It's possible things could pick back up in 2026. So that's the interesting question. I'd like to see how Chair Powell answers that question today.
I suspect the answer will include some version of AI because of productivity gains. Yes. I want to get your take on inflation. Why is it that the consensus view is that tariffs cause only a one-time price effect?
I think, we look at it as, tariffs as a tax on imports. So it is going to push up the cost of goods. But when we talk about inflation, we're talking about the general level of prices, so all prices. And if you look beyond goods, you look at non-housing services, for example, and you look at housing, both of those categories have actually dragged core inflation a bit lower year to date. And those other 2 categories account for, I would say, roughly 75% of core PCE. So when you're thinking about overall inflation, which is what we're trying to do, yes, there's some pressure from goods and tariffs, but I think it's being offset by everything else we're seeing. And the softness in housing, so rents and owner's equivalent rent, we expect that to continue in 2026. And if the labor market remains, somewhat weak, then non-housing services should also moderate. So that's how we're thinking about it.
All right, Jeffrey Cleveland, thank you so much. We appreciate that. Jeffrey Cleveland, he's an economist over there, paid in Regal out there in Los Angeles. Once again, leading kind of the winners out there in the world is NVIDIA. Just extraordinary accomplishment today, reaching $5 trillion in market cap. There's always news around this story. Michael Shepard joins us, Bloomberg Senior Editor for Technology and Strategic Industries. Michael, first of all, I don't know, I guess it's just a number, but boy, $5 trillion suggests that this market continues to see extraordinary value in this thing we call AI. What do you make of it?
Well, you can see not only in the share price, which is up well above 40% this year, but you really can sense the enthusiasm for artificial intelligence and all the CapEx that has gone into it. We're going to be hearing later today from some of the hyperscalers, Microsoft, Meta, and Amazon reporting results, and they are some of the biggest buyers of NVIDIA's technology. So there is a real symbiosis, and we haven't seen any slowdown from them. We'll get some signaling after the results come out in their various conference calls about what their plans are for investment in this area going forward. But at least based on yesterday's GTC event here in Washington, the big industry confab sponsored by NVIDIA, we're really getting a sense of no sign of an end to the momentum. And Jensen Huang was emphatic in saying that he sees no sign of a bubble coming and that he expects another $500 billion in revenue over the next 5 quarters tied to all of that.
I'm so glad you bring that up because we wanted to play some sound from that conversation Jensen Huang, the CEO of NVIDIA, had with our Ed Ludlow, Bloomberg Tech co-host. Ed spoke with both Jensen Huang and Nokia's CEO, Justin Hotard. Let's take a listen.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
Mike, what gets my attention is Jensen Huang coming out and saying definitively that he does not think there's an AI bubble. Do you think any of the CEOs of the 3 companies that are reporting today, the 2 that are reporting tomorrow, are likely to go out on a limb and say that?
You know, they have put so much into artificial intelligence themselves that they would be loath to issue any kind of a bubble warning. That'll come much more from the outsiders. The interesting thing, though, is when NVIDIA talks about AI, it is not thinking just ChatGPT and the other chatbots that we are familiar with. They're talking about so many more things and uses. And one priority for Jensen Huang is really to accelerate the adoption of artificial intelligence across the economy in a variety of platforms. It ranges from robotics to cybersecurity to business automation, all sorts of things that they were talking about, and really infused all the partnerships and deals that the company was announcing yesterday. We could do a quick review, Scarlett. It's Uber, it's Lucid when it comes to transportation, it's CrowdStrike when it comes to cybersecurity, it's Palantir when it comes to business automation. So the company really is not only trying to push this narrative, but it's trying to show it as well. And they even began to talk about some of the edge case uses for quantum computing, which is another area of keen interest for investors. And it's been an area that NVIDIA has been edging toward in the past few years.
Michael, there are some investors out there that are obviously a little reticent about this whole AI story and the momentum behind it, and maybe they want to tap the brakes every once in a while. And I think their argument is basically, okay, I get the big spending by the hyperscalers, but what's the return on investment again? Every once in a while we hear from those people. Where do you think that narrative is today?
Well, it remains one of the big questions. When does revenue actually become something measurable and tied to artificial intelligence use? And Jensen Huang was trying to point yesterday to look, AI has not only the use case, but it is actually starting to pay off. The models are starting to pay off, and this is why he sees the world not being in a bubble right now. But it is something that companies will have to try to demonstrate more visibly as they release results to justify all the expenditures that they have been making on data centers and on all the technology that goes into them to power these models that they intend to use.
All right, Michael Shepard, really appreciate your joining us and giving us, a wrap up of what we're seeing right now. NVIDIA, once again, $5 trillion in market cap. $5 trillion, Paul, that is a lot of zeros.
That is, and when you see the movements in these stocks, I'm just thinking some of these big tech stocks that have been announcing these big investments with each other and ChatGPT, and the amount of dollars, the absolute dollars of gains and losses in the stock market every day on some of these names is staggering, because you are, a 5% move in a $4 trillion market cap stock, that's real money.
Right, and the spending that they're all doing on products or services and things like chips from each other, that is responsible for a big chunk of the GDP as well. So if anyone slows down their spending just a little bit or pulls back a little bit, that could have a ripple effect.
Yep, absolutely. So year to date, just for those keeping score, at home, NVIDIA up 55% year to date. So pretty solid return there. Mr. Huang, obviously with his personal stake in the company, shooting up the rich go.
Yeah, ninth richest person according to the
and when you
Bloomberg
rank it by
Billionaires Index.
gains for the year, he's number 3.
Oof.
So there you go. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. More green on the screen as we add to yesterday's records. And this one, kind of a head scratcher. Fiserv stock suffering a record plunge. The fintech cutting its forecast for this year's adjusted earnings per share. The chief operating office, the head accountant there being replaced, the firm's longtime chief financial officer, and the CEO unveiling sweeping change at other top leadership in the board of directors. Mike Lyons, the CEO there, who took the reins only in February, says he discovered Fiserv wasn't going to be able to deliver on its previous promise to investors. He undertook a broad-based review of the business in recent months. And then we move to the AI boom. NVIDIA, first ever company to be worth over $5 trillion. President Trump said he's going to discuss NVIDIA's Blackwell chips with China's Xi Jinping when they meet. After yesterday's record close with the major averages adding to the records once again. Still, Amanda Gotti at PNC does have concerns about market breadth.
I don't think there's a lot of downside risk to the market given how strong Q3 earnings season has been and what revisions look like into Q4 and next year. But it is something that we're certainly starting to watch very closely, especially as it relates to valuations in total. It's not a cheap market out there right now.
But it's not just Fed Day. Microsoft, Alphabet, Meta Platforms deliver their results after the close, with Amazon and Apple following tomorrow. And right now, the S&P 500, 14 points higher. The Dow Jones Industrial Average up 248 points. NASDAQ 100 up 86 points. According to the British journal, the medical journal Lancet, they have an annual report on climate and health. Soaring temperatures are killing 550,000 people every year around the world. That's one heat-related death every minute. So these new numbers come during a year record-setting temperatures this year around the world. They also say it's an economic hit. Lost labor productivity related to heat, according to the Lancet, caused an estimated $1 trillion in income losses.
Like, are those numbers, are they higher than they used to be? Are they trending higher? Do we have context?
They're trending higher.
Because the climate change deniers, I would say, give me the context there. I mean, do 500,000 people die every year because of heat since the beginning of time? I don't know the answer.
It's a steep increase, at least according to the Lancet. And as far as, whether it's, new or fake or whatever, always follow the insurance industry and the actuaries, because they are the folks who, live or die by this stuff.
They quantify it.
They quantify it, yeah. So
they price it, yeah.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Local Podcast, and that's where you'll find us here. All right, we got a lot of tech earnings starting today after the close. We've got Meta, Microsoft, Alphabet. I think that's how it goes. And then tomorrow after the close, Amazon and Apple. So if you're a tech investor, you're going to get your full share of tech news in the next couple of days. We need to check in with Anurag Rana. He's a senior tech analyst for Bloomberg Intelligence, been doing this for decades. Let's start with Microsoft here. So we all know what Microsoft is. We all use Microsoft. We all get it. What is the investment story on Microsoft these days, Anurag?
So, the legacy business is still doing okay. I mean, whether it's Windows or Office, and those are good, businesses to be in because they drive a lot of free cash flow, but they're not growing as fast as they used to. So now the next phase of business is the cloud infrastructure business or just overall the cloud business. And that's seen such a big kick because of the OpenAI relationship that they have. And that has been driving growth for the past few years. And that's really the story for them right now is, how much of the lift that they're going to get on Microsoft's cloud because of all the OpenAI workloads that they are hosting.
Right. I'm so glad you go there because, of course, yesterday we did get news that OpenAI and Microsoft kind of reset their relationship. And now Microsoft will own a stake of OpenAI that's valued at $135 billion. Does that announcement show up in its results in any way tomorrow? Or I should say today?
No, I mean, it does not show up because it's other income. It goes, accounting is different for that particular part of it. But for us, it's not the financial impact of that deal. It's really that Microsoft can use their technology or their models up till 2032. That to us is the most important aspect of it because frankly speaking, Microsoft has been selling their Copilot products for a number of years using OpenAI's technology and having rights to that for the next 7 years, I think is probably the most important aspect of all that happened yesterday.
So how do you, and by the way, Microsoft hit an all-time high again today. Anurag, how do you think about the competitive landscape for the cloud business that is so important for the Microsofts of the world, the Amazons of the world, the Googles and things like that? How do you think about that?
So things have gotten shaken up in the last 12 months, largely because of the AI workloads. So OpenAI being an exclusive partner for Microsoft, Microsoft was, you could say, getting most of the benefits till it came to a point they have massive capacity constraints. Then at that point, I'm assuming with the help of or the allowance of Microsoft, OpenAI was able to outsource some of that work to Oracle as well as to CoreWeave. Now the question is, what's going to happen that no longer Microsoft has the right of first refusal as the cloud provider? Does OpenAI go out and start knocking on Amazon's door because they are the one vendor right now that has not seen any AI lift compared to whether it's Microsoft or Google. Both have shown an acceleration in their growth rates in the last quarter, which we didn't see for Amazon.
Anurag, let's talk about Alphabet. I look at the year-to-date performance, and Alphabet
Google
is number 2. Yeah, after Paul Sweeney calling it Google still, old school.
Yep.
Alphabet is number 2 after NVIDIA in terms of year-to-date gains, 43% advance so far this year. What's the outlook like for its results this quarter?
I think in the last quarter when they reported, they also showed a 500 basis points improvement in their cloud growth rate. And I think that's what everybody is going to hang on today and say, what is their cloud growth rate? They recently signed a very big deal with Anthropic to use Google chips. I mean, that's a huge deal, frankly. So they have the chips, they have the model, they have a cloud business. So I think investors right now are looking at this as probably one of the better ways to play AI. But when you go back, let's say a couple of years, the issue at hand was that everybody thought they're going to lose out on all their search business because of OpenAI. And I think that fears is somewhat subduing right now, but I think that cycle will keep on going as it relates to Google for some time, or Alphabet.
I mean, Google, dude, we spent long and hard coming up with that name and ticker symbol on the IPO. I have to admit, Anurag, I don't know. I don't click on as many links as I do in my search. I mean, I kind of go with the AI thing that comes up at the top. I'm like, okay, I got my answer.
Paul, I do the same thing, but one of the things is I'm also spending a lot more time on YouTube. So, I mean, the question is, if you have a plethora of assets, which Google has, you have a large language model, you have a cloud business, now you have chips. These guys, but I have not seen personally that level of slowdown in their search results as one would expect based on all the things we all talk about on a normal basis. So they're really doing something right where they're monetizing on whoever is going to their platform. They're doing the right thing of making sure they're pricing those products properly.
Is the overhang from the DOJ looking into them as a monopoly over? I mean, have we just kind of forgotten about that completely for Alphabet?
I think that was a very big push for them, and it's not just them. Apple got the you could say a relief from that as well, because Google pays Apple a lot of money to be the default search on iOS. I think that issue is probably behind us right now because of the OpenAI threat that Paul was just talking about. I think the regulator said that, listen, these guys have serious competition right now, so that's partially I think how they got away.
All right, that's good stuff. Anurag Rana, Senior Tech Analyst at Bloomberg Intelligence. He is one of the leaders of our technology research team. It is a global team. We've got analysts all over the place in San Francisco, Silicon Valley, in New York, in Los Angeles, in London, and in Asia as well, Hong Kong and Tokyo. So we have analysts all over because it is a global business with drivers across the globe, and that's how we cover it there. So again, it's going to be a big day for pretty much everybody who's in the stock market, because if your mutual fund owns a lot of this stuff.
Absolutely. And of course, we'll be breaking down all the numbers. Carol Masser and Tim Stenovic will be doing the honors along with Romain Bostic and Katie Greifeld today at 4 p.m. when the market closes on Bloomberg Television and Bloomberg Radio. So you'll want to keep it right here for all the latest numbers. In the meantime, this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. Keep it right here on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. You can head over to youtube.com, search Bloomberg Local Podcast, and that's where you'll find us. Busy earning day. In addition to the big tech names after the close, we had Verizon report numbers. They had some subscriber losses. A little bit better than Street expected. The stock's actually up a couple of percent today. It's pretty much flat on the year, but I looked at it. It's got a dividend yield, almost 7%. It's like a utility there. John Butler joins us here. He covers all the telecom names for Bloomberg Intelligence. John, I know we heard from AT&T and T-Mobile last week. We got Verizon today. This is a competitive business. What did you learn from Verizon in their results, John?
So this, first of all, I'll tell you, the dividend is safe, Paul. I mean, that's the good news for Verizon. And it's safe because new CEO Dan Schulman, who recently replaced Hans Vestberg at the helm of Verizon, sort of laid out his new plan for growth. I think the real watchword of the day here for Verizon is to pivot from a very technology or network-oriented company to now Schulman is going to turn them into a very consumer-focused company. I think he's really going to take a page out of T-Mobile's book. But in terms of promoting, I think unlike T-Mobile, he's going to do it in a more disciplined manner. And that's why you're seeing every stock in the group up today. I think there's sort of a relief, if you will, for investors that the gloves really aren't going to come off on the promotional front here.
So I guess as I think about the wireless business, I mean, we all have a phone in our pocket. It just seems like the only way to grow revenue is either add subscribers, which can be expensive, or raise prices, which how long can you do that? How do you grow the business?
I mean, that's one thing he talked about was how to grow the business here. And what you're seeing with the telecoms is they're all pushing more heavily into broadband. They're doing a very good job there. With Verizon, like AT&T, they've got two avenues of growth there. One is fiber broadband. Verizon is buying Frontier, so they're going to onboard about 1 million new fiber subscribers in the new year. And the other is fixed wireless access, which is sort of that wireless link into the home. It's been very popular with people. So once you get those broadband subscribers, probably more than half of them don't have wireless. And so Verizon's aim is to continue to build that broadband base and then cross-sell wireless into that base. You've also got switching activity that goes on in any given quarter, no matter how hard the carriers try. You're always going to lose some subscribers, and they're up for grabs. And I think Verizon now is looking to get their fair share of those. And there's also modest, very modest organic growth in the business through population growth and some immigration, although immigration is down this year.
Yep. I don't even know where we are, John, in terms of the 5G, 6G, 4G. Are there technological changes coming to the wireless business, or are we at kind of where we're at in terms of capacity and usage and so on?
So capacity is on the rise. Spectrum is the lifeblood of wireless. The more spectrum you have, the more network capacity you have. To put it in layman's terms, for the average smartphone user, that means higher download speeds. And Verizon is currently activating what's called C-band spectrum. It's very high capacity. And so you're going to see their average network speeds across the nation edge up over time as they activate that spectrum. In terms of the generational upgrades that you alluded to, the 3G, 4G, 5G, we're mid-cycle now. We launched 5G about 5 years ago, and I think you'll see an upgrade to 6G as we get towards 2030. But right now, it's sort of status quo on that front.
So I guess the issue for Verizon is now going more customer-centric. And as you mentioned, when I read that, it seemed just like what T-Mobile's been doing for years and years and years, going back to John Ledger. Is this a strategy you think can be successful for Verizon?
We'll see. I mean, that's their big challenge, right? I mean, T-Mobile was always the branding king. They did a great job there, just as you said, starting with John Ledger, who made himself the face of the brand. They really did a terrific job there. They went out as a sort of a hip counterculture, consumer-friendly brand. Verizon was at the opposite end of that spectrum, leaning into their great network coverage. They still have that. They have probably the best coverage in the industry, but in terms of network speed and performance, the other two, AT&T and T-Mobile, have really caught up. So the challenge for Verizon now is to nurture a more consumer-friendly brand image, dare I say, almost fun brand image. I have to chuckle. That really isn't something we would associate with Verizon. But I think Schulman, given his background at other telcos and also in reviving PayPal, has some experience there with branding. And I think it's going to be interesting to see what he does with Verizon to improve that brand image.
All right, John, thanks so much for joining us. That's John Butler. He covers all the telecom stocks for Bloomberg Intelligence. For our listeners, in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned. For the latest market news and industry research, your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. A major cleanup effort's getting underway in Jamaica after the blast from Hurricane Melissa. CBS's Jason Allen is in Kingston.
There was intense rain. There was flash flooding. It's destroyed parts of the island. And officials have been telling us there are entire communities on the island's southwest end that are underwater. We're really just beginning to see some videos emerge of all the damage there. There are many homes that have been turned into piles of rubble. Other buildings still standing are completely flooded.
River flooding triggered by rain from the hurricane is blamed for at least 25 deaths in Haiti. And there's news today about our climate.
I'm Vicki Barker in London. A major study on the health impact of global warming links toxic air pollution, wildfires, and the spread of such once rare diseases as dengue fever to a failure to tackle global heat, resulting, the researchers say, in a death toll that's now reached an average of 1 person a minute around the world.
It's day 29 of the government shutdown and a familiar refrain of blame delivered by House Speaker Mike Johnson.
This is not the Republicans. This fault is squarely on the shoulders of the Democrats, and they're the ones causing you the pain, and don't ever let them forget it. Thank you.
The White House has fired all 6 members of the federal agency that was expected to review some of President Trump's construction projects, including the big ballroom. CBS's Natalie Brand.
From what we've gathered, all the members who had been recently fired were appointed during the Biden administration. We do have a statement from the White House on the firing saying, in part, we are preparing to appoint a new slate of members to the commission that are more aligned with President Trump's, quote, America First policies.
Overseas, Russia says it's conducted a successful test of a new atomic-powered and nuclear-capable underwater drone, boasting the weapon cannot be intercepted. Comes just days after a test of a new nuclear-powered cruise missile. CBS's Jim Krasula now on One Choice for Word of the Year.
You might be tired of hearing. Now, Dictionary.com has chosen 6-7 as its 2025 Word of the Year. It's an ambiguous slang term made popular by Gen Alpha on social media and in schools and in friends groups across the country. It's become so pervasive and perhaps bothersome that some schools are now banning it.
The AI chip maker NVIDIA became the world's first $5 trillion company today. And on Wall Street, the Dow is up 215 points. The S&P is up 10. This is CBS News. What seems like a timely discovery in L.A.
Just in time for Halloween?
The Bride of Frankenstein.
The discovery of a grave containing the remains of Elsa Lanchester, who played the Bride of Frankenstein in the 1935 movie. Scott Michaels, founder of Hollywood's Deadly Departed Tours, says he came across the marker in a rose garden under the actress' married name, Lawton. He unveiled it on what would have been her 123rd birthday. Until now, movie historians believed Lanchester had been cremated after she died in 1986, and her ashes spread at sea. Deborah Rodriguez, CBS News.
Game 5 of baseball's World Series is tonight in Los Angeles. The Blue Jays topped the Dodgers last night 6-2 to even things up at 2 games apiece. The series will then shift back to Toronto for Game 6. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's Fed Day. The government is still shut down, and Congress begins pushing back on the president. Welcome to the Wednesday edition as we count down to the decision on interest rates just a couple of hours from right now on this day 29 of the government shutdown. If you're still keeping track, we're going to talk it out shortly with Bloomberg's Michael McKee, who's just about to head over to the Fed. And we'll spend some time with Republican Congressman Chuck Fleischmann of Tennessee this hour. He'll be with us shortly in studio as we try to figure a way out of the shutdown here. President Trump's in South Korea talking trade ahead of his meeting tomorrow with President Xi. Yes, the stakes are high. We're counting down to that meeting that'll take place tonight, East Coast time. And we'll have a live report from Zhengzhou where it's all happening. After a look at Wall Street, we start there now with Charlie Pellet. He's got the latest on the markets from World Headquarters in New York. Charlie, how's it going?
Thank you very much, Joe Matthew. Indeed, welcome back. Nice to have you back again. We have got the Dow, the S&P, NASDAQ. They're all pushing higher right now. Fed Wednesday, lots of moving parts to this market. Key earnings coming up after the close of trading, and we've got you covered on any and all trade developments. Right now, the S&P at 6,900, even up 9, on track for a record today. If these numbers stick, up 0.1%. The Dow up 226 right now, up by about 0.5%. NASDAQ up 98. That is a gain of 0.4%. The Mag 7 index up 0.5%, while the 10-year currently yielding 3.99%. The 2-year 3.49%. Gold back in the green, up by 1.1% right now, $39.93 the ounce. And West Texas Intermediate crude back above 60 a barrel, $60.88 now, up 1.2%. We do have a focus today on trade developments, earnings, and just under 2 hours from now, a Fed decision, and then, of course, the Jay Powell News Conference. Gargi Chowdhury is Chief Investment and Portfolio Strategist Americas at BlackRock Financial Management. She was a guest this morning on Bloomberg Surveillance.
Certainly with the Fed, I think we should pay particular attention to what happens with the balance sheet. I do think that the 25 basis point rate cut is very well advertised and very well priced, but it's really about if they do something with the balance sheet runoff, and if that gets announced today.
BlackRock's Gargi Chowdhury, and you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcast. The decision drops at 2 p.m. Wall Street time. Complete reaction and analysis, as you have come to expect over the years from Bloomberg. And then, of course, Jay Powell's news conference, 2:30, and Michael McKee's question, 2:30 p.m. Wall Street time. NVIDIA today became the first $5 trillion company as President Trump says he'll discuss the Blackwell processors with China's Xi Jinping. But right now, we got NVIDIA up by 2.3%. Again, Alphabet, Meta Platforms, Microsoft, all reporting after the close of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is. Big warm welcome back, Joe Matthew.
Boy, thank you, Charlie. Gosh, I only leave for 2 days. Thank you so much, Charlie. It's great to see you in New York. We'll be back with Charlie in about 15 minutes for more on the Wednesday trade. Yeah, you're halfway through the week and not a lot has changed. The government's still closed. The Fed's still expected to cut. All that will unfold today in real time, and we'll do this together. Of course, 2 o'clock is the magic hour here. Our special coverage starts at 1:30 p.m. Eastern time. We're going to talk momentarily with Michael McKee, who's got his bag ready. He's headed over the Fed, and yes, we'll try to get a sense of what he's asking today and whether Jay Powell can answer anything, because we're in this data drought that's been making things pretty interesting around here. 29th of October. By God, it's almost November. You know, we have to turn the clocks back this week, and the government will still be shut down. We'll talk later on this hour with Chuck Fleischmann, the Republican from Tennessee, is here. We'll play it to our panel as well. Jeannie Shanzano is with us, Ashley Davis as we get our arms around everything that's happening today in the nation's capital and, of course, in South Korea. If you want to sound smart at the cocktail parties later, Busan is the coastal town in the south of South Korea where they're going to be meeting tomorrow, Trump and Xi. After, of course, the president spent a couple days there already at the APEC summit talking about the progress that he's been making with trade. Listen to President Trump from earlier, Shangju.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan, and our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. You know, probably you know that President Xi of China is coming tomorrow here. And we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
And maybe that's why the market is in such a good mood this week. We just keep pushing higher on the idea that not only will we normalize relations or have some kind of a framework agreement with China, but they're talking Blackwells now. You saw this headline? Look at NVIDIA today. Top in 205 was above $208 a little while ago after notching this all-time high yesterday. Blackwells in China? We'll find out about this, presumably, in the next couple of days. But let's find out what we know right now. Tyler Kendall is on the other side of the world and joins us. She is traveling with the president right now, joins us from Jeongju, South Korea, where the APEC summit is underway. Tyler, what's going to come from this meeting with President Xi, and what has Donald Trump accomplished already?
Yeah, hey, Joe. And Charlie said welcome back, so I say welcome back as well. There's a lot on the agenda ahead of tomorrow. Now, of course, we know that the top line that we're widely expecting is that there's going to be an extension to the trade truce that's currently in place. And we're going to see a pullback from some of the escalating tensions of the past few weeks. That includes China, which, according to sources telling us here at Bloomberg, importing their first shipments of U.S. soybeans so far this harvest season, though relatively it appears to be a small amount. We'll see if we get any other information on just how much of these U.S. soybean supplies they are going to end up taking in. Also, we heard from the Treasury Secretary earlier this week that China is now backing off and delaying its intended export curbs when it comes to critical and rare earth minerals. These sorts of headlines have really been dominating the conversation for the weeks leading up to this meeting. The U.S. itself taking off the table some of its own proposed restrictions, but not yet implemented. But then, Joe, we've sort of gotten this development in really the last few days that it does seem like we could potentially get some other tangible deliverables out of this. We're going to have to see how it shakes out. You, of course, mentioned this news. President Trump apparently going to bring up NVIDIA's Blackwell chips with the Chinese president, Xi Jinping. Of course, this would be very good for the company, which has been trying to regain Chinese market access since 2022. I pulled one of the statistics. NVIDIA says that their market share in China went from a 95% peak to zero. So, of course, they're trying to get back into that market. And then also, we've learned that there could be some movement when it comes to fentanyl tariffs. That would be pretty significant because maybe, Joe, it gives actually China a lower tariff on the table, not just an extension to the current truce. We'll have to see what that would end up looking like. Currently, 20% of the tariff that is in place on China is tied to fentanyl, so maybe there could be some movement even there, too.
Wow, Tyler, thank you. Is Tyler Kendall the only person awake in South Korea? Right now, it's 1 o'clock in the morning. It's 1:15 a.m. Tyler's got to get some rest. By the way, 10 p.m. Eastern time, so tonight is when President Trump will be sitting down with President Xi in what will be, of course, daylight hours tomorrow in South Korea. That'll be when you're going to bed this evening. And we're going to wake up, presumably, to a bunch of headlines tomorrow. We're going to have headlines long before then when the Fed wraps its two-day meeting in Washington. And Michael McKee is with us to get our arms around our other top story today. Fed Day, great to see you. It's like Christmas morning. God knows what we'll get, except we know exactly what we're going to get.
Life is like a box of chocolates. Well, far be it from me to be the only person who doesn't welcome you back. So welcome back. It seems to be the theme of the day now. We're going to get a 25 basis point cut from the Fed. Jay Powell and the rest of the Open Market Committee essentially blessed that view in the markets. And so we go ahead with that. And then the question that has come up really rapidly in the last 2 weeks is whether they do the end of QT. We've seen a lot more borrowing from the standing repo facility from the Fed, $10 billion today. And that suggests that they have hit the inflection point where they're getting to the point where there's not enough reserves in the system to meet demand, and so therefore they're probably going to have to announce that they're going to make some sort of change. Only a question whether they end it immediately, give us another month, or something like that. Then we have the news conference, and of course, what does Jay Powell say? He is not going to say we're definitely cutting in December. I can guarantee you that.
Okay, sure. I mean, could he just cancel the news conference? What's he supposed to say when there's no data? Michael McKee is going to show up to ask a question that would be difficult to answer when we're swimming in data, and Jay Powell doesn't have anything to base an answer on.
Well, basically, he's going to say we're here to fight inflation and prop up the economy to provide maximum employment. That's our two mandates, and so we'll do that. And he'll talk around it. He'll be asked many different ways, I'm sure. How are you measuring the economy? What are you looking at these days? And I think the bottom line answer is that they're looking at all kinds of alternative data, but they're really talking to corporate leaders to figure out what they're going to do going forward. The problem they have is corporate leaders don't know because nobody knows what Donald Trump is going to do. And now we have this meeting, as you say, within just a couple of hours with Xi Jinping, and what are they going to come up with, and how does that affect tariffs, and how does that affect the overall economy?
So what's the conversation inside the Fed then? They're going to be looking at these headlines just like you and I are to try to figure out how this impacts policy. What takes place in the next 24 hours could mean what for the Fed?
Well, that could depend because we may not have any data to know the results of what happens. I don't want to say that by December 10th the government won't be open. We hope so, but it's always possible. No, they'll look to see. Basically, their first question is what's it going to mean for the labor market? That's what they're focused on at the moment. They're worried that unemployment is going to go shooting up, and we've had a lot of announcements from companies over the past couple of days as they report earnings that they're going to either hold down headcount or they're going to be reducing headcount. We haven't seen that in big numbers yet. The jobless claims numbers that we do get have kind of shown status quo. If we start to see things go up, then that means the Fed is probably going to lean towards cutting rates again. But we also don't have the inflation data. And if all these companies who are reporting today, 4 o'clock Jay Powell is fish wrapped because we have all these tech companies reporting. If they're saying that AI is going to, be enormously beneficial to the economy, and we're going to see a lot more profits being made, and the Fed is then cutting rates into that, that's a problem as well. So it's a real dilemma for them, and as Powell said last time, and I'm sure he'll say again, there is no risk-free option.
In our remaining moment, we talked last time you were with us, the day the CPI data hit. The BLS has the most recent jobs report. Well, I guess it would be 2 jobs reports ago at this point. This is for September, I think. I'm losing track. They compiled the data, you said. That report's sitting somewhere in a computer and could, in fact, be released. Did the Fed see those numbers? Is the Fed privy to what's inside that report?
No, the Fed would get the numbers. Jay Powell would be able to see the numbers the night before, but they don't get them before that. So since it didn't even go to the White House, in theory, it wouldn't have gone to the Fed.
So they're guessing like we are on this.
Yeah, they'll get 2 jobs reports in the same day or something like that. They'll have to figure all that out.
You're on your way over there now, right?
All right.
On his way to the Fed, the great Michael McKee, who you're going to be seeing and hearing from quite a bit later on, including in that news conference. We'll have that live for you when Michael squares off with Jay Powell in the friendliest way. This is what we do around here. I'm Joe Matthew. Chuck Fleischman is up next on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at an update on Wall Street, not just any Wednesday, Fed Wednesday, 2 o'clock Wall Street time when it all comes down. Jay Powell's news conference, 2:30. Yes, we got you covered here at Bloomberg. S&P right now at 69.05. Will we close above or below 6,900 today? Up 15 right now. That is a gain of 0.2%. The Dow up almost 300, up 295, up 0.6%. 48,002 on the Dow Jones Industrial Average. NASDAQ up 150, now up 0.5%. The Russell 2000 Index of small cap shares is gaining 0.7%, and the Bloomberg Mag 7 Index up by about 0.5%. The 10-year 3.99%, the 2-year yield 3.49%. Gold is at $39.98 the ounce, up $46, up 1.2%. An advance for crude today, 60.84 barrel, up by 1.1%, and a retreat for Bitcoin down 1.3%, 111,321 on Bitcoin. Nvidia making big history today with a $5 trillion market capitalization. The CEO Jensen Huang's spree of deals catapults the AI frenzy to new heights. Nvidia up today by 2.6%. If all of this sounds familiar, it's only been 4 months since the company cracked the $4 trillion barrier. Caterpillar shares soaring after earnings. Cat shares up now by 12.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, what a fascinating market today. Charlie will have more for us in about 20 minutes with his update on Wall Street here as we watch this AI trade explode here over the past couple of days. And, of course, Washington is in the final day here of NVIDIA GTC, so we're going to be talking about that a bit more here with NVIDIA shares hitting a new all-time high. The $5 trillion man, Jensen Huang, with a remarkable keynote address yesterday that I think had a lot of people thinking when it comes to the conversation about a bubble or circular investing. Of course, we also know what some of the big challenges are, including energy, and we're going to be talking to Congressman Chuck Fleischmann about that, among other things, in just a moment. Caterpillar's something today, huh? 12%, $63 to the moon, Caterpillar, and a lot of it has to do with, AI. You drive by these data centers that they're breaking ground on, and what do you see out there? These massive pieces of equipment made by Cat, moving earth, generating power, and it's paying off in a big way here. This old line, earth-moving company, is now apparently on the bleeding edge of AI. It just has tentacles that go through the economy in a fascinating way. So welcome to day 29. That's where we are in the shutdown. It feels a lot like 28, and I suspect it'll feel a lot like 30, because we're going to do that tomorrow as well, remembering the president is in South Korea. The House is out of session. The Senate is doing its thing. Nobody is really talking, although John Thune did say that rank-and-file conversations were happening, and I don't know if Chuck Schumer would agree with him on that. We heard earlier from the Democratic leader on the floor of the Senate. Let's listen.
The bill is simple, it's moral, it's urgent, and ask John Thune why he won't put it on the floor. He decries the fact that SNAP benefits are cut off. He knows the money is available. He knows there's broad Republican support for it, and he doesn't put it on the floor. He's afraid of Trump.
All right, so everybody's still upset, and what he's referring to is this bill to fund November SNAP benefits. There's a Democratic version here that would go up against the Hawley version that we talked about. Josh Hawley, of course, with his own bill funding SNAP. There's a separate one that's going to be in the House as well that would fund the WIC program. So they're continuing to vote. By the way, yesterday there was a vote in the Senate. I believe it was lucky 13 on the clean CR. It failed, and we rinse, repeat. With the gentleman from Tennessee, as I mentioned, Republican Congressman Chuck Fleischmann was coming in to see us, and he's here now in our Washington studios. The House is out of session, but you're in town, and it's nice to see you. Thank you for coming in.
It's always great to be with you, and yes, I am in session. I am here.
You're in session.
Indeed.
That's all we need for the purposes
I'm in session 24/7.
Yeah, well, we are too here at Bloomberg. I love that. Well, let me ask you about that, and it's not where I was planning to start. How do you conduct constituent services with a staff that's not getting paid and a government that's closed?
a credit to my Washington, D.C. and district staff. They show up every day, as do I, without compensation, take calls, do the best they can with what they've got.
Yeah.
But you're right. Most of the government agencies with whom we communicate on a daily basis are closed. However, there are several folks in the federal government working. I spoke with some folks this week at GSA and others. They're taking phone calls. They're doing the best they can, working under very arduous circumstances that they did not create. So we are working. We're doing the best we can. We're taking phone calls. But this whole shutdown's outrageous.
How was it flying in? Did you get delayed?
I did last night. Actually, I was trying to come in from Chattanooga last night through Atlanta, but this morning I got the direct and made it, and just glad to be here.
I just wonder to what extent we start to see a breakdown in air traffic control, because all those guys working 60 hours and gals up in the tower are not getting paid either. Are we going to set a new record? That's foregone now, right? We're only 9 days away from, or less than that, from setting a new record shutdown.
I hope not, but I'm afraid we're headed that way. And to all of the federal workers, whether it's our air traffic controllers, our troops, our other federal workers, people who rely on the federal government, my heart goes out to you. My thanks go out to you. You're doing the right thing by showing up. TSA, I saw wonderful people in Chattanooga at TSA today. Under difficult circumstances, they were so nice and so cordial. They thanked me for working tirelessly to keep the government open. I voted that way.
And I'm foregoing pay?
Yes.
You are?
I signed away.
Member of the Republican conference? It seems like
I don't know.
Every member period might be. I don't know.
Under the Constitution, we actually have to take affirmative action, which I did. And I signed, before this started, a letter saying suspend my pay. I was never going to be in a position where I would ever take compensation while others did not. But the member of Congress or the Senate under the Constitution actually has to tell the clerk to withhold the pay, and I did do that.
Really interesting. So you've been in Washington for a minute, Congressman. How is this going to unfold? How is this going to end? Or is it actually different this time, like some seem to think?
In 15 years, and now I've been able to accede to a position where we affectionately call myself a cardinal, one of the 12 on appropriations. This is relevant to what I do. I have never been more disappointed, disgusted, disheartened, and candidly, this is a farce. There are times in this town when reasonable minds can differ. Sometimes unreasonable minds can differ. This was a Schumer shutdown for political purposes. It's wrong. It's plain and simple. He can say whatever he wants. You never shut the federal government down. It's never a good thing to do. The House voted to keep it open. And if you look at where we are, we've hurt the American people. We've hurt the American economy. We've hurt the American Republic, and we've hurt the credibility of the House and Senate, the legislative branch, with the American people at a time when it's at an all-time low. This should have never, ever happened, and Chuck Schumer needs to open the government up. It's a farce. If you look at where we are and where we're going to go, when we reopen the government, and eventually we will, it's still going to take 60 votes in the United States Senate to pass a budget, and it's still going to take Republican and Democratic votes in the House to pass a budget. Why? Because many of my brethren, and I respect them very much, will never vote for appropriation bills. I always vote for appropriation bills, but I'm an appropriator. It's like an offensive coordinator. I'm going to vote for touchdowns.
Yes, okay. So I'm sure as an appropriator, your head's exploding at this moment in time. We've never felt much further away from regular order as the idea of a full year CR is being floated now. Jason Smith just last week said he's behind it if it gets the government open or keeps it open through December 26. What gets it back open, though? Are we going to, I mean, is this perpetual? Do we go on for the rest of the year? If everyone's still talking the same as they were 29 days ago, where's the off-ramp?
The truth, which from the inception, the truth on this one, 100%, is this is a Chuck Schumer shutdown.
Well, I know you made that point,
and a farce.
Well, if he never comes around, what do you do?
The second thing is the pressure from groups that traditionally support Democrats. You saw a large federal labor union the other day call for what? A clean and open CR. You're going to start seeing more and more people call. Your show does a tremendous objective job, and I thank you for that. But what we need is more media to start calling balls and strikes. And I watch all the media, right, left, center, and the like, because I want to get that flavor and that perspective, and it helps me do my job in a more beneficial way. But the reality is we need to call out the people who have caused this. This is a Democratic caused shutdown, and the reality is it's got to stop. It's hurting the American people. It's actually hurting the American Republic right now. And I will say this, as you know, being candid, being straightforward, I am a big fan of President Trump's. But anytime you dump the burden of a government shutdown on any executive branch, Republican or Democratic, it's unfair to the executive branch because they have to make the tough choices. He's done a very good job given a very bad hand by the Congress. It's our job in the House and Senate to keep the government open, to pass budgets, and you hit on something that's so important. We failed last year. We got a continuing resolution. In fiscal 24, we had a great budget deal. I wrote an energy and water bill, probably the best one in decades for the House. This time, if we don't do this, we've imperiled the entire federal budgetary process for an entire year.
That's right.
I don't want to devolve into a year-long CR. We should never
That's your
do that.
nightmare, right?
That is
for
our
an appropriator.
That is our nightmare.
Hey, so the government's closed and will continue to stay closed for some period of time, but business is still going on. The NVIDIA GTC conference that I mentioned in its last day today here in Washington was a huge reminder of that yesterday when we consider the opportunities at hand. This market doesn't seem bothered by the shutdown. We're literally setting records every day from, in great part, advances in the AI sphere. And you and I have talked a lot about the need for energy. That was a huge part of the conversation at the NVIDIA confab. I was talking to folks last evening from NVIDIA, from OpenAI, from Crusoe, and nuclear was a huge part of the conversation. And I kept thinking, well, Congressman Fleischman's coming in tomorrow, and I'm going to ask him about this. Small modular reactors, SMRs, are those the answer to getting that clean, uninterruptible power to these data centers, or are we going to sit here for a decade while we relight these vampire nuclear sites or build new ones?
Another excellent question. I chair the American Dominance in Energy Caucus in Congress. I chair 8 energy-related caucuses. These are bipartisan caucuses that work to make America dominant in energy. A big part of that for me is nuclear. I represent Oak Ridge, does a great job. SMR, small modular reactors, are part of the solution. Advanced reactors are also part of the solution. There's Generation 3, Generation 4. I don't want to get too technical. Also microreactors. We've seen new microreactors come forward. We just had one company come into Tennessee, which is great. We also still need big nuclear. I don't want to ever downplay. A company, Holtec, has gone out. They are actually restarting a nuclear power plant that was shuttered in Michigan. That's great. Even New York State, which is certainly not a bastion of conservatism, is looking at bringing back nuclear.
NextEra in Iowa now?
And 3 Mile Island, the not damaged reactor that's been laying vacant for years, is going to be coming back. So the nuclear sector is booming. It's going to continue to boom. What we need is reliable fuel, whether that's LEU or HALEU, and we're going to start producing HALEU, highly enriched uranium. It's up to 19.5% in the United States. Again, we let that go away. We've been dependent on Russia. So the whole cycle, then we got to look at the back end of the cycle. What are we going to do with spent nuclear fuel? I think the key is reprocessing.
Let's keep talking about this. It's not going away. Congressman Chuck Fleischman, Republican from Tennessee. Many thanks, as always, for joining us right here on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg Fed. Wednesday, the Dow, the S&P, NASDAQ 100 index. Yes, Russell 2000 all advancing right now. A renewed tech rally sending the S&P 500 index up for a fifth straight day, putting the gauge on track for its longest streak of monthly gains since 2021. Right to the numbers here. S&P above 6,900, 6,907, up 16, up 0.2%. Dow Industrials up 278, up 0.6%. The Nasdaq Composite Index up 124, Nasdaq up 0.5%. The Russell 2000 Index up 0.8% right now, and the Bloomberg Mag 7 Index up 0.6%. All of this ahead of key earnings today from Alphabet, Meta Platforms, and Microsoft. 10-year 3.99% with a 2-year 3.50%. Gold up $42 the ounce, $39.94, up 1.1%. West Texas Intermediate crude up 0.8%, 60.66 a barrel, and Bitcoin at 111,228, down 1.4%. NVIDIA today became the first $5 trillion company. NVIDIA shares up 2.3%. So what are we expecting from the Federal Reserve today? Julian Emanuel is Chief Equity and Quantitative Strategist at Evercore ISI. He was interviewed this morning on Bloomberg Surveillance.
We're going to get the 25 cut. We're going to get a sort of no promises data dependency or lack of data dependency for December. But the bottom line is that the burden of proof is on the data to be either too hot in inflation or, too hot in terms of job growth to not cut another 25. And, maybe we're not even going to get any more data.
Julian Emanuel of Evercore ISI. The billionaire cable TV mogul John Malone is stepping down as chair of his media and telecoms empire. This, according to the Financial Times, marking an end to a decades-long career as an industry pioneer. Recapping stocks higher. S&P at 69.07, up by about 0.2%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. And back we go to Washington once again. Your host, here is Joe Mann.
All right, Charlie. Great to see Charlie Pellet back with us here on the Wednesday edition of Balance of Power. And great to see you. Thanks for coming along on Bloomberg Radio, on your satellite radio. We're always here on channel 121, and of course streaming live on YouTube. If you want to watch the radio on TV, search Bloomberg Business News Live. You can always pause it, back it up, go back to something that you think you missed. And at the top of the hour, we'll welcome our global television audience to the conversation. A week from today, we'll be picking up the pieces in New York following what appears to be a remarkable election in the works, with frontrunner Zoran Mamdani defying the odds as we head for the election in New York City. Times of London says Bill de Blasio is not on board, questioning the economic plans of the Democratic frontrunner. Did you see this interview? The apology has been issued. De Blasio says he was astounded. Yes, a complete fabrication. The Times of London never spoke to Bill de Blasio. I'm not sure exactly why they would have spoken with Bill de Blasio. So once you get over that bit of randomness and find out that this actually was a complete farce, the Times has apologized and removed the article immediately after discovering that our reporter, this is the statement, had been misled by an individual falsely claiming to be the former New York mayor. The British newspaper with egg on its face. These are the kind of stories that really make us wonder. We want to make sure that this really is Jeannie Shanzano. And of course, Ashley Davis. I'm pretty sure she's with me here in studio. As we assemble our panel, Jeannie Shanzano, Bloomberg Politics contributor, our Democratic analyst, and of course, the Democracy visiting fellow at Harvard Kennedy School's Ash Center. Easy for me to say, Jeannie. Ashley Davis, partner at S3, our Republican strategist, with us as well, because we're going to start talking about the idea of a third term here. Certainly Donald Trump has been talking about it, and it seems that he has read the Constitution when it comes to this idea. Here's the president on this idea of running in 2028.
Based on what I read, I guess I'm not allowed to run, so we'll see what happens.
It says you're trolling when you talk about a third term.
Well, I don't think he said that. I don't think he'd use that term, but it's a very interesting thing. I have the the best numbers for any president in many years, any president. And I would say that if you read it, it's pretty clear. I'm not allowed to run. It's too bad.
All right, if you didn't hear that over he was in the plane talking to reporters in the back of the plane. It's pretty clear I'm not allowed to run. It's too bad. The speaker knew about this. Mike Johnson talked about it earlier and was pretty clear about what the Constitution says. Listen.
I think the president knows, and he and I have talked about the constrictions of the Constitution, as much as so many of the American people lament that. The Trump 2028 cap is one of the most popular that's ever been produced. I don't see a way to amend the Constitution because it takes about 10 years to do that, as you all know, to allow all the states to ratify what 2/3 of the House and 3/4 of the states would approve. So I don't see the path for that.
Okay, so I think maybe we've put this to bed. Ashley Davis, you tell me.
Thank God. I've been saying this.
This keeps
all
coming
along.
up because Steve Bannon keeps talking about it. Then a reporter asks, and it's a news story again.
Well, absolutely. And of course, the president likes to stir the pot a little bit because he does not want to be a lame duck.
Is that what this is about?
Oh, I think so. But also, why not stir the pot? Because that's what he does, right?
Yes.
And so I've been saying this all along that, and actually the speaker is a constitutional lawyer. So he actually
You might
knows
know
this.
that, yeah.
Yes. But there's no way that this was going to happen. Plus, he's getting pretty old.
Well, that's true.
And so I just never thought this was going to happen. But it was always fun for people to like jump on because then it showed more that he was acting like a king and, you know, all of those talking points. But it's very helpful he puts it to bed. And then I thought it was interesting that he was actually touting both of potential replacements yesterday. I think it was yesterday, which was both Rubio and Vance. So he's got both of them. He's not necessarily just going for Vance.
Fascinating. It's maybe even a dream ticket, according to what the president said. Maybe they could run together. Jeannie, what do you make of this? Because a lot of folks think this is just Steve Bannon and Donald Trump trying to troll the libs. Is there more to it than that?
You know, one of the best things I heard about this was somebody said, have you ever rented? When you rent, you don't even buy like a rug or like fix a window because you're going to be moving out. And what has Donald Trump done? He has knocked down the East Wing. And so he doesn't exhibit renter behavior, in other words. And it's not just his words, it's his actions. And so and you listen to that statement and he says things like, you know, as if he's just discovered the 22nd Amendment. Oh, it doesn't look like I can run. But I don't think anybody thought he was going to run. What he would do is do what he's done 50 times already since he's been there this term. That's declare a national emergency, like the one we have in Portland or the one in D.C. or the one in L.A. and say, oh, gosh, guys, I've got to stay on. So as much as I would like to believe this puts it to rest, I'm not so sure it does. I am a little worried about Mike Johnson. I am.
So it's working. This is why Steve Bannon's doing this. This is amazing. So we will then talk about this for the next 3 years.
Listen, I said to someone yesterday, we are 9 months into this administration and a little bit more now, 10, and everyone's exhausted, right?
Yeah.
Republicans and Democrats, because he's going at lightning speed. Because listen, he may only have until next December, really, if the House flips, especially because if that happens, then all of the people in the administration are going to be called up in front of the House, and so there is like a limited time frame that's certain, which is between now and next December 31st for him to actually get his agenda done.
Really interesting. I want to ask you both about what's happening in the Senate, because this is the fun stuff. It's fun to talk about it, right? It's made for talk shows. That's why Steve Bannon talks about it every day. But there are a lot of questions about some of the other stories that we're following here today, specifically when it comes to trade, tariffs, Brazil, maybe Canada too. We'll see what these next couple of votes bring. But the Senate yesterday voted to terminate the tariffs that the president put on Brazil. Remember, he was personally offended by the way they had treated their former president, slapped 50% on there, and we saw a 52-48 vote with five Republicans helping to push this through. Susan Collins, Mitch McConnell, Lisa Murkowski, Rand Paul, Tom Tillis. Granted, hey, look at that. I love the baseball cards on YouTube. Granted, these are the troublemakers, right, Ashley? But what does this say about the upper chamber drawing the line here when it comes to the Trump agenda?
Definitely it was a messaging vote. When you look at that, Mitch McConnell, I would say, I mean, he just feels freedom, right? Because he was never able to vote really what he wanted to do before. But a lot of these senators just don't believe in kind of the trade deals that the president's doing or how he's doing it. And I think this was an easy vote for them because this will never pass the House. It can't pass the House.
That's correct.
And so
maybe
again,
they wouldn't have voted that way if they didn't have that.
Maybe
covered.
not, but yeah, I mean, it's in my mind, it's an easy vote if you need to. And you have, listen, Kentucky. So for McConnell and Rand Paul, you have major impacts with, like, let's just say the whiskey industry, and so they would definitely want to say they're against tariffs.
Yeah. What do you think of the feisty five here, Jeannie? Collins, McConnell, Murkowski, Paul, Tillis, all voting with the Democrats. There goes CC again, if you don't know what they look like on YouTube. Does this resolution add up to news for you, or is this just what you would expect out of these five?
Yeah, go Cece. Those are amazing, and it's baseball season. She's doing it all. It's
That's
amazing.
Right.
And I like your feisty five, Joe. I am surprised that more Republicans didn't vote the way of the feisty five, as you call them. And the reason is because on Tuesday, Donald Trump's tariff regime is going before the Supreme Court. And the argument is he has this power because it's an emergency. Now we've got him raising tariffs on Canada as a result of a campaign ad he doesn't like, hardly an emergency. And we've got him raising tariffs on Brazil because he doesn't like how they treat their former leader, hardly an emergency. So I think these feisty five are doing him a favor. It is a reminder that his arguments for these tariffs have not made sense from the minute he started Liberation Day. And if he wants to win that Supreme Court case, and he says he may go to the court and sit there himself, which is going to be great, great television. If he wants to win, he can't keep tariffing people for any old reason, like he doesn't like what they're doing domestically.
I feel like feisty5.com. Can we see if somebody's bought that yet, James? That's mine if it's there. Look, we spent time last week talking about tariffs and Ronald Reagan after this Ontario ad ran. Ashley, is the Republican Party modulating its stance on tariffs, or is this just a follow Trump for now, and when he's done, we go back to hating this idea and embracing free trade?
Yeah, I mean, I don't know. I think people are liking, if you believe the numbers that Besson's throwing out, that we have $400 billion by the end of the year that we're collecting in tariffs, and does that help with the deficit? If we put it towards, obviously we're going to put most of it towards the deficit. So will people like that? I just think that there's a lot of, Rand Paul, for example, is never going to like tariffs. And so I think everyone's willing to stick with the president right now in regards to majority of Republicans. But what happens if the Supreme Court does rule against the president? I mean, that's going to be a major
paying that back.
And also, like, listen, let's see what happens tomorrow with his president with China, with his meeting with China. Sure. And maybe I'm assuming the goal is to get a pretty good deal. So going into the Supreme Court case, like, at least China's taken off the table. But we have to deal with India too. But India's tied up, is remember, with Russia.
You're right.
And Ukraine.
And that's not getting any better.
No.
And no one's talking about that here on the eve of the China meeting. So it's important that you brought that up. Requested host, feisty5.com could not be resolved by DNS, Jeannie. I think we're going to get in on this. And I'll split it with you guys if this thing goes to the moon. It's available. That's right. See the stuff that we find out live here on the air?
You're going to go viral.
Absolutely. That's the idea. So, Jeannie, talk to us about the meeting tomorrow then. As Ashley mentioned, if there's a grand deal struck or even a framework that brings down tariffs with China, does the rest of this still matter?
It absolutely does. I am going to go with Ronald Reagan. And by the way, with most Republicans and most Democrats, which is that widespread tariffs have never been good for the economy, never been good for us in terms of security, and not been good politics. I mean, when the Republicans did this in the 1930s, they lost the House and the Senate for 60 years. Ronald Reagan was right in 1987. He is right today. And so I think we will see some movement forward with China tomorrow, but it's not going to be enough because these tariffs are not just about China or India. They are about our closest allies, closest friends, and closest neighbors, and they have nothing to do with emergencies. They have everything to do with Donald Trump's old commitment from back when he was a very young man that tariffs are the economic answer. He's sticking to it, but unfortunately for him, the Constitution doesn't allow it.
That's Jeannie Shanzano and, of course, Ashley Davis, our great panel today. They'll be back in our second hour when we welcome our global television audience to the conversation. We've got to talk about the Fed here. We're just about a half hour out from our special coverage and 1 hour away from the big announcement on interest rates. Will it be a quarter point? Find out together on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Counting down to the Fed and the meeting of the minds. Welcome to the Wednesday edition as we approach the Fed's announcement on interest rates just an hour away. and President Trump's meeting with Xi Jinping. That'll take place tonight, East Coast time. This hour, we're going to get an update from South Korea live as the president makes his way through the APEC summit. And we'll spend some time with Republican Senator Shelley Moore Capito of West Virginia on this day 29 of the government shutdown. Our political panel is in place, and by the time this hour is out, we'll have special coverage on this Fed Day in Washington. Let's start right now with a look at Wall Street. Charlie Pellet has the latest on the Wednesday trade as we get set for an interest rate cut. At least that's what the market's looking for. Charlie, how does the market look?
Absolutely right about that, Joe Matthew. 1 hour from now, when it all comes down, we got you covered here on Bloomberg Television and Radio. Our Michael McKee standing by in Washington for that Fed decision as it drops. And, of course, Jay Powell's news conference. We got you covered on that, too, live, 2:30 p.m. Wall Street time. Equities higher across the board right now with the Dow, the S&P, NASDAQ 100 index, yes, Russell 2000 index, all solidly advancing. Right to the numbers, S&P up 18 now, 69.09. Will we hold above that number today with a close there? Right now, the S&P up 0.3%. The Dow up 267. That is a gain of 0.6%. NASDAQ up 137 right now. The NASDAQ Composite Index up by about 0.6%. Our Mag 7 Index higher now by 0.6%. With a 10-year at 3.99%, the 2-year 3.50%, the 30-year 4.56%. Spot gold at $39.93 the ounce, up 1% today, higher by $41. Silver up 2.2%, $48.10 for an ounce of silver, and crude now at $60.62 a barrel. WTI up by about 0.8%. Nvidia making corporate and market history today with a $5 trillion market cap as CEO Jensen Huang's spree of deals catapults the AI intelligence frenzy to new heights. And by the way, it's only been 4 months since the company cracked the $4 trillion barrier. Coming up after the close of trading, a ton of very important earnings. We'll be hearing from Alphabet, Microsoft, and Meta Platforms, and of course, Amazon and Apple follow tomorrow. Recapping S&P right now up 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, we thank you. Charlie Pellet live from New York. He'll have more in just about 15 minutes as we follow the beat here on the markets, working our way up to the Fed's announcement on interest rates just under an hour from now. Our special coverage here on Bloomberg TV and radio will begin at 1:30 p.m. Eastern Time, just about a half hour away, as you would expect on a Fed day in Washington. Michael McKee has just made his way over to the Federal Reserve, and of course, he'll be asking questions of Chair Jay Powell once the news conference begins at 2:30. So you know the cycle here. We're going to witness this all together in real time on Bloomberg with a Federal Reserve that is dealing with a major lack of data right now because of a government shutdown that is now 29 days old. This is what we're going to be talking about with the senator from West Virginia in just a moment. Shelley Moore Capito is with us, knowing that the House is out of session, the president's out of the country, and the latest voting in the Senate yesterday, number 13, lucky 13, the same as the first 12. The continuing resolution that Republicans passed in the House failed again. There is talk about rank and file talks getting under backroom conversations, but we've been hearing that for weeks. And the fact of the matter is there is no off-ramp still today. So it won't take that much more to set a new record. The record is 35 days in the first Trump administration. Then again, that was a partial shutdown. This is already a record full shutdown. And there's going to be an attempt to vote on some legislation. There's a Democratic version, actually a couple of Democratic versions, and then there's the Josh Hawley version to fulfill SNAP benefits for the month of October. On the 1st, this is food stamps. We talk about SNAP. Food stamps will not be funded any longer, and many thought this would be an inflection point to potentially break the logjam. Doesn't sound like it, as Chuck Schumer, the Democratic leader in the Senate, was discussing earlier on the floor. Listen.
The bill is simple, it's moral, it's urgent, and ask John Thune why he won't put it on the floor. He decries the fact that SNAP benefits are cut off. He knows the money is available. He knows there's broad Republican support for it, and he doesn't put it on the floor. He's afraid of Trump.
So this doesn't sound like it's getting any better. And it's where we start our conversation, as I mentioned, with Republican Senator Shelley Moore Capito of West Virginia. She's live on Capitol Hill. And Senator, it's great to see you on Bloomberg TV and radio. Our listeners should know, and we discussed this, J.D. Vance made a visit to Capitol Hill, and it was upon your invitation as chair of the Republican Policy Committee. What was the idea of having the vice president join the conversation, and was it productive? Did he bring new ideas or hear ideas from you and your colleagues?
Well, it's always productive to have the vice president. He's such a great leader, and he's obviously knows everybody, all the Republican senators, because he was one just a short time ago. And so we have a great personal relationship with him. He came on the heels of his visit, obviously, to Israel, but he wanted to reemphasize that opening the government is the most sensible, easiest, sanest way to begin these negotiations after we open the government. So he's very supportive of the position that many of us have taken, and I think he feels as strongly about it as we do. He also talked about tariffs. He reassured us that the president is moving forward in a very measured way to make sure the American worker is getting the advantages from tariffs, and the deals that he's been solidifying on his Asian trip with Malaysia and Cambodia and others are going to really enhance American manufacturing. And then he talked a lot about chips and the situation with China and special metals and all of these things. So it was a comprehensive visit, but I think it really reinforced to me anyway that we have ourselves set on a path, this country on a path to really bring more prosperity to the American worker, and that's a very uniting principle for us.
I don't know if you got into the idea of SNAP benefits expiring, Senator, but you might have heard me refer to some of the legislation that has been put forth with 3 days here until assistance programs run out of money. What do you think of Senator Josh Hawley's idea here to fund SNAP? I know there's a separate version in the House that Representative Bresnahan is working on to fund the WIC program. Should we be entertaining these ideas? Or does that create a scenario in which you're picking favorites? Some people are getting paid, others are not. Some programs are being funded, others are not, when we should simply be focused on reopening the government?
Well, I mean, the simple answer here is if you reopen the government, all of these issues go away. SNAP benefits, air traffic controllers, military, government services, et cetera. And so now that we're into the 29 days, it is really beginning to wear on the American people. So you take my state of West Virginia, 18% of our households have a SNAP benefit. I think about the young mother who has a single mother with children. That's a frightening prospect to think that she wouldn't have the money to feed her children, or a disabled or elderly couple. And so these are real human problems that honestly, Chuck Schumer can pontificate on the floor about how it's John Thune's fault. I don't think the American people care whose fault it is. Reopening the government is the simplest, easiest way to proceed. We do have an agriculture bill out there that does have SNAP benefits in the appropriations bill. We could look at that as a possible vehicle. I am on Josh Hawley's bill because of the heavy impacts, almost, like I said, almost 20% of my state. It's a heavy impact to my state. And if his bill were to come to the floor, I would be, I'm a co-sponsor now, and I would also be in favor of voting for it.
That's great to know. Do you know if it would pass? Do you have the votes if it gets to the floor?
You know, I would suspect I believe there's probably at least 10 and probably more co-sponsors to that bill, which would give you the 60 vote margin to move forward. But we have to keep going back to the political nature of this shutdown, and also the easiest, simplest way is to do what we've done, what I did 13 times when President Biden was the president, just vote to reopen the government to a continuing resolution while we debate the issues of health care premiums and other issues that want to be debated.
Well, you know, you've been hearing this, I'm sure. If I'm hearing it, you're hearing it, Senator, the idea of a full-year continuing resolution. The head of Ways and Means in the House, Jason Smith, told us he was behind that idea. We know the White House has floated it. John Thune at one point said, hey, this might be the way out of shutdowns for the next year. But I know there are a lot of concerns among appropriators, and maybe you share their concerns that this is still a Joe Biden budget.
Right.
Would you vote for a year-long CR?
You know, I'm going to leave that to see if that's an option. I don't know where we would be to have to make that vote, but I'm an appropriator myself. I'm the chairman of the Health, Education, and Labor Subcommittee, enormous appropriating for the year. I want to have President Trump's priorities in the appropriations process. I want to have my priorities in the appropriations process. I don't want to cede that to just simply what I think is sort of mindless spending in a continuing resolution here for forever for a 13-month period of time. So I would rather see us go to the appropriations process on the floor, like Senator Thune has brought to the floor, which, by the way, Senator Schumer never did the year before, and so we can actually do the bipartisan work that we do so well on appropriations. That's the preferred route. If we can get 7 or 8 of these bills over the threshold, and you may be rolling your eyes thinking, how could they possibly do that when they can't keep the government open? I'm an optimist. I think we can. We've worked on these bills before, and they're exceedingly important to make sure that President Trump gets the priorities that he has and that we share with him into the appropriating cycle.
You're on half the committees in the Senate, of course. That includes Commerce, and I'm wondering your thoughts about what's going to happen with the FAA here, Senator. The TSA, I realize, is a slightly different matter here, but everybody is working from the air traffic control tower down to the security checkpoint in the airport. They're all working without pay right now, and at some point, based on what we're hearing from workers who are at 60 hours a week, they might have to look for other work. The unions might decide to start doing sick-outs or walkouts. If we start seeing massive cancellations and delays, and I know we're already getting a taste with some of the ground stops that have been happening around the country, is that what shakes loose a couple of Democrats to sign on to this CR? Or do you see it differently?
No, I don't see it differently. I do think that is definitely a pressure point when you see the thousands of delays. And you also realize at what point is safety imperiled here, and that is the greater question. But, we're asking people, or a shutdown asks people to skip not just one paycheck. Now we're into 2 paychecks. These are families. Yeah. These are people that have obligations, that have it is such a disservice to not just the air traffic controllers, but to every single federal employee, which in my state are quite a few. And not to mention the troops, the Coast Guard, the TSA agents, all of these folks. And so simply open the government, get the money flowing to those that are working and have worked, and provide the services, and let's get on to negotiation. Let's drop the politics of a shutdown. I don't think it's working for Senator Schumer, and I think I could hear a little desperation in his voice there when you played his clip. I think he's looking for a way out, and we have an easy way to do it with the bipartisan talks that we've had over premiums and other issues that we all share concerns about.
Yeah. Definitely had a frog in his throat, Senator. I want to ask you before you leave us about tariffs, because there was an important vote yesterday that really raised a lot of eyebrows, a vote to eliminate the 50% tariff on Brazil. And it was a 52-48 vote. It came with the support of a group I was referring to earlier as the Feisty Five. Your Republican colleagues, Susan Collins, Mitch McConnell, Lisa Murkowski, Rand Paul, and Tom Tillis. Should we assume that because it is those 5, that this is not some sort of groundswell to check the president in the Senate? Or is this, in fact, the line that has been drawn by Republicans when it comes to trade?
Well, I think you see a variety of opinions. We have a lot of free traders within the Republican conference. We have a lot of folks whose industries over years, and I would put myself in this position, have been exceedingly disadvantaged by the unfair trade practices with some with Canada, but also China and other places where our manufacturing, we've lost jobs, and in some cases our products are very much at a disadvantage. And I'm glad that President Trump's going to work for the American worker through tariffs. But here's what I would say to him if he was sitting right here in front of me. This needs to be settled, and it needs to be settled now. We can't, the ebbs and flows and uncertainty that we have in some cases, I think, does provide a lot of capital staying on the sidelines, lack of investment, and people are not able to move forward. So I think certainty, and that means set the policies, set the reciprocal trade policies that are fair and that help our American worker, and let's move from there. And I think we'll satisfy both goals, both the worker goal, but also the goal of the president for us to not be in a disadvantaged situation.
Really interesting and great to talk to you, Senator. Shelley Moore Capito of West Virginia. We appreciate the conversation with us live from Capitol Hill. See, we've had 2 lawmakers here who are in Washington, even though, well, the House is out of session. The Senate is still at it, having now voted 13 times. Now, we just spoke quite a bit about President Trump and the meeting tomorrow. If you're on the East Coast right now, it's tonight, actually. Because of our time difference with South Korea, President Trump will be sitting down with President Xi at roughly 10 p.m. Eastern Time tonight. And yes, the stakes are very high following his time in South Korea, in which another framework trade agreement was codified into an actual trade deal. Joining us from South Korea right now, she's in fact in Gyeongju, where President Trump is going to be meeting tomorrow with President Xi. Tyler Kendall, Bloomberg's Washington correspondent, joins us now from the other side of the world ahead of this meeting. Tyler, I believe it's about 2 o'clock in the morning where you are. What kind of preparations are going into this meeting tomorrow, and what will be the venue?
Yeah, hey, Joe. So we have confirmation on the city. It's going to be in Busan, about an hour north from where I currently am. There's speculation on the venue right now. We can't publicly confirm it, but we are expecting this bilateral meeting to happen. We'll see if press gets invited in or if President Trump gives any sort of remarks afterward. That's something that we're keenly watching for. As you well know, at the White House, these bilateral meetings often open up. But considering just how high the stakes are, we're waiting to see if that's the case here, too. Now, you laid it out before. There's really just so much on the table right now that we just don't know when it comes to what these 2 leaders are actually going to agree to. But what has been clear is that there's been a simmering of tensions in recent days. But I have to say, from following President Trump these last few days here in Asia, it really does feel like the White House is trying to gain as much leverage as possible, no matter going in to this high-stakes meeting with Chinese President Xi Jinping. Look at the agreements signed in Tokyo yesterday on critical minerals, on shipbuildings, these pledged investments in these areas that the U.S. has deemed absolutely essential when it comes to countering China. And then today, as you mentioned, inking this long-awaited trade deal with South Korea. Now, Joe, this was highly anticipated. The president had telegraphed earlier that this was going to happen this week, but it came after a lot of months of negotiating, some last-minute negotiating and pomp and circumstance here on the ground in South Korea. But we can officially say that they now have that 15% tariff in place, and that also extends to autos. That is absolutely critical, as you well know, so that South Korea's market can compete with their neighbor Japan's market, which brings us back to kind of closes the loop on this whole trip, because they want to stay competitive in this region, particularly when it comes to car making and autos.
Well, we're lucky to have you there, Tyler. Of course, Tyler will have much more coverage for us throughout the course of this meeting that, again, will start 10 p.m. Eastern Time, 10 p.m. tonight. It'll be already Thursday in South Korea. After the meeting with the South Korean president, President Lee gave President Trump a crown. Did you see that? The crown that symbolizes the divine connection, they said, between the authority of the heavens, sovereignty on earth, as well as the strong leadership and authority of a leader. President Lee, wearing a gold tie, also presented President Trump with a medal, the Grand Order of the Mugagunghwa, South Korea's highest civil honor. They had a great lunch, seafood salad tossed with Thousand Island dressing and a brownie that included a gold decoration on the front of it. What will tomorrow's meeting bring? We'll find out together here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got 39 minutes to go until the Fed decision drops. Just over an hour until we hear from Fed Chair Jay Powell. And our coverage kicks off just 9 minutes from now. Right now, the Dow, the S&P, NASDAQ are all advancing. A renewed tech rally sending the S&P 500 index up for a fifth straight day. S&P right now at 6906, up 15. That is a gain there of 0.2%. A lot of green today with the Dow up 200 points, up 0.4%. The NASDAQ Composite Index up 124, up 0.5. The NASDAQ 100 Index up 0.3%. The Russell 2000 Index up 0.6%. And the Mag 7 Index, ahead of earnings coming up after the bell from Alphabet, Meta, and Microsoft. That index up now by 0.7%. 10-year, 4.00%, with the 2-year currently yielding 3.51%. Gold is at $39.93 the ounce. Spot gold up 1%. West Texas Intermediate crude oil advancing 0.8%, 60.61 a barrel. Caterpillar shares are soaring after the company posted stronger than expected earnings and revenue. Caterpillar up now by 12.6%. Verizon out with earnings this morning. Stock up by 2%. Among rivals, AT&T down 2%. T-Mobile lower by 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, nice to see you, Charlie. We'll have more with Charlie Pellet on the other side, of course, of our special coverage of today's Federal Reserve decision. That coverage starts in just about 7 minutes, and we're going to carry you through not only the announcement on interest rates, of course, the news conference as well. That's set for 2:30 p.m. Eastern Time. Bloomberg's Michael McKee is already ensconced at the Fed, and we'll have some questions for the Fed chair once he gets to the podium. So thanks for being with us here on this important occasion. The market's in a great mood, despite the government now being closed for 29 days, as we discussed with Senator Shelley Moore Capito, and despite the uncertainty surrounding what I'll call tonight's meeting between President Trump and President Xi. That's going to happen at 10 p.m. Eastern Time. They're in South Korea. And so the market's going to be waking up to headlines from that meeting, only hours after hearing from the Federal Reserve Chair. So we've got a lot of balls in the air here, and we want to spend some time with our panel as we head for our special coverage. Bloomberg Politics contributor Jeannie Shanzano is with us, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Republican strategist Ashley Davis is here, partner at the S3 Group, former special assistant to the Director of Homeland Security. Wonderful to have you both here. As we walk up to our special coverage, Jeannie, I wonder your thoughts on this job that Jay Powell has today. We discussed it earlier with Michael McKee. The market clearly anticipates it's a very anticlimactic decision on rates, but what is he going to say in the news conference when there's such a dearth of data because of the government shutdown? We didn't even see the last jobs report, Jeannie. How can he answer Michael McKee today?
Yeah, it's going to be fascinating because he doesn't have the data to go on. And of course, Jay Powell always says they are making these decisions based on the data. So Michael's going to have a lot to ask him. I don't know if he'll have some answers. And, you know, for Jerome Powell, what we're looking at is, I really think, a tale of two very different worlds. You just mentioned the stock market booming, liking what they see despite this uncertainty. And yet you look at the polls of the American public, and they have a dismal view of the economy. And I'm not sure how somebody like Jerome Powell threads that needle. You know, he is not the one that's unpopular in terms of the economy necessarily. That's Donald Trump. The lowest approval ratings of any president in the second term on the economy since they started polling and tracking this in 1977. So they are pretty dismal numbers, despite what Donald Trump likes to say, and despite the numbers we're seeing on the stock market.
I want to mention just a quick breaking story that just crossed our terminal. Alaska Air says disruptions have been caused to key systems, currently experiencing a disruption caused by Microsoft's Azure outage. This is bad timing for Microsoft, which is preparing to deliver its earnings report. And shares of Mr. Softy are now down about 0.5%. Shares of Alaska Air are down almost 2%. We're not sure what's going to come from this, but we will keep our eyes on this for you. Ashley, I don't know how we describe the state of this economy going into this Fed decision when, A, we have unresolved tariffs, we have a government shutdown that's impacting an already weakening job market. Jay Powell's got his work cut out for him, doesn't he?
Absolutely, but this is like the worst kept secret, right? It's
Of course.
anticlimactic. Is there going to be another quarter in the beginning, of next year as well? And I think it's been talked about so much that the market's
anticlimactic.
Exactly.
But
and
what
also
does he
the
say in
tariffs
the news
too.
conference? Because they'll be asked about tariffs, and this meeting hasn't happened yet.
No, well, the China meeting hasn't either. But I don't think. Listen,
That's
what
the
I'm
meeting
watching today, number one, is what the vote's going to be, because I don't think it's going to be unanimous. Do you?
Which vote? In terms of the Fed, you're saying, not the Senate vote.
No,
on
no, no,
the
no,
CR.
no, no, no.
What do I know? But if that's the case, are you talking about somebody other than Stephen Myron?
Yeah, I mean, I don't think anyone doesn't think that it needs to happen, but I think there's going to maybe be some political statements at the Fed today with their vote. But I mean, listen, the whole thing is very difficult because, and it was exactly right when Jeannie said the American people are still paying more for their groceries, especially. I mean, and that's what's really impacting the everyday American. Obviously, gas prices are down. The stock markets are way up, out of control up. No one even listens to tariffs anymore, like the tariff conversation anywhere. China was the only one that's been moving the markets a little bit, but
we're assuming that that's going to be solved.
It's going to be fine, yeah. So I think listen, I will never say that Donald Trump hasn't done so much these first 10 months that he's been in office, good or bad. He's done more than probably anyone we have in our lifetime. However, if he doesn't get our day-to-day lives under control in regards to just everyday prices, that's what's going to hurt him, and that's what's going to hurt the midterms. I mean, again, like what we were talking about last hour, he's not going to be he's not running again for re-election, but he has a huge tailwind.
So then the job, interesting, becomes a more difficult one for Jay Powell in this case, Jeannie, and the president's calling him out every chance that he can get. What will be the narrative that comes from the Fed chair today, if nothing more than ask me when the data are released? As I mentioned, we haven't even seen the most recent BLS jobs data, the most recent monthly report. So technically, other than a CPI report and a beige book, I think Jay Powell doesn't know anything he knew at the last meeting.
That's right. And how much more could he add without that data? It is simply, not consistent with the way he has comported himself. I can't imagine he would step out in advance of any data coming. So I think we're going to hear a lot of, we will have to wait and see, or, we can't answer that until we get this data. And I think it's so important to think about as we look at what's happening in China tomorrow, we think about the uncertainty that the tariffs have brought. The American public is looking at this tariff regime, and they are not happy with what they are seeing. We've talked about the soybean farmers. As much as Donald Trump says that he has beat inflation, the American public isn't feeling that. To Ashley's point, you even had Fed member Stephen Myron come out and say the stunting of the job hirings is a result of uncertainty over tariffs. And so all of that in combination, the irony is Donald Trump likes to blame Jerome Powell and kick him around a bit, but this is really on Donald Trump's lap and in his hands. And where is he? He's overseas doing this deal, but the American public want him here addressing what he was elected to do, which is to make their lives more affordable, and that has not happened.
In our remaining moment or so, Ashley, we see wage gains cooling to some of the lowest levels in more than a decade, according to the J.P. Morgan Chase Institute. Younger American workers bearing the brunt of the slowdown. You mentioned prices. When you combine that with wages, how do they collide for the midterms?
I mean, listen, we have to wait and see, but I do think that the wages are going through a correction. Obviously not in some sectors. If you are in the AI sector, you're getting paid.
Doing pretty well.
You're doing very well, and you're being sought after by many different companies. But yeah, I do think there's a course correction here. But also, what I'm watching is some of the DOGE impacts that have happened. Listen, have always said, Joe, that federal government was too big. Whether you agree how it was handled or not through the DOGE stuff, that's one thing. However, what's happening right now is through DOGE and the government cutting back is you see some of these major consultancies, EY, Accenture, really letting off a lot of their people because there isn't that money just flying out the door from
Even
the federal
some
government.
of the Mag 7 been laying off, if you look at what we saw
Exactly.
from
Yeah,
Amazon.
with Amazon.
Ashley Davis, Jeannie Shanzano, many thanks to both of you for a great panel, a special edition of Bloomberg Surveillance, The Fed Decides.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live on TV and radio, counting down to another Fed rate decision and Chairman Powell news conference. That decision 27 minutes away. The news conference 30 minutes after that. Equities going into this at all-time highs on the S&P 500.
I look at where we are, John, and I just have to state that the Fed balance sheet is everything today.
QT on the cards, potentially ending that a little bit later on this afternoon. That's going to be a focus for many people in this market. Just how much guidance can they offer you going into December, given the limited amount of economic data? Think about where we are right now. GDP, close to 3. Inflation, close to 3. Equities at all-time highs. And this Federal Reserve, TK, is about to cut interest rates all over again.
They're going to go over again, and you wonder what the dissents are. You wonder if we see Marion here down to 50 beeps again, as we've discussed many times. But this morning, John, I'm sure you saw it as well. Check after check after check is about the Fed balance sheet. Never have we had a Fed meeting so focused on QE. What did Norrell used to say? QE1, QE2 with that accent is. That's where we are.
TK, there's only so much they can say without economic data. They just can't offer guidance about a December decision. So the focus has shifted, I think, for the market elsewhere. The bulk of economists that we've surveyed here at Bloomberg, at least on this program, have suggested that decision may come in December. Maybe even the new year. Is October too soon?
I see a lot of parlor game on January and into the new year. How can we do that? We are absolutely blind. I know we're making it up as we go. What do they see? ADP's coming out with a weekly statistic? You're kidding me. We're blind on the labor economy.
Let's turn to the markets on the S&P 500, potentially a 5-day winning streak on the S&P right now. Record highs across the board. On the NASDAQ up by 0.3. For the NASDAQ 100, the attention is going to shift to the tech earnings after the closing bell a little bit later. Before we get to that, we need to deal with this interest rate decision later on this afternoon, just 25 minutes away. Coming up very shortly, we'll catch up with JP Morgan's Bob Michael, Kathy Jones of Charles Schwab, and SocGen's Subhash Rajappa. They'll take us into this decision at 2 p.m. Eastern Time. Then immediately afterwards, we'll speak to the former Fed Vice Chair, Rich Clarida, Diane Swank of KPMG, Deutsche Bank's Matt Lazzetti, and the post-game conversation. On set in the studio, Apollo's Torsten Slok, BlackRock's Jeff Rosenberg coming up.
It's a great list. I don't know who in those guests are on the chairman list. I mean, we got to move it out from 5 people to 6 people. I'm sorry. Where is Clarida? Well, how can he not be on that list?
I think maybe things have changed down at the Federal Reserve, TK, the kind of names in the mix. Secretary Besson's name is still doing the rounds.
Neil Dutta heated on this.
The longer this goes on, Anne-Marie said this a few times, the longer this goes on, the more likely it will be that it could be the Treasury Secretary.
It's an eclectic mix. I give him credit for that, but there's some names that are obviously missing. How you could not have the gentleman from PIMCO in Columbia not on the list, I just think is absurd.
Rich Clarida just around the corner with us right now. Bob Michael of JP Morgan Asset Management. Good afternoon, Bob. Good to see you.
Happy to be here.
What are you focused on, and what are you expecting at 2 p.m. Eastern Time?
What we're expecting at 2 is a 25 basis point rate cut, and they're going to end quantitative tightening at the end of the month. I think those are pretty much baked into the markets. What are we looking for? It's all going to be about the post-meeting statement and the number of dissents. Are we going to see just Stephen Myron frozen out by the rest of the FOMC and that one lone dot? I think pointing to 75 basis points in rate cuts, and everyone else at 25, or are we going to see a couple others down in the 50 basis point rate cut cap?
Do you think dissent can cut both ways at this particular meeting?
I don't think so. I think the Fed believes that this is a risk management exercise. They've seen some softening in the labor market. They do believe that the neutral rate is somewhere below where they are now. So 25 basis points to me looks like the obvious place to go. I don't think there are going to be any dissents to the hawkish side.
With all your experience, we have a shutdown, we're blind, and we clearly have two Americas. The food line stories are heartbreaking, weighing in November 1. We've got a military that may or may not get paid. Who does the Fed think about today when they make this decision? Who does the chairman address at the press conference?
Well, I think they think about the broader economy, and they look to relieve pressure on businesses and households. So bringing down the Fed funds rate by 25 basis points does have an impact on corporate America. Yes. A lot of corporate America, we know from private credit, a 50 million EBITDA company could carry 350 million worth of debt. So it means a lot. And if businesses feel that the pressure is being relieved, then they may start hiring again or retain their workforce into year-end, into the One Big Beautiful Bill Act.
So that tells me this is a snooze fest this afternoon, but it's not, because his mandate, given the politics of the nation and the national uncertainty, is he's got to get out front and surprise with a more dovish cast.
Perhaps that comes out at the press conference.
Yes, at the press conference.
I don't know, because as John started off, equity markets are at a high. Credit spreads are very tight. The labor market, you look at the low fours unemployment, 4.3%, doesn't look bad.
I got a question for you. Given everything we've got, John, what would the dissent be at the Bank of England today if they had the same cards? There'd be visible back and forth.
So I think this is potentially a question for next year. I remember a time when Governor King dissented on his own committee and was pushing for more QE, and his committee was voting against him. And maybe that's a question for 2026. If you get someone super dovish in the seat for 2026, can he get the rest of the committee to come with him? I think a question for today, Bob, is just how divided this committee is. And you point to the labor market, and I'm right there with you. There are credible arguments today to cut interest rates. Equally, there are credible arguments to do absolutely nothing. And when you look at the labor market, it's massively dependent on which data point you're anchoring your view around. If it's payrolls, you are spooked. You are cutting interest rates. If it's unemployment, you're sitting there saying, you know what, I don't think the slack has increased too much here, even with this massive step down in payrolls, and I don't see the urgent need to reduce interest rates. How would you anchor your view around this labor market?
I anchor my view around JP Morgan Chase data. We're the largest banker to the consumer. We're not flying data blind at all. We see the top 4 quintiles of earners with deposit balances above where they went into COVID. The bottom quintile is below where they went into COVID. So that's the K-shape we all talk about. Does that get addressed with the One Big Beautiful Bill Act when you start to see tax filings and refunds on tips, overtime, Social Security payments, and a host of other things? Maybe it does.
Are you in the reacceleration camp for 26? Are you expecting things to pick up in the new year?
Yeah, I think the fourth quarter of this year and the first quarter of next year will be, call it 1 to 1.5% GDP. There will be some digestion of further tariffs and final tariff policy. But with central banks cutting rates and an additional $1 trillion in stimulus hitting, it's hard not to see a reacceleration in growth.
What does yield tell you right now, not only the conventional full faith and credit, but the very short-term paper, the trust market? What are the indicators you see into this meeting?
The planet is underallocated to fixed income. I just got back from the Middle East. I heard it everywhere I visited. I hear it domestically. I've got one meeting after another. How else do you explain the 10-year trading through the Fed funds rate today? It can only happen if there are constant buyers, and the buyers are out there in full force.
Then how does that cross over to the dollar as an indicator of that need to buy more paper in America?
Well, I think that's a different topic, because there is a sense that perhaps if you're an overseas investor and you accumulated U.S. assets, you may look a little toppy in dollar exposure. So why not hedge some of that back to your base currency? It didn't make sense a couple years ago because the dollar kept going up, so you hung on to the dollar with U.S. assets. Now they're starting to hedge some back to their base currency.
Well, logic would dictate, as the Federal Reserve begins to reduce interest rates, that money and money market funds funds would start to spill out, maybe into risk assets and to other things. How sticky is that money at the moment?
Well, other things would be fixed income.
Of course, yes. Yes, the Bob's Fund. Forgive me.
Yeah, and that is a pressure that you hear from clients, that they've held cash for a while. They feel they may have missed interest rates. I tell them, congratulations, you were right. Why would you have held fixed income in negative yield environments? And then in 2022, 2023, rates were going up and bond prices were going down. You can still get in substantially higher than where we've been over the last 10, 15 years, although you've given back only 1% or so of the 500 basis points of rate hikes. And there are lots of things to buy. There's still credit to buy. That gets you closer to 5%. There's emerging market debt to buy. That gets you 10, 12%.
Quick, John, the Bloomberg Total Return Index is the Bob Michael chart. The appreciation of bonds and fixed income back over the last 2 years, nobody saw that coming.
The flows into Bob Michael of JP Morgan Asset Management's business has been pretty persistent, I think, for the year so far. Bob Michael of JP Morgan Asset Management is going to stick with us into this decision. That decision is 18 minutes away. That news conference is 30 minutes after that. Up next, the conversation with Kathy Jones of Charles Schwab together with Subhadra Rajappa of SocGen. It is Fed Decision Day. Live from New York City this afternoon. Good afternoon.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
In case you missed it, on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The Fed wants to cut interest rates, and we know the Fed's going to cut interest rates.
The Fed is going to cut.
The Fed we believe, is going to cut.
I would cut.
They cut 25 basis points.
They're expecting to be lower over the next few quarters.
The most natural thing to do is to continue on that path.
It's very pragmatic for the Fed to be delivering what's priced into markets.
If you look at the economy itself, we're slowing down to a crawl.
Labor market activity has slowed quite dramatically.
Labor demand is cooling. We're waiting for that next shoe to drop.
The risk for the Fed is to have a repeat of last year.
They're going to be very flexible in their message.
You have to go off the data that you have. And I know that's very tricky, and it puts the Fed in a very tricky position.
We don't really know how they're using the data that they do have right now.
Data or no data, you still have to make policy.
It's a tough situation for the Fed at the moment.
You might see dissents on both sides at this meeting.
They have to be pretty careful about how much they signal more cuts going forward.
Just how much can they signal at this meeting? That's the challenge for the Fed Chair Jake Powell. That decision 15 minutes away. The news conference 30 minutes later. Going into it, 5-day winning streak on the S&P 500. Equities this afternoon higher by 0.2%. On the Nasdaq up by 0.3. TK in the bond market 2s, 10s, 30s. Interesting. The last time the Fed met 2's at 350, 10's at 4%. This bond market has been very well behaved over the last month.
I don't like the word, but I'm going to use it here, resilient. And the answer is there have been some movements, including a dash to lower rates. But we come back, and again, I look today at weaker sterling and stronger renminbi with what's going on in Korea. And there's just a churn here that shows a resilient economy. As Bob Michael said, you know, you model out Q1, Q2, and you say, okay, we keep it going.
I think Bob's right. Bob Michael at JP Morgan still with us, by the way. Look at what we're hearing from corporate America. Let's take the banks, Bob. Banks are telling us that corporate clients are re-engaging big time. If you look at Visa, just to stay with the financials, they're saying the consumer is still engaging and is likely to engage into year-end and beyond. Is that the tone you're picking up from corporate earnings? Just how bifurcated are things?
Forget about corporate earnings. Our analysts, credit and equity analysts, are talking to companies every day, dozens, hundreds of them every week, and we're all hearing the same thing. Tariffs are yesterday's news. They've absorbed it. They're over the hump. They've stopped moaning. They're getting on with life. And they've underinvested in themselves this year, deliberately. It's flattered earnings. Now it's time to invest. Maybe there's more CapEx in AI. There's a bit more hiring to go. They'll see how it all plays out, but they're not seeing the consumer fall off a cliff here.
Subhadra Rajappa of SocGen joins us now for The View from SocGen and a whole lot more. Subhadra, welcome to the program. Let's just start with the basics. In about 13 minutes' time, a decision, a statement. How much dissent are you expecting this afternoon?
Probably one dissent from Governor Myron for a more deeper cut, because he's been calling for the Fed funds rate to be moved down to neutral. There could be some dissents coming from some of the regional Fed presidents, but I think it's unlikely. I think the last meeting was very clear that Chair Powell was able to build a consensus, and I think this time around, the likelihood that we see just one dissent is what I'm expecting.
Subhadra, I'm fascinated where this fits in within the international landscape. Each story is different. The United Kingdom, the ECB, who knows what's going on in Japan with the new government as well. How much is Jerome Powell central banker to the world at 2 o'clock today?
He's always the central banker to the world. Of course, I'm a little bit biased coming from the U.S. because everybody, my colleagues in Paris, are going to be up late watching the Fed meeting. So I think that policy in the U.S. is going to be very important. That said, we're watching what the other central banks are doing as well. The Bank of Japan's been quite interesting this year. The ECB looks like they're almost done easing. So the Fed definitely leads the way, and you're seeing that price action in the bond market as well, where treasuries are rallying while other global bond yields are actually rising, and you're seeing that spread start to widen a bit.
There's a backdrop, Bob Michael, here. I read very carefully, I think in the FT, about JP Morgan's new retail effort in Germany. Fascinating to see what digital banking is going to do. But part of it is a bang-up year for EM, a bang-up year of prosperity across the emerging markets, at least in the equity markets as well. So Jerome Powell, he's getting it done. Maybe even President Trump's getting it done. He's central banker to the world. That's all there is to it.
It feels like it, and also emerging market debt has performed very well too. But it also feels to me that something's different about the ECB this go round. And I think Christine Lagarde looks at the ECB and looks at Europe and says, the sands are shifting. We have to ring fence Europe ourselves and deal with what's going on in Europe. So I expect them to veer away from the Fed over the coming year or so.
Extremely well said. And this is, John, how much of the Draghi mandate has Europe actually got done?
Not enough.
Not enough.
Not enough. You know, the narrative around Europe this year is so interesting. I think it's been defined by much of the price action of the first quarter of 2025. If you look at the forecast from the ECB, you mentioned the European Central Bank, let's go through them. Real GDP for 2025, 1.2%, 26, 1%, 27, 1.3%. If Chairman Powell was putting out forecasts like that in this news conference later on this afternoon, he'd be flat out embarrassed. And we've got analysts and strategists coming on the program celebrating a new dawn for the European economy. Bob, that feels like a stretch based on the ECB's own forecasts. Is it a stretch?
Well, since those forecasts, you've also had Germany announced that they're going to embark on quite a large fiscal spend. You've got much lower policy rates now. I think you have to look across Europe and watch. I also think that the ECB is in a position where they could push through more unified issuance, create a joint vehicle that can fund projects across Greater Europe that rather than being raised in one particular region or another. So I expect good things to come out of Europe in the next year or so.
The focus this afternoon, of course, on the Federal Reserve and the US Central Bank. That decision 10 minutes away. Subhadra Rajapra of SocGen still with us. Subhadra, TK said it at the top of the program. It's about QT. Potentially today, maybe you've got to wait until December in early next year. Is today too early, Subhadra, to make that call to end QT?
It's not too early, but I wouldn't be surprised if they decide that they want to wait. I mean, I don't see the rush either. I mean, yes, you are seeing some pressure on the repo markets. You are seeing the availability of collateral go up because there's been a lot of bill supply. The Fed could quite proactively engage in ending QT. But they can potentially employ other tools like temporary open market operations to allay some of the fears in the repo market and perhaps have a later start. Either way, the way I look at it is it's $5 billion or so in treasuries that they're running off their balance sheet every month, which is really a small amount. So if they end it, I don't really see that as a big market moving event. What it will do is help allay some of the fears in the repo market potentially.
Explain, Bob Michael. We need to do this, folks. It's a course here on the Fed Decides. Treasury Bill 101. We have more debt than God. The Secretary of Treasury has made clear he's comfortable with Treasury bills. Should our audience worldwide be comfortable that we're going to have massive issuance of Treasury bills in the coming quarters?
I don't think they should be concerned about it. When you look at money that's in cash, you can look at a narrow measure of money market funds, or you can look at a broader measure of M2, which includes deposit balances, checking accounts, and so on. There's a lot of money sloshing around in the system, and if Treasury bills cheapen up a little bit, that money will circle into it. There are also other things that could happen. One, stablecoin is growing wildly in the U.S. Treasuries are collateral for stablecoin, so you have a natural buyer base forming there, and nobody's talked about relaxing the SLR calculation for banks and removing treasuries from the denominator. The Treasury can do that. So you can even create larger buying pools for the front end of the Treasury market than what exists now.
I got to rip up the script here. It's too important. Richard Portis and his leadership at London Business School. I spoke to Professor Portis today. He has great concern about stablecoin. Your bank is known for a cautious approach here. You've amended that. But should we have worries when we study stablecoin, or can we say it's removed from the things John owns, Ethereum and Bitcoin and all that?
Well, I think you have to separate crypto and stablecoin. Stablecoin, which operates through the banking system, can be digitally tracked, it can be regulated, it operates within a banking framework. If it's collateralized by treasuries, it's safe. And then it allows transactions to occur 24/7, 365. There's none of this nonsense that on Thanksgiving, the rest of the planet's open, not in the U.S., you can't wire money around. Stablecoin allows you to do that.
I feel like you try and get me in trouble every time we have this show and do this program. I have to do this on a frequent basis. I am not limit long crypto. I wish I was.
You don't.
I wish I had been for the last 10 years. Too bad, right? But I am not. A question, though, does remain about the broader asset class and what's happening with risk assets beyond just crypto. We've seen some stellar rallies this year. In fact, Bob, everything has rallied. Stocks have done well. Government bonds, 10-year bond yields have done well in this country. Beyond, say, just FX and the US dollar, risk has done well, credit's done well, crypto's done well, gold's done well. What hasn't done well, and is this Fed getting lulled into playing a role in blowing up some kind of asset bubble?
Well, that's the interesting question. For me, I learned a long time ago, in the world of bubble spotting, you take the price of something and plot it on a logarithmic chart. When you start to get upward curvature, jump in, because that last year is the big one, and that's when the bubble's forming. We don't see a lot of that yet. You can plot the NASDAQ, and it's going up at a pretty steady pace. I think there's a healthy recovery post-COVID and still post the GFC, and I feel the U.S. economy and corporate America, it's finding its feet. Yes, everything has gone up in price, But the Fed does have specific things to respond to, the labor market, and also what looks to be a neutral rate. And inflation's not at this 5 or 6%.
Subhadra Rajappa of SocGen still with us. Subhadra, I want to bring you into the conversation on that. Is this an issue that the Fed has to weigh? Maybe not at this meeting, but over the coming meetings, how they're contributing to broader financial conditions?
Yeah, I think it's definitely a concern for me. And to me, at least the way I look at it, this doesn't feel like the environment where the Fed should be delivering a lot of preemptive cuts or cutting as much as what the market is pricing in by the end of next year. To me, that kind of path feels like it's a little bit aggressive. I mean, the growth trajectory for the third quarter has been extraordinarily strong. The Atlanta Fed GDP now is tracking close to 4%. You're looking at an employment picture that's kind of deteriorating, but not terrible. Inflation is still high and sticky and well above the Fed's mandate. So to me, the market kind of getting ahead of itself and pricing in too many cuts seems like it's a bit much. And then you add in easy financial conditions, you're left with an environment where maybe the Fed has some sort of leeway in trying to not ease as much in this environment.
Subhadra, I'm going to pick up on Bob Michael's insight there about what I call log convexity. Are you seeing out there not bubble tendencies, but are you seeing on a log plot, a logarithmic plot, a convex acceleration where things are getting a little bit effervescent out there, a little bit exuberant?
So to me, what is concerning is the fact that there's absolutely no volatility in the market. Look at, bond volatility. You look at implied volatility in the bond market or in the equity market. There's absolutely no concern. So to me, the lack of volatility in this environment is also troubling because you tend to see a lot of investors kind of getting lulled into a sense of security and continuing to sell vol anytime you have a pop and vol. And that's an environment that is concerning, given the fact that we do have a decent amount of risk. We're going through a shutdown right now. There's potential for meaningful deterioration in a lot of these fundamentals that we're looking at. We have no clarity on the data. So I think a little bit of caution is required from that perspective.
Subhadra, somewhere in this country, there are some college kids, maybe the Finance Society, the University of Alabama, taking bets on just how soon this news conference will end as soon as it starts. Are you betting on a short one today? What can he possibly say about what they don't see at the moment?
He's going to get his slew of questions from everyone, including Mike McKee. So the press conference will probably at least run 30 minutes or longer. He might get into the details on QT if they do announce QT. So I'd be curious to hear what he has to say. And he's probably going to also kind of elaborate on the data points that he sees, because the Fed does have a lot more information that's available to them. And he might kind of enlighten us a little bit more on what they're seeing and hearing from their constituents. And that should shed some light on what they're thinking on policy. We'll also be curious to hear what he says on what he's going to be doing at the December meeting. Although they don't have a whole lot of information, the market's already fully priced in a cut. We'll have to see how he kind of discusses that.
Subhadra, thank you. It's good to see you. Subhadra Rajappa of SocGen. Those college kids will bet on anything, TK. You notice that these days? Absolutely anything.
Yeah, I've been in front of some of them recently, and they're eager to learn, and their heads are spinning like ours are spinning over this moment we're living in. I'm still saying it's coming out of COVID. We're maybe beyond that somewhat here there, but now we have this shutdown. You said the word when we came in here in our show preparation, the first word out of your mouth was odd.
It's an odd one.
You said it's an odd meeting.
The only data we have, the most recent data, the only data we have is inflation and headline and core around 3%, and the Federal Reserve set to cut interest rates at 25 basis points. I understand why, because they're worried about the labour market, but it's a kind of awkward situation not to have that official labour market data and still to be looking to cut interest rates with inflation around 3.
And again, the dovish, hawkish tilt of a traditional Fed meeting, maybe it's out the window. We'll have to see.
That Fed decision just around the corner. Let's check out the market. Start with equities. Equities this afternoon positive for a 5th consecutive session on the S&P 500, up by 0.2. In the bond market on 2s, 10s and 30s, a snapshot of fixed income yields higher at the front end of the curve by 2 basis points, likewise on 10s. With that Fed decision, here's Mike McKee.
A divided Fed cuts their benchmark lending rate by 1/4 percentage point and says they are going to end QT December 1st. There are 2 dissents as policymakers reset the target range to 3 3/4 and 4%. No surprise, Stephen Byron dissents in favor of a 50 basis point cut as President Trump wants, and Kansas City Fed President Jeffrey Schmidt dissents on the other side in favor of no move. The Fed's administered rates for interest on reserves and the primary credit rate mechanically decreased by 1/4 percentage point along with the Fed funds target. As for the balance sheet, the Fed will stop redeeming maturing Treasury securities at the end of November. Principal payments will be rolled over going forward. The mortgage cap of $35 billion a month remains in place, but as of December 1st, all principal payments on maturing agencies will be reinvested in Treasury bills. Fed officials gave a nod to the government shutdown in their economic assessment, noting that, quote, available indicators suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year, the statement says, and the unemployment rate has edged up but remained low through August. More recent indicators are consistent with these developments. They changed the tense on the balance of risks, noting downside risks to employment rose in recent months instead of have risen. And uncertainty about the economic outlook remains elevated, they say. There is no change to their forward guidance. The statement still says in considering additional adjustments to the target rate, they will consider many factors. Guys?
Mike McKee, stay there. What a decision by the Federal Reserve. So you cut interest rates 25 basis points, widely expected. They MQT. A lot of people were talking about that coming into the decision. But the headline here is just how divided this committee is. Dissent cutting both ways. One saying keep policy unchanged, another saying let's go even harder and come by 50 basis points. Equities stay elevated, up by 1/4% on the S&P 500, but a bit of a turnaround in the bond market. Switch on the board against the fixed income, 2s, 10s and 30s. Bond yields just slightly higher by 3 basis points on 10s at 4.01%. TK, these aren't major moves in financial markets, but there is a subtle shift in this Federal Reserve. It's divided, and when you're this divided, it's difficult to provide guidance about what you're going to do next. Because if you're trying to lead this committee, trying to reflect a consensus that doesn't exist is basically impossible.
Edge of Bank of England. It's the first thing I thought about. I've got to go back and study when the last time this really happened, where you had one up, one down, one hawkish, one dovish as well, pushing against the chairman. And it speaks to the 2 parts of the country that are out there. My idea that there's 2 R-stars. You see it with the shutdown again, and part of America flat on their back. You've got, it's amazing to me to see Myron 50 beeps in, John, and let's say you want to go the other way, it's a 75 beep gap. I don't believe I've ever observed that. I'm sure I'll stand corrected, but there it is.
The last time we had a dot plot, there was massive dispersion. I think you know whose dot's at the top now, and we knew whose dot is at the bottom. Mike McKee, I believe is still with us. Mike, the credible argument here, are there credible arguments to do nothing and credible arguments to go even harder?
Well, the credible arguments to go even harder are a little bit harder to make because financial conditions are pretty easy right now, and the markets have been soaring in recent weeks. No change there. We did see interest rates rise a little bit this week as perhaps the markets got a little concerned about inflation going forward. Jeff Schmidt's case is probably easier to make in the sense that inflation is still rising, even if we are seeing the Fed cut rates. That could only be a problem going forward, is his view. And there are people on Wall Street who certainly share that.
Michael McKee, thank you, sir. You get into the news conference. Mike McKee there breaking down this decision. The Federal Reserve reducing interest rates by 25 basis points this afternoon.
2019, we had George and Rosengren say no rate cut at all, and Bullard said a dovish dissent. That's some of the tension, but I would suggest today's meeting has even greater tension than what we saw in 2019.
Bob Michael at JP Morgan Asset Management still with us. Bob, just your early reaction to this call and that dissent.
I don't think it was at all surprising. The 2 dissents could have been a bit more interesting. I think Myron could have gone for 75 basis points. After all, he wanted 50 last time, so there's 25 that he's owed, plus another 50 this time. That would have been fun. And Schmidt, where was he last meeting? Where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier, and inflation's not as much of a threat as we thought back in September. and suddenly he reemerges, to me, it tells me that Powell is losing his grip on the Fed.
Let's extend the conversation with the former Fed Vice Chair, Rich Clarida. Rich, welcome to the program. Bob Michaels saying the chairman might be losing his grip on this Fed. Do you agree?
I don't think so. You know, going into the September meeting, I thought we might see President Schmidt dissent. And so I do think Powell really focused in September on keeping the committee together. But I expect to see more of this in the remainder of Powell's term for sure. If you just looked at the dots in the speeches, you have a pretty divided committee in terms of the case for preemptive cuts from here with inflation at 3%.
Richard Clarida, I've got to ask you the important questions here about the future of the Fed as well. John Farrell mentioned the Secretary of Treasury would make a pretty darn good chairman. That's out there in the zeitgeist right now. How important is this date of October and moving into December and really firming up the debate over the next chairman of the Fed?
Well, they have indicated, and I do expect that the White House will announce the nominee by the end of this year. And I think it is important because it will take some time for that person to get confirmed, and the transition will be relevant to markets. You know, the short list is anywhere from 3 to 11 names, and perhaps you could add Bessent to that. So still a lot to figure out.
I mean, it'll be interesting to see how we figure it out if we assume a December rate cut. John, that's pretty much consensus, right?
I don't know, Tom. You know, I really don't. Are we going to have some data? Does the government shut down?
We may get some data. We'll have to see.
Did you get a bounce back in the labor market?
Where are we going to be in January? I mean, I need to understand the vision to get to January in that room that you as vice chairman have been in.
Well, I think you go one meeting at a time. I think, especially where we are, given the uncertainty about the data flow. But Tom, I do agree with you. I think it's just natural as we move into 2026. You know, markets are forward-looking, and markets are going to have to telescope in what they expect the new Fed chair and what his or her priorities to be. And so I think December is something we'll be looking at. But then as we get into next year, that becomes relevant to markets.
Hey, Rich, TK often brings up the Bank of England and the amount of dissent we get over in the UK on Threadneedle Street and the difference with the United States. I think we've been conditioned by the leadership of Greenspan just to believe that the chairman has this immense power to lead the whole committee. Rich, do you think it's going to be getting difficult and more difficult to govern this committee into next year, even if you select a super dovish Fed chair? How hard would it be to get things your way?
It's a good point, John, because in practice, you know, and I do it myself, the Volcker Fed, the Powell Fed, but it is a committee. It requires votes of the Federal Open Market Committee. Oftentimes inside the building, the power of the chair is the power of persuasion. We've had some pretty persuasive Fed chairs, but there have been dissents. I think the key thing that we might start to see more of is dissents by governors. In the last 30 or 40 years, dissents really since Greenspan have been typically concentrated among the Reserve Bank presidents, and so that could also become a factor as well for the new Fed chair.
Rich, let's spend some time on this news conference. I imagine there'll be questions about what is guiding this interest rate decision, and for that matter, to Tom's point, what will guide the next one? Let's assume the government's shut down. Rich, what is the data they can point to right now they're going to be leaning on, and how do they really flesh out their reaction function to non-traditional indicators? I think we're all familiar with how they respond to, say, non-farm payrolls, the unemployment rate, and CPI. But if you don't have that anymore, Rich, how do you communicate?
Well, it's tougher. You know, there are alternative sources, ADP for employment and, you know, the Billion Prices Project for prices. But I would agree, John, the further this goes on, the trickier it gets really to make an affirmative case, especially right now. Let's be honest, you know, the justification here in September and now is really a risk management consideration. And, you know, but let's be honest, that goes both ways. There's downside risk to the labor market, but there's potentially upside risk to employment. So risk management becomes trickier as well with little data.
John Farrell and I took Behave Yourself 101 and Don't Be Rude, so I'm not going to ask this of Vice Chairman Clarida. I'm going to ask it of you, Bob Michael. We have Chris Waller with a definitive 1991 paper on game theory and the Fed. He and I covered that the other day. We have Richard Clarida with arguably the definitive 1999 paper on not so much the history of monetary policy, but the mechanism that we have. How critical is it to you and your bank that we have a next chairman who has prodigious monetary chops?
It's important. You need to have someone there who understands that the Fed, I believe, controls the purse strings to the U.S. economy. So it's an awesome responsibility. I think Rich hit the nail on the head. You don't only need a dovish Fed if you're the administration. You need a persuasive appointment to head the Fed. And that's a rare combination. And there's one guy we know in the administration today who's been shockingly persuasive. If you go back to April when everything was falling apart, who's the guy who stood on the White House lawn and calmed everything down? That was Scott Bessent. And I think you have to put him into the Fed if you're the administration and you want to see rates at 3% and lower, and have him lobby and create the persuasion.
But on a daily basis, he's monitoring his president. He's assisting his president as Secretary of the Treasury. That's a huge vacuum if Bessent goes over to the Eccles building.
Yes, but as you said, you need some street cred, and he's got it from being Treasury Secretary. And he does have a view. He does believe fundamentally that a lower interest rate environment frees up businesses and households, and ultimately that's good for the U.S. economy.
Bob, I think
you can't fault him on that.
Both you and Rich are exactly on the money, and a lot of people following this situation agree with you. TK mentioned Neil Datta a little bit earlier on in the program. If you want a Fed chair that's going to lean towards rate cuts and can influence and persuade the rest of the committee, he's already on the FOMC. It's Governor Chris Waller. Yeah. The outstanding question at the moment is whether the president wants to go along with him. Rich, you've sat in the room with the president of the United States and you've had these conversations. What are the interviews like, Rich? What does the president ask?
Well, that's probably for my memoirs. I enjoyed the interview. It went quite well. But let me just say this. You mentioned Chris Waller. I had the privilege of working with Chris closely, and I admire him as an individual. I admire him as an economist. He's had some good macroeconomic calls, and so there are other strong candidates as well. But Chris checks a lot of those boxes for sure.
Rich, we'll keep you out of trouble. It's good to see you, as always.
Please,
the former Fed Vice Chair, Richard Clarida. Rich, thank you.
Get off
We don't
soon
want to push
enough.
He wants to sell books in a few years, TK, and tell everyone about those interviews. Diane Swanker, KPMG, jumps on now. Diane, welcome to the program. Decision 15 minutes behind us about that. News conference about 15 minutes in front of us. What's the big takeaway this afternoon?
Well, instead of a dual mandate, we have a dueling mandate, and that's what you saw. We had 7 people that had on their dots either no cuts or only the one cut that we had, and dissents are rarely done in a vacuum, and I think Schmidt's dissent was also in line with another 6 of those 19 participants that did not think we needed any additional cuts right now, and I think that's what was important. I think it was very important with the first meeting with Governor Moran at the table, knowing that he was going to dissent and be an outlier on the dot plot, that you showed solidarity within the Federal Reserve, but we are going to see a lot of tension going forward because this is a really difficult time. 1, we're flying blind. 2, we've got inflation is up and unemployment is edging up as well, and the labor market is slowing. You add all of that together and you get this sort of stagflation which is what makes this Fed likely to have more dissents that go in both directions going forward.
Diane, as always, absolutely nail again. Diane, in many ways, not news because we saw this in the dot plot last time around, just massive dispersion, a huge difference across the board with different Fed officials and what they expect policy to change and how it's going to change in the year to come. Diane, you mentioned inflation, and I think we've got to talk about this. This is an interest rate cut that comes a week after an inflation report that showed inflation at 3, not at 2, but at 3. How credible is that pursuit of 3%, given that we've missed that 2% target, for so long?
Well, that's what the concern is. The argument, I do think that Jeff is sort of on a little bit firmer footing here. We know that this is a risk management cut. It's not clear that rate cuts alone will actually stimulate employment in this economy right now. I think there's some structural issues that are suppressing employment, which makes it much harder for the Fed to actually have an impact on employment. And lower interest rates tend to accrue to higher income households more than they accrue to lower income households. So, you know, that doesn't help the inequality problem that we already have out there. But I think it's really important to understand that we've got this situation where 40% of that CPI was imputed. Many of it is credible imputations where they get an easy substitute. Some of it's based on history. And if prices are changing on a real-time basis more rapidly, we don't know that. The other concern is that we have had more than 4 years where the Fed has not, the proximity to pandemic inflation, had price stability yet. And that gives us a muscle memory that ups the risk that this is not just a look-through moment. That is the Fed's, certainly Powell's base case, is it's a look-through moment with a hedge. We don't want to go too far. And I think that's very important, is that you've got sequencing of tariffs that mimics inflation, and it ups the ante that we get a more persistent bout of inflation. The Boston Fed came out October 9th with a study saying that they thought inflation expectations are becoming unmoored.
Diane, from the NBC affiliate in Chicago, I think this is so important. There's 1.9 million people in Illinois that are in food lines. In November 1, it's over. It's $187 a month benefit for food, the SNAP program in Illinois. I understand that could be fixed in one moment as the president, the Democrats decide to end the shutdown. But given that, the chairman must address that in this press conference. How will he do that?
You know, what Powell has always done is said we're doing this for the American people, and he'll lean into those issues. I think one of the issues, you know, the 750,000 people that are either furloughed or working without pay at the federal government, the collateral damage on contractors as well, and the ecosystems and entire communities in which they live. And now 1 in 4 children, you're talking about losing food stamps or the SNAP funding. That is huge. And, you know, children with hungry bellies can't learn. This is very important. In fact, my son's birthday is in a week and a half, and the one thing he asked me for his birthday is to donate to the local food bank because he sees the lines already. And I think this is, you know, I talk about breaking bread is better than breaking ties. This is a time to share your bread because it's very hard for too many.
I totally agree with you, and we all do. I think that sentiment is shared by everybody who watches this program. The risk is for a monetary policy official is that they become seduced by that argument and get themselves in a wealth inequality game and fuel exactly what they're trying to prevent. Because, Dan, if you've got assets right now, game on. Keep cutting interest rates.
Yep.
Dan, what difference does it make to the people struggling in this country at the moment that Chairman Powell and the committee cut rates by 25 basis points? And how does it tackle wealth inequality? That's the risk for the chairman. That's not his job. That's not his mandate. Right. The politicians in D.C. need to address that.
Absolutely, and that is the problem. And I've actually heard people say, you know, hey, the Fed should cut rates because low and middle income households are struggling, it will help subprime. No, it won't. The subprime rates are so much higher that a quarter point is not going to change the affordability and the ability of those households who are already in duress to actually service that debt. And we know that from the 2010s, the inequalities worsened. We're now at what looks to be the worst inequalities we've had of the post-World War II era. 20% of households carrying the economy, 3.3% of households really driving those gains, the bottom 80% unable to do anything more than keep up with inflation. That is why the overall consumer, the overwhelming majority of consumers, feel more down about the economy than the actual economy looks like on paper. And that's because we're seeing an AI-driven boom. We're seeing a wealth-driven boom that's concentrated in very few firms and in very few households, and it's not accompanied with jobs. And those productivity gains are not showing up in wages, and they're not ameliorating inflation. So it's a very tough situation for a lot of households, but a rate cut of quarter point here or there may not even change it. And as I mentioned earlier, some of the job losses that we're seeing and the ones that are being announced are structural, not cyclical in nature, and that means that a cut by the Fed is not going to cure that problem.
Dan Swunk, Clinic, as always, wonderful to hear from you. Dan Swunk there of KPMG. Bob Michael, I want your reaction to that. I think it's so important. We've had a massive step down in payrolls, but to what extent is that cyclical, and to what degree is it structural?
believe a lot of it was cyclical, and it is becoming structural because we know AI is here today. It's no longer on the horizon. It's being used across businesses to achieve efficiency. I think the question the Fed has to answer is just how blind are you flying? And the only answer Jay Powell can give is we're not flying blind at all. We've got 400 or 500 analysts and economists at just the FOMC alone. Plus, we've got all the regional banks that have hundreds of economists. They're talking to businesses every single day. We're accumulating that data. Here's what the data is telling us. That's what I want to hear at the press conference.
The summation, Bob Michael, of your fan distributions, this thing, this discussion, that debate, do you have confidence forward in your guesstimates that you're making minute by minute? You read Kasman, you read Feroli's weekly prospects, you sum in globally JP Morgan's fixed income abilities. Do you have confidence in any form of fan distribution forward?
I do, because what we see is a Federal Reserve that believes that a neutral rate is closer to 3%. So they're headed in that direction. We're not so concerned about inflation, even with the one big beautiful bill hitting, because you do have tariffs that are some magnitude of headwind, hence 1.5% GDP for the next couple quarters. And then you also have AI, and granted it's a two-edged sword, but that will create some efficiency. Those two things are going to be offsets to sticky inflation. We'll see how it all balances out.
Should I ask the pregnant question?
Go on,
Have you
please,
let
Dave.
artificial intelligence into your new palace?
It's everywhere.
Literally. Okay, pregnant pause there, if we can call that that. Okay, if you're just joining us, welcome to the program, live on TV and radio. A Fed interest rate decision about 21 minutes ago to cut interest rates by 25 basis points. Dissent cutting both ways. Governor Myron pushing for 50 basis points. President Smith voting in favor of keeping interest rates unchanged. Something that we haven't talked about a lot in the last 21 minutes that we're going to talk about now is an end to QT. The Federal Reserve deciding to stop shrinking the balance sheet. Matt Lazzetti of Deutsche Bank was looking for that move. Matt Lazzetti joins us now. Matt Lazzetti, what are the consequences of that call today?
Yeah, I think the Fed is simply responding to the increase in funding pressures that they've been seeing in recent weeks. We've seen the Fed funds rate beginning to move up within the corridor. And I think we've always known that the Fed was going to be very cautious in their balance sheet decisions this time around, wanting to avoid what happened in September 2019, where you saw repo rates really spiking. The Fed funds rate moved outside the corridor. And I think they were just going to be always very cautious in handling that this time around. And I think that's why you got the decision today that you did to end QT beginning in December.
Matt, what does this interest rate decision achieve? What does it do? What's the channel through which that rate reduction is going to work?
Look, I think these are all quite small moves. 25 basis point rate cut was already priced in, so it's already kind of reflected in broad financial conditions. But I think it'll help to continue to support, equity valuations that are high, credit spreads that are tighter. It'll filter through into lower front-end interest rates, so help on credit cards and auto loans eventually over time. We'll have to see what happens with mortgage rates. As the chart shows there, actually 10-year yields are moving up on this decision, not down, and therefore it may not help on the mortgage rate side of things. But I think it's more so not necessarily the decision today, but what is the Fed going to be doing over the next 3 to 6 months, next 6 to 12 months, and how much are they going to be cutting rates over that period of time? That's what really is going to impact financial conditions.
I'm curious, Matt, if the chairman brings up productivity here. The smartest thing I've heard in the last hour as we've done this is from Bob Michael, where he said of his new palace at JP Morgan, AI is everywhere. How is the moment changing? I guess, how is the guess that you have of this moment of AI, how is it changing your view, your overlay of productivity?
Yeah, I think the productivity story is really the critical question for the Fed at the moment. And we heard this from Governor Waller in his comments before the blackout period. And it's really because we have this huge divergence between real GDP growth that is very strong, almost 4% in Q2. Atlanta Fed is tracking almost 4% in Q3, but a labor market that's weakening kind of meaningfully at the margins. And that is being explained by strong productivity gains. My own view is that, yes, some of this is due to AI, but it's mostly reflecting a very very tight labor market that we had in previous years, which motivated businesses to undertake CapEx and capital deepening and find efficiency gains. Many of the productivity gains I think that we are going to see are actually further in the future. But this stronger productivity story for the Fed, I think, is one which suggests that rates most likely should stay higher over a longer period of time, and that our star is eventually going to be higher as well.
Michael Ferroli will write on this on Friday. You have to think about it in real time as seen in yield. A given company, we're showing 30,000 a door. Another company, we're showing 14,000 a door, and on and on and on. How do you, with all your experience, treat five-figure job reductions at America's finest companies?
Yeah, you accept that it's the economic reality. You accept that we're in the very early stages. You hope that new industries and businesses will be created off of the back of AI that will employ more workers, and there will be a greater efficiency. We saw that when the electronic spreadsheet replaced manual spreadsheets. We saw that in the dot-com era. Hopefully we'll see it with AI.
And Robert Kaplan, the former Dallas Fed president, was just wonderful on this the other day.
What did he say?
He said hope. He said just what Bob Michael said. It's one big academic hope by the haves that there's a good side on the other side of AI.
Luke Cower, I think, has been absolutely brilliant on this. This is regressive up front. Can hold back employment. In the near term, I hope that changes. It can boost energy prices. Electricity in this country is becoming the political topic.
Agreed.
For the next
Strongly
18 months.
agreed.
Now, the argument you've got to make is that's all going to change. Productivity picks up. Great. Fantastic. But in the here and now, isn't that a bit of a stagflationary story? If you strip out what is happening, say, with energy prices, electricity taking off, if you look at what's happening with labour market, holding back employment, isn't that a bit of a problem for this committee?
I don't think so. I think that they're comfortable looking through inflation, and if there is a problem...
no doubt. They've done that for 5 years.
But if there's a problem in the labor market, that in and of itself will hold back some inflation.
We have 25,000 employees. You are the most qualified one I know to talk about electric bills. What does America face if we have some semblance of the electric bills of Britain?
I know, Mum. Don't worry. I'll take care of it at the end of the month. I think that's something like that.
That's how it goes.
Yes, it does.
Okay, that's real, folks.
The energy prices in the UK are absolutely brutal. They're absolutely brutal. And if you face anything like that in the United States, you're talking about the wealth inequality in this country right now. We're lucky to have the energy prices we have because they're so much lower compared to some other individuals, some other nations in the G7. If they face that same situation here in the United States, imagine the midterms 18 months from now. Imagine the local politics and the support for those data centers. What's that going to look like? You tell me.
Governor of Virginia on 14% lift in energy costs.
Going to want that data center? How many people they're hiring?
Yeah.
I know what it's doing to electricity prices. How many people they're hiring? Not many. It's pretty Labour light. Matt Lazzetti at Deutsche Bank. Matt, thank you, sir. Always good to hear from you. Matt Lazzetti there of Deutsche Bank, breaking things down, called correctly the end of QT. That's exactly what we got about 27 minutes ago. Bob Michael, you're fantastic at this. Going into the news conference, questions for Chairman Powell. What would you like Mike McKee to ask in a moment?
I think he's got to press them on what are they seeing from their own sources of data? What are they seeing from the regional banks and their thousands of economists? They're talking to businesses every day. They didn't make this decision blind, much as it creates a wonderful narrative for the three of us. They reacted to something. What was that?
What do you think the next decision hinges on? What are the metrics? If we don't have the data, let's say the government's still shut down, what's the next decision hinge on?
I think it's going to be anecdotal evidence from businesses. If they're still in a pause, hire, and fire, doing neither, then this Fed will respond by cutting rates 25 basis points.
What is your shop's 12-month call on 10-year yield? We're now, I'm going to say, a 399, 398. John's in charge of that. I just look at the Dow Jones Industrial Average. John looks at all the rest of the data. But on the 10-year yield at a 399, what's your call 12 months out?
Well, let's start with Fed funds. We see that around 3 3/8%. I think you're going to see the 10-year somewhere around 3 3/4%.
Okay.
Bob Michael, JP Morgan, this was fun. It's good to see you.
Always a pleasure.
Again. Thanks for dropping by.
Great.
We've said a few times on this program over the last few meetings that these meetings are going to get harder and harder for this Federal Reserve. At the next meeting, when Chairman Powell convenes things, think about things. Today, the good news, no forecasts. Imagine how difficult it would be to provide forecasts in a moment like this. At the next meeting, can't escape it. This committee will have to put together forecasts for 2026 with the potential of not having any data at all. And even if they have the data, that data could be very, very messy. On top of that, Tom, we might have that shared decision from this administration, which will take away the ability to guide into 2026 anyway.
On this Wednesday, all this talk here, as we go to this conversation, the questions and the answers, we have to remember that in, an hour and a half, these mega companies are going to show profit and cash flow that is not in any of our textbooks.
This is why, Tom, so many people right now are so bullish. What matters to the equity market? Not payrolls. I've said a few times, if I told you the payrolls data at the start of this year, at the start of 2025, you would have been hopelessly bearish on this market.
Correct.
What's mattered to equities has been earnings. What's mattered to the man that's about to step into that room is the step down in payrolls. So the market gets the best of both worlds, gets the earnings one, and gets the interest rates reduction as well, two. And the man who's about to step into the room is going to deliver potentially another 25 basis point cut at the end of the year. That's the reason why so many people right now have been bullish this equity market. Equities into this news conference at all-time highs on the S&P 500 up by 0.2%. The FOMC divided, voting to cut interest rates by 25 basis points. Here's the chairman of the Federal Reserve.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. So you can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other, and they also have different levels of risk aversion. And some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that that we haven't made a decision about December. I always say that it's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened. Some things have been happening for some time now, showing a gradual tightening in money market conditions. Really, in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be freezing the size of the balance sheet, and the December 1 date gives the markets a little bit of time to adapt.
Colby.
Thank you, Colby Shelby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get. Like I mentioned, what we get in the labor area, we get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say that first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that that that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Fregaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. Yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there's a sense like, from some, let's pause here kind of thing. And a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
So on that division then you're talking about going forward, so what's more important in this division? Is it inflation risks, is it employment risk, or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's, 1, the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and so the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools. But others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even and it's nice that that prices are not going up as fast as they were, but they're still much higher than they were, and it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Hickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these are ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that, and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. The consumers are still spending. Now, it may be mostly higher end consumers, or may be skewed that way, but the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs, because there isn't this flow into the pool of labor that where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you know, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you know, you slow down when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But you know, I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, you know, where they've got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor
market? So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, and again, we didn't get the September employment report, payroll report, but we look at, you know, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, I mean, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is that you know, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, you know, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and you know, lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, I mean, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. I mean, inflation also hurts people on fixed incomes more than other people.
Courtney.
Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two, and so it's a challenging thing. And as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it, and that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April, and if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with a lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop. It wouldn't drop sharply unless there were quite a sharp drop in the in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. And you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
That wraps up the news conference from Chairman Powell following a decision to reduce interest rates by 25 basis points. Credit to that reporter and to Mike McKee for actually asking about financial conditions and financial markets. If you are just joining us, welcome to the program. Equities recovering. There was a drop-off as soon as Chairman Powell started to speak. We're back to about negative 0.2% on the S&P. The bigger losses on the Russell, the small caps down by 0.8. In the bond market, off the back of these comments from Chairman Powell, bond yields higher at the front end of the curve by 9 to 10 basis points. A 25 basis point reduction from the Federal Reserve, two-way descent, the limited ability to guide from here, and these comments from the chairman of the Federal Reserve. Take a listen.
A further reduction in the policy rate at the December meeting is not a foregone conclusion. At a time when we have tension between our two goals, we have strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
A December rate cut is far from a foregone conclusion. That was a prepared remark. It was scripted. TK, it was heavy with intent.
I love when they look down at the script. I mean, you wonder what percentage of the press conferences.
I think, to be honest with you, Tom, it gave it extra meaning. That was
absolutely.
The intent to come into this room and tell everybody, including Wall Street, we're not making a call on December.
Calm down, we're waiting on it. When we get to Torsten's Slack, I want to really dive into that. I need to frame this, John. I think it's so important. We've had this spectacular move lower in the 10-year yield down to 3.9 whatever. OMG, we've come back 4.05%. It's 7-8 beeps move. It's only center tendency on 2 standard deviations. We're by no means. Price has not cratered in the last 20 minutes.
Low end of the range for the year still. Totally with you. Bond market's been super well behaved. When the Fed last met back in September, 2s were near 350, 10s were near 4%. Right now, TK, 2s near 360. 10's near 4%.
There's going to be a lot of hyperventilation about this tomorrow. I'm also looking at the currency market, which I think is extraordinary, into the Trump-Xi meeting. And, it's a side story. I get it. It's not the Fed decides. It's maybe the president decides on trade. But it's a backstory to this that will be interesting the next couple days.
Dollar strength this afternoon. Euro dollar, 115.82. Euro dollar down by 0.6%. TK mentioned it. Torsten Slock of Apollo with us around the table. Torsten, good afternoon. Good to see you. What's the big takeaway for you from that?
Well, that they do have clarity on the CPI, on the inflation side, but there was a lot of questions about the labor market, and it was very clear that he came into this saying the labor market is still chugging along, moving sideways, slightly cooling, and he didn't mention any of the private sector indicators, so he did basically say, we don't quite know exactly what's happening in the labor market, but we still feel quite good about it. So that's why he came to the conclusion, inflation is too high, the labor market is still okay, therefore there is no foregone conclusion about December.
How difficult is it to carry on cutting interest rates?
It is very difficult because the labor market does have a number of indicators that are very important for this discussion. There is, of course, ADP, which we just got, and thankfully now it's weekly. If you just think about the number, 14,000 was the average weekly number for the last 4 weeks. If you multiply that by 4, you get some estimate of what that means on a monthly basis. That means that monthly job growth at the moment is in round numbers around 50,000. We just got a Fed paper a few weeks ago saying that the new equilibrium rate for non-farm payrolls is 30,000. So by that measure, the labor market is actually strong. In other words, job growth is stronger than what the Fed itself thinks that it should be in the long run, because 50 is higher than 30. And the conclusion, therefore, is now you suddenly have that both the labor market is actually doing a little bit better than expected, and inflation is still at 3, which, of course, makes it very difficult for them to begin cutting again in December.
Let me follow up on that, though. Is that politically acceptable to have a mid-100,000 number, 30, 40, 50,000? There's no way that plays in Washington.
Well, at least the Dallas Fed, who produced the number, had some very good arguments for that. There were 2 reasons why the equilibrium rate had gone down from 200,000 last year to only 30,000 today, which was immigration has been slowing down significantly, and the demographic headwinds also weighing on the overall
This
number.
is so important. With your heritage, I think it really works out. What is the level or the new of their ex post right now? To me, they're almost redefining a way. Did you hear forward guidance in the press conference? I don't think that,
forward guidance.
I don't think that
in this environment.
Maybe backward guidance is the new phrase. Okay, paint the character, Dr. Slock, of our ex post nature now.
Well, the challenge also is not only did they not only mention forward guidance, but also he didn't talk about data dependent, because there is not much data. And if you say data dependent, that means that they're putting a lot of data on the private sector data. And he didn't mention some of the private sector data that actually is very important for the labor market. Not only ADP, there's also the, of course, Challenger Gray and Christmas job cut announcements. There's also a new data from Macro Edge that also looks at job cuts.
John, and you love ISM.
There is also the ISM data that still says that the labor market is okay. There's also link up job openings. There's also Indeed job openings. There's also Paychecks, which is also looking at employment. All these indicators combined still tell a story of the labor market actually still hanging in there. So it's not the case that the labor market is falling out of bed. It's still the case that the labor market is okay. And combined with inflation at 3, remember the Fed's target is 2. So inflation is still way above the Fed's target. There is just not room to cut rates more, in particular not, as he also talked about, if you begin to worry about if inflation expectations begin to become entrenched.
Torsten, what you're saying begs an obvious question. What I'm hearing from you is we've seen a step down in payrolls growth. We haven't seen an increase in labor market slack. Inflation is running at 3. Unemployment still close to 4. GDP is tracking around 3% at the moment in this country. If that's the case, why did they just cut interest rates?
Well, his argument was also very, very carefully articulated, namely that we are trying to get closer to our star. So it's back to this, peculiar interest in that there is some very academic Kalman filter you can do and figure out where is the level of interest rates where we should be, and say this was recalibrating monetary policy to that level. It really is a very, arm-wavy and academic discussion relative to what the actual data that you just listed. And if you add also the Atlanta Fed GDP now, almost 4% for last quarter. Where are we in terms of thinking about this slowdown? There is just not much sign of a slowdown when it comes to the real
Please forgive the snark, but the way they talk about things like neutral and R-star, do these lights start flashing off in the FOMC room, in the boardroom, at the Federal Reserve? You've hit it. Well done, guys. Stop right there. What are they actually looking at to guide that decision?
Well, I do think that there is an intellectual camaraderie around R-star of saying, yeah, I know what you mean when you talk about R-star, and of course we got to get down to R-star. But the interesting thing about also this is that if you really are saying at the Dallas Fed that there is now a 30,000 non-farm payroll level, that actually means that R-star is actually lower.
John, just Greg Ip has been wonderful about this. Where in God's name is the output gap right now with Meta here in 25, 35 minutes? Google, what we see tomorrow with Apple, Microsoft, the speech that NVIDIA gave the other day. Are you kidding me? We have no clue where the American output gap is.
Well, and that's why from a monetary policy perspective, it is really interesting, because if you look at the Magnificent Seven, they are all financed by equity prices being high. They're not sensitive to the Fed funds rate, whereas the S&P 493 is very sensitive to the Fed funds rate.
Is Apollo Global Management part of the Magnificent Seven?
They should be. They should be. Mike McKee was in the room. He was in the news conference. And Mike McKee, thank you for asking about financial conditions and financial markets. Mike McKee, what was the takeaway for you, sir?
Well, I think the absolute takeaway is that the Fed is probably going to pause in December unless there's some data that forces them to do another cut. There was a sort of almost Freudian slip by the chairman close to the end of the news conference when he said, if we cut again, and then he quickly backtracked and said, we will at some point. But I think that the mood of the committee now is we've done enough, let's sit back and see what happens, especially without any data. And given the fact that inflation is still rising, you noted at the beginning when he was giving us the rundown of the economy, he said extrapolating the CPI into PCE suggests that it rose at 2.8%. Well, it was 2.7% in the prior reading. So it just shows you that inflation is still rising at a time when he had a hard time making a case that unemployment is a real problem. So I think the takeaway is don't expect much from the Fed in December unless the government gets back to work and we get some data that change their mind.
Michael McKee, you have covered the Federal Reserve for decades. Volcker through Greenspan, Bernanke, Yellen, the likes of Chairman Powell. Mike, is the era of almighty Fed chair dominance and power on the committee, has it come to a close?
Well, I think that's another way of saying that I'm old, John, but I don't think it's come to a close. It's just changed a lot. When you had Paul Volcker, he was very firm in what he wanted to do, but he came in during a crisis, so he was able to marshal the troops to do that, and then they rebelled against him. Greenspan did it differently. He ran the Fed as if it were his own, and they did what basically he wanted them to do. But starting with Ben Bernanke and following with Janet Yellen and Jay Powell, it's become much more collegial. And the chair now is more in a situation where they are taking the temperature of everyone there and trying to figure out what the best consensus move would be. And I suspect that that's what members of the board and the Open Market Committee would like to see happen going forward. Don't know, given the names of various people who are among the finalists to replace Jay Powell, whether we would have an attempt to go back to the strong chairman view or whether we would still continue with consensus.
Can they wrestle control from that committee? Mike, thank you, sir. Fantastic work. You're not old. You're brilliant. Mike McKee there in Washington, D.C. Appreciate it. You're brilliant too, TK. You know there's love. Come on, there's enough love to go with. But yes, maybe a little bit. More than me. Torsten, you're still with us. Torsten's Lock of Apollo, by the way, if you're just joining us. Torsten, Bob Michael of JP Morgan was on the program with me and TK earlier on this afternoon, and he made the case after this decision dropped and we saw the two-way dissent that the chairman was losing grip of this committee. What's your take on that?
Well, it is a very unusual situation to have someone on the committee that thinks that rates should have been on hold, meaning that it would go in other direction than other members here, in this case, Steve Miran, who thought that they should have been cutting. So it is a very challenging environment, of course, for whoever is the Fed chair and whoever walks in to be the next Fed chair to try to get a consensus on the committee. There is so much work that goes into, from the chair, whoever it is, to try to get a decision that is unanimous and that is a common ground and saying this is the way we're walking and this is the direction we're traveling. Now that there's more uncertainty about this, one reason why rates are going up is also because, well, maybe now Schmidt is not the only dissent. Maybe there are others that come around next time and say, well, maybe we shouldn't be cutting, or maybe there might even be someone who says maybe we should be hiking. So that's why I do think there was already a dot in the dot plot last time that said that rates should be going higher in December.
I think we know whose dot that was.
And now we know that that was Schmidt from the Kansas City Fed. So yes, it is becoming a much more challenging exercise. Normally, we just talk about inflation, unemployment, but this is no longer just about inflation, unemployment.
The heart of this, we got to get to Rosenberg, but the heart of this, John, is he's lame duck. That's all there is to it.
Totally agree,
It's October. He's supposed to begin to be lame duck.
So let's fast forward to December. Just think about for a moment how much harder it's going to be. Put out forecasts, probably know who the new Fed chair is. How much power is Chairman Powell going to have at the December meeting, knowing who his replacement is potentially once we come around to May?
Yeah, I agree. And of course, as we've said 3-4 times today, not me, but others are saying the Secretary of Treasury could be involved as well.
Jeff Rosenberg of BlackRock's running. Jeff, welcome to the program. I won't mention Rick. We'll leave that to one side. We'll keep you in, good company over at BlackRock. Keep you out of trouble. What about it? No, Jeff, seriously. Right. Jeff Rosenberg, number one takeaway from that decision this afternoon and that news conference too.
Yeah, I mean, the number one takeaway is the comments on December, the comment on slow down when you're driving in the fog. It's interesting you guys were picking up on him reading in the notes and whether that was, very much pre-planned. I think what you see here is a repricing of market pricing to December. You know, going into this meeting, it was basically a foregone conclusion. It was 100%. When you come out of the meeting and you see the dissents on both sides and you recall the division within the committee, you could say that that is an appropriate repricing to the really realization that there's more two-sided risks to the Fed's decision than the market was pricing in. And perhaps that comment was engineered to kind of push that forward. Maybe it wasn't, but the reality is that's what the market reaction is. And you can see that that's, you know, a very reasonable reaction to what we saw from the committee today.
I'm going to do an audible here. We got Torsten Slok and Jeffrey Rosenberg with us, and that is good and wonderful with their financial and economic knowledge. Torsten, you have a blistering sentence in your note of your concerns over private credit. I would suggest for global Wall Street into the next Fed meeting and beyond, there's going to be further challenges here about the opaqueness in private credit. With you, with all of your resources at Apollo Global Management, how blind are we to where we're heading in the pricing of private credit?
That discussion is totally misguided. In public markets, I can get something that's safe, I can get something that's risky. In private markets, I can get something that's safe, I can get something that's risky. So there is no difference. It really is all about, do you want a risky investment? Do you want a safe investment? Something in the public market is investment grade, something in the private market is investment grade. So this discussion around what's happened in the last few weeks, yes, there might be a few cockroaches in the sense that there have certainly been some things that have been going under, but interestingly enough, those were basically all broadly syndicated loans, meaning these were things that were trading tick by tick, minute by minute in the public market. So why is the discussion about what's happening in private credit relevant for this? These were cockroaches in the public market that showed up in public balance sheets.
Jeff Rosenberg, will this affect the Fed? I mean, it's just as simple as that. If we have Wall Street instability and fear about this with all your work at Carnegie Mellon, can they ignore those cockroaches?
Well, it gets back to some of the earlier comments about, you know, the questions that he got on financial conditions. Yes. And, you know, to what extent does financial conditions sort of factor into the Fed's decision? And I think what we see is an asymmetry here, that financial conditions aren't really factoring into their decisions to cut rates here. Financial conditions, you saw him parry the questions around interest rates and AI, basically, you know, brushing them aside, saying AI financing has nothing to do with rates, which is true on a first-order effect, but not necessarily on the second-order effect, to the extent that interest rates broadly are creating very easy financial conditions, and they're contributing to the increase in financial conditions easing, especially that we saw since the Fed pivoted, you know, to the labor market slowdown. That took us from, you know, measurements that were sort of more optimistic to measurements that were kind of more on the euphoria side. But I think the asymmetry here is that the Fed will respond to tightening financial conditions after they're realized. To the earlier, you know, interchange on, you know, ex post and data dependence, this is a Fed that will be reactive. And I think what's very clear is the Fed's not really paying a lot of attention to financial conditions going into this cycle, but they will, as they have been, you know, ever since the GFC, that they'll be very responsive if financial conditions for things that have nothing to do with the Fed end up tightening. The Fed will react into that with a massive cut in interest rates, restoration of zero interest rates, the forward guidance that you just talked about, balance sheet, all the tools that, you know, were once thought as kind of you know, not normal, are part of the normal playbook. But they'll be in reaction to something that is outside the Fed's control here and in a tightening of financial conditions.
Jeff, is that still a green light then? A bright green light just to stay long risk, stay long equities?
Well, it's a light that says you can't really predict that on a directional basis. The Fed is supportive here. That's part of, again, what we saw in kind of the movement in the metrics from optimism to euphoria around August, September, and the Fed's continuing to send that signal with market pricing coming down a bit, but basically pricing to normalization of 3%, and the expectation that under any circumstance where the Fed is faced with an outsize. And you heard in that last question right at the end, you know, the Fed talking about the impact on consumption. this is understated. I mean, he said it in a very small way, but a large shock downward has a significant effect on consumption. And what was a little bit understated here is that the large increase in the wealth effect has been the support for consumption. It is why we're surprisingly strong. In addition to the lagged implementation and tariff inflation not being as worrisome, it was really the surge in the wealth effect and consumption that's leading to the upside surprise. But that has a double-edged sword to a larger decline, and that's, I think, the concern around financial conditions tightening.
Jeff, before you go, I promised I wouldn't mention Rick, but I think it's worth it. You know, I've known Rick a long time. You've worked with him a long time. Can we just spend a second or something? Just how cool is it that Rick Rieder's name is associated with the Fed chair position?
It is very good for you to talk about that, and I look forward to hearing more from you on that subject, Jonathan.
Okay, Jeff Rosenberg of BlackRock. You avoid it, Jeff. You avoid it. I think it's fantastic.
I did.
To have someone like that.
To have the mix, absolutely.
It just makes the process all the more credible, which I imagine was the objective of the Treasury Secretary.
Mr. Reeder brings an entrepreneurial sense here that you don't get from grizzled economists. And
understands
the president is to be hugely lauded for that with his secretary. Can I point out, in the time we've got left, something back to the late July meeting?
Sure.
Google, who we're going to hear from in 45 minutes, is up 42%.
Not bad.
We have to remember, you know, I'm talking about the food lines in Chicago with Diane Swang. The roulette wheel is in full spin right now.
We've got about 60 seconds left. Programs like these traditionally obsess over what can go wrong. Torsten Slot, can we finish on what can go right? You put out a fantastic note in the last month about the economics profession needing to take a long, hard look in the mirror and just think about where we are compared to where they thought we would be, which is in a much worse place.
Absolutely. So the key issue was that Liberation Day is now 7 months ago, and we are still having a Fed chair that talks about the labor market is actually doing quite well, and we still have inflation above the target. I think that we have all been surprised, and of course the market has been surprised, and the economics profession has definitely been very surprised that the textbook would have predicted a much more stagflationary shock, much more upside pressure on inflation, much more downside pressure on GDP. We have not seen that, and some would say yet, but this is the discussion, namely, do we still have that, as you just said, as a lagged effect in front of us, or is this it? And then things are only getting better from here. And this is why what the Fed was doing today was exactly to say, so far, we have not seen that stagflationary shock that we expected in April after Liberation Day.
TK, we've been saying yet, it's not happened yet for a long time now, a number of years.
We got to get the shutdown finished so we can get the data, because we're all blind. That's the number one thing.
Right now, we're waiting for earnings. An interesting meeting in the last hour or so. Torsten Slot of Apollo. Torsten, thank you, sir. The Federal Reserve reducing interest rates by 25 basis points. Dissent to both sides, and a very, very limited ability to guide beyond this meeting into December. Equities attempted to turn around. The opening bell behind us, the closing bell 15 minutes away, and a ton of earnings still to come. From New York City, good afternoon.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:46 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got 14 minutes to go ahead of the closing bell. 14 minutes until a slew of closely watched tech earnings. We're going to be all over those numbers as they break. The Dow, the S&P lower, NASDAQ higher. NASDAQ 100 index also advancing, but stocks slumped as the Fed cut rates by a quarter point for a second time, but downplayed the prospect of further reductions before the end of this year. Here's Fed Chair Jay Powell. You heard him live right here on Bloomberg.
In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Evidence of division at the Fed over the future of monetary policy sent stocks down for the first time in 5 days and pushed bond yields higher. 10-year 4.06% with a 2-year 3.60%. S&P down 13, dropped there of 0.2%. The Dow down 160, a decline of 0.3%. Again, the S&P down 0.2. NASDAQ right now up 0.3%. Spot gold down $15. The ounce now down 0.4%, $39.37. West Texas Intermediate crude up 0.3 to $60.33 a barrel, and Bitcoin down 2.1%, 110,500 on Bitcoin. Nvidia holding on to gains after breaching $5 trillion in market cap. Nvidia up now by 2.9%. Coming up after the close of trading, we'll be hearing from Alphabet, Meta Platforms, and Microsoft. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the drive. Just drive, baby.
This is the drive to the close.
Where we're going, we don't need roads.
On Bloomberg Radio.
Ah, yes, indeed, everybody. On this Fed Wednesday, we are driving to the close. Good afternoon. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in our Bloomberg Interactive Brokers studio. 7th FOMC meeting of the year, one and done. Two and done, actually, where we're seeing 2 rate decreases.
I thought you were saying one more and then we're done for the year, which there is one more in December.
Listen.
And that's the headline from this.
Exactly. First of all, Jay Powell, Fed chair, saying overall it's a good picture for the economy. That to me was it in a nutshell. But for the markets, Tim, it's exactly what he had to say about the next meeting. Keep in mind, we had 2 dissents. Fed Governor Stephen Miron dissenting, in favor of a larger half-point cut. And then you had Kansas City Fed President Jeff Schmidt kind of coming out of nowhere, it felt like.
Yeah, dissenting in favor of no cut at this meeting. He has been among the Fed officials who has signaled caution about the inflation outlook. But Carol, it's all about December. That prepared remark, Powell saying that December cut is far from a foregone conclusion.
Here's what he said at the presser. Okay. Well, he said a lot of things, and we're just going to walk you through some of it because he did talk about still focused on that dual mandate. Then they talked about conditions in the labor market appearing to be gradually cooling and inflation remaining somewhat elevated. But he talked a lot about inflation, too.
Yeah, he said in the near term, risks to inflation are tilted to the upside, risks to employment to the downside.
All right, we've got it. It's a crazy Fed day, but here's what Fed Chair Jay Powell said at the press conference.
My colleagues and I remain squarely focused on achieving our dual mandate goals. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In the near term, risks to inflation are tilted to the upside,